Morning, of course, we know has had a tumultuous week, as has Vestas, by the way. So the entire offshore wind sector very much in focus. Some of that coming from policy changes in Europe, some from the States, Guy.
Absolutely. Lots to keep an eye on this Friday morning. It is time for the Open. Let's see what the numbers look like going into the weekend. This is the picture you find yourself with. Good morning, London. We are up by, well, let's call it half of 1% at the moment. Climbing. We're expecting that market to deliver a much more positive outcome. Remember, though, this is all being delivered with super light volume at the moment. We are mid-August. How many signals can you take away from the activity that we are seeing in markets at the moment, which has been largely in August very positive? Stocks 600 climbs another 0.1%. The FTSE's up 0.3%. The Spanish market's up 0.8% this morning. Remember, Italy is out. It's actually a holiday in large parts of Europe today. It is Assumption Day. The DAX is up by 0.6%. The CAC is up by 0.6%. I think the details are going to matter today. So let's see what they look like. Val, what do you got?
Look, when I look at the sectors, I have to keep refreshing my screen quite rapidly here, but all sectors appear to be in the green. At the bottom of the basket, though, is technology, only up by 0.1%. ASM and ASML not having a great open, but basic resources at the top of the basket. I know that's been a big focus for us because oil prices have been on the move around this Russia-Ukraine summit. Any possible breakthrough, Russia-U.S. summit, excuse me, any possible breakthrough for Ukraine peace deal could be something that could boost or cause some issues, I guess, for the oil sector with oil prices falling, but we're not seeing that kind of price action today. Autos are also at the top of the basket. I know we mentioned that weak Chinese data. It's not playing into European autos so far this morning.
Well, when you actually look at the breakdown here, it's a little bit of a reversal from yesterday. Some of the healthcare stocks are on the back foot. We should mention that Novo Nordisk is one of your underperformers. It is, however, ex-div today, so keep an eye on that one. Still moving this market, just given its weighting in the entire index. Your biggest index contributor to the upside is actually BBVA, which is interesting. Not seeing a ton of news flow there. We're still waiting for their tender period to launch in September when it comes to their acquisition there. Seeing a couple of healthcare names in the green as well, though. Roche, for example, is higher. Sanofi higher. AstraZeneca higher. Some of the oil names from yesterday that were a lot of them were ex-div have recovered in this market today. But yeah, Guy, I'm seeing a lot of green on the screen.
It's interesting. AMAT actually was a disappointment yesterday, so I'm wondering whether that's what feeds through into some of the chip stocks out of Europe this morning. It's interesting that the Spanish stocks are on a tear once again, pushing higher. Are we kind of going to be able to continue with that trend? Spanish stocks have had an amazing run of late.
It's the siesta.
It's a fiesta or a siesta?
Both. Why not both?
Both at the same time. So does that continue? But the Spanish banks today definitely on the front foot. That's a narrative that it looks like it's going to be continuing as well. But yeah, the AMAT story does seem to be acting as a bit of a drag today.
Yeah, and it's interesting that we were talking about drags in Europe, that weak Chinese data is seeming to not have any follow through. I mean, basic resources, who a lot of those are contingent on the iron ore price, but you see likes of Glencore and Antofagasta up over 2%. So it seems to be that the market is really not deterred from what we heard out of China overnight.
Is this the read, though, that it's stimulus is coming?
Perhaps.
And bad news is good news, and actually you take that as a positive. I don't know. Maybe you could. There's two ways of reading the Chinese story today. It's the data continues to get gloomier and gloomier. Is that a signal that the Chinese need to do more, and that should be taken as a positive? I don't know whether that's the right read. The Chinese have been very reticent thus far in terms of the authorities to deliver that stimulus in the size that's going to have an effect. So it's hard to really read what is going to happen here. But it's interesting that we're not getting a negative story coming through into Europe this morning.
Equity markets still think it's all okay.
I mean, we'll see if that's how we start Monday's session off. But I will say on the luxury front, though, when you look at actually the CAC 40 and the individual stocks there, they're not rallying to the same extent that some of their others are. I'm looking at Kering, for example, which is quite literally flat on the day. So I wonder if there is maybe some caution when it comes to luxury names, but then you look at the miners, you look at the EVs or car stocks as well, and you're not seeing that same
Pandora a
pain.
luxury name?
I don't know. Would you buy it for your wife?
Let's not go down that rabbit hole. Down nearly 10%. Q2 earnings disappointing. That stock under significant pressure. So you've got ex-div for Novo out of the Danish market and Pandora being hit quite hard this morning. So two negatives may be coming through there.
All right, let's broaden out this discussion. And joining us now to do that is Patrick Armstrong, Plurimi Wealth CIO. Thanks for joining us on this August Friday. We did have a lot of data out of the U.S. this week, some of it good, some of it arguably bad. What was your big takeaway? Because the fixed income market seemed to have gone in a round trip.
I think the biggest mispriced asset in financial markets is inflation over the next decade. Markets just far too complacent on where inflation is going to be. You've got populist policies all across liberal democracies, printing new money to pay off the old debt's the end game. Austerity is not being considered. Tax cuts are being put in place rather than increasing taxes. So you're not getting real sensible long-term solutions for debt, and you're getting short-term fixes promising massive growth and we'll grow our way into the debt rather than policies that address the debt. So I think inflation is going to be a long-term story, and it's priced that the Fed's going to have an immaculate decade at 2.3%.
It's very interesting. So you think inflation has upside based on all the fiscal spending, not necessarily tariffs. Is that correct?
Well, tariffs are part of it. Populism and nationalism go hand in hand. Tariffs are inflationary, nationalism is inflationary, and populism is inflationary. And those are driving forces in politics. And the market's got its hands over its ears. It's thinking about the Fed that's going to cut rates. And that's inflationary as well. So short term, I'm not really worried about inflation spiking with tariffs. I think inflation grinds higher with tariffs. But over the next decade, everything, all the forces are going to create an inflationary environment. And that's the actual political endgame. It's trying to be engineered, creating nominal growth to grow your way into the debt rather than real growth, which is much harder to achieve.
All about nominal GDP, not real GDP, right, Critty?
I will not confirm or deny. This was a large conversation ahead of the show. But when you're talking about individual stock picks, though, at the end of the day, they're given kind of these government stakes that are being discussed, for example, or this populism. Is that how you pick stocks for the next 3.5 years?
I'm short Intel right now, actually. So I find it a bit frustrating, a lot of these policies, because it's not capitalism. It's putting 20%, it's not a tariff, but a fee on NVIDIA and AMD on chips they're selling into China. It's things like that. It's a stealth tax. It's not even stealth because it's open, but it's a different kind of tax, and it's anti-capitalism. And taking a stake in Intel, you take stakes in companies when they're in financial distress and they're of national security concerns. But Intel's got $50 billion revenue. They don't need a stake from the government to see them through.
So the Trump administration will argue it is a national security concern,
I
given
agree
the manufacturing sector. So what would make you change your mind on that take?
Well, it's too new right now to think about. I don't know if it is going to happen, and I think the jump is probably overdone. But it is something to think about that I hadn't thought about, because I do agree it's nationally important. I just don't agree that Intel's in distress. It's a low growth, low profitability, not great returns on capital employed, but it's not at risk of failure. I'm short it.
Oh, sorry, you're short it?
Yeah, unfortunately.
All right.
It had the big jump, and I was really happy with my short. But yeah, these are the kind of things I didn't even think about, that the administration would be taking a stake.
Build me. Are equities a good inflation hedge?
They're a reasonable inflation hedge over the long term, but they come with a J-curve effect. Unexpected inflation like we saw in 2022, you get higher long-term interest rates, maybe even higher short-term interest rates. That puts multiples down, but in the long term, they are a nominal growth asset as well. So they're a reasonable inflation hedge over the
Are they a good inflation hedge at these levels?
Well, I've just reduced our overweight equities yesterday. We've gone back to neutral, so it's not a stance that I'm negative on equities. We do think we're in an environment where the Fed is going to be cutting monetary stimulus in an environment where the economy is not falling into a recession is good for equities. But today, it's a historic day, Friday the 15th. The MSCI World's trading at 2.4 times price to sales. It's never happened in history before, and that's where we're at today. So the multiples are a risk when you're thinking inflation hedge, because the multiple contraction comes with inflation.
You mentioned you just reduced your overweight on equities. What was the main kicker for that? Was it just valuations, or are you less convinced on the AI trade? We know that's been a big juice for the U.S.
I'm not less convinced on it, but the multiples reflect it. So NVIDIA is the biggest weight in my global equity portfolio, but I don't love it right now at the multiples it's trading at. There's a lot priced in. If Intel's price doesn't change over the next 3 years, And all the earnings estimates are delivered up until 2028. NVIDIA will be trading at 28 times forecast earnings in 2028. That's if every estimate is met. So, and that's assuming the stock price doesn't change. So there's a lot of good news priced into it right now. So I've got a 5% weight in my strategy. It means I'm underweight versus the MSCI World, but I'm not worried about the hyperscaler spending. I'm just worried about the multiples that things have gotten a bit too frothy.
So in some ways, you're arguing that inflation is going to be juiced from all this fiscal spending, but you have to compare that with what's going on at the Fed, with all this political pressure, the likely dovish shift from the new Fed chair happening next May. What is the likely outcome of the combination of those two things in your mind, hot inflation and a dovish Fed?
That's great news for equities. I think you get a Fed policy that's far too low for the realities of the economy and the realities of inflation. It's terrible for long-term bond yields. And eventually equities will suffer from the higher long-term bond yields, but you'll get a real jump up from monetary policy that's probably too loose.
What does a real jump up look like?
It's hard to say. It's going to be a momentum-fueled thing where...
I'm hearing a lot of people talking about parties at the moment. Maybe it's just August. If the party finishes at 2 a.m.
I'm doing the Irish goodbye right now. I'm leaving without saying goodbye. I've gone back to neutral, and if we have another leg up, I'm going to move underweight because things aren't priced for perfection, but it's almost perfection, and there's a lot of bumps in the road.
What's the downside?
The downside is you get to a normal multiple. You fall into a normal multiple.
So you put the market on 18. I think that's the average for the last.
Yeah, right now the MSCI World's at 21 times. The average maybe 15 to 17 times. And if you do get into recession with high inflation, a stagflationary environment, you've got to have a discount to a normal multiple. So in bad scenarios, there's 40% downsides. In my pretty benign case, in an economy that's growing but not falling into recession, you probably see a 10% multiple correction without that much earnings growth.
Love an Irish goodbye.
Oh my gosh, a potential 40% downside though. That is quite the call in a worst case scenario.
That's
the extreme, sure, but still, even the fact that that's in one of the scenarios. We should talk about the main event for today, especially when it comes to the defense story. We know that is a big chunk of your portfolio as well. We have a summit in Alaska between the United States and Russia. Is this a good thing or a bad thing for defense, but then also the European market broadly? How do you think about it?
Yeah, anything where Trump's involved, it's hard to have a high conviction because I think he reacts to things, and even if he has a game plan going in, it may not play out the way he expects it to because he's emotional, he's tactical, he tries to read situations. I do see scenarios where you're going to have another ramp up in European defense spending coming out of this summit. If things go wrong, U.S. may step away from supporting Ukraine with military, but I do think Europe is committed to increased spending to fill that vacuum, and European defense stocks have structural growth ahead of them.
And if things go right, what's a positive outcome? Does that include an unwind in defense?
I don't think you'll have a possibility of convincing Europe it went right. I think Putin and Trump may think they've got a deal, and then the details, I think that'll be hashed out with Europe, and you'll realize Putin's not conceded anything. That's just the way he's operated for decades and decades, so I'd be shocked if that changes.
So no defense unwind?
I don't think so, no.
I'm not going to let you sneak off without saying thank you. Thank you for coming to the party. Nice to see you this
He's
Friday.
leaving without saying anything.
Yeah, I know, but at least you're saying goodbye. Patrick Armstrong, Plurimi Wealth, CIO, thank you very much indeed. A quick look at the core six this morning. Slight change to the core six this morning. We've included Rheinmetall on that list. I might leave it there. Ferrari, maybe that time has passed. Italian markets are closed today. That was the initial impetus, but maybe actually this will be a permanent shift. LVMH is interestingly enough unchanged this morning. Novo is ex-dividend. I just need to make sure that's the right calculation on that. But Schneider's bouncing back a little bit. Nestle's up 0.4%. There's some interesting stock stories out there. You've got Pandora getting hit pretty hard this morning. Orsted's still in the news. Plenty of action for Chloe Melee.
Good morning. Let's start with the chip-making sector this morning. So we have a little bit of a mixed picture. We've got some read across from Applied Material, which is the largest producer of chip-making gear in America, and they provided a quite disappointing sales and profit forecast. So we can see a bit of that weakness feeding through into ASML and BE Semiconductor. However, Infineon and STMicro are holding up pretty well, but we don't see any major moves today in that sector, however. Moving on to miners. Miners are actually having a pretty good day today, and that is despite the fact that Chinese economic data was quite disappointing and there was a quite weak production in factories and mines. For Glencore, part of that boost might also be because its price target was raised at Citi this morning. So we see quite a lot of green across that mining sector this morning. Moving on to Pandora. Pandora is getting hit quite hard today after its revenue missed estimates. It said that the tariff impact was still a little bit unclear. It didn't really know what mitigating actions could be taken for that, and therefore that uncertainty is feeding through into shares down now 12.3%. And then finally, still staying in that consumer segment, the e-commerce retailer Boost also provided quite disappointing results this morning. The margin came in below estimates in noted soft consumer demand, and therefore shares are getting hit as well. We are down 5.3% at the moment.
All right, Chloe Melly from our equities team walking us through some of those early movers. We thank you so much. Coming up, we're going to keep a closer eye, I should say, and deep dive into some of the other sectors. Oil traders, of course, watching for any indication if sanctions will be eased or tightened when it comes to Russia after the crucial meeting in Alaska between the leaders of the United States and Russia. Stick with us. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
From the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Happy Friday, Friday the 15th. Welcome back. You're watching the opening trade. We are, let's call it 18 minutes into the equity market session. Broadly, we are higher. Some markets are closed today. Italy is out for the day or for Assumption Day. Athens, other markets around Europe also closed. In terms of what is moving, I think there's some interesting trades out there that are worth paying attention to. One of those is what is happening within the defense space this morning. Let's take a look at what is happening with the big names that we watch so carefully. And as you can see, there is some weakness. This ahead, of course, of the summit that's going to take place in Alaska a little bit later on. Donald Trump meeting with Vladimir Putin. They're going to be talking about Ukraine. They're going to be talking about other things apparently as well. But Ukraine is where the world's attention is going to be firmly focused. What is the relationship between this summit and the defense stocks that you see on the screen in front of you? Let's try and answer that question. Jerry Doyle, Bloomberg's global defense editor, joining us around the table. Good morning.
Good morning.
So in terms of the various outcomes that we are talking about, the permutations that we're watching, how do they relate back into European defense spending, European defense stocks?
Well, I don't know that there's a completely clear picture on that. I think a lot of the spending that we're seeing in the European defense industry right now is already baked in. There's 2 sixth-generation fighter programs that are well underway.
Yep.
I don't think those are going to disappear. In theory,
yep.
I don't think those are going to go away. Other things like building up production capacity for artillery ammunition, armored vehicles, small arms, drone production. I think a lot of those areas are places where the governments are going to continue to spend money because they see them as strategically important, regardless of what happens in Ukraine. Of course, if the fighting continues in Ukraine and the Europeans continue to supply Ukraine with ammunition and other war material, you can expect more spending, and those companies are going to benefit.
Jerry, can you talk to us about maybe Russia's defense capabilities here? I guess there's a lot that have been said about a weakening Russian economy and the fact that they can't necessarily afford for this war to extend on much longer. Is that the feeling you get from the defense sector?
Well, as Bloomberg has reported in recent days, the Russian economy is starting to show some signs of strain. One of the things that happened when Russia moved onto a war footing was the government mandated loans of a very low interest rate, that's sort of a government-decided interest rate that was disconnected from the key interest rate that the central bank set. And as inflation risks have risen in Russia, the key interest rate has continued to rise. So now all these banks that have loaned to the defense sector to build more armored vehicles, to build more artillery, more drones, more planes, they're stuck with loans that are just not going to perform. And we already saw VTB, one of Russia's main banks, the lending collapsed 49% in the last year. So those economic strains are going to be difficult to paper over and certainly sustain if the war effort continues like this.
Jerry, this is coming in the broader picture of maybe some skepticism when it comes to whether the European money that's been allocated to defense actually manifests into ultimate defense spending. You've seen Rheinmetall, for example, as a great example of that, in terms of some of their contracts maybe not coming to fruition as they'd like. Regardless of what happens in the summit, which I know is a very hard thing to pull out, what is the risk that the money promised to the defense sector doesn't show up?
In the near term, I would say the risk is fairly low. With Rheinmetall, for instance, they are expecting those big orders, which are in the German defense budget, to come to fruition in the second half of the year. Now, the issue for them is the defense budget, or the budget has not, the federal budget has not been passed yet because the parliament is on vacation. When that happens in September, October, then that money that they expect will start flowing in. Over the longer term, it's really harder to say.
How much capacity does Europe have right now to deliver to Ukraine what it needs to carry on the war? If the United States was to walk away and Europe were to have to fund it, where would that place us? And would we find ourselves in a position in Europe where we have to basically buy stuff from the United States to keep this conflict going?
I would say it would probably be a little of both. Europe is quickly building capacity, again, for things that are easier to produce, like artillery shells. I think that would be a fairly easy way for Europe to continue to supply Ukraine. Other areas, such as armored vehicles, tanks even, would also be areas where they could continue to contribute. For higher-end systems like air defense, that might be something where they would need to continue to buy from the U.S. and transfer it to Ukraine.
All right. Jerry Doyle, our global defense editor, walking us through some of those dynamics. We thank you so much. I want to turn to another area of the market in focus ahead of the U.S.-Russia summit. and that is oil. Indian Prime Minister Narendra Modi spoke earlier about the country's oil dependency after Donald Trump imposed secondary tariffs due to India's purchase of Russian energy.
हम सब जानते हैं कि हम एनर्जी के लिए
We are dependent on a number of countries for our energy supplies.
पेट्रोल हो, डीजल हो, गैस हो,
Be that petrol, diesel, or gas,
खर्च करके लाना पड़ता
billions are spent on imports.
हमें इस संकट से
We need to get the country out of this crisis and self-reliant for its energy.
And of course, oil traders watching for any indications that sanctions will be eased or tightened on Russia after the crucial Trump-Putin meeting. For more on the consequences, Bloomberg's Anthony DiPaolo joins us this morning. Anthony, talk to us about that ripple effect. I mean, Donald Trump has been very clear that if we get a negative outcome from this summit, sanctions may be put on more quickly than expected. Yet, one that was threatened earlier, the markets didn't react. How are traders thinking about this?
Yeah, good morning, Kriti. Well, I mean, you are seeing in the market that it doesn't look like traders are really concerned about a reduction in supply. So we're not seeing a very bullish move in the market right now. We've come down in terms of Brent prices over the last couple of weeks, and we're kind of holding that level around the 66, 67 handle today. So it doesn't look like traders are super concerned about a decrease in supply, so additional sanctions that would take more Russian supply off the market. We just heard those comments from the Indian Prime Minister because they are having issues there already in India because Trump has applied those secondary tariffs on India to punish them basically for buying that Russian crude. So they're being punished for buying that Russian crude while there are still really no direct sanctions from the Trump administration on purchases of that crude. We do have that G7 price cap in place. India has admitted that they've bought some cargoes above the price cap. They've been able to buy some below, and that's been a real price saver for them. So they're very price sensitive in terms of India. So that's why they've gone and really doubled down on these Russian imports over the last couple of years. So that's an issue that we're already seeing in the market. We're already seeing India scrambling for some barrels, buying from the Middle East, buying from the United States, other countries in the Americas. But we'll see those barrels shift around as they have done over the course of this conflict. So we're seeing that shift right now, but we're not seeing a major sign from the market that people are concerned that there are going to be fewer barrels on the market come Monday when markets reopen, Kriti.
Anthony, given the catalyst of this Russia-Ukraine meeting on Friday, do you think if we do get a breakthrough, we could see Brent crude returning to the year-to-date lows, which is around $58 a barrel? Is that a realistic expectation?
Yeah, I mean, for sure, a breakthrough would be bearish for crude, and the impulses already are a little bit bearish right now. As I said, we're not seeing that idea that there's going to be a lot of barrels taken out of the market, and even as Trump kind of hedges his bets and seems to say that there's not a great chance of a ceasefire in this meeting, we're seeing Putin making lots of other moves going in and wanting to talk about other things like nuclear treaties, like business ties. And we know that Trump likes to make a deal. He's very concerned about Russia's nuclear capabilities, and so that's one of the factors that's been influencing his relations with Putin, with Russia. So we know that Trump likes to talk about those things, and Putin is going to go into that meeting trying to give Trump some of those things that he wants to talk about. That also makes Russia appear in a better light as well as a global economic and military power to come up with a deal where they can kind of push that Ukraine issue aside. So not looking like we're going to get a deal on that, but also not looking like we're going to get additional sanctions on the oil.
Anthony DiPaolo.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Welcome back to the opening trade. About 30 minutes into today's session, green on the screen across the board. And I think this is really interesting because we opened at higher levels than this and started to pare back some of that momentum. I want to bring a special attention to the CAC 40 here because that is where outperformance is, despite the fact that we got some pretty poor Chinese data. Keep one eye on the DAX as well, because underneath the hood here, you are seeing a defense unwind. On the surface, not showing up at the top guy.
Okay, let's talk about some 52-week highs. There's a few in the market today. Interestingly enough, some coming out of the mining sector. Antofagasta up by 3.2% today. The mining sector, you would have thought would be affected by what is happening with China. Remember, this is a big copper producer. BMW in the car sector also, you could argue, could be affected. Big exposure into China, not big affected this morning. That stock is higher. Raiffeisen also tracking higher. There's a bunch of banks out there that are at 52-week highs today. Look at some of the Spanish banks, BVA, certainly tracking higher. You've got names in the banking sector that continue to drive European equities. Just one example of that. But it's interesting to see that the European equity is very much on the front foot as we come in towards the end of the week, Val.
Well, here's what else is on our radar this morning. China's economy slowed across the board in July, with factory activity and retail sales disappointing. The latest snapshot suggesting Donald Trump's trade war is beginning to weigh on the world's second largest economy. And Intel shares jumped post-market after a Bloomberg scoop that the Trump administration is discussing buying a stake in the beleaguered chipmaker. We're told the administration hopes a deal would shore up Intel's planned factory hub in Ohio. The size of the potential stake is very yet unclear. Russian President Vladimir Putin is seeking to strengthen his rapport with Donald Trump ahead of their summit in Alaska. The U.S. president, meanwhile, is downplaying today's talks, saying that the follow-up involving Ukraine's leader will be more important. Kriti.
I mean, it's fascinating here that this is the biggest risk event that we are seeing. It shows up at about 8 p.m. London time with the joint presser expected to follow. But, Guy, it's the positioning going into this event that maybe is more interesting.
Absolutely. But I just think it's a wildcard event. Like, how do you position for this in a market that is very bad already at predicting geopolitical events? This is just an event that is even more difficult to predict. You've got Putin and Trump in a room together, nobody else. The outcome of this is very, very hard to read. Is this a risk event that you can, from a market point of view, do anything with?
Or perhaps, you know, an entertainment event with the likes of a joint press conference between the two leaders. We know that Trump likes to do what he calls the weave. Can't imagine doing that in front of Putin, but let's see.
There's been some quite interesting Oval Office experiences for global leaders. I would find it staggering to believe that such an event could happen with Vladimir Putin standing next to him.
I think it's safe to say that we'll all have our popcorn ready for that press conference if it comes forward. Our next guest, of course, has a piece out this morning on that summit titled "Trump Has the Means to Deliver an Alaska Surprise." Bloomberg Opinion's Mark Champion writing that while he is skeptical that Donald Trump is ready to impose his threats of, quote, very severe consequences for Russia, it's worth remembering that he can, and if he does, he writes, he will be the first to admit in underestimating him. Mark joins us now to talk to us a little about your column. Walk us through that. What tools are at Donald Trump's disposal here?
Yeah, I mean, this has been interesting, you know, so even before he came to office, there was actually, if we remember now, there was a lot of hope in Ukraine, for example, that this would actually be a U.S. president who would be potentially stronger than his predecessor, Biden, in supporting Ukraine and be tougher. So there was that hope, and, you know, they could walk through exactly, you know, what the U.S. could do, what they needed in order to make it difficult for Putin. It ranges right from the kinds of secondary sanctions that, you know, Trump is talking about now, has been for several months, but has delayed, and then to, you know, what they can provide militarily. The U.S. has a lot of scope. It is actually the only country that can really, you know, put that kind of pressure on Putin and make it just not worth his while to continue, simply because he would know that he's not going to succeed. But that would require an enormous about-face in what we've seen of Trump's approach to the war, his adoption of Russian lines on, you know, who's at fault and, you know, who's preventing peace, the way that, you know, you mentioned these, you know, encounters in the White House. We all remember, you know, Putin's real dressing down of Volodymyr Zelensky in the White House. So, I mean, as I say, I'm just deeply skeptical that we're going to see anything like that. We should remember, too, these summits normally, you know, these guys haven't met each other for quite a number of years. Putin hasn't been to the U.S. on this kind of, on a formal visit since 2007. You know, this is already a win for him in the sense that it's, you know, he's out of isolation, you know, quite prominently. But, you know, normally this kind of event, it is preceded by months of teams of Sherpas, all kinds of meetings, pre-meetings, and by the time you get to the summit, you know, most of it is already pre-written. This is the opposite. This happened, you know, was set a week ago. You know, Steve Witkoff went to Moscow, may have misunderstood what was said in a room, comes back, Trump starts talking about, we're going to, you know, get ready to sign a deal, we're going to do territorial swaps. Then suddenly the rhetoric changes. So, you know, it's, as you say, I mean, it's a real crapshoot to understand exactly what's going to come out of this.
What would a second summit look like? And would a second summit be more difficult for Vladimir Putin, in as much as he in some ways can control the narrative with Trump in the room, but you put, I don't know, who could come from Europe, the French, the Brits, the Commission, put them in a room as well, put Zelensky in a room. Yeah. Is this Vladimir Putin's best opportunity? If there's a second summit, does it become more difficult?
It definitely becomes more difficult. So even you know, optics is the wrong word, but, you know, even the sort of the physics of the meeting, in his mind, and he won't be wrong, you know, it then becomes him against a group of people who are in opposition to what he's doing. So, you know, the dynamic immediately changes. Secondly, once you have the Ukrainians at the table, you actually have to start talking, negotiating. You have to, you know, the great thing for Putin about going to Alaska is he can talk to Trump. He doesn't even, you know, he doesn't even have to talk about Ukraine if he doesn't want to. He's already, you know, if you see what he's been saying ahead of the meeting, he says, well, you know, there's great economic stuff, you know, between the U.S. and Russia that we can talk. We can talk arms treaties. We can do all this sort of stuff. We're a long way from Ukraine and Europe and so on. This is just me and you, right? So that suits him very well. dividing the world between great powers and so on. But when he gets in a room with the Europeans, and it then gets very nitty-gritty, and he actually has to do things which at the moment he seriously does not want to do. He sees no reason to negotiate a ceasefire. He's winning on the battlefield. The Americans are weak on Ukraine at this point. So for him, there's no purpose.
All right, Mark Champion from Bloomberg Opinion, we thank you so much walking us through, of course, the crucial geopolitics as we lead up to the summit. We are less than 12 hours away from this historic meeting between Donald Trump and Vladimir Putin. Coming up on the program, we're going to tackle this from a very different perspective. Tristram Leach, Apollo's head of investments for Credit Europe, about the continent's private credit moment, but also how they're thinking about the defense narrative and the AI narrative. Looking forward to that conversation next. This is Bloomberg.
So important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Welcome back. 41 minutes into the equity market session, and this is the picture you find yourselves with. Actually, equities on the front foot. Volume is epically light. You have a bunch of markets that are out today. It is the Assumption Day holiday. Markets like Italy are closed for the day as a result. In terms of the breakdown, basic resources leading the charge this morning. You've got names like Antofagasta definitely on the front foot. Chemicals and cars are also doing well. Recent underperformers. It's interesting that technology is under pressure, as is luxury to a certain extent down today. Names like Pandora are under pressure. Technology fairly flat today. Disappointing numbers out of AMAT yesterday, maybe dragging on those figures.
Looking forward to seeing how this price action shakes out through the rest of the day. I want to take a moment and maybe approach some of these thematic issues from a completely different perspective, that of the private markets, specifically through the lens of Apollo. They're managing about $840 billion with about 20 to 25% of that exposure right here in Europe. We've got the perfect guest to talk about it. Tristram Leach, Head of Investments for Credit over at Apollo for Europe, joining us around the table on this Friday morning. Thank you so much for your time. Welcome to the show. We've been having this big thematic conversation about reallocation of American funds to Europe. This idea that Europe is the next kind of leg of growth, a lot of which shows up in the defense sector. Given the geopolitical concerns of the world, how are you thinking about that ramp up?
Yeah. Look, Europe has been underspending on defense. I think that's been pretty clear since the wake-up call of 2022 and obviously subsequently as well. So Europe needs to spend a lot of money on defense as NATO, European countries move to hit NATO spending targets of anywhere between 2 and even up to 5% of GDP. Across defense, as well as other areas of investment, infrastructure and energy, there's an enormous amount of spending that needs to happen in Europe. And we at Apollo, we've already done $50 billion of large-scale financings in Europe over the last couple of years. But with the kind of low-cost, long-dated capital we have, we're really excited to lean into that and the investment needs of the continent.
It's fascinating the way that private markets are taking on Europe right now, because on the one hand, firms like Apollo and credit investors themselves are kind of bridging that sovereign funding gap on the one hand. Yep. On the other hand, they're also speaking to democratizing the access to those kind of funds. Talk to us about how an average European investor can get access to some of the work you're doing in private credit.
Yeah, there are multiple routes by which we offer our product, both to institutions, some of which clearly are providing pensions to European citizens, and we also have product that's directly targeting the wealth market and semi-liquid products, etc., that wealth investors can access. So when we look at markets at the moment, you see a public market that's painfully tight, and you see really quite attractive premium to go into private markets. And obviously, we're foursquare behind the idea that the private investors should have access to that more attractive risk reward.
Tristram, we're all talking about this summit happening in Alaska. Do you see the possibility that these funds in Europe are just deployed a bit slower than expected if we do get some sort of ceasefire? Is that a risk on your horizon? I see that you've penciled in, the fact that NATO's increase to defense expenditures to 5% of GDP is going to be around $7 trillion of spending by 2030. What's the risk around that number?
Well, first of all, I'd argue that regardless of the outcome of the summit in Alaska, the wake-up call that Europe has had in terms of defense is real. And that spending is going to happen. I guess your question is the cadence of that spending and how fast it happens. Maybe a little bit of the urgency comes out of the situation if it feels like there's a resolution happening to the Ukraine war. But I think the spending is going to happen. And remember, Europe has been underinvesting in a far broader range of areas than just defense. As I touched on earlier, it's infrastructure, it's digital infrastructure, it's AI. We think there's 18 trillion that needs to be spent across the continent in order for Europe to catch up in these areas. That's something that we're excited to provide solutions for.
Is there any risks around European economic growth that would possibly dent your optimism around European private markets?
I mean, Europe's been kind of a backwards from a growth perspective for most of the last 20 years. The fascinating thing here is just that so much of the European economy has been funded by banks. 75% of financing of US corporates is non-bank financing. In Europe, that number's in the teens. It's really small. So even if the growth is slower than people hope and we hope, by the way, we're excited about the German fiscal picture and the stimulus that can give to growth, but even if it's slower, the opportunity for private capital to provide these solutions and to enable European governments and companies to do this spending, that's real regardless.
Is there enough money to fund European defense and European AI?
Sure there is, yeah.
Okay.
Yeah, look, both are big areas. I said the aggregate number is massive. That's why we need private capital, as well as public markets, as well as banks, all of those sources of capital. But here's the thing. This year in particular, we've seen a lot of interest from non-European investors to move capital to Europe.
Right.
People are saying, look, what's the opportunity in Europe? They've got a sense for the growth that's coming. They're thinking about rebalancing potentially out of the US.
Yeah, so what's the motivation for that?
I think it's a palpable sense that Europe is changing. Europe's had its wake-up call. It knows it needs to catch up.
Right.
And there's real opportunity there. And let's be clear, people have been very, very overweight the US and very underweight Europe. So, you know...
So this isn't that they love Europe, it's just that maybe they're overweight Europe. Over the United States, sorry.
Look, I think the sentiment towards Europe has changed dizzyingly fast this year, right?
Yes.
We came into the year incredibly negative, and now we have a world that's a lot more excited about Europe. So it's a positive thing for Europe, but it's also probably a reflection of positioning, having been very, very overweight the US historically.
Is the defence bet, and you're following something that has to happen, is the AI bet more speculative at the moment?
I think it has to happen as well, right?
But are all the dollars going to, in 5 years' time, which one are we going to look back on and go, that was an easier investment to make? Is the AI story more speculative at the moment? Are all of these data centers going to deliver? Are the returns there going to be necessary? Are the amortization of these assets is it more difficult to make those calculations, or is there just a frenzy around it that means you just have to invest?
From an equity perspective, there's probably a little bit of a challenge as to whether, you know, you're going to get the return you expect on every dollar you deploy.
Right.
From a credit perspective, there is clearly an enormous amount of investment that's going to need to happen. A lot of that is going to be in a very scaled way with very large companies, exactly the kind of capital we want to deploy, investment-grade solutions to large companies with high-quality assets. So I think this credit opportunity is very, very compelling. Whether all the equity cases end up playing out, you know, I share your view that it remains to be seen.
Let's go into the AI data center build-out question as well. From an equity perspective, one of the key concerns has been the backstop and the supply of energy. How does that show up in the way that you actually formulate some of these credit financing opportunities?
Well, I mean, the opportunities really are twofold. One is, as you said, the energy requirements of AI are massive, and that drives an enormous need for investment in energy, in grids, in energy security, etc. You know, we just did the largest ever UK sterling-denominated private placement to EDF, 4.5 billion sterling. The use of proceeds there was to build out Hinkley Point. Again, that's a driver of energy security for the UK and energy availability. And in terms of AI, there's direct investment in data centers as well. We recently made an investment in Calvion, which provides heat thermal solutions for data centers, amongst other businesses. So there are these adjacent industries which can provide very, very compelling pockets of opportunity, both the energy sector and other adjacencies to AI.
Can I squeeze one final question in, which is a very macro-driven question? There's a lot of concern here that when you are investing in private credit, because it's growing so quickly and so fast, that should something go wrong, should financing conditions tighten, that it is a contained market, and that any sort of pain or correction in the private credit market wouldn't be a systematic risk. Is that a fair read?
It's certainly how I position things. Look, the amount of leverage implicit in the system is not that high. A lot of private credit funds are either unlevered or modestly levered. And you know, when we think about a lot of the investments we make, our assets and liabilities match well. So you don't have the risk of kind of a bank run in private credit. So yes, there'll be a cycle, there'll be some dispersion, possibly between managers as well. But you know, I think we'd welcome that. We think that there's no asset liability mismatch in private credit, and the amount of leverage in the system is well contained.
Great to see you. Thanks for stopping by to see us. Really appreciate it.
Thank you very much. It's a pleasure.
Trisham Leach, Head of Investments for Credit Europe over at Apollo. Let's stay in the tech space, actually, and talk a little bit about what is happening with Intel. The story overnight, a little bit mind-boggling in so many ways. The Trump administration apparently in talks now with Intel. Apparently the US government may potentially take a stake in the business. It was a scoop delivered by Bloomberg yesterday, picked up around the world, and Tom McKenzie joins us to talk about it. What do we know?
Look, it ties into your conversation you've just been having, which is that within the context of what the Trump administration is doing, they are looking to put capital into what they hope will be domestic champions. So what we know is, of course, the CEO, Lip Bhutan, went into a meeting with President Trump earlier this week after, of course, President Trump had called for his ouster as the CEO of Intel. He comes out of that meeting apparently with a Trump administration willing to take some form of stake in Intel. And the reason I put it in a broader framework is this is a government that, of course, is now extracting, will be extracting 15% from those sales and revenues from NVIDIA and AMD. They've also, of course, played that role in terms of US Steel, taking a golden share there in terms of that deal with its Japanese rival. And the Defense Department as well, taking a key stake, $400 million, in a producer of rare earth minerals. This is national security that is front and center for the Trump administration. But there is a cost to this. They want that national security insurance, clearly, for these domestic champions, but they're also saying there's a price to pay. We want an equity stake, or we want some of the revenue streams. We don't know the details in terms of this stake in Intel yet, but there's also the domestic politics, as well as the national security, as well as the geopolitics. There's domestic politics. One of the biggest fabs they're hoping to build out, would be the biggest in the world, they claim, Intel, is in Ohio, and that has been delayed because of cost structures and because they have failed, really, to lock in any major customers for their fabs.
Put us in perspective just how unusual this kind of investment agreement would be, because traditionally in the past, the U.S. government gets involved when they're bailing a company out, when someone's in financial distress. This is very much not that kind of picture.
Yeah, and it's a reminder of just how deeply and fundamentally the Republican Party has changed under President Trump as well. This is becoming less unusual. I gave those examples, of course, whether it's rare earth minerals, whether it's the steel space, whether it's NVIDIA and AMD. This is clearly part of a design and the playbook of this Trump administration. And from the sources we've been speaking to within the White House, our team in the US, this is probably not going to be the last of these deals. In fact, the Treasury Secretary himself, Scott Bessent, told our team this week that you should expect other sectors, other companies who want to have exposure to the Chinese market to possibly have and face similar structures as NVIDIA and AMD have. So again, it's about national security, about wanting these companies to set the standards when it comes to things like chips and semiconductors, whilst also trying to extract revenue. They're trying to have their cake and eat it, and whether or not that works is the key question.
The logic of it's national security, you don't sell to China.
Yeah.
So this can't be national security. It just, if we're going to sell to China, we want our cut.
Well, exactly. The Treasury Secretary is saying we want NVIDIA, for example, to be a standard setter, but we also want to be taking our cut at the same time. We think we can do both at the same time. We will see if that is doable.
You're in the hot seat for the Pulse in a few minutes' time, so don't go anywhere. Tom's going to stick around. Stay with us. There's a busy day coming up.
Busy day. A lot of data still to Friday to go. At 1:30 p.m., we do get a big print, U.S. retail sales. Remember, this is a direct feeder into U.S. GDP, so perhaps give us a good hint on where July is headed for the U.S. economy. We also have UMich consumer sentiment, and then the big one, the Trump-Putin meeting at 8 p.m. London time. It will begin.
Absolutely, which will set us up nicely for the weekend. There's plenty of things coming up this weekend. The Gracia Festival, Barcelona, is taking place. We've got an amazing horse race taking place in Siena. That is one to watch out for. The football starts as well. Bournemouth. I think Bournemouth are going to Liverpool. That's not necessarily the way I would like to start my season if I was Bournemouth going to Liverpool. And the World Games continue as well. Tom, what's on the agenda?
I've been to the Palio in Siena.
Oh,
it's bonkers.
Yeah.
So the jockeys ride round this ancient square, and it's a small town, and you just turn a corner, and each district has their own champion, their own flag, emblazoned on their own jockey. When I was there, they had no helmets, no safety gear. They get thrown off into the city walls, and you're there as a spectator, standing within feet of these jockeys racing around this ancient square. No saddles. Yeah. No stirrups. No. Yeah. Do they have reins? I can't remember if they had reins. Oh, there's no health and safety.
Come on now, Sienna.
No health and safety. The food's amazing as well around the whole thing. So there's amazing food that goes with it too. So it's not just that. Anyway, it's a spectacle twice a year. Anyway, we should also talk about the football as well. As I say, Bournemouth. Tough start, going to Liverpool.
We're speaking to Gary Neville shortly, and we're going to be asking him who he thinks is going to win the Premier League. Salford City, of course, he has a big stake there. So we're talking about Salford City, we're talking about whether or not, can Liverpool do it again, or do Arsenal finally have the title in their hands?
I'm sensing an Arsenal fan amongst us.
We're playing Manchester United, so that's a tough game.
Is it?
To start things off.
For who? I think Manchester United may be the other way around. Anyway, the weekend is coming up. We've got some great coverage. Bloomberg Weekend, the newsletter. You definitely want to pay attention to that. News, interviews, ideas, long-form stuff that you can relax and enjoy over the weekend. We'll see you Monday. There's going to be plenty happening between now and then. Enjoy the weekend. The Pulse is next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
President Putin dangles deals and a new arms treaty. As the Russian leader launches a charm offensive with Donald Trump, we preview today's crucial summit in Alaska. In the US, factories are starting to feel the pressure. Hot producer prices push traders to dial back expectations for a Fed cut next month, with investors now focused on margin pressure. Plus, Bloomberg learns the Trump administration is discussing buying a stake in struggling chipmaker Intel. Let's get to these markets then, and you have had and are on course for 4 straight days of gains in terms of European markets, despite the concerns about high producer prices, taking some of the steam out of the equity story yesterday stateside, though it's still worth noting that with very marginal gains by the end of the close, the S&P 500 was still at fresh record highs. S&P futures now pointing to gains of 0.2%. The benchmark 10-year at 428, stabilising after that sell-off that we saw across the Treasury curve. Not too pronounced, but it was certainly there on the back of those higher than expected producer prices. Euro dollar at 116, gaining on softer dollar. The euro is up 0.3%. And Brent in focus, this could be the asset of the day around this geopolitical meeting in Alaska. $66 a barrel on Brent, down 0.6% as we build up to that crucial meeting between the presidents of Russia and the United States in Alaska. Here's the picture across the map there. Modest gains here in the UK. The FTSE 100 up 0.1%. The CAC 40 over in France faring better than that. 0.6% is the gain there. And a similar picture over in Germany. The DAX up 0.6. The IBEX in Spain performing well at 0.8%. We're checking intel on the back of this story. It's the Bloomberg scoop that the Trump administration is looking potentially at taking a stake in this chip maker. The stock rallied and gained more than 7% by the end of the close yesterday. Looking to add to that today, pre-market, Intel is up 4.3%. Will it get that stake? Will it get that investment from the US government? What will it mean for its ambitions in terms of building out that foundry in Ohio? So for the conversations that matter, the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Happy Friday, everyone. So, Russian President Vladimir Putin is seeking to strengthen his rapport with Donald Trump ahead of their summit later in Alaska. The US president, meanwhile, is downplaying prospects for the talks, saying yesterday that a follow-up involving Ukraine's leader will be more important.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not.
I'm joined now by Stephanie Baker, our senior writer and author of Punishing Putin. Stephanie, thank you for joining us around the desk. Both sides, the Europeans, the Ukrainians on one side, the Russians on the other, seemingly trying to get leverage over President Trump, or at least trying to influence his thinking as he leads up to this potentially crucial summit then in Alaska. How do you think the Russians are positioned? They're talking about economic deals. They're talking about potentially arms treaties. They're trying to take the focus away, it seems, from the reality of the conflict on the ground in Ukraine. What are your expectations? What are you watching for?
Well, I think Trump wants a win out of this. He does not want to walk away from this saying, I failed to get Putin to agree, even in principle, to a ceasefire or further peace negotiations. So I think that's one of the reasons why Putin is going into this, trying to broaden the scope of these talks and dangle the prospect of arms control negotiations, U.S.-Russia business deals involving critical minerals. There's even talk of, potential oil deals in the Bering Strait. So I think what Trump wants out of it is to come away saying, I got this great deal. We're going to do these, we're going to have further talks on Ukraine with Zelensky, and we've got these other broader agreements in the works as well. And Putin's going to try to get back into Trump's good graces and delay any additional sanctions. And that is one of the main motivations for him coming to the table here, was, I think, the threat of additional secondary tariffs on India, one of the biggest buyers of Russian oil, I think did motivate Putin to try to reconsider and sit down with Trump.
On territory and territorial conversations, that's been a key concern, clearly for Ukraine and Europe as well. Has Trump heard them out on that? What is there a line that Russia could draw in terms of the territory that it currently controls, particularly in the Crimea and the Donbass region? Is there something that Russia is prepared to give up as it grinds out those military gains, but clearly faces pressure on the economy?
I don't think Putin is going to give up any territory that they have gained militarily. I think that's a non-starter. On the contrary, what he's asking for is territory that Russia has illegally annexed but does not control on the ground, and it wants Ukraine to just hand that over for seemingly nothing. So Putin's maximalist goals have not changed, and I think he will try to spin this in a way to deflect from that with Trump and play for time, because the Russian forces are on the up. They're moving very slowly, but they are gaining territory. And he thinks he can outlast Ukraine, that Trump is not going to provide any additional military support. The Europeans are a bit weak, and that, by the end of the year, Ukraine will be severely weakened militarily.
Well, can he outlast the Europeans? Is the European commitment now around defense spending enough to fill the gap from the US? What is Europe's response if on the back of this you get no ceasefire and no US sanctions on Russia?
Yeah, it puts Ukraine and Europe in a really difficult bind because Europe is committed to buying weapons from the U.S. for Ukraine, but not at the capacity or at the speed that's really going to make a difference to Ukraine on the ground. Now, they could do this next step, which a lot of people have talked about, of seizing Russian assets, the majority of which are in Europe, Russian central bank assets, and using that fund to purchase U.S. weapons for Ukraine in the immediate future. But they've been so divided on that. That hasn't happened. But that would provide an immediate boost, both psychological and militarily, to Ukraine, and really hit back and put pressure on Putin.
Okay, and that would need getting the Hungarians on board, wouldn't it?
It would.
In terms of that kind of measure that Europe could reach for. Stephanie Baker, our expert, of course, in terms of the thinking in Moscow, Kremlin and Russia, as well as we lead up to this crucial meeting in Alaska, our senior writer. Thank you, Stephanie, for the analysis and the context. Stay with Bloomberg, of course, as we take you to that much-awaited summit between Presidents Trump and Putin. Tune into our special coverage live from Anchorage, Alaska, later today. We are on the ground and bring you all of that coverage. Meanwhile, Wall Street traders dialing back expectations for a Fed cut next month after fresh data on wholesale prices signaled tariffs are pushing up inflation. Joining us now is Miles Bradshaw, head of global aggregate strategies at JP Morgan Asset Management. Miles, good morning. Were markets fooling themselves in thinking that you would get 25 in September at 100% or possibly even a jumbo 50?
I don't think they're fooling themselves. I think it's about the next payroll report. And so I think we've got to take a step back. There's a few things. The inflation data. What did we have this week? The inflation data was relatively benign. We're seeing goods price inflation show the tariff impact, but that's been offset by service inflation being a bit softer. And that's what the market initially rallied on. And then we had the PPI data, which in truth what it showed is that actually the tariff impact on goods is much higher at the factory gate, as it were, than on the consumer shelves, implying that margins are actually taking some of this hit. And there were some details that suggest that the PCE, the Fed's preferred measure of inflation, will be running a bit hot, call it at 3% this year. To get really concerned for the Fed about tariffs, I think you've got to ask yourselves, is this going to feed into higher wages? And the data there is still very benign. It shows that wages are not accelerating. The cost pressures at wage pressures for the lower income quartile they're showing the lowest rate of increases. Percentage of people not getting a wage gain is at the highest level since July 21. So this is, I think, the context on the inflation side, which gives more weight that the Fed can actually adjust policy down. And that's really been driven by the payroll report we had a couple of weeks ago that showed a much weaker labour market than was initially shown when the Fed met in July.
So you think, given that, you think they can go and they will go in September, but maybe the path forward becomes more complicated?
I think, given that data, 25 basis points in September is highly likely, and that's just passing the words of the various Fed speakers, not just the most dovish speakers, but middle speakers, people like the San Francisco Fed President Daly talking about 3 cuts this year. I think September's likely. And really, the 50 basis points, I think there is a chance to get 50, and it's going to be that roulette wheel of the next payroll report. You know, if that is showing 0 payroll growth, then I think 50 basis points is on the table.
Okay, so it goes to that emphasis on the labour market. I'm just trying to, if I project out to 2026 and I think about the reworking of the Federal Reserve with Fed Chair Jay Powell out and whoever is in that role, clearly in favour by President Trump, and of course the other changes amongst the governors, I'm trying to think of a more dovish Fed, but at a time when maybe the pass-throughs and tariffs starts to have that impact on wages, starts to have that impact on consumer prices. How do we think about that in 2026? A more dovish Fed, but potentially the data is looking less benign when it comes to inflation.
I think, so if you're saying to me we've got wage inflation, then I think that means this sort of changing composition of the Fed may see the Fed a bit slow to respond in terms of higher rates. But I think if you're just talking about consumer price inflation, the base effects are causing the year-on-year rate to go up. We're not seeing the second-round effects in terms of wages. The labour market continues to weaken. It's not dissimilar to what the Bank of England's been facing for the last 12 months and more. They've been cutting rates 100 basis points, while inflation, core inflation, has been running above 3%, and wage growth has been quite sticky above 5%, because they're looking forward at what the growth data is telling them about the outlook.
Miles, double-digit returns in bonds. What's the strategy?
So I think what the market is pricing is broadly 100 basis points of rate cuts. That gives you your income. You can get easily a 5% income without taking a lot of credit risk in terms of global bond markets. And the double-digit return in bonds is that weakness we're seeing in the US labor market. GDP growth in the US has halved. You know, it's running at about 1.5% in the first half of this year, down from 3%. Tariffs are squeezing real incomes. And we're already seeing signs of diminishing labor supply. If central banks need to cut rates below 3%, that's where you're going to get your double-digit returns for bonds.
Why are European bonds looking more vulnerable to you than treasuries?
I think they've already had their moment in the sun. You know, the ECB's cut rates to 2%. They're at neutral. More importantly, valuations are not as attractive. The real yields that you get after expected inflation is well below the highs of the great financial crisis. In the US, it's not. And then let's talk about the sort of fundamental changes, the German fiscal supply, the significant issuance we're going to have. How is Europe going to increase its NATO spending? How is it going to fund that? And then the technical changes, very detailed in terms of Dutch pension reform, reducing demand. It doesn't seem that that's where you're going to get very strong returns. Compared to the US.
I saw that in your note. That's the first time I'd seen a mention of Dutch pension reforms. Maybe it's something we need to focus on. Yeah, we like geekiness. We dig into that in a bit more. Just before I let you go, you're still short the dollar. Is that not being priced? These rate cuts not fully priced into the greenback? What's the story
the market
around
got excited about a weak dollar on the back of Liberation Day. The fact is, the dollar is still trading, on our views, slightly expensive on valuation terms. Call it 5 to 10%. And so, I think for me, it's really about the catalyst. The support for the dollar is that it's the highest yielding G10 currency out there. It's one of the highest yielding currencies anywhere. You have to go into Latin America to get high yields. So as those rate cuts come down, it makes it much easier for all those foreign investors, particularly in Asia, to start hedging their dollar portfolios. And that's the catalyst, I think, to get the dollar weaker.
Okay, Miles Bradshaw, thank you very much indeed on weaker dollar and European sovereign debt having its time in the sun already. Miles Bradshaw, head of global aggregate strategies at JP Morgan Asset Management. Coming up, the Trump administration is said to be in talks with Intel over a possible government stake in the chip maker. We bring you our scoop next. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London, and Bloomberg has learned, talking of the insights you need, that the Trump administration is in talks with Intel to have the US government take a stake in, of course, what is a struggling chip maker. I'm joined now by Ed Ludlow, co-host of Bloomberg Tech, who has the insight and the analysis around this story. Ed, how surprising is this? What do we know about what is potentially in the works?
You know, on paper, like, Intel is everything the Trump administration wants, right? An American company that is trying and has been for a long time to bring an industry back to America that's since departed, right, in semiconductor manufacturing. The thing is that we're getting from sources that it's a stake. The US government takes a stake. How big is the stake? We have no idea. The past precedent, right, is MP Materials in the rare earths domain, where the US government became its single largest shareholder. You know, I don't think there's a suggestion that it would be at this scale, but it would give them not just the sort of ongoing capital backing. The whole point is that politically, what Intel's trying to do, get this Ohio facility up and running as the world's biggest chip manufacturing facility. It's exactly what the administration is putting at the center of their economic plans, right? Yeah. And the relationships turned around quite quickly.
Does it talk to us about what this means in terms of other funding sources from the government for Intel? Yes. So the CHIPS Act, obviously that was a Biden administration policy. The Trump administration have put question marks over that. Where is that funding piece, and what does it mean for the customers, the clients of Intel? Have they locked in any major customers for these foundries?
It is the perfect question, because on paper, Intel was the great beneficiary of the CHIPS Act, right, in terms of the grants and loans they were able to secure. The money wasn't forthcoming because it was designed such that until you could show that you were actually going to build and do the thing that the money was intended for, you don't get the money. And I think you used the phrase anchor customer. Intel just doesn't have any. It didn't have any at that time for lead-edge chip manufacturing. It's why, like, the political element of this is as important as the capital. Like, capital's commoditized. Pat Gelsinger, the former CEO, he had no problem getting private sector backing, you know, kind of financing through credit investors and private equity partners. It's just that the Trump administration gets stuff done. And I think it's interesting to see the stock continue to make gains today.
Is there a read across to the broader chip sector? Is this a template that might be used in other parts of US tech semiconductor ecosystem?
Is the revenue share with NVIDIA and AMD? Like, we just don't know. The thing that Silicon Valley, the reason Silicon Valley cheers this for Intel is that Samsung and TSMC have invested money heavily into the United States. They've moved quickly to build facilities. But that's a Korean company and a Taiwanese company. Do you really think that in the development, do you really think, does Silicon Valley really think that their absolute cutting-edge production technique is going to launch first in the United States? Probably it isn't. So they look at this as a second chance for Intel to do the thing it said it's going to be doing for a long time. Will it be replicated to others? They're already behind because Samsung and TSMC have already ramped in the US so quickly.
Okay, Ed Ludlow, yeah. Thank you very much indeed. Yeah, questions as to whether or not some of their customers and clients might be pressured to buy from them instead of TSMC, and whether that has an impact in terms of the quality of the product. But maybe that is a longer-term question. Ed Ludlow, of course, breaking down what we know about that potential investment in Intel from the US government, a story we continue to monitor, co-host of Bloomberg Tech. Turning to China now, where the economy slowed across the board in July, with factory activity and retail sales disappointing. The snapshot suggesting that Donald Trump's trade war may be starting to weigh on global economies. Joining us now is Maria Demirtas, who is Europe's leader, the Europe leader of the Economy, Strategy and Finance Centre at the Conference Board. Good morning. Thank you for joining us. So we have a reminder in terms of some of the pressure on these globally important, systemically important economies on the tariff impact. Maria, what is your current assessment in terms of the broader pressure point across the European and Eurozone economy on 15% tariffs as a result of the trade deal with the US and a still struggling Chinese economy?
Well, if I may start with the European economy, I think the macroeconomic impact of tariffs, when we were running the simulations at 10%, they were very small. They were the order of magnitude of 0.1%, 0.2%. So the 50% tariffs is going to add up a little bit to that, but it is not going to be catastrophic. You know, the impact on the euro economy is going to be small. That is not true, of course, for the companies that will be affected by the tariffs. And of course, there we are going to see some movement. But when it comes to policy, I think tariffs in Europe they're a bad thing, but they are not something that cannot be managed. And already we see it in the numbers. Growth numbers in the euro area are sustained. They are not affected by the uncertainty that all these tariff stories have generated. By contrast, of course, as you said, with China, where we see the impact is much bigger, and it can actually continue to be, given, of course, that we still have uncertainty in terms of what the trade deal will be.
How much of a drag is China for Europe at this point? We've been talking about the potential turnaround of the Chinese economy. We have a reminder today on the softer data. It's a real estate sector that's faced 4 years now of falling sales. The read across to the Eurozone economy of the world's second largest economy still struggling to get up to gear.
This is always a problem for the EU because the EU, particularly certain countries in the EU, I mean, the big countries in particular, rely a lot on Chinese demand for its goods. So, when the Chinese economy is not doing well, the European economy will actually feel that. Politically, however, this is the position where Europe is right now. It is a difficult one. The US is looking to the EU to try and have an ally when it comes to Chinese relationships. The EU up till now wanted to be a bit of an evasive neutral when it comes to this. It doesn't want to have to choose politically where it stands when it comes to China. So that is a difficult position for the EU to be in. I suspect that as the EU is looking more inwards for its growth potential, some of the problems of the Chinese economy has now will become less relevant. But that, of course, is something for the medium term. It's not obvious for the immediate future.
Maria, this of course remains a very big if. But if there was a ceasefire between Russia and Ukraine, would that change your forecasts for the Eurozone economy into 2026?
Certainly would take away a very big source of uncertainty. Wars are never good for the economy in the long run. In the short run, they provide some sort of a stimulus, and you see that Europe is now rearming, and that, of course, is a fiscal stimulus in the short term. But in the long term, nobody benefits from a prolonged war. So I think, yes, we will have to certainly update the outlook for the future, meaning that it is more prospect for greater growth, both in the EU and the Ukraine. Next to that, of course, you have the big demand for restructuring Ukraine. Current estimates show us that there is going to be a need for about 500 billion euros in the course of the next year, if there were to be a ceasefire and ultimately peace, for reconstructing Ukraine. Just to give you a sense of what this means, this is about 3 times the size of the Ukraine economy today. So this is big. And all of this financing will have to come primarily from European firms, probably other firms too. But I'm sure that Europe will have to play a very big role in terms of reconstructing Ukraine, which is, of course, good in economic terms, if not only in political terms.
If we assume that the status quo remains the same when it comes to that conflict, when does that... the fiscal spending on defence and infrastructure from Germany, that's a 2026 story, right? Is that your assessment? I mean, how impactful... When do we start to feel that materially in Europe?
Well, I think we are facing fiscal constraints. How quickly can we build factories? How quickly can we order equipment from the US? These things cannot happen from one day to the next. That's why I tend to agree with you that it's much more of a 2026 story than this story today. But it is crucial that steps are being taken every day for the rearmament of Europe. So we need to see some of it happening in the next months, if not even today. And actually, we see acceleration of production of military equipment everywhere in Europe, including in repurposing factories, empty factories that are available. And some of this movement is happening. It's just that it needs time. Fiscal constraints are crucial here. And that is why I think we need to wait maybe a few months for real positive news to come in when it comes from the fiscal side.
Does the ECB also wait? Does the ECB stay on the sidelines through the rest of this year, Maria?
I think so. I mean, the latest numbers on inflation have inflation right back exactly where it should be. Growth has surprised. The latest numbers have surprised a little bit on the upwards. I mean, I think the ECB has earned the right to now wait and see. There isn't much more uncertainty also coming from the tariffs, or at least, let's say, policy uncertainty has reduced, even hasn't been eliminated. So I think we can expect the ECB to just wait and see next to see what happens.
Maria, thank you very much indeed on this Eurozone economy in light of the tariff tensions, of course, and geopolitics as well. Maria de Mertis, Europe leader of the Economy, Strategy and Finance Centre at the Conference Board. Now, London is bearing the brunt of the UK's job slowdown as a combination of tax rises, elevated wage costs and weak consumer spending force the city's businesses to cut payrolls faster than in the rest of the country. The capital has shed almost 45,000 jobs since October, when the Labour government announced a £26 billion hike in payroll taxes and a higher minimum wage. Coming up, we will preview today's get-together then between Presidents Trump and Putin in Alaska. Former UK Ambassador to Russia, Anthony Brenton, joins us with his take on what to watch for and how far Russia may be willing to go in this meeting. Stay with us for that insight, that perspective. This is Bloomberg.
Opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. President Putin dangles deals and a new arms treaty as the Russian leader launches a charm offensive with Donald Trump. We preview today's crucial summit in Alaska. In the US, factories are starting to feel the pressure. Hot producer prices push traders to dial back expectations for a Fed cut next month, with investors focused on margin pressure. Plus, Bloomberg learns the Trump administration is discussing buying a stake in struggling chipmaker Intel. So Donald Trump has been lowering expectations ahead of his meeting later with Vladimir Putin. But Bloomberg opinion columnist Mark Champion writes that he still has the tools to drive President Putin towards a settlement. He says Trump could impose secondary sanctions on buyers of Russian oil or tighten financial sanctions to give him leverage. Mark Champion joins me now, writing that Bloomberg opinion piece. You can find it, of course, on the terminal and on Bloomberg.com. How hugely significant, or how significant is this moment, do you think, for President Trump? And why do you think that he could actually deliver? Because your view seems to be somewhat counterintuitive to the prevailing take on this, Mark.
Right. So essentially, what I'm saying is that I'm deeply sceptical that he's going to go there and he's going to hold Putin's feet to the fire. All I'm saying is that we should remember that from the day he took office, he has had the tools to do this if he chose to. He simply hasn't chosen to yet. And I don't actually think that when he goes to this meeting, he's going to take that what would be a very tough road. This is not a well-prepared meeting. It was, conjured up a week ago. The U.S. was actually supposed to be imposing sanctions, secondary sanctions, to sort of press Putin, who, some time ago, Trump acknowledged, had been playing him, been tapping him along, as he said. So, what we have here is a summit that came out of, the sort of Russian effort to, to not get the sanctions imposed, to not set Trump off down this path. The point being, though, if that is the sort of most dangerous thing for Putin, the most dangerous thing for Putin is that, Trump emerges angered for some reason. And does actually start doing the things that he clearly doesn't want to do in order to get, force Putin to the table to make the kinds of concessions.
Well, you talk about some of the tools that are in the cabinet for President Trump. How much leverage does the U.S. president have at this point? What are the tools that he could reach for?
He has a great deal. So there's on the economic side, which is never going to solve the whole thing, but it can set conditions. So on the economic side, there are secondary sanctions we already talked about. There are banks in Russia that still are able to access, dollar-controlled financial markets so they can trade. So those things can get hit. But then, the things that would really make the difference, Putin has showed that he can weather the economic stuff if he needs to. But what would make the difference is the U.S. piling in with military aid for Ukraine, making it clear to Putin that he's not going to do any better than he's got now, and therefore he should start to think about whether it's worth continuing. The U.S. does have the capacity to do that, but it's very clear that Trump does not want to.
Yeah, there's the capacity and then there's the political will, isn't there? In terms of the next potential meeting, which really President Trump and his team have kind of almost been putting more emphasis on and saying that maybe Zelensky will be involved in a second summit, possibly even European leaders, what would Trump need to get out of the first summit to satisfy, or the second summit, to satisfy those European leaders, to satisfy Volodymyr Zelensky?
Well, I think if he came away from this meeting with nothing but a second meeting in which Putin agrees to sit down with Zelensky without setting conditions as to what, because at the moment the Russians are saying, yeah, we'll sit down and we'll talk to Zelensky, but first he has to give everything up, and then there'll be a ceasefire, and then we can talk. So if Trump was to walk away from here and say, okay, I set up a meeting, there are no conditions, Putin's agreed to talk, to sit down with the Europeans and the Ukrainians and myself, I think that would be a win. That would be a significant win. I also, again, don't think it's very likely, simply because it doesn't make much sense for Putin.
Okay, Mark Champion, thank you very much indeed. Bloomberg opinion columnist, of course, Mark Champion. You can read his piece on the terminal and on Bloomberg.com. And we will stay with the question of what to expect from this summit and the potential implications, and bring in Anthony Brenton now, former UK ambassador to Russia from 2004 to 2008. Anthony, thank you for waiting patiently in the wings for us. Is the fact that this summit is taking place at all already a win for President Putin?
No, quite the reverse, really. I mean, there's been a lot of noise about how this gives Putin prestige and standing and all that stuff. The fact is that in order to solve the problem of the Ukraine war, someone sooner or later is going to have to talk to Putin. Trump, whatever his other qualifications, spotted this, has done the necessary thing, and this is the beginning of a process which is necessary if you want to end the war.
What do you think, given your experience on the ground, working with the Russians, working in Russia, Anthony, what do you think Putin and his team, the team around him, are hoping to extract from this meeting?
Well, they want to stay on Trump's good side, so they will be given as many concessions as they can without, as they see it, disadvantaging their central interests. And they're under pressure to deliver a ceasefire, which they really don't want to do because they believe they're winning the war. But you might find some compromise, for example, what's been called an aerial ceasefire, where both sides abandon long-range drone attacks, which is helpful because the Ukrainians are attacking Russian energy infrastructure and the Russians are attacking Ukrainian civilians. So that's a possibility. Putin is pretty resistant, it has to be said. Sorry, Putin is pretty resistant, it has to be said.
On territory, no, I'll let you finish your thought this time, Anthony. Go for it.
Okay, no, what I was going to say is that Putin is resistant to actually sitting down with Zelensky. Now, I suspect, given the amount of pressures that are going around, that could be quite a big win for Trump, getting his meeting with Putin and Zelensky at some unspecified date in the future. But that would actually be quite a big step and quite a big concession, at least in Putin's eyes, as a result of the summit.
Okay, so that could be a win for President Trump, actually fixing down a secondary meeting involving Zelensky. When it comes to the question of territory, Anthony, where do you think ultimately the red line or the bottom line is for Putin at this point?
Well, at the moment, he's claiming all 4 partially occupied oblasts. What he did, what Witkoff all excited and got us this summit, was he said, well, okay, only 2 of them we're utterly insisting on having all of, which is Donetsk and Luhansk. You know, and that's a shift. I think in reality, I mean, there's a slightly unreal argument going on about where the borders are going to be and so on. In reality, the only thing which everybody's going to be able to agree on is no shift in their de jure formal positions on who has what, but an agreement that the fighting will stop on whatever line it is at the moment that they reach an agreement.
What do you think Trump's maximum points of leverage are at this point? We were talking to Mark Champion, our opinion columnist there, about sanctions and about potentially flooding Ukraine with additional weaponry. Do you agree with that assessment? What tools could and should Trump be looking to pull?
Well, he's got a supply of weapons to Ukraine. Particularly now he's got the Europeans paying for them, and that's quite big. I think Mark Champion exaggerates the likely effect of secondary sanctions on oil at any rate. Both Trump and Putin have dismissed their effect, and given that it is India and China who import something like 80% of Russia's oil now, Trump has tried to impose sanctions on India's import, and the Indians have basically told him to get lost. Trump isn't even going to try with regard to China because he's already got big problems, a sanctions war going on with China.
Are we getting to a point, you talk about Europeans buying American weaponry, are we getting closer to that point, Anthony, where Europe could fill the gap militarily, economically as well, should the US pull back from its support for Ukraine?
This, in many ways, from the side of the pond, is one of the most interesting questions. Europe, the mood in Europe has transformed. Europe has become a great deal more realistic about the need for it to pull its weight militarily. And Ukraine could well be the big test, because Trump, up until earlier this week, was saying that he didn't want the US to have anything to do with guaranteeing security for Ukraine. So if we get an agreement, key part of that agreement has to be some sort of assurances for Ukrainian security. And it looked very much as if Europe alone was going to have to provide them. That's changed a bit, and I think it's one of the more important shifts that Trump has made this week, that Trump has now said that the US is willing to be involved in supplying security guarantees. But nevertheless, Europe, it could play a big role in this, and that will then be a substantial step towards Europe doing significantly more in this area in international life more generally.
Anthony, given that you represented Her Majesty when you were in Russia as our ambassador, what is your assessment, what is your take in terms of how well the UK government has played its hand so far?
I think we've done pretty well, I have to say. We were in the lead in giving Zelensky assurances of support and help, and actually in the lead in supplying help at the very beginning when the Russian invasion started. I think since then, we have remained in the forefront on all of that. I think we, like all the rest of Europe, have stupidly really, got stuck in the position that we're not going to talk to Putin. It was obvious that sooner or later someone was going to talk to someone to begin to find a way out of the war, and it was Trump who spotted it. We could have got there earlier if Europe had been a bit more rational about the fact that we may detest Putin, we may view him as a bad man, but occasionally in international life you have to talk to bad men.
Is the economy of Russia we've done some analysis this week in terms of the challenges around the Russian economy. How much resilience is there? To what extent is that weighing on the shoulders of President Putin at this point?
I don't think he's too worried. There's been a consistent tendency among international commentators on the Russian economy to exaggerate the threat to it, to exaggerate how close to the cliff edge it is. Now, there are undoubtedly problems there. The oil price looks as if it's going to go down, and that's the biggest single parameter in deciding Russian economic prosperity. There's an inflation problem. There's a lack of manpower problem. And there's potentially an extra sanctions problem. But all of that said, well, 2 points about Putin. First of all, as I say, sanctions never work as well as people expect them to, and like that, Putin will expect will be the case this time. And the other key point about Putin, whom I dealt with quite a lot when I was ambassador, is that given a choice between worrying about the welfare of the ordinary Russian and worrying about Russian national security, he will always go for security. So if necessary, he believes that his people will take the hit of extra sanctions in order that Mother Russia will triumph.
Very valuable context ahead of this crucial meeting in Alaska. Anthony Brenton, former UK ambassador to Russia. So thank you for your time. Talking of oil, oil is trading lower today as investors brace for that summit then between the US and Russian presidents in Alaska later, which could, of course, have major implications, as the former ambassador was saying, for global crude supply. Let's bring in Christina Kino now, managing editor of our Markets Live team. How are oil traders, hello, Christine, how are oil traders bracing for this summit?
Well, Tom, I mean, obviously a lot of focus on the potential outcomes from these talks. And we see in the oil prices that trade lower today, really all week, right? As soon as we got wind that there is potential for these talks to commence, and now we're here, oil traders have been pulling back in terms of pricing and optimism on that. And, you know, it is a function of a little bit of that geopolitical pressure that has played oil for much of this year, easing a little bit. Now, the question, of course, is there's always a lot of optimism heading into these talks, right? But does it ever come to fruition? Because we, of course, know the adage that oil traders adhere to: never short oil heading into a weekend, especially a weekend as important as this.
Okay, Brent down currently 0.8% at $66 a barrel. WTI at 63, down 0.9%. We had the 13F filings, so the detail, some clarity in terms of how some of the major hedge funds are positioning. What stood out to you, Christine?
Well, very interesting that a lot of hedge funds still favored big tech during the second quarter, which was, as you can recall, a very tumultuous time in markets, right? We did see during that period the unveiling of the Liberation Day tariffs in April, and a few days later, those getting pulled back. And so there was a lot of turmoil and volatility in markets. And so it made a lot of sense that hedge funds wanted to flock to the biggest tech names, which in a way are a safe haven in times of stress like that. And, you know, there was a marked move away from any domestically focused U.S. stocks that probably would be more exposed to any sort of volatility and uncertainty surrounding tariffs. And, you know, even the valuation question at that point in time, actually, tech stocks were probably arguably a lot more expensive than they currently are now. But still, the safe haven appeal prevailed during a time when there was a lot of uncertainty over tariffs.
Okay, the safe haven of tech coming out through these 13F filings. Christina Kino, managing editor, of course, of our Markets Live team. Thank you. Coming up, switching focus, Friday football fun. As the Premier League kicks off today, we talk to Gary Neville about his plans to turn Salford City FC into a football powerhouse. That is next. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. Happy Friday. I'm Tom McKenzie in London. Mark your calendars then, football fans. The English Premier League is back today after a summer, of course, of big spending as the country's top teams snap up star players. One team not yet in the Premier League, but with no lesser ambitions, is Salford City, which recently announced insurance heavyweight AIG as a minority investor and commercial partner. The deal marks the first time a Fortune 500 company has taken an ownership stake in a League Two English Football League club. Very pleased to say we are now joined by Gary Neville, co-owner of Salford City. Gary is also a real estate investor with properties including the acclaimed Stock Exchange Hotel in Manchester and, of course, an 8-time Premier League winner with Manchester United and, of course, playing 85 caps for England. David Hellier, who covers the world of sport and business for Bloomberg, is also with me in the studio. Gary, thank you very much for your time. Let's start with the AIG investment. What does it mean, Gary, for Salford, for your ambitions for this club in terms of building out the presence and what you can do with this in terms of revenues and growth at Salford? How significant is this, Gary, ultimately?
No, it's a really significant moment. It's great to be on the show and talk about Salford City, which is a passion of mine. I think to get a Fortune 500 business like AIG and Peter Zaffino, the chairman's support, it's a landmark moment for us. It's something that, to be fair, leaves me pinching myself. When I think of what the journey of Salford City over the last 10 years that we've had, and we've got into the Football League, which was a sort of momentous occasion, I think about this next chapter with even more excitement, and the fact that AIG have come on board as a minority investor and as a commercial partner with us as well means that we're set up to be able to achieve what we want to do on and off the pitch. And, you know, football clubs, a passion project, but we've got to turn this into a serious business in the next 5 years that performs on the pitch but also performs off the pitch.
Thanks for coming on, Gary. I deal with write about the business side of things, and of course, like most clubs, Salford has struggled financially in the last few years. How do you? I think it's 28 million or something in the last 10 years you've lost. How do you change that outlook? I mean, where is the revenue going to come from?
Yeah, I mean, you point towards that number over a 10-year period, but we have sort of built stadiums in that period. There have been big infrastructure projects that obviously go into that. We have invested heavily in the club. I think that when you look at the investment of the last 10 years, it's people who are really passionate about football who are investing in a local football club. I think what differentiates maybe the next 5 years is that one of our key elements and KPIs is for us to achieve sustainability. That means that we're going to have to grow revenues off the pitch. Obviously, deals like this one with AIG are vital to that. We've got a deal that we've just signed with Coca-Cola. We're looking at a big deal and have signed a deal already with Dreamset Go in India. So we're looking at big commercial deals to go along with a really fantastic CEO that we've just brought in who's going to introduce a player trading model. And then it's important that we also have those fourth and fifth revenue streams and tap into the sort of what will be expertise and intelligence that we have within the shareholder base now. So, you know, within 5 years, yes, we want to get to the Championship. but we very much are looking at sustainability as well. And you're right to highlight that. You know, I believe in a sustainable football, but what you do have to do as an owner in a football club is invest in the club to make sure that the facilities improve, the training ground improves, the match day experience improves, and then what you start to build together is a fan base through the success on the pitch that can get us to where we need to be.
I mean, in the past few years, we've also seen a massive rise in American ownership. We wrote a piece last year showing that like a third of Football League clubs are now owned by American owners, and some of them have been like Wrexham and Birmingham City last season were very successful. Others haven't, like Carlisle, haven't been so successful. What do you see as the trend in the next few years? Is it more Americans to come, or more sovereign wealth, or even some local ownership? What do you think?
Yeah, I mean, that's the great thing about the Salford City ownership, that we actually have got a mixture of sort of local ownership. Obviously, you know, I'm local, very local to Salford, but we've also got international ownership, including partners from all parts of the world, which I think is really critical. I think when you talk about American ownership specifically, I think they see real value in English football clubs because of the cost of buying sort of franchises and sports projects over in the US. So I think when they look at actually sort of English football, and the reach of English football globally is enormous, and they look at the price tags that are associated with clubs and think actually it's really good value and presents good growth opportunities in the future. You know, when you think of the weight and the caliber of people and the volume of people who've come in from the US into English football, you know, they can't all be wrong, can they? You know, you've got some pretty smart people and intelligent people there who know how to run sports businesses, but also have a passion for sport as well. You know, there is a concern that obviously we want to make sure that we keep the heritage and the traditions of the game in England. And we had the Super League obviously a few years ago, which was obviously very importantly stopped. We've just got to make sure that the things that we hold dear in this country are kept. But I think we're on the right side of that now, and I think that the ownership, to be fair, of the Premier League clubs and other clubs in the EFL, very varied, local, international, Middle Eastern, Asian, sovereign wealth funds, as you've said, and obviously US. So we've got a real sort of, attractive base in England, and it's the game's in great shape.
Gary, you talk about the Super League. If that was to rear its head again, how much of a threat would that be to clubs like Salford?
Yeah, it won't rear its head again in the form that it came last time. That was just completely, it was wrong, and it was pushed back heavily, and I think the clubs that signed up to that will never make that same mistake again. It was incredibly damaging for them from a reputational perspective at that time. So I don't think we'll ever see the Super League come back. But what we will see, like we've seen with the FIFA Club World Cup, we will see new proposals for elite tournaments. And as long as the actual entry and accessibility to those tournaments is fair, then there's no problem with that. The problem with the Super League was it was a closed shop for the top clubs, and that basically other clubs were going to really struggle to be able to compete, and it would have damaged not just the game in England, but the game around Europe. So yeah, we won't see the Super League in anything like the same format that it came forward before. And actually the Premier League at this moment in time is a little bit like the Super League in the world in respect of the sort of global nature of it, the money in the game, the fans that watch it every single week. And we obviously want to be part of that with Salford City. You know, we're really passionate about our football club, the drive and ambition within the ownership set, including AIG, and to have Peter Zaffino, AIG's chair and CEO, backing us in the way in which he has, gives us real confidence that where we can take this project.
I was wondering what you think about the regulator coming in. Some people have really been against the regulator, but can the regulator improve the situation that we have? You know, we've got clubs like Sheffield Wednesday struggling to field teams. Macclesfield. I mean, Morecambe. What do you think of the regulator? Do you think that would be a benefit to the game?
Look, I really hope so. I've been championing the regulator for a number of years now, because we do have some blockages within the game, and what the game has created in England, which I don't think was ever the intention, it's created cliff edges. So you've got the top 6 clubs which have huge revenues, but then you've got the 14 other Premier League clubs which are really struggling to compete, and I think we need to make sure we just keep an eye on that. You've then got the drop between the Premier League and the Championship, which the revenues for the bottom of the Premier League for broadcast income are £100 million. The top of the Championship is about £6 to £8 million. So you've got this huge gap in revenue between the two leagues, and we need to make sure those cliff edges don't exist. We need to make sure we smooth them out so that there's a real opportunity for clubs to be able to go up into the Premier League and compete. The regulator doing their job properly, I think, can be good for the Premier League, but also good for the rest of English football, and it can set a precedent in terms of how we protect and guard the game. We need, if you think of when you go 10-pin bowling, you have those guardrails up that stop the ball going down the edges and falling off. That's what the regulators should be doing, is making sure that, you know, we know that football clubs are owned by owners. We know they're going to run those clubs and drive them forward to the best of their abilities, but we need guardrails.
Gary, in just 10 seconds, who wins the English Premier League this season?
Arsenal, because I can't say Liverpool.
I'll take that one as a Gooner, as a Gunners fan. Thank you. Gary Neville, that was fantastic. Co-owner of Salford City, of course, Salford FC, and our own David Hellier. Stay with Bloomberg. We've got a lot more, of course, as we focus on that summit between the two presidents, Trump and Putin. Tune in to our special coverage live from Anchorage, Alaska. Up next, Bloomberg Brief. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Friday. The day after a hot inflation print, talks of a jumbo cut fade fast as investors trim rate cut bets. Touchdown in Alaska, Presidents Trump and Putin gear up to discuss the war in Ukraine. And the U.S. government is in talks to take a stake on Intel. We'll have more on that Bloomberg scoop coming up. It was the third consecutive record for this equity market, the 18th of the year. We got there on basically an unchanged market. The S&P was up 0.03% yesterday, despite the hottest PPI print since 2022. You can see we're mostly flat on the major index this morning. NASDAQ, that underperforms, while the Russell tries to claw back some of the major losses it had yesterday. So yeah, it was PPI that seemed to at least move this bond market. We are now pricing in a 90% odds that we get a cut in September. It was over 100 before that. Secretary Besson also speaking on Fox yesterday, trying to kind of walk back or at least define his comments to Bloomberg, saying he's not telling the Fed to cut, just relaying models. So maybe that moving the bond market. But we are rallying, at least on the front end this morning, down by about a basis point. Your 10-year yield stands at 427.90. Let's look at some stocks on the move in the pre-market. With that is Valerie. Hey, Val.
Good morning, Danny. Let's start with Intel. We're seeing shares in the green for a second session in the row. It rose over 7% yesterday and is rising over 2.5% in the U.S. pre-market. This comes after a Bloomberg scoop that the U.S. government is looking at a potential stake in the company, helping it shore up this very massive factory it's building in Ohio. Now, Intel declined to comment on the report, but said that they remained supportive of Trump's economic and technology agenda. Let's stay in technology and move over to Applied Materials. This stock sinking in the pre-market, disappointing earnings. It's really igniting the fears that this trade war is having an impact. They saw soft demand from China and are seeing delays in getting their approvals for those export licenses. Lastly, Warren Buffett is making waves. United Health lifting the entire insurance sector, up 13% in U.S. pre-market as the 13F filings showed that this was the biggest addition to Berkshire Hathaway's portfolio. Danny.
It could certainly use the help these days. Valerie, thank you very much for that. We'll talk to you later in the hour. Also in this hour, in just moments, we'll discuss this equity market and more with Chris Waitling of Longview Economics. Later in the hour, we'll look at the week's data that has been with Kevin Gordon of Charles Schwab. Now, stocks are brushing off that hotter than expected PPI to notch another record high. Chris Waitling of Longview Economics stays cautious, writing, quote, "The case for summer turbulence in equities remains robust. The U.S. economy is slowing. The Fed is reticent to loosen policy. Earnings expectations are too high. And liquidity in markets is about to tighten." He joins us now, and Chris is chief market strategist and global economist at Longview Economics. Chris, all of those risks, and we continue to melt up. What do you make of the resilience? Is it complacency or is it something else?
Well, I think it's a bit of FOMO, isn't it? People being sucked in as the market keeps moving higher. There was a reticence, I think, amongst institutional buyers and traditional portfolio managers to get involved a couple of months ago, and I think they've been sucked in. You know, you can see that from some of the survey data, the BAML Fund Manager Survey and things like that. So, yeah, I think it's that FOMO effect, but eventually, you know, you run out of FOMO, you run out of road, everyone's all in. And we're sort of getting towards that point. So, yeah, I mean, I think the risks are alive and well, as you articulated.
If that's the case, Chris, and to be clear, it was the risk you laid out, so don't give me credit for that. Credit goes all to you. If there are risks and we're piling and getting FOMO at the same time, does that mean that the downside, when it comes, if it comes, is all that much more painful? And what do you do to prepare for it?
Well, I think the challenge here is really getting a handle on the US economy, because if we are in a proper mid-cycle slowdown, or even there's some rising recession risks, I wouldn't want to overemphasize the recession risk, but I certainly think it's a clear mid-cycle slowdown, and we really need looser monetary policy. So the amount of downside probably almost depends on when the Fed finally gets into the game. And that's what's so interesting about your opening comments. We're going backwards and forwards of 2 cuts, 1 cut, 3 cuts, etc., day by day. And it's quite difficult to gauge, therefore, what we're going to end up with. But I certainly think we need cuts from the Fed, and they need to get on with it. And I think that idea that they should cut 50 or cut 3 times this year is certainly very valid, or 50 in one go or 3 times. So the downside, I wouldn't exaggerate the amount of potential downside, because personally, we think it's a mid-cycle slowdown, not a recession, so the Fed can save the day. But often, you know, the market needs to bully the Fed to get on with it, and I suspect that's the case this time. We need a bit of give back in the stock market to get the Fed going, to sort of, you know, get a bit of ants in their pants, as you might say, and get them cutting and get that cutting cycle back underway again.
Chris, there is this argument out there that we won't get that slowdown, and as a matter of fact, you won't get stocks pushing back. because AI has become the macro. The vast amounts of capital expenditures that these companies are doing and the growth figures that they're putting in will, one, both keep the economy running something that looks hot, and an equity market that continues to have robust earnings, at least for those players that on a headline level supports it. How does that factor into your view?
Well, it's definitely the case. That's the real plus point in the economy. The capex in the hyperscalers and all those thematic AI plays are creating growth. There's no doubt about it. But if you look at the US economy in the round, I think you can see that real income growth in households, real disposable income growth is growing below average levels, about 1.8%. Average is 2.6%. That's not good news. Labor market's slowing, construction's weak, housing's very weak. I mean, it's a long old list of stuff that is really under pressure. Industrial cycle's not really growing. So can the hyperscalers on their own hold up the economy, and can they hold up the stock market earnings on their own? And I suspect not. And I think they'll probably need a bit of help from elsewhere. And that's why we need the rate cuts. So yes, they've been dominant in the last few months. The Mag 7 and one or two others have been driving the stock market higher since late April. But the reality is, actually, if you look at the Mag 7 as a share of US S&P 500 market cap, it's basically where it's been for the last year. It's been volatile. It's touching its highs it reached in the middle of 24. It made those highs again as a share of US market cap at the start of this year. So I think it's just a bounce back with a little bit of icing on the cake. And, I think we need the market to broaden from here, and we need the Fed to cut rates, support the economy. Otherwise, I think we've got some challenges in that stock market and got that summer turbulence I talked about.
So, Chris, you're describing a scenario where the Fed is cutting for not a good reason, because of an economic weakening. Now, typically, stocks do better in a cutting cycle if it's because of benign inflation, and that's the reason they're cutting. What does that mean about what leadership in this equity market looks like if we're getting cuts because the economy needs it, not because the Fed has the room to do so with easing inflation?
Well, that's a great question, but there's certainly an argument that if we're going to get some softness near term, you actually want to move into defensive areas of the market, because they are the cheap areas on a relative basis. They're, US healthcare relative to the rest of the market, relative to other sectors, has almost never been cheaper. Now, you might say there's good reason for that. The new administration changing the rules, changing a lot of the backdrop in the health sector. But I think a cheap sector that's oversold is attractive, and that's what healthcare is at the moment. So I think that maybe you go short-term defensive before you go cyclical. Once you get those rate cuts, then you start going cyclical. And there are a lot of cyclical areas of the US market that have really underperformed significantly for a number of years. And once we get that rate cutting cycle, I think they'll start to do well. So from a sector perspective, it's been all Mag 7 and growth for a few months. I suspect it'll be defensive for a little bit, and then cyclical is what we're sort of roadmap we're kind of looking at the moment.
Chris, you bring up an interesting point with healthcare, because I believe it's one of maybe two sectors that are lower since the bottom in April, or at least since the start of the year, because of what you're talking about, that political pressure. When you're looking at sectors, we don't have the sectoral tariffs yet, for example. How much are you factoring in politics? How are you sorting when we continue to get headline after headlines, executives called out, new tariffs threatened? What do you decide what is noise and what's investable?
Well, the rule of thumb is, investors become numb to news flow once they get the hang of it. And this sort of news flow in the pharmaceutical sector is not new. We've been having this for several months now. So, I like to look at how oversold the market is, or how oversold the sector is. And I like to look at how cheap it is relative to the rest of the market. And as I said, on both metrics, it looks really good in the healthcare sector, which suggests to me that, it's not really new news. It's sort of continuation of the bluster and the tariff headlines on pharmaceutical prices and all the sort of changes of vaccines and healthcare policy and so on. So I think markets getting the hang of it. So I like the fact the sector is very oversold. I think that's very encouraging and very cheap.
Chris, this has been wonderful. Thank you so much for joining us. Please come back again soon. Always good to get your views. Chris Watling of Longview Economics. Let's get you some other stories trending on the terminal this morning. China's economy slowed across the board. Production at factories and mines rose at the slowest rate since November. Retail sales grew at the slowest pace of this year. It's the latest sign that President Trump's trade war is weighing on the world's second largest economy. Elsewhere, Goldman Sachs offering clients a stake in Millennium Management for a minimum commitment of $1 million and as much as $20 million. The documents circulated by the bank indicated an attempt to widen out buyers beyond the typical institutions and towards wealthy individuals. And Warren Buffett's Berkshire Hathaway has a $1.6 billion stake in United Health. A regulatory filing shows that Berkshire bought 5 million shares of the health insurer in the last quarter. The same filing shows the firm sold its entire holding in T-Mobile and trimmed stakes in Apple and Bank of America. Coming up, the first in-person meeting between the presidents of the U.S. and Russia since 2021, happening later today. More on the state of play coming up next on your Bloomberg Brief. Stay with us.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aquin, Sintra, Portugal, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Next week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, August 22nd at 9 a.m.
I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not.
Laying the groundwork for more diplomacy, that's the message from President Trump ahead of his summit in Alaska today with Russian President Vladimir Putin. Let's get straight to Bloomberg's Stephanie Baker for more on this, who also authored the book Punishing Putin. Stephanie, it's great to see you this morning. And look, in a Fox News interview yesterday, Trump said that there were 25% odds that it's unsuccessful, so I guess 75% that it's successful. How is President Trump setting up the expectations for this meeting?
Well, he's definitely downplaying expectations, but it's really clear that Trump does not want to walk out of this saying, I failed to get Putin to agree to, further talks on Ukraine or talks about a ceasefire. He wants this as a win, and he's going to do whatever he can to come out of it with some tangible form of success, whether that be agreement to talk with the Ukrainians about a broader peace agreement or a ceasefire, as well as probably an agreement from Russia to engage in arms control talks and some kind of U.S.-Russia economic cooperation, whether that's in critical minerals or oil north of the Bering Strait where they're meeting in Alaska. So I think what Trump really wants is to be portrayed as this great peacemaker and that he set this process in motion.
But at the same time that he is downplaying some of the expectations, Stephanie, we've also heard from Trump in recent days basically saying if Putin doesn't agree to certain things, that they will get more tough with Russia. What are the cards that the U.S. has at this moment, and what does it seem is the likelihood that Trump is willing to play then?
Yeah, you know, Trump has not imposed any sanctions on Russia since January, since he came into office. And, you know, the nature of sanctions is you cannot just let them go. You need to be on it all the time, tracking the kind of companies and tankers that Russia uses to evade sanctions. The Friday deadline has come and gone where Trump said he would impose, you know, sanctions, secondary tariffs on Russia if Putin didn't agree to a ceasefire. And it's pretty sad that they have not imposed anything apart from this planned 25% tariff on India for buying Russian oil, which doesn't come into effect until the end of the month. They can hit Russian oil really hard if they wanted to. They could put full blocking sanctions on Rosneft and on Lukoil, two major oil producers in Russia. They could add another 100 tankers, 150 tankers to the blacklist as part of Russia's shadow fleet. There's a lot of other things they could do. I mean, just the mere threat of the secondary tariffs on India for buying Russian oil, I think, did spur Putin to come to the negotiating table because the fact of the matter is Russia's economy is slowing and he does not need any additional pressure on his budget. The Russian government relies on Russian oil and gas for about 30% of its revenue, and oil revenues in Russia are coming down in line with the declining global price of oil as the supplies grow. So I think what Putin really wants here is to head off any additional sanctions pressure, and it seems like Trump is playing along with that.
All right, Stephanie, thank you so much for that. That is Bloomberg's Stephanie Baker. And don't miss our live coverage throughout the day of the Trump-Putin summit, which is due to happen around 3 p.m. Eastern. Our Anne-Marie Hordern is out there in Alaska, so stay tuned for that coverage. A quick check on Brent this morning. Prices are falling by about 0.6%, 0.75% for NYMEX crude. Should Trump impose tougher sanctions out of this, you might see some of those moves reversed. Coming up, a Bloomberg exclusive, the Trump administration thinking about taking a stake in Intel. More on that and a look at your front pages this morning. This is Bloomberg.
With the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning, the major headlines on the major publications. The Wall Street Journal running with this on their front page, the clashing objectives at the Alaska summit. President Trump hoping to forge a partnership with his Russian counterpart to end the Ukraine war. However, Putin is coming with a very different goal of keeping in Trump's good graces while pursuing his ambition of reasserting Moscow's dominance over Kyiv. Next up on the Washington Post, conflict in the Capitol. D.C. Mayor and Attorney General have rejected orders from the U.S. Attorney General Pam Bondi over the naming of Washington's emergency police commissioner. The D.C. officials called the directive unlawful, arguing that it would not be followed by the city's police force. And finally, a Bloomberg exclusive, the Trump administration is reportedly in talks with Intel to have the U.S. government take a stake in the beleaguered chip maker. The talks come just a week after President Trump had called for the ouster of Intel chief Lip-Bu Tan. Joining us with the latest is Bloomberg tech anchor Ed Ludlow. Ed, what would be the thinking behind this?
Yeah, I mean, sourcing really clearly indicates that this is about the administration pushing Intel to be focused on the bigger objective of more chip manufacturing in the United States, right? At the heart of this is a future facility in Ohio, which Intel has fallen badly behind on, but had said would be the biggest chip manufacturing facility in the world. And, you know, it's unprecedented to an extent. You know, the American government took a stake in MP Materials in the rare earths theater, which would make the government the single biggest shareholder. We don't know to the extent from a sort of financing perspective what this looks like for Intel. But put the money to one side, you know, Intel on paper is everything this administration's been pushing for to re-onshore an industry that over many decades has left American shores. And it's a great priority for this president.
Ed, would this suggest a trend that might come with other tech companies too? You have the U.S., for example, taking a golden share after the Nippon Steel deal to acquire U.S. Steel. They bought $400 million in MP Materials, that miner of rare earth minerals, which I believe you mentioned. Is this a model that perhaps it seems like the U.S. is pursuing further?
What was it that Scott Bessent said the other day, that the president is a first principles thinker? This is like highly unusual, right? You know, in my brief career, I've never seen Silicon Valley so aligned with the president on sort of mechanical deals that are different. One thing to note, of course, is that at the same time, this administration put a lot of pressure and moved very quickly to have both Samsung and TSMC accelerate their investment and build out of chip manufacturing capacity in both Texas and Arizona. They want all of it, right? So you have foreign entities involved as well. One thing I'd answer with is that the reason Silicon Valley is excited about this Intel deal, which Bloomberg's reporting, right? You know, Intel has not commented on this and the White House has not confirmed it, is that they feel that actually the best chance America has is that an American company can control the future, because Samsung and TSMC also have to account to their home nations. So when they bring a new generation or technique of manufacturing chips, where are they more likely to launch it? In Korea or Taiwan or in the United States? And that's the debate on why this is a useful exercise with Intel.
Ed, would this also, though, be in tension with what the board of Intel wants, considering there was that Wall Street Journal story about the board and Lip-Bu Tan being in odds with this disagreement over whether Intel should really be pushing into manufacturing? Wouldn't this be a White House that would be pushing Intel further into manufacturing?
Yes, exactly. I mean, that is the highly analogous story. You know, Intel's also fallen badly behind in different product domains from CPU, and it is way off it on AI accelerator or GPU for data center. But, you know, the origin of lead-edge chip manufacturing is Intel. You know, Santa Clara and the facilities that they had in Oregon and other parts of the United States. That's what the goal of the administration is. More manufacturing capacity from a national security and interest standpoint, but also supply chain continuity, a lesson learned from the pandemic years, and also geopolitical tensions and tariffs with China, right?
All right, Ed, thank you so much for that coverage. We're going to check up with you later in the hour, some earnings to get through as well. That is Bloomberg tech anchor Ed Ludlow on tour in London. All right, this equity market tries to push higher after a third consecutive record high. Coming up, we're going to talk with Kevin Gordon of Charles Schwab on his outlook for the Fed after a hot PPI and a White House that keeps pushing for a rate cut. All of that coming up next on your Bloomberg Brief.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Friday. The day after a hot inflation print, talks of a jumbo cut fade fast as investors trim rate-cutting bets. Touchdown in Alaska, Presidents Trump and Putin gear up to discuss the war in Ukraine. And the U.S. government is in talks to take a stake in Intel. We're going to have more on that Bloomberg scoop coming up for you. The third consecutive record high for the S&P 500, the 18th of the year. It did that basically on what it's doing today, little change. The NASDAQ 100 underperforms, down by about 0.2. The Russell 2000 had a very bad day after that hotter PPI. By the way, hottest core and headline since 2022. It attempts to claw back losses this morning. All of that, though, meant pressure on the front end of the curve. We're still pricing in something like 90% that we will get cuts come September, but that was over 100% before the data yesterday. Your 10-year yield, that remains unchanged at 428.49. Let's look at some of the stocks moving in the pre-market. With that is Valerie Teitel. Hey, Val.
Good morning, and Danny. Let's start with Intel because this stock rose over 7% in the session yesterday. It is rising again, up another 3% in the pre-market. This comes after a Bloomberg scoop that the U.S. government is exploring a stake in the company, wanting to shore up that factory in Ohio that Intel is making. Now, Intel declined to comment on this report, but mentioned that they remain committed to Trump's economic and technology agenda. Let's stay in the chip space and move on to Applied Materials. A bit of a different picture here, Danny. Disappointing earnings, both on revenue and on their guidance. That stock is down near 15% in the pre-market, is really igniting concerns that the trade war between the U.S. and China is going to damage the sector. They had some weak order demand when it came to China and talked about how they've experienced delays with getting export licenses for their products. Finally, let's end with Warren Buffett. He is making waves in the healthcare insurance space. United Health was the biggest portfolio addition in the 13F filings for Berkshire Hathaway. That share is up nearly 13% and lifting the entire health insurance sector this morning. Danny.
Valerie, thank you very much for your work this morning and that roundup. Now to broader markets, where traders are dialing back expectations for a September rate cut following yesterday's inflation data. Kevin Gordon of Charles Schwab weighing in, writing, quote, PPI is just one report, but it takes 50 basis points off the table in September and even takes some steam out of the rate cut argument. I'm pleased to say that Kevin joins us now, senior investment strategist at Charles Schwab. Kevin, great to see you. Thanks for joining this morning.
Nice to see you.
How much was yesterday a game changer, the hotter PPI?
Yeah, I mean, you know, the potential to be a game changer, I think, and when you start to map out some of the impacts from tariffs, not in particular on the good side, but as we learned yesterday, potentially on the services side too. And I think that it sort of confirmed, you know, some of the heat that you also saw in CPI, because as great as CPI was at the headline level in terms of, you know, either meeting expectations for core or coming in slightly below expectations for headline, there was some heat in some of the services areas that, you know, can't necessarily be ignored. And I think when you think about broadening inflation pressures, of course, through the eyes of the Fed, because that's how we all have to look at this, there is a potential for some of that to be, I think, a little bit concerning. I mean, I think the likelihood for the Fed moving in September, if we get another jobs report similar to like we did for July, it'd probably be pretty hard for them to go against a market pricing of, you know, upwards of 90% for a cut. But it's the from there, I think, that maybe changes, especially if PPI is giving us a little bit of a signal on the services side.
Well, to that point, it was Mary Daly who, before all this data, had basically been saying it's okay if goods runs a little bit hot because services is canceling it out.
Yeah.
So if we don't have that, what does that mean for next week when we get Jackson Hole and any expectations that we get a vibe shift from the Fed, to get a Jerome Powell who, again, said something like last year about this time is the time to adjust?
Well, I think, you know, to some extent, for all the criticism that whether it's the Fed chair or anyone who's a little bit more on the hawkish side lately, I think for all the critique they get, to some extent, this maybe vindicates it a little bit, where they want to be able to stay in that wait and see mode to see what the impact is for inflation and how long it takes for them to ultimately see price pressures settle, you know, closer to their target. I mean, because you have to keep in mind, through all of this, even with the unemployment rate moving up like it did in July to a cycle high, they're still much further away from their inflation target than they are their labor target. Whether, you know, market participants and analysts and strategists want them to focus more on the labor side or not is irrelevant, because they're likely to continue to focus as much on the inflation side as the labor side. But I think that a lot of the language, especially for Jackson Hole next week, to me, I think what's most important is how he characterizes and talks about labor supply. Because that has been, I think, one of the main drivers in thinking, especially, and John Williams, I think, has been sort of at the front of this in making this argument, that because there's almost this race to the bottom for labor demand and labor supply, you probably don't get as much of a pickup in the unemployment rate, even if you create fewer jobs every single month. And if that's going to be the case, where they don't necessarily look at a headline payrolls print that's weak, you know, if it's 50,000 or sub 50, for example, then, you know, of course, the market would probably shift to saying they need to start cutting aggressively, but that's not necessarily necessarily how Fed officials view it. So I think that's a really important piece of the puzzle, especially when you look at the context of inflation data we got this week.
Because cutting isn't going to increase the labor supply.
Yeah,
it will do nothing for that.
Right.
What does that mean, though, for what's priced into this equity market? Are the all-time highs we continue to get, is that about hopium for a Fed cut? And if we do get kind of a tempering of those expectations, what does that mean?
You know, maybe this is a bit of a minority view or a contrarian view, but our view has not been that the market has been rallying in anticipation of a cut. We actually take the opposite view, where the market's been rallying because the Fed hasn't had to cut, because economic data broadly, you know, in the aggregate have been relatively resilient. You haven't seen a cratering of the economy or the job market. You know, yes, you took a pretty important, I think, step down and downshift in the first half of the year. Business investment sub 2%, personal spending sub 1%. So there have been notable signs of slowing, but it hasn't been enough to sort of tip you into that traditional recession territory. So because we've been able to muddle through, I think that the market has sort of keyed off of that as opposed to expecting some rate cut. But, you know, that said, we have instances of, you know, 7 instances throughout history where the Fed has paused for at least 6 months and then they restart a cutting cycle. Historically, on average, which we always say be careful about just analyzing averages, but on average, you know, 12 months after that, the market's done quite well. There's a huge range between those averages, with one of those actually being a recession and a bear market for the S&P. But I think that keeping in mind that, you know, all else equal, it probably adds a little bit, you know, on the accommodative side rather than, you know, tightening policy. That probably helps the market a bit.
By the way, one of the other, I think it's fair to call it kind of contrarian takes you have, is that the market leadership isn't a problem, because people have looked at it like Michael Hartnett of Bank of America and said, oh, we're entering a bubble at the moment. It's all big tech. It's all Mag 7. It seems like you're not as troubled by that.
Yeah, I wouldn't say yet. I mean, if you get to a place where, you know, we continue to make new all-time highs, kind of similar like yesterday. If you have a day like yesterday and that's sort of extrapolated out where breadth is pretty weak, you have a pretty decisive number of decliners in the S&P that are outnumbering the number of advancers, yet the market at the index level continues to creep higher, that would open up a scenario like you had in late 2021 or even late 2024, where you had these negative divergences, where breadth was deteriorating under the surface, but the indexes kept making new all-time highs. We know from history that just is not sustainable for the long term, and eventually the market's weight starts to sort of topple on itself, and that's when you get relatively large drawdowns. I think the important distinction, though, right now is even with a lot of this mega cap leadership lately, number one, it hasn't been equally distributed across a group like the Mag 7 or even the top 10. It's really their contributions in market cap terms that's been more of the standout, not necessarily their performance. So that to us is a really important distinction, where for investors who are looking for, whether it's tech or tech adjacent exposure, you don't necessarily need to look just in the mega cap space if it's like the top 10 names or the top 20 names even. The top 10 performers in the S&P this year, none of the Mag 7 doesn't exist in that list. So there have been a lot more opportunities outside of it until you start to see a breakdown, I think, in performance and the number of companies that are actually performing well and that are up. Then I think that it's not necessarily as much of a problem like it has been in the past couple of years.
The past trading session, one of the other things it did is something that seems to also become more normal, not just, you know, maybe bad breath, but the fact that you can have a bond market that was much more volatile, that reacted much more to PPI, and a stock market that just kind of melted up ever so higher. Is there a disconnect between bonds and equities right now?
You know, not now, actually. What's interesting is in the past month, that correlation between bond yields and stock prices has flipped into positive territory. So all else equal, that means that if bond yields are moving higher, it's for the so-called, you know, right reasons or good reasons, that economic growth is pretty solid. Inflation is not as much of a concern. If that starts to break in the other direction, that's when you start to get a little bit more, you know, into a worrisome or precarious situation where the bond market is sending a little bit more of a negative signal. But I think that has been one of the supports in the past, you know, few weeks as the market has continued to run higher, is that the bond market hasn't really been much of an issue, a source for concern. So I think that bond volatility staying relatively compressed, FX volatility staying relatively compressed, which has been the case as we moved throughout the summer, that's been very additive for the equity market. You've, you know, just turn the page back almost 6 months, and the dynamic was completely flipped. That, I think, was one of the weaker points or sort of the pillars that was holding the equity market down. Now you've basically flipped that dynamic, and it's been very additive for stocks.
Yeah, it has been a pretty tight trading range. Kevin, this is always a masterclass.
Yes.
Thank you so
Nice
much
to
for
see you.
joining. Great to see you. Kevin Gordon of Charles Schwab. Coming up on the show, markets are bracing for the historic summit between President Trump and Vladimir Putin. That conversation is coming up next. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not.
President Trump sticking to the script ahead of his sit-down with Russia's Vladimir Putin. Let's go straight to Bloomberg government congressional reporter Maeve Sheehy in Washington for more detail. Maeve, thank you for getting up early for us. So what has been the tone heading into this meeting? What are the expectations?
Well, actually, Trump and his team have been really tempering expectations in recent days, trying to say that this is not necessarily the most important meeting, but that the most important meeting will be the second meeting they're going to have, including Ukrainian President Volodymyr Zelensky. So that's pretty interesting here. Trump has been kind of trying to turn expectations down. And then from Putin, you've heard him praising Trump, actually, and saying, you know, that he's a good peacemaker, that he's a good deal maker, which kind of shows that he's trying to maybe butter Trump up a little bit, maybe make him feel better going into the meeting.
What about the mood in Congress? What's the mood there in this first meeting since before the war in Ukraine between the Russian and U.S. presidents?
Yeah, you're not hearing as much on the Hill as you would if it were not August, because they're in recess right now. But you are hearing some things. There's a lot of trepidation from the Democratic side, especially. You saw Senator Jeanne Shaheen, who's a very high-ranking foreign relations Democrat, say that she didn't think that Putin should be invited on American soil, which is very interesting. Other Democrats said that they supported the meeting but did not have high expectations for Trump's deal-making, and we're a little bit concerned about that. Some Republicans are saying that they have better expectations going in, that they think Trump will be able to look tough and also strike the peacemaker key as well. So these are kind of anxious expectations, but on both sides, everyone's hoping it goes well.
They hope it goes well, but Maeve, just given what you're saying in terms of setting a bar low, what is the bar for success? What is the outcome of this that both the Europeans and perhaps the U.S. president would be happy with?
Well, it's hard to say exactly what the bar for success is. Trump said that he thought it would be a successful meeting, but he also said that he thinks it will kind of just be feeling out or table setting for the second meeting that he wants to happen. So I think that what we would see as success here, or what they would see as success here, is probably just keeping relations good enough to have this second meeting. I think that that is kind of what Trump and his team are hoping for, and to avoid any sort of major gaffe or blowout at this press conference after the meeting.
Maeve, we'll see what it brings. Again, our expectation is that it will happen around 3:30 p.m. New York time. Maeve, thank you so much. Maeve Sheehy in Washington, D.C. And don't miss our live coverage throughout the day of that summit, again, around 3:30 Eastern time. Let's now move on to a Bloomberg exclusive where sources say that the Trump administration is in talks with Intel to have the government take a stake in the struggling chip maker. Just 1 week earlier, the president was urging the company's CEO, Lip Bhutan, to step down from his post. Bloomberg tech anchor Ed Ludlow joins us yet again for more on this. Ed, what's the latest?
Yeah, the focus of this administration is getting Intel focused on a future manufacturing facility in Ohio, right? This was an end-of-the-decade type project that Intel had vowed would be the biggest chip manufacturing facility on Earth. But with the change in CEO, throughout the course of the last 6 months, and this kind of worry about capital discipline, they had fallen behind. The opposite of what this administration is trying to do, which is accelerate the growth and re-onshoring of semiconductor manufacturing within the United States.
Elsewhere, Ed, we also had earnings from Applied Materials. Yet again, it's another chip maker really hit by China. What did they say?
Well, Applied Materials really important barometer of future demand, right? It's America's biggest chip-making equipment name. So if you think about the chip manufacturing process, we've all become so familiar with ASML and extreme ultraviolet lithography. You think about that as the printing of the chip, but you also need to shape and layer the wafer in that process, and Applied Material has a hold in that department. But you always make your orders in advance. So there is softness in China, but Applied Materials has seen a recent upgrade cycle. This isn't equipment you're ordering every year. It's a multi-year process. And so the forecast of $6.7 billion, yes, it is actually significantly below street estimates in terms of the outlook. But there's actually a lot of evidence that actually probably non-China customers are more nervous, and they're more nervous largely because of tariffs.
Ed, when we look through these earnings, Applied Material, other chip makers, how difficult is it to understand the current environment about how much of their sales and orders was something of a pull-through or a pull-forward effect versus steady demand?
Yeah, I mean, so many CEOs have denied to me that there has been any pull-forward effect right across the chip sector. I think behind closed doors that they actually would tell you, particularly within their supply base, they've seen a little bit of it. But it's why I bring up Applied Materials in the context of the full manufacturing process. Look at the other names that are lower in the pre-market, Lam Research being one, just another name as part of the chain. And then ASML was a little weaker in the European session. If you have one key name, Applied Materials, saying we're seeing this certain theme, it's just inevitable that there has to be some ripple effect to others seeing it as well. But again, the difference with chip manufacturing is the build out of capacity or refresh of new technology is a multi-year project. So in the context of tariffs, it's not a pull forward necessarily, it's a let's wait and see what's happened, because I don't want to order a machine that's 50% more expensive if it won't be that way in 3 months' time.
Yeah, very fair point. Ed, thank you so much for joining us this morning. Enjoy the rest of your Friday and your weekend. Bloomberg tech anchor Ed Ludlow, of course, tune in to his tech show later in the morning. Now, Warren Buffett is betting big on United Health. Berkshire Hathaway buying $1.6 billion of shares in the second quarter. Joining us now is Bloomberg Markets Managing Editor Christine Aquino. Christine, great to see you this morning. What do we understand behind the moves from Berkshire Hathaway?
Well, Danny, very interesting move indeed, considering how battered the United Health stock has been over the past year. We know, of course, the idiosyncratic issues that has plagued that company, and they've had a lot of management upheaval over the last 6 months or so. And then, of course, their latest earnings missing for the first time in more than a decade. A lot of turmoil in that company. But perhaps the thinking for Berkshire Hathaway is that the valuation has finally gotten attractive enough, and it has finally declined enough that perhaps there may be a bit of stabilization in the horizon. I mean, Berkshire known very much for investing in blue chip companies that do deliver stable, longer term returns. And prior to the turmoil of the past year, United Health was one of those stocks. And so perhaps you can see the thinking in Berkshire, maybe it's now time for that stock to finally peter off the declines and start stabilizing from here on out, because, insurance is generally a safe sector these days.
Christine, it is part of the 13 Fs that we get, and it's sure a little bit delayed and backward looking. But in the second quarter, the other thing that seemed apparent was that hedge funds were adding to tech exposure. What does that tell us about what these firms are doing in what, let's be honest, second quarter was quite a volatile period?
Yeah, absolutely, Danny. I mean, we know that the second quarter was indeed very, very just chaotic for a lot of market investors, right? I mean, we saw the Liberation Day tariffs being unveiled during that period and then a few days later pulled back. But, you know, the move toward tech stocks really just testifies to the fact that big tech in times of turmoil is still very much seen as a safe haven. I mean, it makes sense that hedge funds would want to flock to companies that are probably likely to be more insulated from all the volatility, have a lot of cash flow built up in their coffers, and can weather such a storm. And, you know, the preference for tech over, say, smaller stocks or companies that are more focused on the domestic economic situation in the U.S. during that period of such volatility makes a lot of sense. And, of course, we've seen the rebound since then. They've been handsomely rewarded for those positions.
Christine, thank you very much for breaking down those filings for us of the hedge funds. Christine Aquino. Now let's get you some other top stories that are trending on the terminal this morning. China's economy slowed across the board. Production at factories and mines rose at the slowest rate since November. Retail sales grew at the slowest pace this year. It's the latest sign that President Trump's trade war is weighing on the world's second largest economy. Elsewhere, Goldman Sachs offering clients a stake in Millennium Management for a minimum commitment of $1 million and as much as $20 million. The documents circulated by the bank indicate an attempt to widen out buyers in Millennium beyond institutions and towards wealthy individuals. And Masayoshi Son added $11 billion to his fortune in just the first 2 weeks of August. SoftBank's AI bets sent its shares to a record high. Son's net worth is now at $33.3 billion. That makes him the second richest person in Japan. Coming up, counting down to the historic summit in Alaska, we've got the market-moving events that you need to watch out for in your trading diary coming up next.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Welcome back to Bloomberg Brief. Danny Berger here in New York. Let's get you set up for your trading day on this Friday. First, we're going to get retail sales data. That comes at 8:30 a.m. Eastern. It'll be followed by more data, the University of Michigan Sentiment Survey published at 10 a.m. And finally, the main event comes this afternoon with President Trump meeting with Vladimir Putin in Alaska. That's set to happen around 3:30 p.m. Eastern. Some individual stocks on the move pre-market. Intel, those shares up more than 3%. A Bloomberg scoop about how the U.S. government is in talks to take a stake in the chip maker. It jumped when originally that story came out. Applied Mats, though, that share's down 14.5%. It warned of a drop in revenue in the current quarter on a slowdown in demand from customers in China. Finally, United Health, all of that over the Oracle of Omaha. Berkshire Hathaway reporting a $1.6 billion stake in the health insurer. So those shares up just over 12.5%. Elsewhere, it is all calm in markets. I got to say, it was really calm in equities yesterday, even though we had PPI that came in the hottest since 2022. We pared back some of the rate cut bets, still around 90%. Scott Besson also talking about his call for lower rates has to do with just talking about models, not telling the Fed to cut. So even so, you have your 10-year yield, little change this morning at 428.87. The equity market, again, little change after a third consecutive record, 18th of the year. Can we do it again? All right, that is it for Bloomberg Brief. Surveillance up ahead. You're watching Bloomberg TV.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
The steady grind, this buy the dip,
There's no questioning the price action.
It's certainly a time when you want to really think about your sector exposure.
There's a bit more weakness and rotation and churn happening under the surface.
It feels like a melt-up already. What we're looking at here is a really, really solid earnings backdrop for the S&P 500 that we think persists in the back half of the year and has legs to run into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, the president stepping in.
We have a meeting with President Putin. I think it's going to be a good meeting. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
President Trump looking to strike a ceasefire deal between Russia and Ukraine as a more interventionist White House looks for another slice of corporate America. Evidence continues to build that tariffs are beginning to weigh on profit margins. Your stock market just about holding on to record highs.
I'm glad you went there because that was my takeaway from yesterday as well, the idea of profit margin compression. And that's what we saw from PPI that came in harder than expected, particularly with respect to services, versus CPI that came in somewhat weaker than expected. Essentially, these aren't getting passed along. This is the backdrop to this geopolitical question of how the United States is going to get involved. It's who's paying for the tariffs. How is this policy making its way through the market so far?
We've taken some heat out of rate cut bets in the past 24 hours. We've seen some pushback too. This from Mike Gapin of Morgan Stanley. If Chairman Powell wants to retain optionality while awaiting August labor and inflation data, he will likely push back against market pricing at Jackson Hole next week.
This is going to be an interesting meeting given the fact that there has been so much political pressure. And you wonder how many Fed chair hopefuls are going to show up to Jackson Hole with their cowboy hats on, looking to make some statement and make some noise about why this is a Fed that could cut rates by some 50 basis points or more. Look, this is the reason why today's retail sales print actually has new import. If you do have ongoing spending by consumers and you have this belief that there isn't really a problem, like we heard from Tom Barkin, in the U.S. economy, then essentially why should the Fed be cutting? Why should the Fed indicate anything of a dovish stint other than just to placate the government, which maybe isn't a great look?
Back to back all-time highs on the S&P 500. Just about squeezed out a third one in yesterday's session. Futures just about positive this morning. Coming up this morning, this hour, we'll catch up with Peter Chia of Academy Securities ahead of Trump-Putin talks, George Pollack of Signum as the government looks to take a stake in Intel, and Veronica Clark of Citi on why the Fed will cut rates in September. We begin this hour with our top story. President Trump heading to Alaska to meet with Russian President Vladimir Putin. Anne-Marie joins us now on the ground from Anchorage. Anne-Marie, a very early good morning.
Good morning, Jonathan. It's a very early morning here in Anchorage, Alaska, as we await President Trump and President Putin's arrival. Now, you're going to hear the term high-stakes meeting all day long, but it is a high-stakes meeting, and that is because at most meetings, when you have a summit of this caliber, leader to leader, months or even years of diplomacy would have happened that led to this moment. But when it comes to Trump and Putin in Anchorage, and in this meeting in Alaska, this is really the opener. The president himself said yesterday there is a 25% chance that this meeting is negative, and he is left standing solo at a press conference, basically saying this more than 3-year war with Putin's invasion of Ukraine is going to continue. He says this meeting is a feel-out meeting where he can understand what Putin wants, what kind of concessions he is willing to give. His own press secretary saying this is a listening exercise, and the president lowering the bar once again this week, saying that the more important meeting is going to be the second meeting, and that is really the goal of the president when he comes to Alaska today. That is going to be about trying to get Putin to have this willingness to sit down with President Volodymyr Zelensky. The president called it, he didn't love the term, but he said it's not a bad term, divvying up territory. Our reporting is that when European leaders got on a call with the president yesterday, he reassured them that he would not talk about exact territory that either of these two countries could give up. So the best case scenario coming out of this meeting is that there is an agreement in place, maybe a short ceasefire, but an agreement in place for a process to begin to bring this war to an end.
Anne-Marie, we all know there's a lot of daylight between Putin and Zelensky. How much daylight is there now between Trump and Zelensky? How much has changed since the end of February and that very contentious meeting in the Oval?
I would say a lot has changed, and really one of the most striking images thus far of the Trump administration was, remember when the Pope died and President Trump was sitting one-on-one in the Vatican with President Zelensky. That was really a moment those two individuals broke bread after that disastrous flare-up in the Oval Office. But Zelensky is still not at the table today, and that is something that is very different, strikingly different from the Biden administration, who we should note did not want to deal with Putin directly, but the Biden administration used to say nothing about Ukraine without Ukraine. Zelensky is not here, but Trump continues to play up that it has to be Zelensky and Putin at the table. So he still wants to include them. What I see going on is basically what the president has called in the past. He wants to be a mediator when it comes to this conflict. The Europeans are the one that really take the Ukrainians and Zelensky's issues on board, and they are the ones that are the transmitters of that information to the president, especially with the likes of J.D. Vance having the meetings this year. But I would say that that gap has gotten a lot smaller since that February meeting at the White House.
Anne-Marie, looking forward to your coverage. We'll catch up with AMH in the next hour. Here's the view on Wall Street this morning. Peter Chi of Academy Securities writing this. We see a few competing narratives, all of which have some upside potential with some downside risk. Pete joins us now for more. Pete, good morning.
Yeah, good morning.
Fairly balanced view there. Let's just start on Ukraine and Russia and what you think we can achieve, if anything, this weekend.
You know, I think Anne-Marie really hit the nail on the head that typically two leaders meet once everything's already basically been decided. So this, you know, there's a range of outcomes. You know, there's some possibility they walk away saying they have a deal that Europe can't live with. There's some possibility, I think probably more likely, that Trump, exerts some pressure on Putin. We've started to see a little bit of that, right? We're starting now to find a way to get weapons to Ukraine that are palatable to the Trump administration, right? We sell them to Europe. Europe then passes them on to Ukraine. We're talking about the sanctions. We've threatened Russia or India with secondary sanctions. So this could well be a meeting where Putin finally gets the stick, right? It's been a lot of carrot towards Putin. I think that's fairly likely that this comes out maybe very tense, and Trump, for the first time, really puts a lot of pressure on Putin to set up for this next meeting, because I think that's what's going to be necessary. And without a lot of pressure on Putin, he's in no interest to end this war.
What's interesting to me is that all of the analysts we speak to are pretty pessimistic about what can actually get accomplished in this meeting, and yet markets seem to be already pricing in some sort of better outcome, closer to peace. You're seeing oil prices come down. You're seeing European equities to go up. Do you think that it's overly optimistic in terms of how much that base case has already been priced?
Yes and no. I think ultimately everyone kind of sees, whether it's at this meeting, there is a path to peace, right? This war, it's grinding on. It's hurting both countries. It's the Russian economy is in shambles. The number of Ukrainians dying, the number of Russians dying are both sad. I think Ukraine has more trouble living with that than Russia. I think Putin's done a very good job from his perspective of conscripting people from outside of Moscow and St. Petersburg, so he doesn't feel the political pressure to end. But we're headed that direction. So I think the market's probably right that unless this turns into some sort of a disaster, if all it does is lead to a next conference, I think that's fine. And I think the market's probably reasonably prepared that we go to that next meeting by getting pressure on Putin. So I think markets are seeing through this particular meeting and looking forward to 2-3 months down the road when maybe there is some sort of deal that's reasonable.
From a domestic perspective, there's the risk that maybe people have gotten overly enthusiastic about rate cuts, given the fact that the economic data hasn't been so bad. I mean, yes, you see non-farm payrolls suggest some sort of downward revisions. We got PPI yesterday that did suggest some tariff impact, at least on producer prices. And then we're expecting retail sales. How much do you see that as a risk event for markets?
I think the economy is slower than people think. I think all those job revisions, we're finally starting to realize, hey, this economy is slower. We're seeing AI, I think, disrupt some hiring. We're seeing pockets of inflation. I've been particularly focused on electricity inflation. You're seeing that kind of rise. The cost of electricity is becoming an issue. I think it's something we're all going to be talking about next year, if not, sooner. So I feel there's pressure on the consumer. I think the global economy is slowing, right? Everyone's trying to figure out what to do with tariffs. And, we're all trying to look for these signs of tariffs. I think we're still in the early first inning on tariffs, right? We've only just seen them come in place. Suppliers are now just talking to their importers and exporters are trying to figure out who's bearing the cost. It's going to take months, if not quarters, maybe a full year before the impacts are fully felt. But I think you're starting to see those signs. I think global economy is slowing. So I think the markets are a little bit potentially in danger of getting too comfortable that we get rate cuts for good reasons, right? If we get rate cuts as the economy is slowing, which I think is happening, and the Fed has to do it stubbornly because inflation won't really come down, I think we have some issues there, and I think we could pull back from markets.
Messaging, Jackson Hole. Is it too early to send some firm conclusions about what the chairman thinks is happening?
I think the chairman's going to, try and send some firm conclusions. One thing that I like about this administration, right, they've picked 10, 15 candidates, right? So they have all sorts of very intelligent people, respected, all walks of life, all saying rate cuts. So you're not, if it's kind of interesting, if he just already named one person as the potential chair, that's all we'd be listening is, what are you going to do? Now we're listening to this whole slew of people, and I think we should have cut in July, and certainly had we known the June numbers, we maybe should have. So I think we're going to get those. I still think 3, maybe even 4 cuts this year. Certainly 2 for sure are coming, and it's going to be because the economy's slowing just enough.
You mentioned the process. The optics of the process are credible. Is the process credible? There is a difference.
You know, I don't pay enough attention to what this is all going to look like, how it's going to wind its way through the system. I think we are definitely going to have a Fed that works more closely with the Treasury Department and, you know, AKA than the administration. They are going to be more thoughtful, I think, on things like that. And some of it would make sense. I think we should figure out, you know, what's the Fed buying? What does the Fed have on the balance sheet? Where are we trying to issue? There could be a lot more coordination. I think there could be things done. There are things that make me nervous about that as well. Like, you do not want policies set, and my concern will be that we do get these cuts and the 10-year doesn't respond, or the 30-year in particular, because there is a bigger risk premium, right? The risk premium starts getting built in is, what is our data like? Is our data accurate or not? Where do we fit in on our data? You know, is the Fed going to respond in a traditional banking sense, or are they going to be too conservative? So I think that bears the brunt of it. So if you see 30 years stay stubborn, what is the new Fed chair going to do about that? Are they going to implement some sort of Operation Twist? I think there's opportunities, and I just want to circle back when we talk about the economy and tariffs. That I'm a little bit concerned on. The bright side to me, and I think what's going to propel the economy forward potentially, is kind of this, what we're calling PROSEC, or production for security, where the Trump administration really focuses on national production for national security. We saw the deal with MP. Now Intel's, you know, in the news about that sort of potential. I see this as really right up the president's alley, right? We're going to support biopharma, pharma, biotech, chips, rare earths, and critical minerals, and we're going to do it through investment and deregulation rather than handouts or subsidies. So I think that's interesting, and that could propel. So that to me is the positive that's offsetting, I think, what's going to become increasingly a drag from tariffs.
You use the word coordination. More people are using the word intervention. You see it as a positive, the potential Intel deal that we've been talking about overnight.
Yeah, so, I think we all forgot. We were talking about sovereign wealth funds before, and we mentioned this last time I was on. So the Department of Defense found $400 million kind of lying around, per se, to invest in MP, which makes, magnets. And they also helped raise $1.1 billion of financing, probably at attractive rates, because of the government's intervention. And that, to me, is the first sort of step towards this kind of idea of a sovereign wealth fund. The Department of Defense only has certain amounts of pockets, so it's going to have to come from other areas. But this is investment, and I like the fact that, I've got to admit, full disclosure, I own Intel. I've liked Intel for a while. I think it's going to be a part of what we
No wonder you're happy based on the last 24 hours.
Yeah, so it's been a good 24 hours for the Chur household. But, I still have to work, but nothing, having said that. But what I like here is the American taxpayer will prosper, right? If this is the right decision to grow chips, do things like that, the American citizens are going to own this share, right? It's not Trump owns it, it's the U.S. citizen. And I think that's an interesting way to do this, and let us participate in some of what I think will be this growth around national production for national security. And even then, I'm also making sure, I think I've even simplified it too much, right? Security is good in terms of job security, right? All of a sudden, if you're working at these companies where the government's really focused and that your product is there for national security, you have more job security. You're feeling more comfortable. I think that lets you spend and behave and be a little bit more enjoyable of life. And those are things I think that could see the real positive coming out from this sort of thing.
Pete, it's good to see you. Appreciate the take. Peter Shear there of Academy Securities. What we heard overnight, Lisa, actually more conventional than what we heard at the start of the week with regards to NVIDIA.
We've seen a precedent for this with Ford, with GM, with what the United States did with the auto industry after the financial crisis. We haven't seen just random levies placed on certain key industries in order to sell to certain places. So that's actually more unconventional than this type of more interventionist approach with some key industries in the United States.
We've got a lot to cover this morning, including retail sales. Lisa talked about it. We'll get that data at 8:30 Eastern Time with an update on stories worldwide with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. President Donald Trump is traveling to Anchorage, Alaska this morning for a face-to-face meeting with Russian President Vladimir Putin. Trump is hoping to broker a ceasefire between Russia and Ukraine, but tamp down expectations ahead of the meeting. He hopes this one could pave the way for a second meeting, potentially including Ukrainian President Zelensky. Meanwhile, traders are paring back Fed rate cut bets. Investors now see about 90% odds the Fed lowers rates at its September meeting. That's down from near certainty before yesterday's hotter than expected PPI data. Markets are looking to U.S. retail sales data due out at 8:30 a.m. Eastern, which, John, you just said. If it shows a strained consumer, it could reinforce the odds of a cut. And as you guys are talking about with Peter, the Trump administration is considering taking a stake in Intel. Sources telling us here at Bloomberg the move could support the expansion of the chip maker's U.S. manufacturing, especially its planned factory hub in Ohio. It comes just days after President Trump met with Intel CEO Lip-Bu Tan and marks the administration's latest intervention in a key industry. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, taking a stake in corporate America.
This is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
The White House would like a share of something else. We'll talk about it next. George Pollack of Signum joins us in just a moment, live from New York City this morning. Good morning.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Three days of gains on the S&P 500, just and only just in yesterday's session. This morning, positive once again by just 0.05%. Under surveillance this morning, taking a stake in corporate America.
This is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that. We could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
Well, here's the latest move. Intel shares trading higher in the pre-market. Sources telling us here at Bloomberg that the Trump administration is considering taking a stake in the company. The news coming just days after President Trump met with Intel CEO Lip-Bu Tan at the White House. Joining us now is Bloomberg's Tom McKenzie. Tom, welcome to the program. Can you share with us what you think the strategy is here?
John, on one level, this is an idiosyncratic story about Intel and its struggles around cost-cutting and the challenges and the pressure on the CEO, Lip-Bu Tan, who seems to be back in favor now with the Trump administration. And the other level, of course, and you and Lisa were discussing this with your guest before the break, is this the starting line in terms of an outline around an industrial policy now that's starting to come together for this Trump administration? Clearly, Intel and Ohio and the plans there are in focus for the domestic political piece of this. But the national security story that you and Lisa have been working through is also, of course, central. It's all very well having NVIDIA being able to come out with the designs for the most cutting-edge AI accelerators. But if you're having to turn to Taiwan and TSMC to crunch those out and actually produce them, there's a question mark there. Yes, TSMC is investing in the US market. Those foundries will be there. But if you don't have that super foundry in Ohio, the American play around that production piece, because Intel is end-to-end from design to production, there's a big question mark there for a company that, of course, has already received those subsidies. It also reminds us that this Trump administration is, to some extent, taking a leaf out of China's book to compete and stay ahead of China.
Intel up by 3.6%. Tom, enjoyed your coverage this morning. Thank you, sir. Tom McKenzie out of London. To Tom's point, I think is such an important point. Tom spent time over in China. He will know that we spent a long, long time waiting for China to look more like the West. And now all of a sudden the West is taking on Chinese characteristics.
Central planning seems to be ruling the day, and we see that in a whole host of different manners. And this raises a question, is this beginning to usher in a new era where that is the status quo, not necessarily the sort of free market capitalism that was accepted maybe 20 years ago?
Well, let's get to that with George Pollack of Signum Global. George, welcome to the program, sir. We know the president's transactional. We know he likes to make a deal. Do you see a coherent industrial policy coming together here?
Yeah, I really do. And thank you for having me on. I think with the president, what you're seeing right now is that American capitalism, at least the version of it that we've had over time, is really leaving people behind, is leaving American voters, especially those more aligned with the MAGA movement, frustrated in feeling that for all their efforts, for all their work, they're not seeing the economic benefits. So the president sees that by being more aggressive with corporations, and especially big tech and bigger corporations, he can get an American government win, for example, up to $7.5 billion from this NVIDIA and AMD deal. And at the same time, he can show the American populace he's taking on these corporations and pushing them to ensure that American jobs are safe, American industry is safe and developing. And I think that's the idea of the president, and that's the idea what his administration is going for.
We've been trying to figure out who's paying for the tariffs, and a lot of people have pointed to companies, and it kind of goes into this conversation of what the new policy is and the sort of interventionist approach. We're seeing significant costs on the part of companies from Ford and GM to Apple when it comes to tariffs, but then they're getting tax cuts. Is this just basically shifting around the chestnuts to see where the ball lands, or is this actually materially shifting the way that companies do business in a way that does generate more growth?
I think that's the question that we ask here today, but I think for the regular American voter, especially the voter who's more sympathetic to the president and more sympathetic to the MAGA movement, they don't see the tariffs as something that exposing to U.S. voters or U.S. buyers. What they see the tariffs as is recalibrating the market in a way that benefits the American economy, that brings home domestic production and shifts the focus from investment overseas to investment within America, which is what the president campaigned on and which is what advisors like Steve Bannon have been so vocal about. So while from a business perspective, it was really just shifting things around and, hiding new places or developing new places to have on the books. But for the typical American voter, especially those aligned with MAGA, this is a great opportunity to push back on countries that have been taking advantage of us.
So hold on a second, George. Are you saying that this is more visual than actual when it comes to shifting things around? I mean, even some of the production in the United States, we've seen companies gussy up plans that they already had put out there, say 2 years ago, when it comes to bringing jobs back to the U.S. I mean, how much is this just simply window dressing versus really a fundamental shift in the approach to business?
I think for the president, this represents a fundamental shift and a fundamental difference in how the American economy and American capitalism operates. Absolutely. You've seen tech companies, medical companies, pharma companies open lines of investment and foreign direct investment into the U.S. But at the same time, we only have 3.5 more years, of this administration. While that may seem like a long time, for these companies who are deciding on long-term CapEx investments, 3.5 years isn't that long. So I think for now, the way to look at this is as a shift for this administration, but I don't think we can say this is a long-term shift.
George, can we talk about the potential shift politically here in the United States of America? I've always been worried about the pendulum swinging from one extreme to the other. How much time do Republicans have to demonstrate that their approach will work before we see a shift in the electorate to the far left?
I think that's a really good question, but I think the issue is we kind of are having a horseshoe moment in American politics where we're having the far left and the far right kind of united around the idea that that big corporations have been taking advantage of America, taking advantage of American voters, and focusing investment overseas and not focusing on developing a domestic industrial base, or I guess more so degrading the American industrial base we used to have. So I think, at least from a political perspective, this is part of that long shift. And as we see with the rise of AOC or Mamdani in New York City, I think there's always hope that perhaps we turn back and we go back down the middle of the street. But I think we're seeing a more fundamental shift and a more aggressive shift towards, yes, American capitalism gave us innovation, gave us opportunity, but now American capitalism isn't working for the typical American voter. It isn't giving the voter the American dream.
George, appreciate your take. Thank you, sir. George Pollock there of Signum. Lisa, something you've been talking about now for months and months.
This is the reason why it's unlikely that the tariffs are going to get taken off anytime soon. I mean, yes, he's saying this is only 4 years. How easy is it going to be to undo some of these policies if they're A, bringing revenue into the United States, and B, creating the perception of the United States taking a piece of the pie of the corporate dominance that we've seen over the past number of decades?
Never mind too big to fail, too big to remove. That could be the case in the years to come, that's for sure. Equities at the moment on the S&P 500, just about positive so far. Up next, we'll catch up with Eddie Fishman of Columbia University, with President Trump and Vladimir Putin set to meet face-to-face on American soil. Plus, Danny Berger with your morning movers as a chip maker flashes a warning for China. From New York City, you're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Heading towards a second week of gains on the S&P 500. Equity futures just about positive this morning by 0.1%. The Nasdaq almost unchanged, down by 0.15. With 3 hours until the opening bell, let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John. Here's one of the tech names that we've been discussing all morning. It is Intel, after that Bloomberg scoop that the government is reportedly in talks to maybe take a stake in the company. Just wanted to note, it rallied more than 7% yesterday, and the rally continues at some pace this morning. We're up by more than 3.5%. That stake perhaps also going to help build out some of their Ohio manufacturing hub. Elsewhere, we got 13 F filings overnight. This is when hedge funds and other institutional investors give filings of how much are invested in different companies. Berkshire Hathaway, a $1.6 billion investment in United Health. Always important to note with these that they are backward looking. It's from the second quarter, but this company has been so beleaguered, crisis after crisis. Poor earnings, shares are down nearly 15% year to date, and they rallied a whole lot this morning, 12.6%. Finally, we got earnings from Applied Materials after the bell yesterday. It was an ugly one. It was their forecast that disappointed. Shares down almost 15%. The CEO saying, 1, he's getting less orders from Chinese customers. 2, getting approvals for licenses to export their technology to China has been held up and delayed. And 3, the large customers seem to be putting off orders given uncertainty around trade and the economy. John.
Danny, thank you. Appreciate it. More from Danny in the next hour. On our radar this morning, President Donald Trump tempering expectations ahead of talks with Russian President Vladimir Putin as the U.S. pushes for peace in Ukraine. The two leaders set to meet face-to-face in Alaska at 3 p.m. Eastern Time.
A really striking meeting that usually would take months and months of diplomacy ahead of, and a real question of what are the potential deliverables? Is it just a meeting with Zelensky that includes Vladimir Putin? Is there really a renewed prospect of peace? It's interesting that markets are expecting something with respect to easing of relations between Ukraine and Russia. And every analyst we speak to say, we don't see how that could possibly happen, given who has leverage and how different their goals really are.
Do we get the carrot or the stick? How do you sufficiently incentivize President Putin this weekend?
You talk about providing weapons potentially to Ukraine. You talk about economic sanctions. You talk about potential NATO alliance, all things that President Trump maybe isn't going to do. So a real question here, does Vladimir Putin want to get on the same page, given the Russian dream of what one Russia is versus the Ukrainian dream of independence? And that ultimately is just fundamentally at odds, and that's what we keep hearing.
We'll come back to that conversation in just a moment. Our next story, the Trump administration considering taking a stake in Intel. Sources telling us here at Bloomberg a potential deal would help shore up Intel's planned factory hub in Ohio.
You know, Pete Scheer said that this was actually a positive development, and a lot of people would see remnants of what happened in 2009, but in a very different way with the auto sector. There has been a precedent of the United States directly investing in different sectors. There has been the idea of giving them free loans or sort of handouts, as some people would say, in order to incentivize production. This is another approach, taking an actual stake in something. We don't have any details, but a lot of people are hopeful that this actually is taking a page from China's book in some ways to have a more coherent industrial policy and help the United States with domestic chip production.
This industry is super important. We all know that. And if you break it down and just think about what's been developing there for the last decade, last several years, design and build. You've got the fabless model, think NVIDIA, design. You've got the foundry model, think TSMC, build. And then you've got these integrated players that don't know where to go, which is Intel. And there has been talk, action even over the last year, to split off those two things, design, build. Clearly, this administration wants them to focus on building here in the United States of America. It makes a ton of sense to go in this direction. You need government support to make it happen, because apparently right now, the market isn't supporting it sufficiently.
If the United States wants to be able to do it, it is going to have to take a very long time. And that is what people have realized, and the reason why other companies, maybe rivals of Intel, haven't gotten on the board to create those foundries. They aren't very profitable. They take some 10 years to get up and running. Intel has a head start, so the United States wants to get in on that. And ultimately, a lot of people people are rallying behind the shares, hoping that this actually will provide them some upside too.
Up again this morning by 3% in the pre-market. Let's talk about China. The economy slowing down across the board in July. Factory activity, investment, retail sales data, all disappointing, with production of factories and mines rising at the slowest rate since November.
How much is this because of the tariffs? How much is this just structurally? This is an economy that's been in a tough spot, and an administration, the CCMP, not necessarily taking some of the stimulative actions that a lot of people had expected because they were waiting to see what the tariffs and the ramifications were going to be. Real question for markets this morning, does this sort of prod some of the policymakers over in China to inject some real stimulus? Is there going to be government-backed buying of housing, which is one rumor that's been out there? Or is this going to keep them on hold to see how much more pain is coming down the pike from some of these tariffs?
They might have to eat their own overcapacity. I was reading some stories, I'm sure you read the same ones, about the amount of competition domestically now that's leading to price cuts, and margins are starting to suffer, and you're seeing that in domestic Chinese companies. Overcapacity all over the place in that economy.
Yeah, and how do you remedy that? They talked about maybe preventing Chinese automakers from cutting prices too much. How do you sort of engineer this in this perfect way? Markets are a complicated beast that actually are the most efficient way of doing this, and we've seen that again and again. When you try to control it centrally, it gets kind of dicey.
Thank you for saying that. Central planning is not straightforward. Just throwing that out there.
That's very fair.
Based on the week we've had so far.
I think that's a wise
It's not straightforward. All right, we'll move on. Let's turn back to our top story. President Trump looking to strike a deal between Russia and Ukraine.
We have a meeting with President Putin. I think it's going to be a good meeting. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
Eddie Fishman of Columbia University writing the following quote, even small symbolic concessions from Trump could undermine the broader campaign and fracture Allied unity, a scenario that Europe fears. Eddie joins us around the table. Eddie, good morning. Good to see you.
Great to see you too.
I want to throw the question at you that Lisa and I were discussing just moments ago. How do we sufficiently incentivize President Putin this weekend?
I think Putin needs to understand that Trump is actually serious when he says he wants peace. Because I think right now, Putin believes that time is on his side. So he actually sees these negotiations not as an end to peace, but actually as a means to allow himself to continue the war without facing significant pressure. There was momentum building in Washington last week for more sanctions on Russia. Trump himself said that there were going to be very severe sanctions if Putin didn't agree to a ceasefire by last Friday. That date came and went. So Putin already has kind of gotten a victory by delaying that. There's also momentum to provide some more military assistance to Ukraine. So I think Putin, just by getting Trump in the room, by sort of convincing him that he's serious, he knows that Trump wants that Nobel Peace Prize and will stay in that negotiation and by prevent real pressure from coming down upon him.
I'd love to know what you think about this framing, because I hear this a lot. President Putin is driven by territorial ambition, not economic prosperity. He does not respond to economic sanctions. How do you change that?
See, I disagree with that fundamentally. He clearly wants to achieve his maximalist objectives, which is to truly annex these 4 territories of Ukraine that he's formally annexed but doesn't yet control. But what happens if the Russian economy is in a massive crisis, right? Even this year, just as we are right now, the Russian economy is in stagflation. They're going to grow probably at most by 1% this year, and they've got inflation well above 10%. So the question is, what if you could get them into a significant recession? And if you had inflation at 20%, which, you know, we saw in the lead up to the nuclear deal with Iran. U.S. sanctions can do this if we actually are willing to go for the jugular, which in the case of Russia is its oil sales.
There's also this question of Russia's leverage, and that has to do with also a nuclear deal that I know has been in the works with the United States, and a question of what happens with their weapons and what happens on an ongoing basis. Do you think that somehow Vladimir Putin has gotten more leverage than people had expected heading into this meeting?
Yeah, I think something to pay very close attention to is that Putin and the Russian media have come into this meeting saying that it's not just about Ukraine. They're also going to talk about cooperation in the Arctic. They may talk about restarting the New START treaty, which Russia stopped participating in 2023, which is this arms control treaty. And of course, they've been talking about these potential economic deals. To me, something that raised my eyebrows is that Scott Bessent apparently is going to be part of the delegation, as well as the Russian finance minister. That's kind of unusual if you're thinking about this as a ceasefire negotiation. And so what Putin seeks to gain there is to really kind of shift the discussion away from Ukraine and persuade Trump that there's a bigger picture here, and that he should actually normalize U.S.-Russian relations irrespective of what happens in Ukraine.
If Trump entertains this idea, how much of a wedge does that put between the United States and Europe?
A huge wedge. And look, I just got back last night from Helsinki. I was there for the past week meeting with various European officials, European diplomats, And they're petrified of this because they know that as soon as there's even a small sign that the U.S. is backing off, let's say Trump agrees to some symbolic sanctions easing, Putin himself is sanctioned. And actually, just a couple days ago, Treasury had to issue a license to allow Putin to travel to Alaska. Let's say Trump says, okay, we're going to give you a little bit of sanctions easing in exchange for some perfunctory Russian concessions. The Europeans are going to be panicked, and they're going to wonder, what can we do to prevent sort of the lid from falling off of this pressure campaign that we have painstakingly built together over the last 3 years?
There has been some criticism of the Europeans in their approach by this administration. Have the Europeans done enough? What have they been doing recently?
Yeah, so I'm glad you asked this because I heard Secretary Besson on the show a couple days ago saying that the Europeans need to step up. Well, just a few weeks ago, the Europeans did the most dramatic sanctions package that I have seen since the beginning of the war. They unilaterally lowered the price cap on Russian oil from $60 a barrel to $47.60. Kind of a strange number. It's 15% below the market price. They did that by themselves. This was supposed to be a G7 decision, but they went ahead and did it themselves. They also imposed secondary sanctions. These are not sanctions on Russia, but actually on Russia's trading partners. They did 2 Chinese banks were sanctioned by the EU, and I think most importantly, they actually sanctioned the second biggest oil refinery in India, Nyara Energy. So they are already directly targeting Chinese and Russian businesses that are in bed with Russia, and that's not something that the U.S. has been willing to do so far.
What's left? What would you like to see happen?
So I would like to see the U.S. join these sanctions with the EU, because ultimately, because of the dollar is still the global reserve currency, when the U.S. is on board, the sanctions are much more powerful than if it's just the EU. But there's more that needs to be done. I think sanctioning other Indian refineries, sanctioning Chinese refineries and more banks, and ultimately providing a clear roadmap for how these purchasers of Russian oil, like China and India, can gradually bring down their purchases over time.
You've done an amazing job in your latest book and just generally through your research in understanding how much the global relationships are changing. Depending on what happens in this meeting, how much does that indicate who is against who, whether this is a multipolar world or whether this is everyone go it alone?
Look, I think that there's also maybe a third option here where Trump may be reorienting U.S. relationships toward our historical adversaries. We saw just last week Trump agree to allow NVIDIA and AMD to sell semiconductors to China so long as they pay 15% to the U.S. government. That's a giant concession to China, right? And it's a huge sort of example of how we are warming our relationship with China on this key area of technology competition. If we also start seeing some easing of sanctions on Russia, which I want to be clear, it's not my base case scenario, but it's still possible that it happens today, then you could start saying that Trump actually is kind of pivoting toward Russia and China, and the Europeans are out left in the cold.
Eddie, appreciate your take and your opinion. Thank you, sir. Eddie Fishman there of Columbia University and author of Choke Points. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. China's economy slowed across the board in July with factory activity, investment, and retail sales all disappointing. Production at Chinese factories and mines rose at the slowest rate since November, suggesting President Trump's tariffs are making a sizable impact on that economy. Retail sales also slowed to its slowest growth pace this year. Meanwhile, we are seeing shares of United Health surging more than 12% in the pre-market following news that Warren Buffett's Berkshire Hathaway took a $1.6 billion stake in the company. According to a regulatory filing, Berkshire bought 5 million shares of the health insurer in the last quarter. The same filing shows Buffett sold his entire holding in T-Mobile and trimmed stakes in Apple and Bank of America. And President Trump's tariffs are taking a toll on the chocolate market. Swiss chocolatier Lindt says it may shift production of its famous gold-wrapped Easter bunnies to the U.S. to avoid import tariffs. Sources telling us here at Bloomberg the plan would involve spending as much as $10 million to move production of its hollow chocolate figures from Germany to the U.S. That's your Bloomberg brief. John?
Yahira, thank you. Lisa nodding along as you were telling us that story.
I thought this was fascinating.
I'm partial to a limp bunny myself once a year.
Once a year. This is so you. That is such a you comment. Oh my goodness. But it has to be
I like the mini ones.
But do you like milk?
I prefer the mini ones.
Because it's smaller, so you don't have to feel as guilty.
No, I think they're just, I don't know, there's something about the taste of the flavor profile of a smaller chocolate.
Do you think it'll be a different flavor profile made in New Jersey?
Possibly.
I don't know. We'll see.
We'll talk more about that another time. Up next on the program, taking some heat out of rate cut bets.
We think they're meaningfully away from target and even further away in the other direction than they were before the pandemic.
A conversation up next with Veronica Clark of Citi from New York City. This is Bloomberg.
discussed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Stocks are positive this morning, up by 0.1% on the S&P 500. Down about 1/10 on the Nasdaq. In the bond market, yields bouncing off multi-month lows at the front end of the curve following PPI. Yields this morning back lower by not even a basis point. The 2-year settling at around 370 at 372.75. Under surveillance this morning, taking some heat out of rate cut bets.
There doesn't need to be a huge pickup in inflation, but the point that we've been making is that even X of the tariff shock, the core PCE, headline PCE, probably stuck around 2.5%. And that's the concern that we have for Fed policy. We think they're meaningfully away from target and even further away in the other direction than they were before the pandemic. We're being hit by so many supply shocks right now that it makes forecasting very difficult.
So here's the latest this morning. Investors walking back Fed rate cut bets with PPI data surging at its fastest rate in some 3 years. Veronica Clark of Citi writing, we expect limited signs of persistent inflation and a weakening labour market will have Fed officials cutting by 25 basis points in September and each meeting after to get to 3%. Veronica joins us now for more. Veronica, good morning.
Good morning.
It's good to see you. That kind of echoes what we heard from Secretary Bessent. Let's get down 150. What is it about the inflation data that you think won't derail this effort?
Yeah, I mean, the July inflation data was interesting. We finally got some firmer data, not downside surprises. And when you dug into the details, yeah, it wasn't actually in goods prices, which obviously people were looking for the signs of that tariff pass-through. It was in services, which sounds concerning, but then you dig a level deeper. And in both CPI and PPI, it's just one-off services that are particularly strong, dental services and CPI. PPI yesterday was portfolio management fees. We know that moves with asset prices. So I don't think there is any sign yet of the broad-based kind of concerning inflation for the Fed.
The key word there is yet.
Yet.
Why won't that change in the months to come?
Yeah, I think the biggest test of the tariff pass-through dynamics is really going to be August and September data. Based on what we know about when tariff rates started to rise, based on, there was in the import price data, some, producers maybe lowered their prices temporarily. We see that in goods like apparel. That's kind of ended though, as people draw down inventories. Maybe it's August, September is that time frame when, okay, maybe you do have to start raising prices. You've held off as long as you can. We know that's when some prices for things like clothing start to rise for a new season. If we still don't see it in those months, if it is more limited, I wonder if that tells us that the consumer really just can't handle these big price increases right now. That is not persistent inflation.
I have Steve Rasciuto of Mizuho in my mind. Stop taking this out and this out to create the number that you actually want, because ultimately, if it comes in hot, if it barks like a dog, it acts like a dog, it wags its tail like a dog, it's a dog. So how much can you really say portfolio management costs? Ignore that. Asset prices don't matter when the wealth effect is real, when you've got retail sales that are expected to come in hot. I mean, how long can you keep being cute about the components?
No, and we don't want to pick and choose. And of course, portfolio management fees were weaker earlier in the year when we had equities falling. But I mean, I think it does speak to, we're not seeing the big broad-based kind of price pressures yet. And I think this is just a very different fundamental demand backdrop than the kind of inflation we saw a couple years ago. So yeah, it's not the ideal number, of course, but there's nothing really blaring red that would stay persistent in this data.
Do you expect any kind of messaging at Jackson Hole that could really indicate how the Fed is going to deal with both the political pressure, but also this data that is open to interpretation?
Yeah, I think we've heard still enough division among Fed officials. There are still, even this week, some officials who are describing the labor market as solid, worried about some of these more persistent inflation risks. So I think Powell does kind of have to walk a line here. You can't be so dovish that we've heard from officials like Waller and whatnot. But I think they have enough information. If they had those revisions, to the July employment report ahead of the July meeting, I think they probably would have been cutting at that meeting. So he'll probably feel a little bit more comfortable guiding towards, we are still expecting cuts, and that could be on the table for the fall.
Is there sufficient two-way risk in the upcoming information? CPI early next month, payrolls the first week of September.
Yeah, we'll learn a lot more. It is that August inflation print that we're going to get before the September meeting. I wonder if we could see some more inflation impact there. It is, I think, the August employment report that matters the most, though.
You and the team seem to be putting a lot of emphasis on employment, and that's either dual mandate. So let's sit on this topic a little bit more. We had Bank of America sat in your seat yesterday, and they're making the case that ultimately what you're seeing right now is not a cyclical turn, it's a structural shift, and that you can have a step down in payrolls growth without an increase in slack. You and the team are taking completely the other side of the debate, so please explain, tell us why.
Yeah, I think the main debate among everyone watching the labor market data right now is this, some weakening demand underlying this, or is this just an immigration story? We've had a slowing in population growth, and that break-even pace of payroll job growth is lower, I'm sure. But I think in the details of the data, there are a lot of worrying things that this is more than just immigration. This is a weak demand story, and I would look to, a lot of the decline in participation has been discouraged workers. You give up looking for work because you're not finding a job. That's probably not immigration. A big increase in unemployment has come from college-educated workers. Those are probably people not being crowded out by recent immigrants. And then in July, the big increase in unemployment, which it stayed at that 4.2%, but it was new labor market entrants. That's probably not new immigrants now. That's probably students looking for work and not finding jobs. So there are enough signs that regardless of immigration, there is weakening happening.
I'm just trying to wrap my head around the idea of pegging some sort of Fed move to data that has been undermined in terms of the integrity of it by the U.S. government, where the head of the BLS has just been fired. And there have been such massive revisions that you have a growing number of economists saying that if those numbers had come out in June and July, this Fed would have already been cutting rates. How do you sort of square that circle?
Yeah, I mean, there is, of course, a lot of attention, and rightfully so, on the official data. But the revisions, I think, made a lot of sense to a lot of people, me included. We had seen a lot of evidence of weakening labor market before those revisions, and it was payrolls that was the outlier. So it does make some sense, I think. I do trust the official data, of course, just as much as I did a couple months ago, which admittedly is maybe a bit less than 6 years ago. I think the pandemic is still just skewing a lot of this, the data, the seasonal adjustment, some of the collections. It was just a weird data event that happened, and it's going to be weird for a while. But I do trust the official data that we're getting, but you do have to take all the data, form your view on all the data that we have available to us.
So let's get to the data that we're going to get in 90 minutes time. Where do you place retail sales?
Yeah, it is an important one. We've seen this dynamic this year in goods spending where maybe there was some front loading that was boosting sales temporarily. Services spending in the quarterly data and the monthly data have been much softer. Retail sales, I think a couple important things to note, if it is a soft demand story that is limiting the ability of companies to raise prices. Maybe we see that in softer spending. But retail sales are nominal also, so it's important to keep in mind as we're getting into the fall, we could have some bigger price increases, and that could make nominal retail sales when they come out look stronger. But what we really care about, of course, is real spending. I think this number today will be fine, a healthy enough number.
It's good to see you, as always. Thanks for dropping by. Thank you very much. Veronica Clark there of Citi. It's not just the data, really. We're hearing it from certain parts of corporate America, Chipotle, Sweet Green, McDonald's, I think Carver earlier this week. Next week's a pretty big week for that. I think Home Depot, Target, and Walmart on deck.
Yeah, how much they see demand either accelerating or plateauing in response to some of the uncertainty with respect to tariffs. Also, their hiring pictures. I am curious about whether you see a similar trend in some of the retailers that we've seen in some of the tech sector, which has been cutbacks in key areas as a result of certain AI and some of the technological advancements there. So very curious how they're implementing some of those aspects as well.
Sam Rowe out yesterday on X with the reminder of the cheat guide for Walmart. If the numbers are good, the economy's bad. If the numbers are bad, the economy's bad.
Yeah, I don't, okay. Okay, that's what people used to say. I don't think it's that anymore because Walmart is now a broader selection of goods. They now have a lot more high-end goods and they cater to a larger swath of companies.
Well said. The stock market is a little bit lower this morning. We're down by about 0.1% on the Nasdaq 100. Lots of retailers reporting next week. We'll give you a preview later in the program. Up next, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management. We'll speak to Ashley Davis of S3 Group, the former White House economic advisor Mark Summerlin, and Ed Husseini of Columbia Threadneedle. The second hour of Bloomberg Surveillance is up next.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
A cidade estava sitiada. Isso ao começo eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado. Porque no final, tudo é dinheiro. People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We haven't seen this full pass-through of inflation to consumers. The picture looks a lot better than at least the most recent 3 months.
There's a lot that could still happen on the inflation front that's ahead of us.
Over the coming months in 2025, it could be more volatile, could be more choppy.
The economy, I think, is going to surprise everybody in the next few months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now, live from New York City this morning. Good morning to you all. Your scores look like this. Equity futures on the S&P bouncing by 0.1%, adding to 3 days of gains on the S&P 500 and just about another all-time high at a close in yesterday's session. Coming up later, Lisa's been talking about it. It's 90 minutes away. Retail sales in America, another read on the U.S. consumer.
Yeah, how well are U.S. consumers absorbing some of the goods that have been tariffed, or have they, right? When do we actually get a true read on what consumer sentiment looks like post-tariffs? We've already seen the inflation, consumer inflation, not come in particularly hot. What the inflation that a lot of producers are feeling, though, is can companies keep absorbing those margins, keep absorbing those tariffs on their margins while consumers feel the benefit of it? Or do they start accepting some of these higher prices if those retail sales do come in robustly?
A theme over the last few days talking to you, just there's some real two-way risk here going into September. It can break either way. So do you want to commit to what you're going to do in September and beyond when you get together at Jackson Hole for an FOMC party in Jackson Hole, Wyoming?
Yeah, the answer is no. I mean, you could say, well, we'll see. I mean, but the answer is, why would you pre-commit to something when you have real two-sided risk and, frankly, you've got a really split committee? More interesting is, how are they measuring things? And actually, President Trump has spotlighted how important data collection is with the BLS. And this is actually key for a Federal Reserve that's examining how the labor market is changing. Is this a secular or structural shift, as you've been talking about in a significant way? Secular or a cyclical shift that we're seeing in some of the data? Does it have to do with immigration? Does it have to do with AI? That is going to be really important to understand how we even count some of this data that some people have thrown some hair on.
It's a lot of doubt, and the market keeps feeding on it. The mount up continues. All-time highs coming into Friday. Equities up again by 0.1%. Coming up this hour, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management as markets inch higher. Ashley Davis of S3 Group as President Trump and Vladimir Putin prepare for their meeting in Alaska. And Fed Chair candidate, the former economic advisor to President George W. Bush, will speak to Mark Summerlin a little bit later this morning. We begin this hour with stocks higher as investors await another round of economic data. Dan Greenhouse of Solis Alternative Asset Management writing, yesterday's PPI number certainly complicates the story, but I still believe the Fed is more likely than not to reduce rates at its September meeting. Dan joins us now for more. Dan, good morning.
Good morning to you guys.
It's good to see you, sir. You usually take a constructive view on things, so what's good about things right now?
Well, listen, a lot of things are good right now. The labor market is slowing, but is still holding in there. And I don't think, as Veronica Clark noted at the end of the last hour, that she has not seen, and I don't think most of us have seen, the type of broad-based increase in goods inflation that was predicted 6 months ago when the tariff debate really started. And then on top of that, probably the most important thing from an investor standpoint is just the AI story remains unimpeded right now. The CapEx story, the demand, et cetera, et cetera. And while there's surely going to be an end to all this, from a market standpoint, it's been driving risk assets higher. And again, I haven't seen anything that complicates that story.
Well, let's talk about what we've heard from companies so far on the consumer side, from Sweetgreen, from Chipotle, from McDonald's. Just a bit of pushback here about what's happening. Do you not see that demand side destruction that the Veronica Clarks, the cities of this world, are worried about?
No, I don't see it. I mean, there are obviously isolated pockets. There's some tariff worries. A lot of companies talked about tariffs in the back half of the year being more of an issue than they were in the front half of the year. But I always fall back on my go-to, which is the comments from Visa and MasterCard and Capital One, all of whom said, as of the last earnings report, that things were just fine. And I think it was Visa who said they saw no change in spending patterns across income cohorts. And why that matters is because you can point to Sweet Green or Chipotle or Tapestry, and these are isolated companies in isolated industries, whereas obviously the card companies have exposure to everybody spending across sectors, across income cohorts. And so I think they provide they do provide a more holistic view of consumer behavior. And so I take them just a little bit higher, so to speak, in the pecking order than a random retailer.
So we're all chocolate bunnies and cake here this morning and yesterday on Bloomberg Surveillance, and we were talking about, can you have your cake and eat it too? Can you have a resilient consumer while also not having the inflation that would prevent the Fed from being able to materially cut rates? Don't you see a conflict in that picture?
Well, leaving the rates aside, in terms of the resilient consumer, the labor market, again, slowing, but no layoffs, as we see from the weekly jobless claims data, is the best evidence of it. But I think it was Birkenstock yesterday who reported that they passed through price increases in July.
How have they got pricing power over there?
Because I'm buying some Birkenstocks for Christmas.
Is that what you're doing?
Yes, absolutely.
Is that what you're actually going to do to me
Absolutely.
later this year?
And I expect you to.
I can assure you, as a card-carrying member of the Grateful Dead and Fish community, the Birkenstock demand is unimpeded.
You guys are killing me.
Carry on, I support.
But yeah, so they said, I think it was Birkenstock who said we passed through price increases, and so no pushback whatsoever. And there are a couple of companies that have alluded to that, although, to repeat, numerous companies have said the back half of the year is going to be when these effects are felt. Now, with respect to the Federal Reserve, listen, I think the labor market is clearly weakening. If you look at private payroll growth, for instance, it has slowed down fairly dramatically from, call it, the 6 months before the last one or two. And so when I talk about rate reductions from the economic side of the discussion, I'm not talking about 200 or 300 basis points. There's people running around saying they should cut 100 basis points at the next meeting. I'm not on that train. What I'm saying is things are slowing down. Tariffs are, I can argue, if we have enough time, tariffs are actually deflationary, but that's a separate story. And so if the Fed were to tweak rates lower 1, 2, 3 times between now and early next year or the middle of next year, is that so bad? Is that going to lead to an inflationary spiral from a demand-led standpoint? I don't think so. Now, from an investor standpoint, basically all of what we're talking about is positive for risk assets on balance. That now, again, this is with the caveat that we're going through an economic experiment, the likes of which we have not seen in decades. And so really having a handle on how the risk environment landscape unfolds over the next 6 months, there are a lot of people who speak authoritatively on this. I would push back on every one of them. We have no idea how this is going to happen and unfold. But my working assumption, my expected value standpoint, is that on balance, that this is pretty positive.
Deflationary. You said it now. We've got some time. What makes it deflationary?
Well, you're crimping after-tax incomes. You're curbing demand. To the extent that this is passed through at all, now, again, we have to start from the premise that tariff-led price increases are not inflation. They are a tax. And so if we separate that out, higher taxes on consumers crimp after-tax incomes. And there's more to the conversation, but in a nutshell, that's it. And so I would actually argue, and I've said this a few times on the show, I think by the end of this year, you're going to have the Veronica Clarks of the world, to a lesser degree the Dan Greenhouses, but the economists of the world coming on Bloomberg TV, particularly surveillance, and saying, sure, PCE is 3.3, sure, CPI is 3.5, but if we X out the tariff categories, and I know you have Steve Rasciuto in your mind saying, can you really X out a bunch of stuff? And we can talk about that, but I imagine people are going to say Xing
Well, at risk of intervening yourself, let's talk about it.
Sure. I'm going to do it in the future.
Why should you just X that stuff out?
Because tariffs are not inflation. And I know that in the context of this conversation, we're measuring them through the prism of inflation, the CPI, the PCE, et cetera. But they're not really, it's a demand-led inflation. It's a tax. And we hearken back to the oil spikes in the 70s. I think this is a good analogy. At the time, oil goes up, inflation goes up, the Fed tightens policy, makes everything worse. We have since learned, that tightening policy in the face of an oil-led price increase, bad idea. And so now you talk about looking through oil price spikes to the extent that they're not demand-led, there's a supply shock, or we bomb a nuclear facility in Iran. I think that the Federal Reserve could probably apply that same rationale to tariffs.
Hold on a second. I wonder if we're thinking about this all wrong.
Probably.
And I wonder if that, because if you look at what's actually happened, companies have absorbed a lot of the tariff ramification on their margins. Ooh, scary. You should say, why are stocks going higher? They should really be reflecting this. Then you look at the other side of the balance sheet, and they're getting tax cuts that almost perfectly offset some of those costs from tariffs. So isn't this just, again, a shell game? taking things from one to here and there, and then you're not really actually changing anything. So we're kind of making these expectations built on a fiction.
To the extent that I followed what you said, and there was a lot in there, I think, yes, there's a lot of truth in what you just said. I'll leave the academic and the tax argument to the economists. From an investor standpoint, I have to, what's right or what's wrong or a shell game is not my number one concern. My number one concern is what do I do with the cards that are being dealt to me? And in this environment, I think on balance, again, it favors the risk landscape. Now, I'm sure there's people watching going, what is this guy talking about, tariffs or not? Tariffs, obviously, all else equal, worse than the outcome, worse than the alternative, leaving aside the political goal of what tariffs are trying to engender in terms of a reshoring. You talked about bunnies before. From a risk standpoint, the consumer is still doing fine. The AI story is still doing fine. And so from a risk standpoint, I think that favors, on balance, still higher risk assets. I would add, people keep talking about, is it not reflected in the stock market? This is not a particularly screamingly broad rally. The stock market's up, call it 10% for the year. Only about 200 stocks or so are doing better than that. You'd like to see that number higher. The stock market's at an all-time high. The median stock is down 10, 12% from the high. Very few stocks, 50, 60, are also at all-time highs. So it's not, I would argue, under the surface, a lot of this is being reflected.
So how would this sort of go into a market call? Market weight, equal weight? How much are you looking at small caps? How much are you looking at stocks over credit? What's sort of the risk-adjusted valuation prospect here?
Well, listen, we pick individual stocks, so I'll leave that to the Savita Subramanians of the world to overweight or underweight. We're trying to find companies that do well in this type of environment. We own an emerging market telecom company. We own a couple of oil servicing or waste management type companies with pricing power, with demand, et cetera, et cetera. That's what you're trying to find. In terms of overweighting, underweighting, listen, again, I defer to Savita or Adam Parker or the people that do that more than I do these days. But I'll just fall back on the AI story is still working, and it's not, we know this already, it's not just the NVIDIAs of the world, it's the GE Vernovas and the Eatons, and you can even go down from tier 2 to tier 3, like the Amphanols and the companies that make components that go into the data center racks, et cetera, et cetera. This is affecting broad numbers of the markets. And just to that point, I would add, when you look at the best performers in the S&P year to date, you've got to go down, I forget the number, like 35 stocks in terms of best performers before you find a Mag 7 name in NVIDIA. All the best performing names are, some are AI derivatives, but they are not the Mag 7.
Dan, it's good to see you. Thanks for dropping by.
Always my pleasure, guys. Thank you.
That was very easy for me. Appreciate it.
Well,
Greenhouse.
easy for me too.
One subway stop. Management. It's great when he drops by and just interviews himself, right?
And you could say this.
If you give me
talking
time,
about
and I can talk about it later.
Yeah, exactly. Okay, well, have a time. Go ahead.
I take the time to watch the segment before me, so I know what I'm saying.
Very good.
I noticed that. Credit to you.
Yeah,
Thank
definitely.
you for that,
You saw that I can't get expressions correct.
There we go. What, ducks versus dogs?
Ducks, dogs, they sound similar.
You quack like a duck, you know.
Yeah, but like you bark like a dog.
I didn't bring that up. You brought that.
You wag a dog. Yeah, it actually works perfectly.
It did. I liked it.
Thanks.
It's nice. If you missed that, didn't miss anything. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahira. Hey, Yahira.
Hi, John. President Donald Trump is traveling to Anchorage, Alaska this morning for a face-to-face meeting with Russian President Vladimir Putin. It's Putin's first trip to the U.S. since 2015, when he attended the UN General Assembly here in New York. The two leaders will meet at 3 p.m. Eastern, and then delegations from both countries will continue talks. Meanwhile, gold is headed for a weekly loss as traders dialed back their bets on Fed rate cuts at the FOMC September meeting. The slide followed PPI inflation coming in at a 3-year high. The precious metal has climbed by more than a quarter this year, with the bulk of those gains occurring in the first 4 months. And Apple is restoring the blood oxygen tracking feature on its smartwatch in the U.S. following a years-long legal fight. The feature was removed at the end of 2023 due to a patent infringement lawsuit filed by the medical technology company Masimo and a U.S. customs injunction. This hits at a key time for Apple, which is expected to unveil new Apple Watch models next month. That's your Bloomberg brief. John?
Yahira, thank you. Up next on the program, discussing a ceasefire.
We have a meeting with President Putin. I think it's going to be a good meeting. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along.
Ashley Davis of S3 Group joins us next as President Putin touches down on American soil and the President of the United States makes his way to Alaska.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Days of gains on the S&P 500, heading towards a second week of gains. Equity futures this morning adding just a little bit more weight to the rally, up by 0.14% so far. Under surveillance this morning, discussing a ceasefire.
We have a meeting with President Putin. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along.
So here's the latest so far. President Trump and Russian President Vladimir Putin set to meet in Anchorage to discuss ending the war in Ukraine. Putin praising Trump ahead of today's meeting and said he's willing to start work on a new arms control treaty. Bloomberg's Anne-Marie has the latest on the ground. Morning, Anne-Marie.
Good morning, John. When it comes to what President Putin wants out of this meeting, it's not even just about what's going on in terms of his invasion of Ukraine. He wants to restart the bilateral cooperation between Washington and Moscow. That's what you just mentioned when it comes to arms control, which that treaty, by the way, the New START, expires February of next year. He also wants to talk about economic cooperation. We are just south of the Arctic Circle, some place where you can, have these critical minerals, potentially cooperation there. And then most notably, obviously, the Russian president is going to be pushing for sanctions relief. And I think it's quite telling who the Kremlin is bringing along. They're bringing along their finance minister, Anton Siluanov, on top of the foreign policy individuals that have really surrounded President Putin for years. And President Trump, just sitting on Air Force One, waiting for the president to arrive, is his team. And alongside the likes of Marco Rubio, who you would, of course, expect to be there, his Secretary of State and National Security Advisor, the president is also bringing along Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent. Now, Scott Bessent spoke to you and I this week, Jonathan, and he said that they are prepared for either direction, sanctions relief, if the meeting goes well,
or to double down on sanctions if the meeting does not go well, really signaling that those secondary tariffs that the administration has put on Russian crude going to India that will kickstart at the end of the month, if there's not an agreement, potentially that could mean this administration is willing to take the step to go to Russia's biggest purchaser, and that's China. So I think it's really telling who is also accompanying these two leaders besides the usual suspects in the foreign policy sphere.
Anne-Marie, looking forward to your reporting. We'll touch base with Anne-Marie a little bit later on this morning as Air Force One prepares to take off and head to Alaska in the next hour or so. Joining us now to discuss, Ashley Davis of S3 Group and the former assistant in the Department of Homeland Security. Ashley, welcome to the program. Can you help frame this moment for us? The Russian president touching down on American soil. What's the best we can hope for this weekend?
Well, first of all, I think I need to be on next time with Dan. He seems really fun. And so hopefully we can get together next time. But good morning to everybody. I think this is a huge day for not just the president, but also for people around the world and obviously Ukraine. The number one issue that the president wants to deal with, our president wants to deal with right now, is obviously making sure that people stop dying. This is 3.5 years. This is hundreds of thousands of people that have lost their lives because of this war. You know, there's a lot of rhetoric right now that the president doesn't really know what he's asking for, et cetera, et cetera. I know from my White House days, there is absolutely no way that the conversations between both teams have not been very serious before they would ever let either of their principals join today. I think what we're going to watch is there's probably going to be some sort of announcement with the ceasefire. And then we'll see there is talk that maybe Zelensky actually comes to Alaska and they have a meeting in person there after that. Obviously, I think that is something that would be a fantastic outcome, but probably a little bit riskier. The final thing I want to say is, you know, this is and Anne-Marie was just saying it a little bit earlier, this is not just about the Ukraine war. What the president has done, I think, very well is put the tariffs on Brazil, put the tariffs on India that actually surround Russia. And so this has come to a point where it's not just about weapons and what we're selling to Ukraine, what Europe's selling to Ukraine, what they're using on behalf of, you know, to fight the war against Putin. I think this is really about kind of the economic sanctions that the president really pushed and is limiting them to do.
Is that your interpretation, Ashley, of who is going with President Trump, the Scott Bessents and the Howard Lutnicks, or is it catering to kind of the Vladimir Putin view of this meeting, which is a broader relationship between Russia and the United States that includes the Arctic Circle, that includes arms deals?
I think also critical minerals are going to be absolutely a major part of this. But I actually think if you see the tipping point in these negotiations, and again, we're going to see what happens today. A lot can happen. But the tipping point really happened when our U.S. Senate, number one, wanted to put secondary sanctions on Russia, and we're ready to go. But also how the president did not back down in India, who is an ally of ours, and Brazil and other major countries that buy Russia's oil and gas. And so I actually think the economic tipping point was what really brought everybody together.
So you think that actually the economic pain that Russia is feeling has been enough of a stick so far to bring Vladimir Putin truly to the negotiating table? So right now we're seeing markets price in some easing of the tensions between Russia and Ukraine. You think that this is warranted, it sounds like, based on the lead up to this, who's attending, and the tone so far from both sides. Is that right?
Absolutely. And I'm sure that Russia is getting huge pressure from India, which is one of their biggest, you know, they buy one of the most from, India buys one of the most from oil and gas from Russia. So I'm sure India's like, come on, we've got to get to the table here because you're crushing us. So, you know, whatever you think about President Trump or not, he did put this broader plan together that's trying to squeeze Putin. Obviously, he came into office saying that he was going to stop this war on day one. I think he realized very quickly that he wasn't able to trust President Putin. You know, I lived through the days when George Bush said he could see President Putin's soul through his eyes. You know, I think there's been lots of presidents that thought you could trust this man at the beginning, but you really can't. And so they were able to put this bubble around him, squeezing him, which I think is the economic impact.
Ashley, as you know, and just to build on this thread, President Trump is very willing to take an unconventional approach, to break the status quo, to do things that other politicians won't do. That can be a superpower sometimes. Ashley, I wonder what you think he can do this time that President Biden was unwilling to do. What would you like to see happen here?
Well, and listen, I don't want to, I'm a big believer that you don't criticize what you don't know. And none of us on right now or who's watching were in the room really when the President Biden was having these discussions and his team. But what President Trump did do that Biden did not do, yes, we put sanctions on Russia. Congress put sanctions on Russia. However, they did not do it through this new mechanism, which is the tariffs, which is actually not just impacting Russia, but it's impacting Russia's customers. And so I think, which again goes back to especially India and Brazil. So, and obviously China as well. So I think that is the different mechanism that he used. But listen, he tried to use traditional military and traditional State Department diplomacy to stop it, just like Joe Biden did, and it didn't work.
Ashley, appreciate your time. Dan's no good. Just throwing that out there, all right? He'll have us drinking before 8 o'clock. No good. Ashley Davis,
and
appreciate it, of SS Group.
Yeah, and making mistakes all around the corner and definitely saying things we shouldn't say. So
Potentially, yeah, you want nothing to do with that. Anyway, look, this is where we are. We're going into the weekend, and if you want some kind of ceasefire, at some point you've got to talk. And this is the opportunity to have that discussion.
Yeah, the range of interpretations really is remarkable. Some people saying it's unclear where the leverage is. Other people saying, like what we just heard from Ashley, that actually all of this noise that we've seen so far with India and Brazil, that people have been attributing to, with Brazil, the political backdrop, with India, some questions around their relationship with China. All of these things have been geared into pegging Russia into a corner. I mean, it just sort of shows how difficult it is to really pinpoint what's going on, what's being used as what, and who has the leverage here.
Territorial ambition versus the prospect of better economic prosperity. What's going to drive the Russian president this weekend?
Great question at a point when this is something more fundamental to Russian identity than it is necessarily economic growth.
Precisely. Up next on the program, we'll catch up with the Fed chair candidate, the former economic advisor to President George W. Bush, Mark Summerlin, plus Danny with your morning movers following disappointing earnings from a major chip maker.
ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Equities firmer by 0.2% on the S&P 500. 3 days of gains coming into Friday. Looking at the prospect of a second week of gains on the S&P. On the Nasdaq 100, just about unchanged this morning. Down by not even a tenth. We're negative 0.04%. Turn to the bond market. 2-year, 10-year, 30-year. Just freshening things up in yesterday's session. Multi-month lows on 2-year yields at one point. Delayed reaction to PPI. And then yields started to bounce by 5 or 6 basis points. The 2-year settling down to 372.96. But PPI, just to some extent, maybe a small extent, but to some extent, shaking up that rate cut theory into September.
You saw some of the headline numbers coming at the fastest going back to 2022. So really some really shocking numbers. You look under the hood, though, and people say, one-offs, and they don't go into core PCE, ignore. And guess what? Companies are absorbing it. And it's also the fact that asset prices are high. You put all those things together, people shrugged it off. Today is going to be a real test, though, with retail sales.
Retail sales at 8:30 Eastern Time. Then it's on to Jackson Hole next week. And then after that, early September, a payrolls report. The 5th, I believe. Week after that, CPI. Week after that, you've got the Federal Reserve meeting. 2 hours away from the cash open. Let's deal with the here and now. Your morning movers with Danny Berger. Hey, Danny.
Hey, John. Overnight, we got 13F filings, a peek into the second quarter for what various funds did. These are some of Berkshire Hathaway's picks that we learned from the filings. You can see all of them are rallying, being United Health up nearly 11%. Nucor, Leonard, the home builder, those shares are up 4 1/3%. Got to say, a lot of people buying into United Health. Also, Tepper's firm, as well as Scion Asset Management, that's Michael Burry's firm, buying them. Another pick we got from Michael Burry in the 13Fs was Lululemon, a very unloved share year to date, down almost 50%. So the fact that they piled into that, a new ad for Scion Asset Management, means those shares up 1.8%. Finally, after the bell yesterday, we also got earnings from Applied Materials. It was seen as a very tepid forecast. The CEO saying that large buyers are holding off on purchases, just given a lot of the uncertainty, be it trade, be it the economy, but also noted that China was a real weak spot. For one, China's not buying as much, and they're having a difficult time getting at pace export license agreements to sell out to China. So those shares down 13%, John.
Danny, thank you. Big move there. More from Danny in the next hour. On our radar this morning, the president, the Trump administration, in talks with Intel to take the U.S. government's stake in the company. Sources telling us here at Bloomberg that a deal would bolster Intel's U.S. footprint by shoring up plans for a factory hub in Ohio.
And this comes after a pretty tense relationship between President Trump and the new CEO. They had a meeting. This is evidently, reportedly by Bloomberg, what was discussed in that meeting. Regardless of what you think of all the policies, the dramatic shift that we have seen in the United States' approach to key industries cannot be overstated. The fact that we're seeing it on multiple prongs, this is the latest that actually is more traditional in terms of taking a page out of an industrial type of policy where you invest directly in companies akin to what we saw in 2009 to resurrect GM and Ford. What I think is notable this time, it's not coming on the heels of crisis. It's coming on the heels of an anticipation of a structural shift going forward and national security concerns.
National security, precisely. And sometimes the free market won't support your national security ambitions, and you have to step in. This is what ultimately they're trying to do here with Intel. Get them to domestically produce things that other companies maybe won't be willing to, even with massive tariffs.
Right now, the idea of being a foundry, the idea of producing chips is something that doesn't make money, that takes a long time for a long, long, long while. And this is the reason why the government is sort of understanding Intel's point. If the government wants them to be a foundry, a developer, a chip builder, they need to provide some of the resources, and that seems to be what's on the table.
Stock is up again this morning by 1.7% in the pre-market. Here's the latest on India. The Indian Prime Minister, Narendra Modi, denouncing US tariff policy, saying in a speech that global economic selfishness is increasing day by day. Modi urging citizens to strive for self-sufficiency after the US imposed a 50% tariff on the country.
So we haven't seen the retaliatory tariffs that a lot of people had expected, but we do see an increasing shift, at least in rhetoric, around the world to global self-sufficiency. We're just talking about the United States and sort of key sectors to be self-sufficient in. How much has this become an increasing national security call around the world at a time when you can understand the economic warfare that can be waged? I just wonder, longer standing, how much this does shift domestic policies around the world and sort of the fracturing of some of the trade lines. This, to me, is actually really interesting.
I find that phrase interesting, economic selfishness. What about economic hypocrisy? Have you ever seen the tariffs on some of the goods going into India? On phones, on autos. On autos, the last time I looked, I think we're looking like 60, 70% and up for certain autos.
Consistency isn't necessarily what a lot of people are looking for. I agree with you. I think that you could make this argument in a lot of ways, which is the reason why you even heard Europeans come around to say leveling the playing field when it came to negotiating tariffs with the United States. Clearly, Modi is taking a different point. Part of this was a very political speech, though, so he's catering to a population. So there is definitely a very political undertone to everything that he said, even with respect to immigration from Bangladesh, with respect to the relationship with Pakistan. But going forward, I just think it's going to be really interesting to see how some of these countries pivot to more domestic types of industrial policy as well in order to protect themselves against this type of incursion.
Everybody's got their own domestic concerns. That's the latest on India and Narendra Modi. Here's the latest on the Federal Reserve. Presidents Tom Barkin, Alberto Mussolem signaled major policy reductions might not be warranted. Barkin saying underlying consumer dynamics feel healthy. Mussolem saying a 50 basis point rate cut might not be supported by economic conditions.
So St. Louis Fed President Mussolem saying he just isn't necessarily sure which way things are going to break, not necessarily going to the 50 basis points, reiterating what we heard from Mary Daly. Tom Barkin was actually more interesting to me because really it spotlights the retail sales that we're going to get in about 55 minutes time. The idea, if you get robust retail sales, is that a reason for the Fed not to cut rates? Suddenly, are we looking at different data points to try to give those tea leaves ahead of this monumental speech next week, which will be in Jackson Hole, discussing and maybe giving a sense of what's to come in the fall?
I'm not sure if the whole decision on September should hinge on one data point, that data point being retail sales, but we'll find out, I guess, in 54 minutes.
Come on, help me drum it up. I mean,
okay.
It's August. Let's go. Yeah. Thank you.
8:30 Eastern time for US retail sales. It's an important data point. It's one of the few ones we have left going into the September meeting. Let's stick with the Federal Reserve. President Donald Trump narrowing his choices to replace Fed Chair Jay Powell to 3 or 4 names, saying he'll announce his nominee a little earlier than initially expected. Joining us now is the former economic advisor to President George W. Bush, Mark Summerlin. Mark, of course, your name has been in the mix as well over the past week or so. Welcome to the program. Let's just start with the base case, the case for rate reductions, Mark. What do you think the strongest case is right now?
Right. I think the strongest, first of all, thank you very much for having me. I think the strongest case is we just have to mark to market to the new data that we have. The data was revised very strongly to the downside on the jobs, and that's the most important data that we have. And so it's, jobs for May and June only came in at 33,000 combined for those 2 months. And so had we gotten those in real time, it's likely that the Fed would have cut probably in June and July. And we know that the economy barely grew over 1% in the first half of the year. And so a 4.33% Fed funds rate is just too high for the economy that we have right now.
Mark, can we stay on that payrolls data? Because there's been this great debate on Wall Street, and I have to say it's very divided at the moment. Do you think that step down in payrolls growth, and clearly you do, you think it speaks to a cyclical turn and not a structural shift? But can you tell us why you believe that's the case? What the distinction is between one versus the other?
Absolutely. I do think it's cyclical. I mean, I think if you step back, like very big picture macro, we have fiscal tightening this year from the tariffs. Next year, we're going to have some fiscal loosening from the tax bill. And behind all of that, we have the AI productivity gains starting to take hold for the first time. And so it's a pretty mixed, confusing macro picture, but you got to kind of ride it out in real time. And so we just know, like, before the data revision, there was a disconnect between jobs and GDP. And then after the revision, there was no disconnect. Jobs got revised down to reflect what was going on elsewhere in the economy. And it's really important to mark to market to where we are, and not just to say, oh, well, whatever we had before is still fine for the Fed funds rate.
So let's do some scenario analysis. Let's say you become the next Fed chair. Congratulations. And let's say in September you cut by 50 basis points on the heels of some of this jobs data. And then you see 10-year yields shoot higher, akin to what we saw last year when the Fed cut significantly. What do you do?
Yeah, then you stop. And so one of the reasons I support the 50 basis point cut right now is that you have the inversion in the front end of the curve that's something like 60 basis points last time I looked. And so you know that you can cut by that amount without really upsetting things. But the weakest part of the market or the economy right now is housing. And so you can't have the long end go up, and that's your constraint right now. And so if the long end starts to go up on you, you have to stop cutting. It's that simple.
You could make the argument that if the market, if sort of this collective decision-making body truly believed that the economy was significantly weakening, the 10-year would be significantly lower. Doesn't that sort of indicate that there is enough strength to continue at this sort of pace with these rates? I mean, isn't that some sort of signal in and of itself?
I think if we go back to January, a lot of the best bond traders on the planet thought the 10-year was going to be at 5 or over. And so the fact that we're at 4.29 instead of 5 is a reflection of the weaker economy in my mind. So these things are always judgment calls, but I think right now you have the scope to cut by 50 basis points. And then after that, you'd have to look at the data, and you'd have to look at the markets, and you have to look at what's going on in the real economy and put it all together.
Mark, I'd love to know if you can share with us what your approach would be if you had the honor of taking over the top job at the Federal Reserve. We heard from the Treasury Secretary, who was sitting around the table with us just a few days ago on this program, and he talked about the need for foundational change at the institution. Yeah. What do you think needs to change?
Yeah, first of all, I think that the staff is all set up wrong. To do the job correctly, you have to understand three things. There's the data, and there's the economic modeling side, and all of the staff, basically, that's what they do. And then you have financial markets. You need to understand what's going on in high yield spreads, what's going on in oil markets, what's going on in bond markets. And then you have what's happening in companies, and especially right now, at a time of so much change, you really need to understand what's going on with AI and productivity gains in companies. And so I would like to have the staff completely change, where a third of it is doing economic modeling type of stuff, and then a third of it is real sectoral experts. The Fed chairman should have someone who is an expert in autos, an expert in retail sales, an expert in every single thing in-house, so that you really have the pace and the feel of the economy going on, as well as more market people there that understand, okay, high yields spreads are blowing out, and this is why we need to worry, why we don't need to worry. And so for me, it's less of a, I don't have a problem with the size of the staff, because I think, the Fed is so mission critical to the whole world. I just think there's just so much redundancy. And right now it basically functions as like a university research department, and I don't know why that's the case.
Mark, this actually raises a point that John's been talking about significantly, which is how much does that mean a more active Fed when it comes to balance sheet management? And it's not just quantitative easing, but also just the denominations of where you buy. If you treat this more like a markets operation than a university, how much more active does that balance sheet become?
Yeah, that's a good question. And I think that the balance sheet is an important tool when you need it. So definitely in crisis, it's something that's in the toolbox and it works. I don't think it works that well or needs to be continued after the crisis is over. And so, if we were coming out of the pandemic or something, I would have definitely ended the QE sooner rather than later. But they're important questions right now when we have very high mortgage spreads about why are we still selling off MBS when we have 150 basis point spreads that are hitting the housing market right now. So I think you just have to look at it very objectively about what's the impact of the balance sheet in the real time. There's some people who would love to go back to the old days when there was no balance sheet. And I think that's a fine argument if we could rewind time back to 1995. It's just very hard to go from where we are now to that type of operation.
Mark, this was a very thoughtful conversation, and hopefully we can continue it over the next few months. Thank you, sir. Mark Summerlin there, the former economic advisor to President George W. Bush. Some credible ideas in a mix from Mark just then.
Very much so. In particular, his comments on the long end of the yield curve. If you cut by 50 basis points and suddenly you get a spike higher in the 10-year yield, well, then stop cutting rates. It's not necessarily to manipulate the entire world and start buying 10-year treasuries. This is something I think the markets could probably rally behind.
No spike this morning, 429.26 on a 10-year yield. From New York, let's get you an update on stories elsewhere with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. The Trump administration is considering taking a stake in Intel. Sources telling us here at Bloomberg the move could support expansion of the chip maker's domestic manufacturing, especially its planned factory hub in Ohio. The plan comes just days after President Trump met with Intel CEO Lip-Bu Tan at the White House. Meanwhile, Goldman Sachs is offering clients a stake in Millennium Management for a minimum commitment of $1 million and as much as $20 million. Millennium is seeking buyers for a 10 to 15% equity stake at a valuation of about $14 billion, according to documents circulated by the bank. Millennium's hedge fund has made 10% or more in all but 9 years since 1990. And New York City officials announced the death of a fourth person in connection to an outbreak of Legionnaire's disease in Harlem. 99 people have been sickened and 17 have been hospitalized since late last month. Health officials say you can get the disease by breathing in water vapor that has Legionella bacteria, which grows in warm water. That's your Bloomberg Brief. John?
Yahira, thank you. Thanks for the update. Up next, paring back rate cut bets.
I didn't tell the Fed what to do, perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
Is it warranted? We'll catch up with Ed Al-Husseini of Columbia Threadneedle from New York. This is Bloomberg.
With the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number two, because you could be number two in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns go to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Listen carefully.
Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Beautiful pictures incoming from Joint Base Andrews of Air Force One just before it takes off and departs to Anchorage, Alaska. Just getting confirmation that the motorcade has left the White House. The president is on his way, making his way to Joint Base Andrews. One post from the president so far this morning, 2 words, high stakes. Put that out on social media in the last hour or so.
A lot of people would agree, given the fact that ultimately this is the first time, I believe, that Vladimir Putin has been on U.S. soil since 2015. And potentially this could set the groundwork for some sort of further agreement between Ukraine and Russia.
We'll keep tracking that story throughout this morning, tracking the markets as well. Equity futures positive here by 0.2% on the S&P, unchanged on the NASDAQ. In the bond market, yields bouncing yesterday, just unwinding some of that heat in the rate cut bets. Yields back to about 370, 317 at the front end of the curve. Under surveillance this morning, paring back interest rate cut bets.
I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately a 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
Perhaps. Here's the latest. Traders dialing back expectations for a September rate cut after fresh wholesale inflation data signaled tariffs are pushing prices higher. Ed Al-Husseini of Columbia Threadneedle writing, if the Fed determines that it will look through higher inflation in the second half of the year, employment risks dominate, and the case for front-loaded cuts is ready to go. Ed joins us now for more. Ed, good morning. Do you think the case for front-loaded cuts is ready to go right now?
Not quite. Well, as the president said, it's high stakes. There's a lot of pressure, I think, on near-term labor market data to validate the view that unemployment is on a trajectory higher. And I think we don't quite have that data yet.
At this point, do you think that if they were to cut by 25 or 50 basis points next month, you could see an unmooring of inflation expectations around the margins? Or do you agree with some of the recent commentators, including Mark Summerlin, that probably the market would be contained as they're already pricing that in?
It's really tough to say. I mean, I think if you look back over the course of the past 12 months, you know, inflation pricing is a little bit on the high side right now. It's consistent with some of the price pressure we've seen come through in the inflation data over the course of the past quarter. Is it going to run away if the Fed cuts 25 basis points? Absolutely no. I think that is well in the price at this stage. Now, if the Fed signals a much more aggressive easing cycle ahead of us into data that's strengthening, I think that's the risk case. That's an environment in which inflation expectations run away, and investors and tips are going to be quite happy.
That really sets up the data that we're going to be getting in about 38 minutes' time. How much is it important to see a retail sales number that actually is contained or not as strong as people previously thought, to not be a 1-2 punch from yesterday's PPI data, that there isn't this sense that there is enough consumer demand to keep some of those pricing pressures there, and even some of these companies from passing along those price increases to consumers?
Yeah, I mean, it's an incredibly difficult question. It's clear that consumer demand slowed in the first half of the year relative to where we were last year. The next couple of retail sales prints, are they that critical? Probably no. You know, I don't want to take the joy out of, you know, waiting for this print over the next 60 minutes.
Come on, work with us, Ed.
Look, every data point here is important because we're trying to feel out, and your previous guest pointed this out, there's a little bit of a disconnect between what's going on in the demand side of the economy and inflation. And inflation has continued to run a little bit uncomfortably hot. There's some price action in services in particular that is not really consistent with demand slowing significantly. And I think we're going to have to close that disconnect in the second half of the year for the Fed to have the comfort to cut more aggressively.
Ed, let's build on some of this. Equity markets are at all-time highs. Credit spreads are back to about 280 on high yield. That doesn't scream there's a problem in this economy. Now, is that a reflection of what's actually happening in the economy or a reflection of the rate cuts people expect to support the economy? Which one is it?
Well, I think it's less the rate cut story at this stage. You know, the market's not pricing in an aggressive easing cycle. The market's pricing in rates drifting towards normal, about 125 basis points, you know, over the next 18 months or so. That's not very aggressive. That is consistent with the economy normalizing. What does that do for spreads? I think not that much. To me, the underlying story on the credit side is one of balance sheet health. And on the equity side is really extraordinary expectations for returns on some of the technology like AI and you know, margins continuing to come in relatively healthy, you know, despite a lot of noise in the background in the first half of the year. I think those are all forward-looking expectations. You can take a look at where risk is priced right now, and I think reasonably conclude it's a relatively rich. And again, that is a conversation that's slightly separate from the problem the Fed has to deal with on inflation and employment.
Ed, we miss you. Hopefully we'll see you in New York in the studio next time. Ed Al-Husseini there.
Absolutely.
Columbia Threadneedle. Thank you, sir. Appreciate it. You talked about margins at the end there with regards to the equity market. I actually think one of the standout lines that came from the Treasury Secretary, Scott Bessent, in our conversation with him earlier this week was actually on margins. I've got it in front of me. I'll read some of the language to you. There were some margins that got very fat during COVID, and now we're seeing a return to pre-COVID margins. It's quite a statement about what's happening with tariffs, what isn't happening with consumer prices, but what is happening with margins.
And it follows what we're hearing from the companies themselves, how much of a tariff-related cost they're going to bear on their bottom line that they're not passing along in price increases. We've heard that from the auto manufacturers. We've heard that from some consumer brands. I'm thinking of Elf Beauty, for example. This works with their messaging. I just wonder how realistic it is going forward if there is ongoing consumer demand, whether companies will keep eating it because they kind of like those margins that they got during the pandemic. So there's that push to actually increase prices, and we're seeing that in some of the commentary.
We're also seeing this right now, the motorcade arriving at Joint Base Andrews as the president heads towards Air Force One to depart to Anchorage, Alaska. 2 words from the president about his meeting, a face-to-face conversation with the Russian President Vladimir Putin and the President of the United States. The president calling it high stakes. More on that conversation next hour.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think, could be time because you have a strong hardware power and you have a strong software power, as we see, and it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The steady grind, this buy the dip, there's no questioning the price action.
It's certainly a time when you want to really think about your sector exposure.
There's a bit more weakness and rotation and churn happening under the surface.
It feels like a melt-up already. What we're looking at here is a really, really solid earnings backdrop for the S&P 500 that we think persists in the back half of the year and has legs to run into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now. The opening bell about 90 minutes away, 30 minutes away from some economic data. This weekend dominated by this story, a face-to-face conversation between the President of the United States and the Russian President Vladimir Putin. Moments ago, the President of the United States boarding Air Force One, making his way to Anchorage, Alaska.
Yeah, Anne-Marie reporting that he waved and gets on the plane on Air Force One without commenting to media. Media very much anticipating where the stakes really are right now. Who has the leverage heading into a meeting where the parameters are fairly wide? The president seems to want to get a meeting where Volodymyr Zelensky joins them, maybe even in Alaska. That's a best-case scenario. Vladimir Putin has very different goals with maybe a more wide-ranging economic agreement between Russia and the United States.
Look at who's on board this plane with the President of the United States. You expect Senator Rubio to be there. He's there. Secretary Bessent, Secretary Lutnick. Look, this is going to be a conversation that's more than just about foreign policy. It's going to be about economics.
There's a lot of potential ways to interpret this, and we've heard people on this show interpret it in different ways. One of them could be discussing sanctions on places like Brazil, on places like India, some of the clientele of Russia. How much is that going to be part of the conversation? There's another way of interpreting this, too, which is the carrot that President Trump could be offering also as a part of this could include some sort of new economic arrangement between U.S. and Russia.
We'll keep tracking that story for you throughout the weekend. Anne-Marie's on the ground. We'll catch up with her in about 50 minutes' time, so look out for that. I mentioned retail sales a few times, 8:30 Eastern time for that next data point. Just a week away from Chairman Powell delivering his speech at Jackson Hole.
Yeah, and you keep raising this point, and it's a really important point. How much information do they really have to be able to make any conclusive shifts in economic policy, monetary policy, given some of the different interpretations, I should just say, of the data. Yesterday, we got PPI data, producer prices that came in significantly hotter than expected. People shrugged it off and said, oh, it's market prices that have been inflated. Oh, it's just a couple of other inputs that aren't necessarily put into core PCE. Nonetheless, do you see a hot retail sales print as potentially giving a sense of just how much momentum there is in the underlying economy? Tom Barkin actually came out and indicated that was something he'd be watching. So I think it actually does have importance, regardless of what Ed Al-Husseini had to say.
Yes, you tell him. Yeah, the data's 27 minutes away.
It's important.
It's important. Equity futures right now in the S&P positive by 0.1%. Coming up this hour, we'll catch up with Emily Bowersock-Hill of Bowersock Capital Partners as stocks look for a fourth day of gains. Luke Tilley of Wilmington Trust reacting to the latest US retail sales data, and Binky Chadha at Deutsche Bank on whether market moves are justified or quite simply overly optimistic. We begin this out with Stock Steady ahead of the latest read on the US consumer. Emily Bowersock-Hill of Bowersock Capital writing, until the tariff impacts begin to show more in the inflation data or in consumer demand, the market's upward trend is likely to continue. Emily joins us now for more. Emily, good morning.
Good morning.
It's great to see you in person. Let's talk about the data so far. What's it telling you about where we are, and what's your judgment about where we'll be in the months to come?
I think the PPI data that came out this week was concerning. And I think what that shows us is that inflation is coursing through the economy now, even if consumers have not felt it yet. So this has put the Fed into a tough spot, obviously, and we've seen the chances of a 50 basis point rate cut drop pretty substantially. I am seeing more and more parallels to the 1970s, and people have been talking about that quite a bit, but the parallels are growing. And at that time, we had an external supply shock, which previously differentiated this period from the 70s. But now we also have an external supply shock. A trade war is a supply shock. And so, this is not the trade embargo of 73 or the Iranian Revolution, but that's the backdrop. Then we have a president who's placing enormous pressure on the Fed chair. Same thing happened with Arthur Burns, and Arthur Burns, as we all know, finally caved, and it did not end well. And the third thing is that Nixon took the U.S. off the gold standard in 1972, and that forced the dollar down. And we're seeing a similar decline in the dollar, which, as we all know, is inflationary to U.S. consumers. So I'm becoming increasingly concerned, and I think probably the Fed board members and the chair are as well. They don't want to make that mistake, that same mistake.
I'm not sure how you said all that without saying stagflation.
Oh, well,
but
yes.
you did, so let's talk about it.
They don't want to make the same mistake and end up with stagflation.
Is stagflation good for stocks?
The smell of stagflation is increasing. Let's just put it that way.
Is that good for markets at all-time highs right now?
Stagflation is a very bad scenario for markets generally, and so it's not something that anyone wants. And quite frankly, the market at this point, while it has very substantial upward momentum, I would argue that a substantial part of that upward momentum is coming from retail traders. Retail trading volume now often reaches about 25% of volume. 5 to 10 years ago, that was 12%, right? And so on the 3rd of April, for example, that first week, we saw $4.7 billion of purchases by retail traders in the market. And what ended up happening was that professional traders and money managers really had no choice but to jump on board, given all of that forward momentum. And many of these retail traders, feel free to push back because there is some evidence for this, but I would argue that a substantial percentage of those retail traders skew male and younger. And I think people are allowing their political and cultural beliefs to drive their investment decisions far more than they were 5 to 10 years ago.
I'll leave that there. I'm not going to push back or go further with it, but it does raise a question that if you believe that the economic circumstances are vastly different to some of the price action, why are you still constructive?
I'm constructive because I think this momentum is real. And I think that, frankly, again, there's a substantial contingent in the market that wasn't there 5 years ago that's putting a floor. It's the buy the dip mentality that is, I think, quite embedded. Now, it will take some significantly bad news to derail the kind of momentum that we're seeing. And we could get that in the retail numbers. I think it will disappoint the market if we don't see a rate cut in September. But I think the market is certainly overvalued, but there still are pockets of value there.
So you said it would be disappointing to the market if we don't get a rate cut, meaning that a bad retail sales number would be a good retail sales number that would indicate some sort of momentum or purchasing, right? I mean, that's sort of the indication there. I am just curious to dig into this whole idea of sustained inflation and PPI being really negative. Some people have said, well, companies are absorbing it. This is something even Scott Besson told John and Anne-Marie, that this is actually a normalization of margins for a lot of corporations, and we have seen them eat it without passing it along to consumers. How does it change? How does it pivot to going into consumer prices in a more sustained way if these companies seem to be indicating that they're more concerned about maintaining market share than they are about maintaining their profit margins?
Well, we always thought that the tariff impact on inflation was going to be a 3Q and a 4Q story. But either the tariffs are going to shrink margins, which is not good for the markets, or it's going to end up in consumer prices. And quite frankly, it's probably going to be a little bit of both. So, and when I say that there's strong momentum behind the market, I'm not saying we're not going to have a typical seasonal correction of 5 to 10%. I just mean that there's in my opinion, a floor under the market. One of the things that I keep saying to clients, because clients ask me, how is it possible that the market is still going up when we just passed this tax legislation, which is going to add trillions of dollars to the national debt? We have a tax on the rule of law. We've got the firing of the commissioner for the Bureau of Labor Statistics, and they'll list these negatives. The market doesn't care about what's going to happen over 3 to 5 years. The market is a powerful discounting mechanism that goes out, that's looking out 6 to 9 months. And on the 6 to 9 months basis, the news is generally good. Earnings were positive. There was a very low bar, but this legislation is probably going to add about 0.5% per growth. AI, the boost to productivity, is real, and it's masking a lot of these underlying issues. That doesn't mean that there aren't some fundamental problems being created that we're going to see beyond the time frame that the market is discounting.
There are economic risks and there are market risks, and if you look at the biggest weights on the S&P 500 and track their earnings have been tremendous for the likes of Microsoft and others.
Yeah, you're talking about the AI story, the overlay that makes it very difficult to make some sort of macro call on a U.S. market that is much more secularly driven at this point.
Record highs again this morning, up 0.1%. Emily, good to see you.
Good to see you too.
Thank you for dropping by the studio. Thank you. Emily Bowersock-Hill there of Bowersock Capital Partners with an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump is en route to Anchorage, Alaska for a meeting with Russian President Vladimir Putin. Among those accompanying Trump are Secretary of State Marco Rubio, as well as Commerce Secretary Howard Lutnick and Treasury Secretary Scott Besson. Trump and Putin are set to meet at 3:30 p.m. Eastern, and the two may hold a press conference after the meeting. Meanwhile, shares of United Health are surging 10% in the pre-market following news that Warren Buffett's Berkshire Hathaway, among others, took a $1.6 billion stake in the company. According to a regulatory filing, Berkshire bought 5 million shares of the health insurer in the last quarter. And Tropical Storm Erin could soon become the first hurricane of the Atlantic season. Erin strengthened into a tropical storm overnight and is expected to continue gaining strength over the next few days. The storm could become a Category 4 hurricane by Sunday, and thankfully it is forecast to stay away from the U.S. We shall see. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. Up next, the morning calls, plus Lorraine Hutchinson of Bank of America with retail sales just around the corner. That data drops in about 20 minutes' time. From New York City this morning, good morning.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I think the economy is slower than people think. We're seeing pockets of inflation. So I feel there's pressure on the consumer. I think the global economy is slowing, right? Everyone's trying to figure out what to do with tariffs. And, we're all trying to look for these signs of tariffs. I think we're still in the early first inning on tariffs, right? We've only just seen them come in place. It's going to take months, if not quarters, maybe a full year before the impacts are fully felt. But I think you're starting to see those signs.
Peter Schiff of Academy Securities looking for more signs of some kind of economic impact from policy over the last few months. Retail sales 15 minutes away. Here's the stage. This is how it's set. Your scores look like this. Equity futures at the moment, positive by 0.1% on the S&P, down 0.1 on the Nasdaq. Muted price action there. In the bond market, 2-year, 10-year, 30-year, shaping up as follows. At the front end of the curve, bouncing off multi-month lows at the front end yesterday following PPI. Yields this morning just about unchanged. The 2-year, 372.75. That's the price action. Here are your morning calls. First up, HSBC downgrading Cisco to hold, seeing strength in AI, offsetting weakness elsewhere. Your second call from Stifel, cutting its price target on Applied Materials to 180, citing the company's weaker than expected Q4 outlook. And finally, Bank of America downgrading target to underperform, pointing to margin risk due to slowing digital sales growth. Sticking with the consumer, U.S. retail sales just around the corner with the potential impact of tariffs very much in focus. Bloomberg's Mike McKee has more. Good morning, Mike.
Good morning, John. Well, Lisa asked the key question a little bit ago when she said, where's the bad news? The markets are waiting for bad news because it would be good news for them if the Fed cuts interest rates. Today, we don't know. Retail sales are the headline number this morning, and they're not expected to be changed on a headline level. 0.6% gain, same as last month. Retail sales control maybe tick down a little bit. That's where you take out gasoline, home building supplies, and automobiles, and that's supposed to go down just a little bit, but it would still imply a decent month in the month of July. The biggest wild card in July is that it was Prime Days month for Amazon and Walmart and Target and a lot of big retailers who cut prices, and retail sales are measured in dollar sales. So we're going to have to take a look at that. The other big number this morning to look at is import prices, not so much the headline, which is also expected to be unchanged, but ex-petroleum, take out oil prices. And did we see prices go down? If prices went down, it's a suggestion that maybe some of the exporters are taking some of the hit to their products from the tariffs in the United States. If export prices stay the same or go up, it would be the other case. So there's a lot to look at here. And one thing I might mention is that you also asked the question of whether we are seeing any kind of impacts yet or whether they're still to come. Barclays out with a note that says one of the reasons prices have not risen because of tariffs is because so many tariffs, products are exempt from tariffs, especially stuff coming in from Canada and Mexico, and because companies are shifting supply chains and getting things from lower tariff countries. We'll see if that plays out.
Mike McKee, looking forward to your breakdown at about 13 minutes' time. Not sure where Mike is now. Is he making his way to Jackson
I think he's probably already wearing his hat and riding on horses.
Like on his way a week early.
I think he's riding on a horse there to really understand the Western way.
Okay. He was talking about tariff inventory and pre-tariff inventory. Gene Soroka, we talked about this yesterday together. It's been a roller coaster ride all year long. Ride's not over yet. The data coming out of the port of Los Angeles, seeing the highest container volume in its 117-year history just last month. Just how much pre-tariff inventory are we working through here?
Yeah, just adding to the complications, you have pre-tariff inventory, the fact that people hoarded goods ahead of expected tariffs, which led to pretty big pops in terms of some of the import numbers that we've seen over the past few months. But then there also are all of these agreements that are still in place with some of the contractors that have kept prices from rising as much as they otherwise would. You add all this soup together, it's very hard to come up with any kind of conclusion.
Super complex stuff. Let's stick on the story. Lorraine Hutchinson of Bank of America looking ahead to retail earnings kicking off next week, writing this: after a volatile quarter, we expect off prices to post sales growth at or above guidance. Lorraine joins us now for more. Lorraine, welcome to the program. I'm sure you were following that quick conversation there. We'd love to get your thoughts on how some of these companies have been managing their inventory over the past few months.
Sure. Good morning. Many of them have really started to take a real stake in inventory ahead of the tariffs to try to de-risk themselves as the tariffs hit and changed. And we think that that has really helped the margin picture, certainly for the back-to-school selling season. I would say one of the most interesting data points I've seen for back-to-school was our proprietary BAC credit and debit card data showed that sales in the last couple of weeks of July really started to surge. And that's interesting because that's given on a dollar basis, so that would include any price increases that came in July, and it implies that the back-to-school selling season is actually off to a pretty strong start. So if you're looking at my retailers in particular, when do they want to really perform well? It's those last couple of weeks of July when people are first going out and trying to buy their back-to-school items. Where they don't want to outperform is later in the season when everything goes on clearance. So I think we're seeing some initial signs of strength after a pretty rough May and June.
What can we interpret from that, Lorraine? Is this that a lot of companies are offering really good discounts, like Mike was just talking about with Amazon Prime and Walmart Prime and all these special days? Or is this really just a robust demand backdrop that's going to sustain some of this momentum heading into the fall?
Yeah, I mean, I would say it's two things. First is when the consumer is feeling a little bit stretched, they tend to event shop. So they really need back-to-school products, they'll go buy those. They may not buy things that are discretionary or sort of off the cuff, but they will buy during events. Second thing is we're seeing particular strength from the off-price retailers. So that tells us that consumers are really looking for value. So maybe other areas of their budget are rising in price. Where they need to save money is on the more discretionary pieces like apparel and accessories, and they're using retailers like TJ Maxx, Ross Stores, Burlington as a way to get better value for their dollar.
One thing that Scott Besson told John and Anne-Marie this week was that a lot of profit margins are just normalizing at companies and that there was this sort of pop in the post-pandemic period that now is coming in. Do you expect this to be the new normal, that companies, to the extent that there are any tariff ramifications, will just eat them on their bottom line and not pass them along to consumers?
I think it's a difficult game to play if you're a retailer because the consumer has a lot of choices. So historically, apparel prices have been deflationary as consumers trade down and find better value. I think for some brands with high heat, with higher price points, dealing with wealthier customers, we do think that they will be able to raise prices on a modest basis to offset tariffs. I'm a little more worried about the lower end retailers where the consumer's already stretched. It's going to be hard for them to pass that through, and in some cases, they may need to take some of the margin.
Lorraine Hutchinson there of Bank of America. I think we might have lost the connection with her just then. So we can build on some of this. I'm unsure if this falls under her coverage, but ultimately McDonald's, Sweetgreen, Chipotle have cautioned on some weakness with the consumer over the past few weeks. Don't know if we'll see that retail sales at 8:30 Eastern time, but ultimately we might see it with the retailers next week.
Yeah, and how smart have the retailers gotten in terms of catering to some of the lower income consumers by offering discounts, et cetera? And then to Mike's point, how does that show up? Let's say the number of sales has increased, but the total volume, the total dollar price hasn't necessarily as much. A lot of factors to look in, but if you take a step back, and we've heard this from Bank of America, and we heard this from Aditya Bahave earlier this week, it has been resilient. You see credit card operators continue to to say spending is there and it is across the income spectrum. So at what point do you see the weakness that would really justify some of the rate cuts that people are looking for?
Not seeing too many signs of that just yet. Mike McKee's still with us. Mike, we just wanted confirmation. Where in the world are you? And have you already made your way to Jackson Hole?
I am in Jackson, Wyoming ahead of time. There is another conference ahead of the Fed conference that we'll be covering for you on Monday. And we're looking forward to that, and also doing a story for Wall Street Week you'll watch next Friday on Jackson, the town and its economy.
Looking forward to that, Mike. Before you go, Lisa's been talking about retail sales all morning.
Oh, yeah.
Typically, we talk about CPI and then payrolls being a big factor in the decision this Federal Reserve's got to make. Is this a missing piece of the puzzle for this Federal Reserve? Just how important is it?
It's a small missing piece for the Fed. It's probably a little bit more so for the markets because they need to react to something. But the Fed knows that these numbers are heavily revised. We'll take a look at what we got in June after today's revision as well. So it may not be as decisive as some of the others, especially the CPI and the jobs report.
Mike McKee, looking forward to your breakdown. Mike McKee is going to be with us in about 7 minutes' time. Already made his way to Jackson Hole, Wyoming, as we break down the retail sales data for you and look ahead to that speech from the chairman of the Federal Reserve, which most people always anticipate to be the sort of preamble to what we might see from the Federal Reserve itself more broadly in the following month.
The shorter it is, this is just sort of the cheat sheet, the shorter that it is, the more shocking it'll be. That's been our experience. Remember the Payne speech? We were expecting him to go on for 45 minutes, 8 minutes, that's it, there will be Payne, and then he exited the stage, and that really created a big market reaction. Does he have the same sort of conviction this time around, given that I'm trying to make retail sales great again, and that we really don't have the data to really support any kind of conviction whatsoever?
We all remember the Payne speech well. We were both there.
Yes.
And then there wasn't any.
Correct.
Do you remember that?
Yes, I
And
do.
then last year they were worried about the labour market. Turned out to be a head fake. This is the debate for me right now. It's actually not so much on inflation and this tariff pass-through. It's about what's happening with this labour market. We've clearly had a step down in payrolls. We can all see it in the data. We've seen the revisions. Then we're all agreeing on what we can see the numbers ourselves. What does it mean? That's where there's real debate, real divided debate on Wall Street.
And there's an additional debate that the Fed has to have, which is what is their approach at a time where there's so many different ways to take the economic story? I'm still thinking about what Mark Summerlin said, to basically treat the Fed policy as something more of market timing or a hedge fund or something like that, where you're gauging all the different instruments and getting a sense of what the market is telling you. The bond market speaks. Listen to it. I mean, at a certain point, how much is that the road forward if there is a lack of clarity on the economic side?
The data speaks. In about 5 minutes' time, U.S. retail sales, the latest read on the U.S. consumer coming up. Mike McKee will break down the data. We'll catch up with Luke Tilley of Wilmington Trust from New York City. Retail sales, 5 minutes away.
ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Economic data moments away, about 20 seconds away. Retail sales just around the corner. Mike McKee's going to break that down for you. Your scores an hour away from the opening bell are shaping up as follows. Positive 0.1% on the S&P, down about 0.1 on the Nasdaq. Basically where we've been all morning. Bit snoozy this Friday morning. That could change in a few seconds' time. In the bond market, just look at the front end of the curve. Yields bouncing yesterday, coming back down by a single basis point this morning. 3.72. With that economic data, let's cross over to Mike McKee. Good morning, Mike.
0% MM.
Well, it looks like we've got a reasonably good but slightly disappointing retail sales number. Headline number comes in at 0.5%. Last month was 0.6 unrevised, and the forecast was for 0.6. For autos, ex-autos, we're at 0.3, which is what was forecast. That's down from an unrevised 0.5 last month. The control group that everybody cares about, of course, is up 0.5, same as last month. That would be good news. It shows Americans are still out there spending. Of course, I'm saying good news, and the markets probably aren't liking it. Import prices up 0.4%, and ex-petroleum up 0.3. That would suggest one thing: importers are not bearing the brunt of Trump's tariffs, Trump's import taxes. They are actually keeping prices steady and not cutting them. One other number out, the Empire manufacturing number increases to 11.9 from 5.5. And I'm sorry to take up too much time, but I got to give you the revisions here on retail sales just out. In June, 0.9, up from 0.6. So you add that to the 0.5, and we have had a pretty strong summer for consumers. For the control group, 0.8 instead of the initially reported 0.5 in June. So another 0.5 there. And Americans are still spending money. The tariffs have not stopped them, and this is not going to be a sign that the Fed is anxious to cut interest rates.
Mike McKee, thank you, sir. It certainly won't change the debate too much, but we're seeing some muted price action off the back of it. Yields back up to about 4.30 on 10s now, up a single basis point, almost 2 basis points higher on the session. At the front end of the curve, down about a basis point, now up about a basis point. So let's call it 3.74 on 2s. In equities, not much movement off the back of this. Still positive on the day by 0.1%. But again, it's a little bit more information. Just another data point that suggests there shouldn't be a rush to reduce interest rates by 50 basis points.
Yeah, just removing the possibility of a 50 basis point rate cut, a little bit more in market expectations. And I emphasize a little bit more when you look at Fed funds futures right now, almost fully pricing for a 25 basis point cut next month. It seems like there is a coalescing around the idea that the economy is robust, but there is concern around the labor market. The Fed could probably afford to shift down. This definitely speaks to the robust side of the picture.
Tracking two stories simultaneously at the moment. One is the economic data. At the same time, the president is on Air Force One talking to reporters, and our team's breaking the headlines for us as he speaks. This stood out for me on the talks set to take place between him and the Russian leader in Anchorage, Alaska, that Ukraine wants to negotiate. And the following headline: the territorial swaps will be discussed.
This was something that originally we had heard wouldn't be discussed, that they wouldn't really discuss which land would go where, because ultimately that had to be something that Ukraine discussed. But this coming from President Trump that he may provide security guarantees to Ukraine with the European Union, not NATO. So maybe a way to get around the red line that Vladimir Putin has put out there about NATO membership for Ukraine. Either way, it seems like there are things being discussed that maybe people weren't expecting to be discussed in this particular meeting.
So this is the setup then for the next 30 minutes or so. We'll come back to that story in just a moment. Anne-Marie's in Anchorage, Alaska already. We'll get her thoughts on this story in about 15 minutes from now. I want to turn back to the data. Mike McKee just broke it down. Mike, I know you've just had a second read of things. What jumps out for you now?
Well, we've had a sort of bounce back in some categories. Motor vehicles and parts dropped down a little bit to 1.6%, but that was better than anticipated. Furniture and home stores, 1.4%. That's down from 5.1%. But then we have had a better month for clothing and clothing accessories. It looks like back to school got started early, up 0.7%. Sporting goods up 0.8. General merchandise stores up 0.4. The only thing that really drops is miscellaneous retailers are down 1.7%, and food services and drinking places down 0.4. Now that's a kind of a contingent category of retail sales that shows whether or not people have some disposable income, but they were spending in other places. Gasoline prices were up only 0.7. They were down 2.9%. So that's one reason that we see a rebound in overall sales.
Mike McKee, thank you, sir. Michael McKee breaking that data down for you. Luke Tilley joins us now of Wilmington Trust. Luke, welcome back to the program, sir. I understand you're looking for rates in September, October, December. What supports that view at the moment?
Yeah, I think that what we've seen is essentially a weakening of the consumer and also a slowdown in CapEx. Probably more important than that is that inflation is incredibly tame over the past 6 months. Core CPI has basically been at the Fed's target. And I really think it comes down to the fact that the tariffs are driving up the prices of goods. But you're getting a lot weaker spending. So as we look through this morning's numbers on retail sales, which I agree are quite positive, the most important thing here is that they are nominal and they also are just spending on goods. So to the extent that tariffs are driving up the prices of these goods, the more important numbers that we're going to get in a couple of weeks is when we see these deflated in the PCE numbers, but also see how spending on services is going. Because our position all year has been, as you get these price increases on tariffs and it's going to drive up the nominal value of retail sales to some degree, you're going to see weaker spending on services. That's what we've seen all year, and I think that's what we'll continue to see, and that leads to those Fed decisions in part.
Luke, you put the same data in front of 5 different people and you get 5 different opinions. We've heard that all morning. Some people saying that what we just saw actually suggests a really robust backdrop. Other people like yourself saying this is just reflecting the inflation that you're seeing out there. What data could you see before the next Fed meeting that would make you change your mind, that would focus you more on the strength side than the weakness?
Yeah, well, I'm an economist, so if you get 5 of us in a room, you're going to get at least 8 different opinions. But I'm going to stick with mine on this, which is that we need to see what I was talking about, that PCE spending report at the end of the month, because that will have this same spending on goods data, but it's going to be deflated for all of the inflation effects. And then also the spending on services and in real terms. So on a month-to-month basis, these things can be very volatile, and obviously the markets are going to move with that. But let's take a step back and let's take a look at the broader economy over a longer time period and also what the Fed is looking at. For this year, consumer spending slowed in real terms from 3% at the end of last year. It's been cut in half to about 1.5% annualized for the first 6 months. And I think we're going to continue to see that slowdown. Consumers are facing those higher tariffs on goods, so they've been cutting back on services spending. And we're also going to continue to see, I think, slower jobs data, and that is also going to lead to slower spending. And that is the broader picture that we need to look at. So, I agree that this morning's retail sales numbers are positive, but they don't paint the entire picture. When we look at the entire picture, we see a slowing economy with very little inflation pressure. And that brings us to the conclusion that the Fed is likely to be cutting rates.
We've been asking this question, and John was asking it yesterday. Can you have your cake and eat it too? Is this something that the Fed can offset with rate cuts and allow the economy to keep chugging along, which seems to be what people are pricing in across all instruments?
Yeah, I think so, because we don't really have a fundamental problem with the economy right now. It's not like you've got massively overvalued housing or a tech bubble or something like that. You had an economy that was clicking along last year. It's been hit with a fairly substantial tax hike in the form of tariffs. And more importantly, that changes the cost structure for companies. So that comes at a time where you're just going to get basically a little bit of a slowdown and a stumble for the economy as firms adjust both to the higher tariffs and then also to some of that uncertainty. So we see the economy flattening out here in the second half of the year, but there's nothing really fundamentally wrong that's going to drive it into a deep downturn. But it's enough that it should have the Federal Reserve cutting rates. You don't need restrictive rates when the economy is so slow. And then, as I said before, you don't have inflation pressure. When we look at inflation, especially if you look at the CPI and just exclude that pesky shelter component that's drifting down, the CPI ex shelter has been below the Fed's target for almost 2 years now. Consumers are not out there spending in a way that's going to drive up prices. And to the extent they've been hit by tariffs, they're just going to take away on the services side. So we don't have an inflation problem. And if you've got unemployment rate near neutral, if you've got inflation near neutral, well, then rates should be right around neutral.
Luke, I want to pick up on the language you're using because you're a very deliberate, purposeful guy. You keep talking about neutral and restrictive, and I think this is important. Getting down to 3, if you believe 3 is neutral, means that you can cut 150 without really talking about getting accommodative. Now, Luke, I don't think that's too controversial, but what do you think the range of neutral is on the committee at the moment? And how close will we be to a much bigger debate further down the road?
I think the neutral is pretty close to what we think it is. We think 275 to 3%. The committee is right around there, but it's obviously up for debate and it could be changing. I think the more important question is how quickly do you get there? The Fed and everybody on that committee knows that their movements have a lot of power and their words have a lot of power. So they would want to be communicating, getting to that point on a slower basis. And we know that their communications can have just as big of an impact on rates and financial conditions. When they started to hike in the beginning of, I guess, 2023, they had already been talking up rates for 3 or 4 months ahead of that. They had already doubled the 2-year yield well ahead of that first hike. And they can do that on the downside, too, without actually dropping rates by 100, 150 basis points. They can just start pointing towards it, and it would ease financial conditions in the same way without being a real shock to markets.
Luke, appreciate your time. Luke Tilley there of Wilmington Trust, looking for rate cuts in September, October, December, then again at the first 3 meetings in 26.
You know, I wonder, as I was listening to him talk, I'm like, well, he could be a Fed candidate too, because I'm sure that a lot of what he just said would appeal to the administration. Right now, it seems like people are seeing the inflation prints as disinflationary or not necessarily indicating some sort of longer-term shift. I keep going back to what Steve Rasciuto said. Excluding certain items, how long can we do that before we're sort of ignoring some of the inflationary pressures that at least the headline numbers seem to be suggesting?
Steve is living in your head rent-free, isn't he, at the moment?
Well, I just think that it's so different from what everybody else is saying.
I agree with you.
And I actually value a sort of contrarian take, and I think it's worth thinking about.
I'm enjoying the debate at the moment, how divided things actually are.
Well, it's a reason why I wonder if economics is so divided, is taking a market-based approach the more effective way of going about it? I mean, honestly, this is sort of the level of rethink that is going on right now.
I just don't think it's that controversial, this call for 150 basis points from the administration. Now, maybe you think it's controversial that it's coming from the Treasury Secretary, but you've just heard it there. Most people's opinion of neutral at the moment is 3. Maybe you think it's climbing, I don't know, but most people believe it's 3. And if you believe we're not in a position where we need to be restrictive anymore, then starting that journey back towards 3 might make sense. Now, I say that as I sit here and say I still think the jury's out on the data, and you've got to wait a number of months to see which way this breaks. But I don't think there's too much daylight between some of the things I'm hearing at the moment when people say 150 and then they sort of throw their hands up and they're running to be the Fed chair. I don't think they are. The Fed in their forecast has got 3 as the long-term neutral dot, right?
The political pressure has muddied the very real economic debate that is happening, and that is happening with a lot of intellectual rigor in a lot of places. And I think that that is really the core of what you're getting at, which is this is a real debate. And I think that the politics of it has sort of shaded it in another tone.
I agree. The market open just around the corner. We are positive by 0.1% on the S&P. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Here's a recap of the latest economic data. Retail sales came in slightly below estimates, rising 0.5% versus expectations of 0.6%. Still, it's a sign consumers keep spending despite price increases. They stepped up their spending on cars and took advantage of online promotions, with the likes of Amazon and Walmart having major sales. Meanwhile, we've been talking about this story all morning. The Trump administration is considering taking a stake in Intel. Sources telling us here at Bloomberg, a deal would help shore up Intel's planned factory hub in Ohio, which has been repeatedly delayed. It comes a week after President Trump had called for the ouster of the chipmaker's CEO, Lip-Bu Tan, and then they had a meeting at the White House. And we end on some good news. Mortgage rates are ticking lower for a fourth straight week and are at their lowest level since October. According to data from Freddie Mac, the average rate for a 30-year fixed loan was 6.58% last week. Long-term rates haven't been below 6% since September 2022, and it looks like we have a ways to go. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Have a good weekend. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Binky Chadha at Deutsche Bank on the pass-through for tariffs and the equity market. And we'll catch up with Anne-Marie in Anchorage, Alaska on a face-to-face meeting over the weekend between Putin and Trump.
Said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
One of the reasons I support the 50 basis point cut right now
is that you have the inversion in the front end of the curve that's something like 60 basis points last time I looked. And so you know that you can cut by that amount without really upsetting things. Right now you have the scope to cut by 50 basis points. And then after that, you'd have to look at the data and you'd have to look at the markets and you have to look at what's going on in the real economy and put it all together.
That was the former economic advisor to President Bush. That was Mark Summerlin. He's also in the running to become the next Fed chair, looking for a 50 basis point reduction at the next Fed meeting. The data so far, okay. Retail sales about 20 minutes ago, no drama there. Equity futures just about positive on the S&P 500, still just about negative on the NASDAQ. No drama at the index level with some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. The biggest loser in the S&P 500 pre-market, Applied Materials down 13%. Earnings yesterday, a tepid forecast, all about weaker sales to China, slower getting licenses to export to China, and large customers pulling back given the uncertainty. All those comments from the CEO. Elsewhere, Roblox, the video game maker, also falling quite heavily in the pre-market trade, down 7% late yesterday. The Louisiana state attorney opening up a lawsuit against them, saying that they've created an environment for exploiting children. TD Cowen writing a note reaffirming their sell rating, showing it just highlights the regulatory risk around this company that has mostly young users and user-driven content on it. Finally, rounding things out with Intel, the rally from yesterday, more than 7%, continues at pace this morning, up about 3% after that excellent Bloomberg scoop that the government is in talks to potentially take a stake in Intel. All of that would help build out an Ohio hub. John.
Danny, thank you. Thanks for this morning. Danny Berger there with your movers going into the opening bell. Let's stay on the market. Binky Chana of Deutsche Bank writing the following. It is clear from company comments that tariffs were a sizable headwind, only for some. And the hit was modest and significantly lower than previously feared, although it is likely to grow. Binky joins us now for more. Binky, good morning.
Good morning.
It's good to see you. How are things going to rebalance in the months to come?
I think, you know, where we are, I think a very simple way of thinking about where the S&P 500 is that we, of course, had basically the very, very robust 2023 and 2024 returns. And if you look at it, and if you will pardon me for using slightly technical expression, S&P 500, you know, was for those 2 years and really starting a little earlier in a very, very steep trend channel. We were, in round numbers, 24% years. That's, you know, 24% a year. That's 2% a month. It's a very, very robust channel. Of course, Liberation Day threw us way, way out of that channel. And we have now recovered basically to the bottom of that channel by the first week of July. And really for the last 6 or 7 weeks, we are crawling along the bottom. So, you know, bigger picture, if you think about it, we fell because of the tariffs. We had this big sell-off, and we've now recovered. So the question is, you know, is it justified or is it just optimism? But that long drawn-out chart that I just drew for you is just to sort of focus the mind that actually what the market's saying is that, you know, we had the tariffs. We all expected them to have, you know, pretty big negative impacts. It's not evident in the growth data. It's not evident in the inflation data. Aggregate earnings for the S&P 500 in the second quarter, growth actually accelerated, so it's got the wrong sign in terms of the negative impact.
So is there a less technical way of saying this, which is that in some ways profit margins are normalizing? What Scott Bessent was saying to John and Anne-Marie this week, that in a sense, this is more normal. You might not get the 24% returns every year, but you'll be able to adjust and adapt, move forward with something that's a solid gain, but not necessarily out of the water.
Yeah, so again, I would say, you know, in terms of the margin issue, I mean, the cost accounting way of thinking about margins is, you know, is fine, but does it really actually hold up? I mean, for the S&P 500 as a whole, margins actually went up, and margins are at new high. So, I mean, I understand the nice intuitive narrative. It's just, it's not in the facts.
Is it difficult to gel what the economists are saying at the moment to sort of put that together with what you see in earnings?
I think, you know, the economist's position is pretty reasonable. If you think about basically, you know, their calls for inflation, take our house view. I mean, we see basically, you know, the direct impact of the tariffs as about 2 percentage points on core goods prices. And then there's the indirect impact, as everything feeds on each other, and that's, I would argue, the larger standard error to try to estimate as and when and how much. But if we focus for a second on the direct impacts, I would argue if you look at core goods prices, we already had half the pass-through that we were looking for. So, if you're negative and bearish, you can wait for the second half is going to pricing is basically the last resort, so to speak, number one. Number two, the directly impacted companies are about 17%, less than 20% of S&P 500 earnings. 5 percentage points of that is Apple, and they didn't talk about tariffs, but there's lots of other things going on. They just dominated basically the impact. So
I think this is another way of saying the economy is not the S&P 500. Is that fair enough?
I think a lot of people have said that again and again, but I think that that's the conclusion that we have to draw.
Another reminder this morning from Binky Chandler at Deutsche Bank. Binky, it's good to see you.
Good to see you.
I know you're taking 2 weeks off for your birthday too, so happy birthday.
Thank
Enjoy your vacation.
And congratulations.
Nothing ever happens in August. And then things happen in August, I know, repeatedly. Something's happening this weekend in Anchorage, Alaska. The President of the United States in a face-to-face meeting on American soil with the Russian leader, Vladimir Putin. On the ground, Anne-Marie. Anne-Marie, just moments ago, some headlines breaking from Air Force One about the President's approach to these talks.
Yeah, Jonathan, I think 2 things really stand out as the president briefed reporters on his way to Alaska. One is that territorial swaps will be discussed, but President Trump is not going to be the one to make the decision on that. He said Ukraine will be the one to make the decision on that. He is here to bring everyone to the table. Second, the president said that Vladimir Putin is bringing over with him a lot of businessmen. So I'm wondering who exactly is the president talking about? But the president made clear there will be no U.S.-Russia business deals or cooperation until this war is wound down, until there's a cessation of hostilities and a peace agreement. I think those 2 statements from the president are really important going into this meeting he has this afternoon with President Putin.
Anne-Marie, looking forward to your reporting. Thank you. The latest there from Anne-Marie on the president's approach to these talks from Friday and potentially through the weekend.
Right now, the market seems to be geared up for some sort of easing in tensions between Russia and Ukraine. A lot of daylight between what's going on right now and getting to a place at the end of this weekend where that momentum can get sustained. A lot of people hoping that this conflict can stop given the human life that's been at stake.
Have you got the cowboy hat ready for next week?
Oh, yeah.
Lighter note.
Chaps, everything. I'm going.
Ready to go?
Yeah, exactly. I'm going to go to the rodeo. Boots. Exactly. I'm incredibly excited. My long underwear for sitting outside. For
Look after TK.
Yeah, I will. Don't worry.
Got some babysitting to do next week.
It'll be fun.
Enjoy that. Now, looking forward to the coverage, guys. Really am. Jackson Hole next week. Big lineup on Monday. Steve Chevron of Federated Hermes, Neil Dunter of Renmac, Jack Manley of JP Morgan, Claudia Sam of New Century Advisors, and a whole lot more. Have a great weekend, guys. From New York City this morning. Good morning. This was Bloomberg Surveillance.
Day 8 at the Cincinnati Open. 2023 champion Coco Gauff eased into the quarterfinals with a comfortable victory over Lucia Bronzetti. Coco will face another Italian, Jasmine Paolini, for a spot in the semis. And don't forget, you can watch all the action live daily on Tennis Channel.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Happy Friday, 30 minutes until the start of trading with a mixed picture in futures. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the record-breaking rally in U.S. stocks remains intact. We got a whole new one yesterday, up another 2 points on the S&P. High stakes. President Trump and President Putin gear up for their first summit in 7 years. Maybe they've talked on the phone a few times since then. And President Trump could make an unprecedented move to take a stake in an American icon. Well, it is actually precedented.
Yeah.
I mean, President Obama took a lot of stakes.
Yeah,
remember?
Those were different circumstances, though.
True.
The circumstance is unprecedented. We're going to dig into that, but let's also dig into United Health because it's soaring this morning after Warren Buffett's Berkshire Hathaway disclosed a $1.6 billion stake in the health company, which is down 46% year to date. Investors clearly psyched about that pre-market. Again, shares up 10%.
Yeah, and they did a lot. I mean, Lennar and Nucor, we're going to dig into all of that. And Intel is the icon I was talking about, continues to climb on the possibility that the U.S. government will take a stake in the beleaguered chip maker and help it build its gigantic fab in Licking County, Ohio, Katie.
We'll talk about what that means for the U.S. relationship with corporate America and also what that means specifically for Intel. But let's talk about U.S. retail sales. We got those figures at 8:30 this morning. They rose in July, but they did come in a little bit softer than anticipated. Let's break it down with Michael McKee. He is Bloomberg's international economics and policy correspondent. He joins us from Jackson, Wyoming, getting an early start there. And Mike McKee, talk us through what the takeaway here is, because they did increase in July, maybe not as much as anticipated, not making much of a dent in the market right now.
Well, Katie, these are not the results you're looking for, not the droids you're looking for if you are looking for the Fed to cut interest rates. It suggests that consumers are still hanging in there. Companies can still keep selling stuff and keep raising profits. That's the good news side. The bad news side is probably not going to see any kind of a rate cut talk from the Fed in the near future. We'll see what happens when we get future inflation numbers. But you look at the retail sales, up 0.5%. Now, the thing that was really amazing is that the June numbers were revised up strongly to a 0.9 gain. And you put the two together and you have a very strong month. And the retail control numbers revised up in June to 0.8, and then a 0.3 gain this month, and you end up with another good month of consumer sales, up 0.5% in the stuff that goes into GDP. I also want to highlight import prices. Import prices up by 0.4 on a headline basis, and ex-petroleum up 0.3. Now, the argument the administration has made is that exporters are going to absorb some of the costs. This suggests that is not happening, that they raised prices last month rather than cutting prices to overcome Trump's tariffs taxes. So that is also not good news. It is a signal that maybe we will see some continued inflation in the U.S. in terms of imports, and that companies and consumers are going to be picking up more of the tab.
Well, but the numbers were strong, and the revisions were to the upside. So no one at the Commerce Department is likely to get fired, right?
Probably not. The retail numbers put together by the Census Bureau, and the president has them working on other things. It's tough, though, for a president who wants interest rates cut to live with the fact that they're getting the kind of numbers that they are at the moment, because it's not encouraging the Fed to cut interest rates. Now, these are nominal. These are not inflation-adjusted retail sales. So we'll have to see what we get when we get the PCE spending numbers at the end of the month that also add in services. But right now, the economy is still chugging along through July.
All right, Mike, thanks very much. Michael McKee reporting very early in the morning from Jackson, Wyoming. He'll be there throughout the day and really throughout the week. He's going to have an awesome time. In technology, the Trump administration is in talks with Intel to have the U.S. government take a stake in the chip maker. This, according to people familiar with the plan who declined to be identified. It comes 1 week after the president said Intel's CEO should be fired over his work in China, but they met up, and now we have this news. Bloomberg's tech reporter, tech show co-host, and just all-in tech genius, Ed Ludlow, joins us now out of San Francisco. This is quite an amazing story, Ed, and Intel's a company that needs all the help in terms of capital that it can get if it wants to build this fab in Ohio, right?
It is amazing from the sort of American-backed state enterprise side of it, which we can get into. I mean, what we know from sources is that the focus of this administration is very much the Ohio project, Matt Miller of Ohio, right? And at one time, Intel vowed that this would be the biggest, greatest semiconductor manufacturing facility on Earth, but they have really pumped the brakes on it. And that is completely at odds with what this administration wants to do, which is to accelerate the re-onshoring of supply chain and semiconductor manufacturing in this country. That's the rationale. What we don't know is the size of the stake, right? I heard you and Katie talking about the precedent or lack of precedent. Of course, the administration has done this with MP Materials in the rare earth space. And in that case, the US government is the single biggest shareholder, but we just don't know if that's the case here with Intel.
Well, let's talk a little bit more specifically about Intel, the beleaguered American icon here. We know that Lip Bhutan, he came in March, and it seems like his game plan so far has been to cut costs, to cut jobs. It's not about necessarily restoring the technological edge. If he did get this stake from the U.S. government is going to take over trying to actually build this Ohio plant, or at least provide the funding for it. Do you think that this changes the game plan coming from the CEO office?
You know, the capital is important, and Lip Bhutan, since taking on the role, has had capital discipline, right? But it's also that this administration makes things move quickly. We have seen that with NVIDIA and AMD's ability to export not just to China in the situation we discussed this week, but the Gulf as well. You know, TSMC and Samsung have accelerated their investments to ramp capacity for semiconductor manufacturing in the United States. Now, what I'm hearing in Silicon Valley is that the reason we like this plan, and the administration likes this plan, is because you cannot guarantee that Samsung and TSMC will make the United States a priority. Intel's an American company, and not just because of the financial stake, but sort of the deregulatory side and the cutting of red tape that this administration's focused on. Intel on paper is everything they've been looking for. It's just that, you know, in the early parts of this administration, they didn't have somebody at the helm, either side of a CO swap, that was able to do that.
Ed, I want to throw you a curveball here. When I was out earlier this week, we had the news that Perplexity was making an offer, I think $34 billion or thereabouts for Google Chrome, even though Google Chrome is not necessarily for sale. And this morning we got a headline across the terminal that Sam Altman is also interested in Google Chrome. Are we going to get something of a bidding war for an asset that's not really on the block yet?
Well, and that report came from The Verge, I think, right?
Yeah, that's
Correct
right.
me if I'm wrong.
That's right.
But remember, during the course of the trial and the testimony that was given by rivals of Google in the AI space, a number of companies, including OpenAI, brought up the idea that it would be possible to make an offer for Chrome and Chromium, the underlying source code, and why that would be to the benefit of the marketplace. The idea is not new, but I don't see The Verge headlines as also going as far as to say they have submitted a bid. I think it's just Sam Altman out in the media, something that Sam Altman does all the time, speaking about something that's topical in the domain of AI.
Yeah, fair enough there. I will say OpenAI probably has deeper pockets than Perplexity, so we'll have to see how this one shakes out. Ed Ludlow, really appreciate your reporting. That is Bloomberg Tech co-host Ed Ludlow. You can catch more of him at 11 a.m. Eastern. But stick with us because we're going to talk about President Trump. He's heading to Alaska to meet with Russian President Vladimir Putin as the U.S. pushes for peace in Ukraine.
I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
Bloomberg D.C. breaking news reporter Lauren Dezensky joins us now for more. And Lauren, set the stage here for us. What does success look like to Donald Trump, and what does success look like to Vladimir Putin?
Great question. Well, despite Donald Trump's all-caps Truth Social post this morning saying high stakes, Trump later on Air Force One said that essentially he's not here to negotiate on behalf of Ukraine. Really, Trump is emphasizing the strength of the U.S. economy, the hot U.S. market, and really saying that in order for Russia to get a piece of this hot U.S. country, they need to then agree to the ceasefire. Trump, from day one, has consistently said he wants Russia to stop its war in Ukraine. He wants the violence to stop. And not only if he secures that ceasefire will he maybe get his Nobel Peace Prize, he would also be able to then give Russia a piece of economic success. Trump has really made clear that there will be dire economic consequences if Russia doesn't play ball. We also saw Scott Bessent say this in his excellent Bloomberg interview this week, saying that it's time for Europe to put up or shut up. It's time for Europe to also back up the U.S. when we talk about sanctioning Russian oil buyers and trying to get the rest of the world in play. So a long answer to your question of essentially Trump is trying to get everyone else on the same page to then line up a possible trilateral meeting between the U.S., Russia and Ukraine, but really, we just have to wait to see what happens.
All right, Lauren, thanks very much for joining us. Bloomberg's D.C. breaking news reporter, Lauren Dezensky. We're going to continue coverage of this summit late into the night. I know Joe Matthew has brought snacks and a sleeping bag to the office, and he, of course, kicks off his first program at noon. He's on then again at 1 on Bloomberg Television. Balance of Power kicks off special coverage at 5, officially to 9. But Joe has told me he's willing to stay past midnight if need be.
Love of the game, that man. He just grinds away.
Absolutely. Coming up, what do we got?
We got Warren Buffett's Berkshire Hathaway betting on a rebound in United Health. We'll discuss all the 13F takeaways next. This is Open Interest.
13Fs.
Ooh.
Sell it.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Let's get now to high interest. Look at what's making headlines around the world. SanDisk delivering disappointing results. EPS and gross margins fell short of expectations due to higher operating expenses. Remember, they used to make the cards that you put into your camera before your camera was on your phone. Circle looking to capitalize on continuing investor demand, announcing plans to offer 10 million shares in a secondary stock sale, priced at $130 a piece. That's more than 4 times the price of its IPO back in June. So it wants to take some of that money off the table. The shares not moving much today. Warren Buffett's Berkshire Hathaway making a ton of news in its 13F filings. The big headline was the fact that they took a $1.6 billion stake in United Health, and UNH. According to the regulatory filing, Berkshire bought 5 million shares of the health insurer in the last quarter. Can we say beleaguered health insurer?
Yeah, I use that for Intel, but I think you can use it for United Health as well. Down 46% year to date through yesterday's close. Let's talk a little bit more about Berkshire's moves. We're joined by Christina Aquino. She is Bloomberg's managing editor for Markets Live. This was exciting. Matt and I were anchoring the close last night when this headline crossed, and the reaction in after-hour shares was immediate when it comes to United Health. What do we know about this stake?
Yeah, absolutely, Katie. I mean, I guess it is a little bit of a surprise given just how beleaguered, as Matt says, that United Health stock has been over the past year. And, you know, what's clear from Berkshire's move here is that it probably is seeing value in the shares at the moment. I mean, we have seen that stock price really take a dive over the past year. We know the idiosyncratic issues that United Health has faced. It had a big management shakeup over the last few months. And then, of course, it was in the eye of a storm when it comes to changes in health policy that would potentially lead to higher Medicare costs. But what we're seeing from Berkshire's move is clearly that they are seeing a little bit more of a return to stability. Because, you know, before the past year, United Health has not missed an earnings season or earnings estimate for more than 10 years. You know, the last one that they had was their first miss in more than a decade. And so, you know, it is normally a blue chip, stable stock that does deliver that sort of long-term return that Berkshire Hathaway typically likes, and perhaps now they're betting that that's going to become a thing once again after some turmoil in the past year.
It's not all about, I mean, there's a ton of Berkshire Hathaway news, Christine, and Lennar and Nucor, fascinating stuff. But David Tepper's Appaloosa had gone so heavy into China, and now it looks like they're coming back out. What's the story there?
Yeah, that's very interesting as well, Matt. I mean, I suppose you could see as well the moves in Tepper's hedge fund there. A lot of those companies that they're pulling back from very much geared towards Chinese consumer demand. And we have seen some improvement there given the support from the central bank. They've done a lot to really just shore up sentiment, but it's still very, very shaky at the moment. And then, of course, you can also peel back a little bit from the consumer level to the more macro level. A lot of risks related to China, of course, when it comes to trade with the U.S., for instance. There's that overhang of geopolitical risk there. And so it would make a lot of sense for a hedge fund to kind of take a look at their Chinese holdings. They have a lot previously, and a little bit of pullback here just makes sense, just given the way that the geopolitical and consumer winds are blowing at the moment.
All right, Christine, appreciate the roundup there. That is Bloomberg's Christine Aquino. I want to take a look at UNH one more time. Absolutely soaring pre-market. It wasn't just Berkshire Hathaway. It was David Tepper, as we were just talking about, taking a stake in UNH. And it makes sense. If you're, a big money manager and you're looking for a bargain, UNH obviously represented as such.
Well, I mean, maybe the price came down for a good reason.
That's
right?
true.
So, but you're definitely right in that Tepper saw the same thing as Warren Buffett, right? He bought 2.3 million shares. Buffett bought 5. It is one of those companies, I was thinking about this morning as well, that just got beaten down in a market that's done so well since the bottom in April. So I guess if you're searching for big companies that have had 40% declines.
Well, when it comes to the reason that it came down, this wasn't just UNH. I mean, it was the entire insurance industry basically not anticipating that Americans would use the medical care at the rate that they did when they set their premiums. So a lot of these big insurers were miscalculating insurance costs. You saw that really take a bite out of the whole industry, especially UNH. But now Berkshire Hathaway and David Tepper coming in. Let's take a quick check on futures right now. We're just over 10 minutes away from that opening bell. The S&P 500 pretty quiet right now. It's been a good week overall, but you can see that the S&P 500 only higher by about 0.1% right now. The NASDAQ 100 about 0.1% lower. The small caps shining this morning, at least on a relative basis. The Russell 2000 up 0.2%.
They could have bought Centene.
They could have bought Centene.
Centene is another insurer that lost 55% of its value this year to date. Coming up, Callie Cox joins us. She says any sign of progress can be monumental for the stock market when both Wall Street and everyday investors are braced for the worst. We'll discuss that with her among so many other things. This is Open Interest.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bank of America says that U.S. stocks will decline if Fed Chair Jerome Powell gives dovish signals in Jackson Hole next week. The team, led by Michael Hartnett, says that any dovish tone could trigger a buy rumor, sell fact trade. Hartnett reiterated a preference for international equities over U.S. peers. Let's keep the conversation going with Ritholtz Wealth Management Chief Market Strategist Callie Cox. Callie, great to see you on this Friday. Let's focus on Jackson Hole. Do you agree with that logic coming from the team over at Bank of America?
I think dovish signals could definitely be confusing, and I think as of now, the market would take them well. But if we actually get them, if they actually happen, then I do think that the market could second guess itself around where the economy is. We saw how the market reacted during the last jobs report. Slowing growth and a job market on edge is not a good situation for markets. So to really, verify that through the mouth of Powell would be bad news, most likely.
Doesn't it look like, we had the big jump in PPI, producer inflation, yesterday, and today we had U.S. retail sales. Joe Brusuelas, one of my favorite economists, writes in to say that retail sales, import prices, and the Fed, the totality of the morning data strongly imply a rate cut at the current time is not a done deal. So not even 50 basis points is in play, but what about 25?
I think 25 is in play. I think markets are probably right to expect some version of a cut in September. I do think it'll be tricky. We all saw the CPI and PPI data reports that we got this week. Services inflation is picking up. That's a side of inflation that the Fed cares about and that they can't really hand wave away. So I don't think a rate cut is as much of a lock as markets expect it to be, but I wouldn't be surprised if we got it, especially because the job market needs it.
The job market needs it. So let's talk about that, the two different sides of the mandate that the Fed is dealing with right now, because which is the more urgent one when we're talking about September and beyond, Callie?
I'd argue the job market is the more urgent one. You can't really have an inflation crisis unless you have the job market contributing to inflationary pressures. And Powell has said himself many times that that's not happening. You can see that in the data as well. There is a slightly higher risk that could happen because the labor supply is stalling. There could be a skill mismatch that could lead to higher wages. But we haven't seen much evidence of that yet. And, if I had my way with rate cuts, I would look toward the job market, potentially jump in and save it. But I understand why it's tricky right now.
All right, Callie, we are just getting started. You're sticking with us through the opening bells. Here's the setup right now as we count down about 4 minutes to go. You can see it's quiet. The S&P 500 pretty much unchanged in the pre-market trade. We know that the index is higher by about 1.4% on the week. We'll see if that holds. NASDAQ 100 down a touch right now, off about 0.2%. The Russell 2000 is still the relative leader, but that's really not saying much on this Friday morning. Pretty much unchanged. The open is up next. Don't go anywhere. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are very little changed today. S&P futures up about 0.1%. This after we put in a new record close yesterday. I think 64.68. We climbed about 2 points in yesterday's session for a new record on the S&P 500. NASDAQ futures have a red arrow, but nothing going there. Russell futures also doing not a lot. This is a day on which I believe the president could really move markets, or definitely individual stocks, right? He's on Air Force One. They've got a 7 or 8 hour flight to Alaska where he's going to meet with President Putin. He could say anything about Intel. He could say anything more about chips tariffs. He could say something about the deal he gets. He could get a deal. He could not get a deal. So we're watching well into the night. Joe Matthew is going to be anchoring Balance of Power until like midnight tonight. So today we could see swings at any point, but right now we see not a lot going on, with the exception of the 13 Fs, which normally that's a yawn, but
Today, it's very exciting. And I will say you're not seeing much at the index level, sure, but at the individual company level, things get a little bit exciting. And we start with United Health soaring after Warren Buffett's Berkshire Hathaway disclosed a $1.6 billion stake in this insurance company. You also had David Tepper's Appaloosa buying a stake in United Health. Remember, shares through yesterday's close have been down more than 40% year to date. We know that insurers have been hit hard by miscalculating medical costs. So clearly someone saw a bargain here, and you see investors following their lead, in United Health shares up about 10% at the opening bell, Matt.
Just checking on Centene right now to see what they're doing at the open. If you don't know, Centene is also an insurer, actually up 4% right now. Intel continues to climb on the possibility the U.S. government will take a stake in the company after it did so with MP. Kind of taking a page out of the Obama playbook, although the economic backdrop is incredibly different, and in that case it was car makers and banks. But it looks like, at least according to people familiar with this story, this is a plan that's in the works. And that's not the only chip news, right? Because we had AMAT earnings out yesterday, Applied Materials coming out with beats in the quarter, but a disappointing outlook. That's going to be weighing on, I'm going to say, AMAT shares. I'll go ahead and check them.
14%, biggest drop since March 2020. Wow. That was not a good time.
That is a heavy weight on the chips. We're back with Ritholtz Wealth Management Chief Market Strategist Callie Cox. And Callie, you know, already on Air Force One, the president has said he could put chip tariffs into place in the next week. He's threatened 100% chip tariffs, although if you build something and you're a giant company in America investing a ton, you can get a carve-out for that. He could make news all day long that will move these stocks. How do you deal as an investment strategist in this kind of atmosphere?
Well, I'm lucky. I have an easy job. I can ignore 90% of headlines. I don't think semiconductor tariffs are the type of headlines you can ignore for long, because tech is the profitability golden child of the market, and semiconductors are a big reason for that. But right now, it's just back and forth. I'm waiting for something to actually be implemented here. Of course, we did get the kickback news, I believe, for semiconductors that conduct business in China. So it's all about seeing what actually comes to fruition.
Are we calling them kickbacks officially? I was wondering if someone was going to come out with that. So this is like an export tax, right, on NVIDIA and AMD. If they want to sell into China, they have to pay 15% to the United States of America. That's a pretty bold statement, though, calling them kickbacks.
Okay, kickbacks are not the right word. That's my Friday morning brain speaking.
Yeah, I would say that's a legal phrase. They are. I wouldn't want to use that right now either. I'm going to have to go ahead and push back against that.
They're export taxes. They're export taxes, correct. But it's still something to think about, right? You know, the market has put a lot of weight into these semiconductor companies. China is the third biggest market for NVIDIA. I mean, the semiconductor darling of the market. If you are concerned about corporate America and where earnings are headed, then you should be concerned here, because tech far and away has been the driver of margin growth.
And Callie, I was thinking about this earlier today. I mean, you think about what's going on with Intel, the possibility of the U.S. government taking a stake. You think about the stake that the U.S. government took in MP Materials, which Matt brought up. I mean, could you build a trading strategy, maybe not an investing strategy, but a trading strategy of just buying shares of companies that seem important to national security as defined by the Trump administration and just waiting?
I think people have done that before, and that's not a comment on the administration. It's something we wouldn't do at Ritholtz, just because our investment philosophy is so far different than the short-term strategy you're talking about. But something to remember is when the government gets involved in the industry, PEs come down. That becomes a public-private entity. And I think we've seen that in banks, maybe not recently, but definitely after the global financial crisis. So something to keep in mind, especially as we see the government's fingerprints in semiconductor companies. This could be a really interesting change, given that these are known as high-flying stocks in the market.
I will say that now that I've voiced that out into the atmosphere, you definitely have some intrepid ETF issuer working on that strategy right now. Callie, great to get some time with you.
I'd imagine so.
Have a wonderful weekend when you get there. That is Ritholtz Wealth Management's Callie Cox. Meanwhile, we're just about 5 minutes into this Friday trading morning. Let's take a look at the stock market right now and the breakdown on the S&P 500, because it's quiet just at the headline index level. It gets a little bit more interesting when you take a look at the different components. You have more than 300 names in the green right now, and then you take a look at what is at the top. It's United Health, as you might expect, up about 10% right now. That is your biggest points contributor to the index. Amazon also higher this morning. Apple, Alphabet, Meta. Looks pretty good. Again, you have a lot of the names that should be rallying, bringing up this index. But then you take a look at the downside. It is no help at all that you have NVIDIA shares down 0.6%. That's not very much, but when you consider how big NVIDIA is, certainly weighing on the index. Applied Materials, as Matt mentioned, reported last night, not being received too well. That company down about 12% in the early trade. Broadcom and Palantir down as well. So pretty good breadth, Matt. Not necessarily adding up to huge gains. The S&P 500 just about unchanged at this moment.
All right, we'll keep watching at the index level for movement, but we could see that driven by the president. The Trump administration, as you have said, as we have been talking about, is mulling a stake in Intel. It's considering buying a stake in the chip maker. It comes 1 week after the president said Intel CEO should quit over his work in China, but they met up in the White House, and that meeting seems to have gone well. Bloomberg Tech co-host Caroline Hyde joins us now. So, Caroline, this is, I think, very interesting in that maybe the president sees this as a sector that needs some support, and so he's going to use the federal government to do that.
And whether or not this actually solves the overall arcing issue for Intel, which is it doesn't have as good at chips as TSMC does, and other rivals. They've actually hinted at in their earnings a couple of weeks ago that they might even back off creating the most sophisticated leading edge nodes, this 14A and beyond, because they didn't have the customers. Is this in some way the US government trying to hint at Qualcomm and other people who would buy ultimately from Intel to buy their chips, because we're going to start taking a step forward in terms of taking a stake in this company? What it means for the competition, that's the key question here. But I think it also all relies upon Ohio. And of course, we know that there's someone relatively senior in power who used to be a senator of Ohio who really wants this fabrication giant, the idea that you're going to get the biggest ever chip manufacturing space in the world being built in Ohio using taxpayer money with, of course, the CHIPS Act. Well, that's been backed off till the 2030s. That's what we heard from the CEO, Lip-Bu Tan, in the previous earnings. So is this just a way of trying to get Intel back manufacturing, making it in America to really help the end case for the US government, which is build here and not have to depend so much on the Asian giants that are coming over?
Yeah, this is just fascinating, too. When you consider the timeline, how quickly the relationship between the CEO of Intel, Lip-Bu Tan, and President Trump evolved, because this time last week, or the day before, time is a flat circle, we were talking about the president calling for the CEO of Intel to resign, and all it took was one meeting.
All it took was one meeting. We anticipate yet another one where he's going to be...
Well, that we know about, right?
Yeah,
I mean, it could be that they were on the phone a lot, that his advisors were on the phone with Tan's advisors. Maybe the White House was pushing Intel towards this, and Lip-Bu Tan was pushing against that, and that's why he... I mean, we don't know everything that happened behind the scenes.
The realm of possibility is endless, but in any case...
I mean, it is mere speculation as to how much and how deep the conversations have gone, but we do anticipate there's going to be yet further discussions between Lip-Bu Tan and members of the cabinet. Many analysts have said that is a good sign that they're bringing them in and getting advisory. You're getting Jordan Klein over at Mizuho, who's going to be joining the show a little bit later, really talking about ultimately what makes the market reaction here is because a lot of the market kind of wants to short some of these names. Intel is spiking 10% over the last couple of days because many people have just been betting against it. Suddenly, when you get signals such as this, how long term is it, and how much can it actually rectify the issue that it needs to develop the most innovative chips? And thus far, you can't maybe do that with a government stake. What you need is the talent. What you need is the reaffirmation that you're actually going to get buyers of the latest innovations and development. Maybe that's what they're trying to signal here.
All right, it's so fascinating. I want to just quickly ask you about AMAT. Yeah, because Applied Materials getting hit so hard.
Yeah, and a maker of chip equipment, which ultimately is actually in on the US manufacturing side of things. They've been saying they're going to be helping Apple with the manufacturing here in the United States and indeed Texas Instruments. But China is the issue here. Think Lam Research, think of AMAT as well. They have about 80% of their revenue goes abroad outside of the United States. About a third of that comes from China. China is not investing in chip making equipment at the pace that they have been over the last couple of years. And so the CEO is trying to signal here, look, that pace is going to rectify, it's going to normalize. But for the likes of Lam Research, they're still posting, guidance of 25% growth in the next quarter. Whereas for Applied Materials, it's going to slow, if not go negative.
I do want to point out that if you take a look at the year-to-date chart of Applied Materials, we know that this is their biggest intraday decline since March 2020, at least at one point, pretty much wiping out their 2025 gains today. You can see they're just about flat on the year. That has to hurt.
Yeah, taking them down to nothing. Caroline Hyde, thank you very much. Really looking forward to your program. Today, Bloomberg Tech kicks off at 11 o'clock, and there's a lot of news for them to cover. There's a lot of news for us to cover out of Monterey because it's Car Week there, and coming up, Frank Steffen Walliser, the new CEO of Bentley Motors, is going to join us live from the Quail. This is Open Interest.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hardern in Alberta, Canada, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Bank of America downgrading Target to underperform, expecting competitive threats from Walmart and Amazon will start eating into sales. Next up, we have D.A. Davidson upgrading Salesforce to neutral, seeing limited downside after underperforming its peers over the last 3 months. And finally, we have HSBC downgrading Cisco to hold, saying that shares now appear to be fairly valued after delivering a disappointing outlook. Shares currently off about 2.6%. Remember, Cisco shares went splunk after earnings this week, Matt.
Yeah, absolutely fascinating story, especially considering Cisco's history with the dot-com bubble burst, and now we're into the AI maybe bubble, maybe not. Let's turn to the auto sector right now. It has had well, a difficult year with all of the uncertainty around tariffs, right? On both a national and a sector level, it's brought forward demand, and we saw that in retail sales, but maybe worsened the longer-term outlook, depending on where you make your cars. Monterey Car Week is underway in California. All of the manufacturers gathering there. Yesterday, we spoke to Mecum Auctions CEO Dave Majors about the appetite.
The S&P, the NASDAQ, I think, the Dow may be set to set a new record over 45,000. Gold has retreated $100 an ounce. All of that would say we're either getting more comfortable with the turmoil or we believe the turmoil's over. But at any rate, I think the financial anxiety that we've seen since March in the collector car market has subsided somewhat.
We're going to stay in Monterey and bring in Frank Steffen Walliser, Bentley Motors chairman and CEO. He joins us from the Quail. And Frank, great to have you. Before we get to the turmoil, the tariffs, the wealth effect, I want to talk about that orange Bentayga next to you. Is that the new Bentayga Speed? And what kind of demand do you expect?
Yes, exactly. That's the Bentayga Speed. So good morning from Monterey. That's our latest version of the Bentayga, an ICE-only engine, 650 horses. Showed it just a couple of weeks ago in Montana. Very, very good feedback from media so far. Customers too early. They will get in the car beginning of next year, end of this year, maybe the first. But we see that's a car that really is asked for by the markets.
We've seen, I mean, the markets are on fire, right? If you look at equities, if you look at Bitcoin, the wealth effect must be strong, and the pull forward effect has been great as well. What kind of demand are you seeing from customers?
Well, it's different in different parts of the world. US is kind of stabilizing, I would say. It's too early to really judge it, because it's always long-term. You have seasonality inside. You have, depending for sure, also on what you offer in cars. Bentayga Speed will definitely give a momentum on the sales, what we expect. New Continental coming now with the high power, not the ultra high power version. And this is very, very well received in the market. So we expect, by shipping the cars in the third quarter, also another momentum for our sales figures.
For the most part, I guess Bentleys can only be produced in Crewe, right? If you're buying a Bentley, you're basically buying a piece of that factory, that craftsmanship, those artisans is what you're paying the premium for. So there's no way you can really move production anywhere else, is there?
No, and it's also, for sure, it's not intended, because part of the excitement is you have a British car, and the British car has to come from the UK. It's like a Swiss watch. Very, very clear. And but with the agreement between UK and US, I feel we are in a very good position. We have approximately 7.5% higher tariff than it was before. So we don't expect that has a big impact on our business. In the business in general, it's more the uncertainty, I would say, because also we did not raise any prices so far. Nothing is adjusted. So we expect just business going on.
So exactly. I mean, the UK has a special deal with the US on auto exports, a flat 10% tariff. It used to be 2.5%. You haven't raised prices, you say. Have you been able to take some price from your suppliers? Have you been able to get some padding there?
No, at the moment it's all too early, because we have carefully really watched the markets, what's happening there, what's happening on the pricing side. Supply is then different, but no, we did not take any action there.
I'm curious, Frank, if customers are waiting for new generations of cars that come from you. You have, personally a great history out of Germany, out of Stuttgart, and there's pretty high expectations for what you can do with this brand. A lot of the vehicles you're selling are fantastic cars, obviously, really works of art and engineering masterpieces. But do you see anybody waiting for the first Walliser cars to come out of Bentley?
If you want to call it like that, yes, people are already asking and waiting for it, and I have to ask for a little bit of more patience, but it's on the way. The first car will come, and we're already talking with customers, not with media, but with customers. We are talking about some ideas we have and projects we have started, and there's a lot of excitement, I can tell you. Very, very positive feedback.
I know you're there with my good friend Hannah Elliott. She's my co-host on our podcast, Bloomberg Hot Pursuit, and she and I recently went to Le Mans. It was exciting, and a lot more manufacturers are getting involved, not just in world endurance car racing, but in motorsport in general. It's become really important, I think, to the car buying public, especially at the level where you're playing. Does Bentley have any aspirations to get involved, to get back into, especially the Le Mans series? I think of Bentley when I think of that series.
Well, Bentley has in general a very wide and very long history, especially with Le Mans. More than 100 years involved there, many famous victories back in the 20s, but then also the famous victory in 2003 when the brand was kind of relaunched and got more established by itself, split with the siblings. So there's a rich heritage, and for sure motorsport always played an important role in it. And as you say, more and more car manufacturers are entering, and motorsport is a very important part also of the brand image of a company, and that fits for sure also to Bentley. On the other hand, we have to make business decisions. It's all about also timing, to get the right timing to enter motorsport, because it's also clear if you have 15 brands going to Le Mans, you're number 16, you share everything with 15 others. So when is the right timing, when is the right technology, and also you need serious money to race in Le Mans. And this equation has to be solved, and then we will see. We have no plans for the moment, but it's not that we say, no, we would never talk on something like that.
All right, well, we look forward to it, Frank, and I hope you have a fantastic weekend at Monterey Car Week at the Quail now, and Pebble Beach leader Frank Stefan Walliser, Bentley Motors chairman and CEO. Don't miss, by the way, our interview here on Open Interest coming up with Lamborghini. We have the chairman and CEO of the sports car maker, of the supercar, hypercar maker coming up, Stefan Winkelmann. That's at 10:30 a.m. Eastern. And did I mention my podcast with Hannah Elliott?
You know, a few times, especially over the last 24 hours, I feel like.
I would, well, because it's Car Week, right? Everybody is excited, me especially, and Hannah, about all of the things that are going on there. Hannah is, of course, at the Quail right now. She's going to be at Pebble Beach this weekend, and she and I have a very special guest on our podcast, Hot Pursuit. We're going to talk today with Mate Rimac, the electric hypercar maker and former CEO of Bugatti.
And when does that come out?
That comes out at 3 o'clock today. So it's a weekly podcast. It's our weekly bi-coastal podcast for car lovers, Hot Pursuit.
Looking forward to that. I believe we have some breaking news here coming that the Trump administration is said to eye the CHIPS Act fund for its Intel stake. Remember, this is a story that we've been following closely, that breaking news yesterday that the Trump administration is considering taking a stake in Intel. Now we're getting a little bit more detail here. Again, that breaking news that now that the Trump administration is said to eye the CHIPS Act funds for its Intel stake.
So it's going to take that money and it's going to use that money to buy a stake in Intel, or at least some of that money.
That
is the idea.
To be the details that we are getting right now. Intel shares currently up just about 2% pre-market. I believe, are connecting live with Bloomberg Tech co-host Ed Ludlow joining us right now. So Ed, this headline just came out, a little bit more details about how this would actually work, this U.S. stake in Intel. What do we know so far?
So sources are saying that it is the CHIPS Act funds that are considering being used by the US government for the stake in Intel. We're also learning that it was discussed in that meeting between President Trump and Lip-Bu Tan earlier this week. The number that Intel was awarded in grants and direct funding, which was finalized in November of 2024, was $7.86 billion. It makes Intel, on paper, one of the great beneficiaries of the CHIPS Act. But as you guys know, that was in doubt, depending on what the administration would do. But we don't know if the Trump administration will use all of that money or some of it. So we don't have a sense of size of this stake. The main point, and look at Intel shares up 2% off the highs of pre-market and earlier. This is just being seen as a good thing.
Yeah, it does seem like, look, Intel is part of the growing theme of the Trump administration, sort of produce here and secure this country, right? It's a national security issue more than anything else. At least that's how the administration views it.
All that matters, like put the money in the size to one side, we don't know. The administration wants very quickly to bring more semiconductor manufacturing to the United States. Intel had intended to grow that in Ohio, Arizona, and in Oregon, but it's the political support, right? There's plenty of evidence with other chip companies, NVIDIA and AMD and their exports being one, that this administration is willing to let companies move fast and deregulate in order for them to do that. In fact, it's the central pillar of their AI strategy.
All right, it is fascinating news, and we're going to continue to cover it for you. Ed, I know your show kicks off in 1 hour and 4 minutes time, so Bloomberg's Ed Ludlow there going off to co-host his tech program. Coming up the next hour, Joanne Shu joins us from the University of Michigan on consumer sentiment, and Terry Haynes will talk more to us about the potential for the U.S. to take a stake in Intel.
Innovation changes everything. With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
Losing the fear of looking foolish comes with age. Losing your way in your own home doesn't. Learn the warning signs of Alzheimer's. Some things come with age, some others don't.
Oof, this is kind of embarrassing. I'm Ashley here at 4 Patriots Warehouse, and we're completely overstocked. Last year, our 4-week survival kit flew off the shelves, so we told our team, make more, and wow, did they deliver. But thanks to supply chain delays, everything showed up at once. Now we're out of space and doing something we've never done before. Buy one 4-week kit, get one absolutely free. They last 25 years, taste great, and are hand-packed right here in the USA. Go to 4patriots.com. This deal won't last long.
At Rush Order Tees, we focus so much on shirts, we can't even comprehend pants. Besides t-shirts, Rush Order Tees also offers customizable sweatshirts and hoodies, polos, hats, activewear, business apparel, team uniforms and jerseys, mugs, pens, and bags. Slap your design on anything. Except pants, that is.
We figured it out. Now we can put anything on pants. And I mean anything.
Visit rushordertees.com today.
Precise designs.
And generally, we're working with multiple partners in the ecosystem. Waymo, for example, in Austin and Atlanta coming up. Wave, Avri, there are probably 18 partnerships that we have in the AV ecosystem. And we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but is finally ready to hit market, and we want to help the ecosystem get there.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. President Trump is feeling confident on his way to a high-stakes summit with Vladimir Putin in Alaska. He told reporters on Air Force One last hour.
He's a smart guy. Been doing it for a long time, but so have I.
The president asked if Ukraine will have to agree to a territory swap to end the war.
They'll be discussed, but I've got to let Ukraine make that decision. And I think they'll make a proper decision. But I'm not here to negotiate for Ukraine. I'm here to get them at a table.
Ukrainian President Zelensky will not be at the table in Anchorage today. This morning, he said he's counting on President Trump to convince Putin to end the war. CBS News senior foreign affairs correspondent Margaret Brennan is in Anchorage.
Vladimir Putin wants to avoid sanctions, and we know President Trump wants at least a ceasefire. So if he can get that ceasefire, which Ukraine has already agreed to, Russia has not, that would be some progress. But really, Vladimir Putin just needs to keep on talking. He may want to stave off those sanctions by showing some kind of interest in a deal with the U.S.
Developing news from the nation's capital after Attorney General Pam Bondi installed the head of the Drug Enforcement Administration to oversee police in Washington, D.C. last night. Correspondent Scott McFarland.
Washington, D.C.'s top government lawyer has just announced he's going to file suit to challenge this. Brian Schwab, the D.C. Attorney General, is arguing these orders are not lawful and need not be followed. The standoff happens as about 800 National Guard members begin a second full
full day on the ground here in Washington, D.C.
Tropical storm Erin is expected to become a hurricane later today as the system grows in the Caribbean. Meteorologist Craig Allen.
The storm is going to be a very strong Category 3, possibly Category 4, and large enough to affect Puerto Rico, Dominican Republic, and Haiti with some strong winds and heavy rainfall. It will not be a direct hit, though.
Some of the outer bands could reach Puerto Rico and rough up the surf there. Erin could bring high waves to parts of the East Coast next week. The American Heart Association and the American College of Cardiology have issued their first new guidelines on minimizing hypertension in 8 years. Here's the gist. Men should limit alcohol intake to no more than 2 drinks a day. Women should keep it at no more than 1. The report finds people who avoid drinking booze altogether have the lowest risk of hypertension. The Dow's up 119. This is CBS News. The Cancer Research Center at Oregon Health and Science University is getting a massive boost.
The record-breaking $2 billion gift is from Nike co-founder Phil Knight and his wife. Dr. Brian Drucker says the goal is to create an integrated care model for cancer patients.
We'll make sure that we can arrange for housing. We'll make sure that if you need some mental health counseling because of this anxiety over your diagnosis, we got you covered.
The Knight Cancer Institute will become a self-governing entity and plans to hire as many as 300 new faculty and staff within the year. Heather Roberts for CBS News, Portland.
PBS says it's slashing its current budget by 21% because of federal funding cuts. That'll mean less money going to hundreds of local public TV and radio stations. Meantime, 14,000 alumni, faculty, and members of the public have signed a petition urging Harvard not to agree to a $500 million fine to restore government research funds. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Lots of economic data today. We're going to get to that as well. And, of course, the geopolitics playing out later on today in Alaska. We'll have full coverage throughout the day and evening on Balance of Power this evening on Bloomberg Television and Radio. Joanne Shu is going to join us. She's from the University of Michigan. We've got some UMich sentiment data out there, not real good, and the inflation expectations a little bit higher than expected, so we'll break down that economic data. David Gurr is going to join us. He's a correspondent for Bloomberg and host of The Big Take, give us his thoughts on what we can expect from this summit in Alaska. We'll get his thoughts there. Nancy Tengler, CEO of Laffer Tengler Investments, will get her market outlook. And Ryan Gould, Bloomberg Deals reporter, talking about the Trump administration is discussing and taking a stake, a direct stake in Intel. Deb Aiken's going to join us. That means we're talking luxury goods. She covers all the luxury stuff for Bloomberg Intelligence. Always some good stuff there. But right now, let's kick it all off. Charlie Pellet with a Bloomberg Business Flash.
Hey, thank you very much, Paul Sweeney. Here's what's going on. The Dow higher, S&P, NASDAQ, they're both lower. And this Bloomberg Business Flash is brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Developing economic news right now. U.S. consumer sentiment fell for the first time since April. Inflation expectations rose due to lingering anxiety about the impact of tariffs. That word from the University of Michigan. We've got Joanne Shu of UMich coming up in just a moment. And a headline right off the Bloomberg Professional Service, the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in Intel. According to people familiar with the discussions developing story, Intel shares today, they are higher, up now by 1.5%. Mixed market right now, the Dow being led higher by United Health, up 84 points. That is a gain of 0.2%. S&P, though, in the red on this Friday, on track for a winning week, down 10 points right now. On the S&P, a drop of 0.1%. NASDAQ down 43, a decline there of 0.2%. Our Mag 7 index continues to push higher, up another 0.1%. The 10-year 4.29%, with the 2-year 3.72%. Gold up $5 the ounce, $33.40. That is a gain of 0.1%. And West Texas Intermediate crude down 1.2%, $63.15 for a barrel of WTI. Joe Mazzola is head of trading and derivatives at Charles Schwab, and on Bloomberg Surveillance this morning, he talked about what Schwab customers are buying and selling.
NVIDIA, Palantir, and then Tesla were the top three. Top three sales were Apple, Ford, and then AMD. So, they're still kind of staying within what we consider kind of the retail favorites. Yes, they're dipping their toes in some of these new products, but it's not to the level that we're seeing with, that they would rise to the top 10.
All 6 names that he mentioned are lower right now. NVIDIA down 1.1%, Palantir down 2.3%, Tesla down 0.6%, Apple lower by 0.4%, Ford shares down 0.2%, and Advanced Micro Devices lower now by just about 1%. Again, recapping here, consumer sentiment falls as inflation expectations climb. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Red and green on the screen. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. And we're joined by Bloomberg's Red Brown. Red, what are you looking at?
Yeah, first one on my list here is United Health. The ticker is UNH. For me, it's really been one of the equity market stories of the year. The company's traded up as much as 12.7% this morning. That would have been its best gain since 2020, and that's coming off the back of Berkshire Hathaway taking a stake in the company. Shares of a couple of their health insurers also following UNH up this morning. Molina Healthcare, Elevance, and Centene also trading higher. The company has been, so solid for so many years, so consistent, really boring. But this year has shed as much as $200 billion in market cap in such a short time as they struggle with costs, struggle with how the government is remunerating some of the policies, things like that. So, but this news today is really kind of a bet on the stock, and people are kind of piling in that they might be able to kind of stage a turnaround. Analyst community largely agrees, 3/4 of them still with the buy rating on United Health.
All right, we go from that to one of my faves, Lululemon. Of course, it's only my fave on special occasions because that's the only time I can afford them. Right. But is it just retail sales, or is there more into this?
I think really the retail sales is kind of driving the. I mean, it's only up 1% today, and the stock has been one of the biggest decliners in the S&P this year. But so it's kind of a tepid response, I would say, to the news this morning. We are seeing that online retailers in general, Lululemon does have a good direct-to-consumer business. People are coming back, maybe kind of, again, tepid back into this stock. But it's been struggling. It's been struggling with unpopular styles, the increased competition. They are expensive. They are kind of the premium within the athleisure space. So yeah, I guess we'll see how this plays out. Analysts, again, are kind of mixed on this one. Only around half have a buy rating. There's 5 sell ratings as well. So I guess it will be kind of a wait and see still for Lulu, but thought kind of worth highlighting that there was a little bit of positive for the company after so many kind of weeks and months here of bad news for them.
What is Joby Aviation?
That's a very good question. Joby is I'm going to use another word that you probably won't be familiar with, is an eVTOL company. So that stands for Electric Vertical Takeoff and Landing. So they are they are one of these companies that are trying to bring like air taxi services to cities and across the country. It's pretty interesting that it's, you know, a helicopter. Instead of one big blade, they have 6 smaller electrical blades. I actually got to fly the simulator. It's pretty neat. I did. I don't think I could get in the real one. I was still nervous in the fake one, but they had some. The shares were up. Let me just take a second look here. The shares were up around 6% at the open. They're trading down right now around 2%. This company has had an incredible year. They've doubled this year. They're valued at $14 billion. Last quarter, the revenue was this is not a typo. It was $15,000. So they are not financially, I guess, in the best place yet.
Concept company.
Exactly, but they probably are the furthest along in getting federal approval to actually start commercial flights. So that's kind of why there was a little bit of enthusiasm today. Was the company announced that they had successfully flown between 2 airports. I think that's a pretty big milestone for them, getting FAA approval to actually start taking, you know, people like us to JFK and things like that.
I wonder if it would work in New York. It's crowded, the airspace already.
Who knows? Go look over the East River with all the helicopters and private planes. All right, Red, thanks so much for joining us. Red Brown, earnings reporter for Bloomberg News. Let's get to some economic data today. We just, at the 10 o'clock, we got some University of Michigan sentiment data, and I'm going to call it disappointing across the board here. You know, the concern is just about economic growth and inflation. We welcome Joanne Shoup. She's head of the Surveys of Consumers Director at the University of Michigan. Joanne, we had the headline University of Michigan sentiment number come in at 58.6, below last month and below the consensus of 62. What do you make of it?
Essentially, consumers are being increasingly worried about inflation in the future and also prices right now. We had a surge in the share of consumers telling us that high prices were a concern for big ticket purchases as well as their personal finances. And so that is bleeding through to their expectations for the future. In addition to that, they're also expecting unemployment to worsen. So we're really seeing a softening of views across the board for consumers.
Joanne, were you surprised by this, the sentiment lower, inflation higher?
One of the things that has really been weighing on consumers over the last few months has been tariffs. And part of the improvement that we saw in sentiment in recent months was largely due to the fact that tariff developments had quieted down. Those developments have now re-escalated in recent weeks with the implementation of higher tariffs from many countries and ongoing negotiations with China. And as a result, I don't think it's much of a surprise that consumers are internalizing that and worrying about that, that the escalation in tariff developments and the risk of higher tariffs will pass through to them in the future.
And in terms of the outlook for inflation, the consensus was for on a one-year basis, 4.4% inflation. The actual number came in at much higher, 4.9%. And on the 5 to 10-year inflation outlook, the consensus was 3.4%. Again, much higher here, 3.9%. So the inflation story remains here. How volatile is that measure typically?
Over the last year, we haven't seen a whole lot of volatility in the in inflation expectations, but in recent months, it's been quite volatile, particularly as tariff developments escalate and quiet down. We saw a really huge spike in inflation expectations in April and in May. That was in the weeks following the so-called reciprocal tariff announcement, as well as its pause. And so at that time, consumers were really bracing for a worst-case scenario, which has thus far not come to pass. But consumers are starting to notice prices pick up on a number of dimensions, and that makes them quite worried about the future, especially with the backdrop of the policy uncertainty.
Hey, Joanne, in the last minute we have here with you, can you give kind of a broader interpretation of the data? Like, does it suggest stronger, weaker consumer spending ahead?
It's a little bit of a mixed bag because the fact that consumers are really worried about the future suggests that they're probably going to pull back their spending. And we have a special report, some additional analysis that shows that. At the same time, if consumers pull back their spending, that's going to provide some downward pressure on inflation, which might make the fight against inflation a little bit easier for policymakers.
Real quickly, Joanne, political affiliation, how did that impact the results?
For short-run inflation expectations, we saw that increase across all political parties, including independents and Republicans. With long-run inflation expectations, it was a little bit mixed, and we'll see what happens when we get the final data at the end of the month.
All right, Joanne, thank you so much. We appreciate that. Joanne Shu, she runs the surveys at the University of Michigan. Again, just kind of the headline number here, the UMich sentiment, which is widely followed on Wall Street, just kind of how consumers are feeling out there. You'd like to see it, the higher number, obviously. So 62 was the consensus, came in below that at 58.6. And then on the inflation outlook, the inflation outlook much higher, both on a short-term basis and on a longer-term basis. And that's kind of having a little bit of an impact on the market here. Just looking at the S&P, we've turned negative, -7. The Dow has given up much of its gains, now up 45 points. It had been much higher than that. And yet NASDAQ is off about 17 points. So definitely having a little bit of a negative impact on the markets. Looking at the yield space, 10-year Treasury yields, they tick up just a little bit, about 1.5 basis points, now sitting at 4.3%. Coming up, we're going to check in with David Gurr, correspondent for Bloomberg and host of the Big Take podcast, get his thoughts on this upcoming truce summit between President Trump and President Putin. We're also going to check in with Nancy Tengler, CEO and CIO of Laffer Tengler Investments. Get her market call here as we head into September. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at Bloomberg.com/Oracle. We have got stocks trading mixed right now with the S&P 500 index down 1364.55, a drop of 0.2%. The Dow up 10, gain there of under 0.1%. Little changed. NASDAQ lower by 39, a decline of 0.2%. Our Mag 7 index pushing higher by 0.2%. 10-year at 4.30%, with the 2-year 3.73%. Gold up $5 the ounce, up 0.2%. And West Texas Intermediate crude down 1.1%, 63.27 a barrel. Sources tell Bloomberg the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in the beleaguered American chip maker Intel. Intel shares up 4.3%. After earnings, Applied Materials shares plunging now by 12%. Recapping, S&P 500 index lower by 12, the Dow just turning negative, S&P down by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Both President Trump and President Putin are flying to Anchorage, Alaska as we speak for the summit that will take place later today. Presumably, the Ukraine is #1 on the agenda. Let's check in with David Gurr, correspondent for Bloomberg and host of the Big Take podcast. David, we've seen President Trump on Air Force One gaggling with reporters. Lots of headlines here, but I guess he's reasonably confident that he can get something done here. What do you think?
Yeah, it's interesting to kind of listen to what he had to say to reporters on that plane. So he said that his goal here is not to broker a deal. He's not going to make any decisions on behalf of Ukraine in these talks. Of course, Ukraine isn't a participant in them. But he said the achievement here is just getting face-to-face with President Putin to kind of emphasize the fact that, as he sees it, there needs to be progress here. There needs to be movement toward a ceasefire and an end of this war in Ukraine. So interesting detail there from the president, because I think there have been a lot of speculation, Paul and Lisa, going into this. What are the president's goals? What does he want to get out of this? And now it seems quite clear that it's not to hammer out some sort of broad-based agreement when it comes to Ukraine. Again, it's to get progress moving once again. There's been palpable frustration from the president over these last few weeks at how little progress has been made. I'll note as well, he posted on social media that he had spoken by phone to the president of Belarus, thanked him for a prisoner swap, indicated that he plans to visit with him in the coming weeks. Kind of striking, because the president of Belarus, President Lukashenko, is a very close ally of President Putin. So it begs this question, just sort of what the tenor of these conversations are going to be. Again, having a conversation with a close ally of Vladimir Putin going into this does raise an eyebrow.
It definitely does. David, can you get more into what's at stake during this meeting? I mean, it seems like both leaders have this different idea of success.
Yeah, so the phrase that really got in the crawl of a lot of European leaders was land swaps. That's something that President Trump said a number of times in the run-up to these talks. And I think that there was a fear among European leaders that President Trump was going to give away the farm, as it were, that he was prepared to kind of carve up this map of Ukraine when he sat down with President Putin. I think that an achievement here would be a continuation of these talks, a broadening of them to include President Zelensky going forward, another round of these talks. Kind of looking at the other side of that coin, I think a real lack of success would be if there's something that emerges from these talks that causes a stalemate to emerge between President Putin and President Trump, that they wouldn't want to meet again. If we see this press conference at the end of the day and both leaders aren't there, I think that would be a tell that this didn't go the way that President Trump hoped to. I think, again, going back to these European leaders, including President Zelensky, if President Trump emerges from these talks with some sort of design, concrete design about how he thinks Ukraine should be shaped here at the end of this war, I think that's something that would lead to a lot of pushback, a lot of blowback from the heads of state in Europe, who have expressed a lot of concern about what may or may not be talked about over the course of these talks.
David, if there is agreement on a second summit that would be include Ukraine, maybe even some European leaders, do we know when or where that would be?
We don't. And I mean, I think that there is this overarching sense of urgency on the President of the United States' part, going back to the campaign when he promised with some hubris that he thought he could solve this in 24 hours. It's his first duty on the job. Of course, that didn't happen. But again, going back to the frustration that we've seen manifest here over the last few weeks, I think that he feels frustrated, to say the least, at how he's been slow-rolled by President Putin. He did make a lot of overtures at the beginning of his second term, try to get President Putin to the negotiating table, and we saw President Putin not just push back on that, but really flout that invitation. So as far as what that second summit could look like, I think President Trump has said pretty forthrightly he's happy to play the mediator in those talks if necessary, or if that's something that these two other leaders, if Zelensky and Putin, want. But I think, again, the goal here is to get them to sit face-to-face with one another, and at least on President Zelensky's part, he's keen to have that happen. I mean, he was angling over the course of the last week to get an invitation to this summit. So he's expressed no hesitation about having that meeting with President Putin. I should say President Putin has not shown, it seems, much interest in sitting down with the Ukrainian president.
Yeah, David, before you go, can you talk about the last time these two sat together? I mean, it kind of didn't go over so well. So how do you compare that to when they sit down today?
No, it was a talk that had a lot of fanfare. It was in Helsinki back in 2018. That was the last time there was kind of a formal meeting between these two world leaders. And you'll remember it was kind of a media circus. People flew in for that. It took place over the course of a couple of days. And at the end, there was this very scrutinized press conference that took place with these two leaders side by side. There was that moment when President Putin gifted President Trump a soccer ball. And the kind of keystone moment of that was when President Trump said that he really trusted President Putin's read of what happened in the 2016 election more than he trusted the intelligence communities. And I think we saw a lot of pushback on that, a lot of blowback, indeed, from folks who had been in the administration, who had been in previous administrations, wondering why President Trump, as they saw it, kind of rolled over and accepted the word of the dictator of Russia, the president of Russia, over that of his intelligence community. So I think that's a cautionary note and something that's got to be front of mind for President Trump going into this, just the way that was seen by folks in the U.S. and outside of the U.S. And it'll be interesting just sort of how that shapes what follows the talks today. There's going to be direct talks between these two leaders. There's going to be kind of talks among a wider delegation after that, and a meal to follow, and then a news conference. And I think that's going to be something where we're really going to get the clearest sense of kind of the tenor or what the relationship is like between these two world leaders broadly, and when it comes to this one issue of what happens to Ukraine.
All right, David, thank you so much. We appreciate that. David Gura, correspondent for Bloomberg and host of the Big Take podcast. He is covering the summit taking place later today in Alaska. So we'll have more reporting on that, including Balance of Power, special Balance of Power, 5 p.m. Wall Street time today. They will be covering that in real time, so take a look at that. Right now, let's get back to these markets here. The tape looks mixed here. Nancy Tengler joins us, CEO and CIO of Laffer Tengler Investments. Hey, Nancy, we got a lot of earnings over the last 4 to 5 weeks. We've gotten a lot of economic data over the last couple of weeks. Markets hitting new highs seemingly daily. What's your take of this market? Is it over its skis, or do you think these earnings do support where we are here?
Well, thanks for having me, Paul. Listen, I mean, I think the valuations are a little stretched, to be sure. But if you look at the earnings growth, the raised guidance, and more importantly to me, the revenue growth came in at 80% above analyst expectations. I mean, I think the best number I've ever seen is 65%. So clearly there are a lot of cross currents. I mean, you can just look as far as the numbers we got today, where you had retail sales coming in kind of in line, but the revisions up were pretty significant. Import prices came in a little bit higher than expected, but the revisions from last month were actually down negative and reporting negative numbers. So there's a lot to work through. But if you just pay attention to earnings and you look at U.S. earnings relative to the rest of the world, last 5 years, we're up over 60%. Rest of world is up 30% cumulatively. So there's a lot going right here. And I don't think we even have the market factoring in the effects of the, we call it the Obama bill at Laffer Tengler, but the one big beautiful bill.
Obama bill, I like that. You know, since you mentioned that, I'm gonna go there because there was something in your note where you said the bears are wrong. Why is it? I think it has to do with that Obama bill.
So what we hear, you know, all of us, those of us who pay attention to the financial media all day long, and is that tariffs are going to have a deleterious effect on corporate earnings, on the consumer, and that may be true. But the offset from the savings in the one big beautiful bill for corporations, and by the way, I feel silly calling it that. Let's just call it the tax bill. But are enormous. The cash savings are going to be something over 150 billion if you factor in all 500 companies. Zion Research did the research that I'm citing, and they looked at 369 of the S&P 500, and they came up with cash savings of 148 billion. 38% of that's in the Mag 7. So it's 100% expensing, it's immediate interest deduction and R&D credits. So I think that has yet to be digested by the market.
Nancy, how do you think about concentration risk, the fact that so much of the S&P performance has been in a relatively or a very small group of technology-driven stocks here? How much of a concern is that to you?
Well, I mean, if you go back and look, Paul, at any sort of bear market period, it has usually been bull market period. It's usually been driven by a few stocks or a collection of stocks. By the way, we run very concentrated portfolios. We have a 12 best ideas portfolio, and then our regulars are 30 names. So I think we have seen broadening out. I do think, our investing theme has been old economy companies that are pivoting to the new technologies, and then the suppliers, which would be the Mag 7, the hyperscalers, et cetera. And so we're seeing a broadening out in the marketplace, in the S&P 500 across sectors. So, think of some of the industrial names that are, engaging with AI. Their margins have seen improvement. And I think the productivity numbers are grossly understated. So what we know after last week is that, and maybe even this week, there's some problems with the numbers. What productivity is calculated by output, the Bureau of Economic Analysis, and then jobs, the BLS. So what could go wrong? Two agencies combining forces. So I think if you look at really the kind of productivity we're seeing at the company level, it's pretty amazing. It's in retailers, pharmas, across the board.
Hey, Nancy, before you go, we have about a minute left. Rate cut expectations, right? They shift with every data point. Where do you put them now, considering all the data that we've gotten this week?
I think we get 25 basis points. The neutral rate is well below the Fed funds rate. I think all this jawboning should be left to people like us, and the administration should probably stay out of it. But the Fed is clearly behind. I think they were early with the last round of cuts, and I think they're behind on this round. So I expect to see 25 basis points reluctantly from the Fed.
Nancy, thank you so much. Always appreciate getting a few minutes of your time. Nancy Tengler, CEO and CIO, Laffer Tengler Investments on Zoom from, get it, wait for it, Lake Tahoe. How cool is that? Very good. Beautiful place to be in any season. I love to ski out there, and the summers are fantastic as well. Looking at these markets here, not much going on. Let's call it a quiet summer Friday. A little bit of red, a little bit of green. People not going crazy, digesting some of the economic data, probably digesting it from their beach chairs, most people in the market. But we're here, and we're going to have more coming up. Ryan Gould, Bloomberg Deals reporter, coming up next to discuss the U.S. government taking a stake in Intel.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, S&P, NASDAQ lower. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Traders sending stocks down from records after a gauge of consumer sentiment unexpectedly fell and inflation expectations rose. The S&P down 11 right now, retreating from a record at 64.57, on track for a winning week. Right now we've got the S&P down 0.2%. The Dow up 46. That is a gain of 0.1%. NASDAQ down 53, a decline of 0.2%. Our Mag 7 index pushing higher on a down day for the S&P. The Mag 7 index is gaining 0.1%. The 10-year 4.29%. The 2-year 3.72%. Gold up 0.2%. 33.42 the ounce. And West Texas Intermediate crude oil WTI down 1.1%. 63.26 for a barrel of WTI. Consumer sentiment fell for the first time since April. Inflation expectations, as measured by the University of Michigan, rose due to lingering anxiety about the impact of tariffs. And July retail sales rose in a broad-based advance, boosted by car sales and major online promotions. As for the overall backdrop, Jennifer Lee is senior economist at BMO Capital Markets.
I was very torn. I was like, do I want a strong number to signify, that the U.S. economy remains resilient, or do I want a weak number because it shows that the Fed is going to have to start cutting rates starting next month, and by how much? So I was torn, but I kind of lean toward, I want a stronger economy, a more resilient economy, and the retail sales numbers proved that.
Jennifer Lee of BMO Capital Markets interviewed this morning on surveillance. Among retailers, Amazon up 0.4%. Walmart shares, they're down 0.8%. Target right now down by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie. We have some big news out today, and that's pulling up Intel shares. It's pushing them up about 4% right now. So the Trump administration reportedly in talks with Intel to have the U.S. government take a stake in the company. What does this all mean? Let's go to someone who knows about it. It's Ryan Gold. He's Bloomberg Deals reporter, joining us live here in the studio. Ryan, thanks for joining us. What would a deal like this do?
I think this probably should be seen as a way to potentially shore up Intel's balance sheet. I mean, it's a company that's been struggling. It's losing money. It's really got an ambition to return semiconductor manufacturing en masse to the United States in a way that we've not seen in years. It's all centered around the Ohio plant. The Ohio plant has been seen as a way for Intel to become a shining light across the world. They said by 2030 it was going to be one of the biggest and the best in the world. Obviously, that hasn't been the case. It's been delayed quite a few times. So this investment, this proposed investment, should probably be viewed as a confidence capital type of arrangement for Intel. Give some confidence to investors that this is something they should stand behind because it has the backing of the most creditworthy institution in the world.
We don't do this very often, we being the U.S. government. This is a monstrous change in industrial policy. What are folks saying out there about this?
It is. I think, certainly among the people I've been speaking to, this is something that, it's a new dawn in a way. I mean, if you're a banker or a lawyer or anyone on Wall Street thinking about struggling U.S. companies in quote-unquote mission-critical industries or industries that are sensitive to the United States, is the government now an option for you? I mean, we think back to the financial crisis with Chrysler and GM and so on. I mean, that's years ago. I mean, the tide has turned since then, clearly. But it does seem as though, just given some of these other transactions we've seen, like MP Materials, like the almost, pay-for-play in a way NVIDIA agreement with AMD as well, the 15% that Trump struck to allow China to have these chips, it does seem like a new time, a new dawn for how to think about, the Trump administration's play with private industry.
So who's going to pay for this stake? I mean, we're hearing the Trump administration eyeing the CHIPS Act. Is that right?
Yeah, so far, I mean, we just ran a story this morning. Our understanding is that at least for now, the funding could come from the CHIPS Act. I mean, bearing in mind the CHIPS Act was passed in 2022. committing $280 billion in new funding for domestic research and manufacturing of semis in the United States. Intel was already poised to be the biggest beneficiary of the CHIPS Act. I mean, I think they were awarded $7.9 billion in grants for a commercial semi-manufacturing program. And they also struck an agreement with the Pentagon under their Secure Enclave program that was worth around $3 billion. So Intel's already seen quite a bit of this money. It remains to be seen exactly how much or what size stake the government will take.
Does Intel, do they welcome a stake by the U.S. government? Have they said anything?
They haven't said anything. I think one of the things that was kind of telling yesterday when we went to them for comment, they declined to comment on what they called rumors and speculation, but they did add that they were deeply committed to supporting the administration's efforts to strengthen U.S. technology and manufacturing leadership. I mean, make no mistake, Intel sees itself that it should be the leader in semiconductor manufacturing. It has always been in the shadow of TSMC as it relates to semiconductor fabs. I think they do feel as though this could be a potentially very good time for them to change course and return to the top of the channel.
So do you see this as just another intervention by President Trump? We had the 15% cut of certain semiconductor sales to China. You had this golden share in United States steel. I mean, can you dive more into that?
Yeah, I think, this is certainly, I just really want to draw a line under how unprecedented this is. I mean, this is a wacky suggestion, what we have here. Lip-Bu Tan, by the way, who, there are very few people who are as qualified as him in semiconductors. I mean, he sat on the board of Intel before he became the CEO. He left the board, then they ran a process, and now he's back as CEO. I mean, he was already making the point when he was on the board that Intel needs to sort out its manufacturing problem. The fact that the Trump administration is now coming in and suggesting that they could be behind essentially as a backstop in a way for what the company is looking to do there is turning conventional wisdom on its head for sure. I think to draw the attention again to the MP Materials deal, that was really interesting because it's about, loans, it's about outside financing. It could, they mentioned in as part of that deal, it could take the form of partnerships with other customers. I think it's really being seen as a blueprint for what the Trump administration is thinking about Intel here.
It could work. I mean, it could be really advantageous because we see Intel investing all this money in this new foundry plant in Ohio, but they don't have any customers.
Exactly.
And if the U.S. government was now a part owner of Intel, I think I might want to do some business with Intel.
Exactly. And I think you make a great point because we've been asking these questions since yesterday. If you're one of Intel's competitors looking across the way and thinking, okay, sure, we'd love to be in this business. What about us? That's the kind of scenario we're in now is Intel being seen to get preferential treatment from the US government? And what does it mean if you're another semiconductor company which has ambitions like Global Foundries? Global Foundries is major backer is Mubadala, the Sovereign Wealth Fund, but they're a semiconductor manufacturer. They have a few sites in the US, a few in Germany. You must, a penny for their thoughts.
Before you go, the timing of this, didn't the Intel's CEO just come back from meeting with the president at the White House? Was this kind of discussed during that time?
That was Monday.
Yeah.
And, we're now on Friday. It's crazy what difference a week can make. But, these plans were talked about on Monday between Trump and Lip-Bu Tan. You'll note that the Trump put out the Truth Social post after that meeting and said that he described him as an amazing man with a really interesting backstory. It was an about face, given that he just a day before called for the guy to be replaced. I think another point I'd note just on the politics of this, Paul, you mentioned Ohio. Ohio's a massively sensitive state for Donald Trump. It's where he has a very deep base of MAGA Republicans, and they won he's won there 3 times. So J.D. Vance, the vice president, is also from Ohio. Big source of tension for them.
Yep, very interesting story. Just, I think, really a fascinating story here. And just from a perspective of industrial policy, historically, it's not something that the U.S. government does unless, you're a GM or something and your risk is going out of business or something like that. So we'll have to see how it plays out here. Fascinating and fantastic reporting by you and your team. Ryan Gould, deals reporter, Bloomberg News. Pretty darn good on the radio, too, so we'll bring him back to the Bloomberg Interactive Broker. The guy's in a suit and tie on a summer Friday. I mean, you got to give him airtime for that. You got to give him airtime. So it's great reporting, folks. Follow it all on the Bloomberg Terminal and Bloomberg.com. We'll have more coming up. This is Bloomberg. Good morning.
to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. So, Paul, my daughter and I have these matching bracelets. They're Pandora bracelets. They're really cute. They have these little charms and everything like that. But I think we might stop at one because the price of them might start to go up. That's according to its CEO, weighing potential price increases due to higher tariffs. But we want to go someone who knows more about it. It's Deborah Aiken. She's Bloomberg Intelligence luxury goods analyst. Deborah, thanks for joining us this morning via London, coming in from Zoom. So what do we know about these price increases? I mean, how much is this going to affect the consumer?
I think, well, the price increases are still very much to go through the market in the jewelry industry. We have already seen the higher end brands, Hermes and others, popping through prices of around 5 to 6%. And then on top of that, with their spring summer collections, an extra 4% into the US. So we would expect, when we did some deep analysis and because of the different tariff situations, we would expect maybe 4% pricing additionally to come through from Pandora, for example. And that's very much a difficult play when other prices are going up and in a value-orientated offer.
Well, how about in the watch business? Because that's one I'm interested in. I mean, Lisa and her daughter have the bracelets. I get it. I'm kind of a watch guy, not a crazy one. But boy, the tariffs, we're talking about 39% tariffs on stuff coming out of Switzerland, little old neutral Switzerland. That could be a problem for the watch manufacturers. What are they saying?
Yeah, so I think, and the watch manufacturers and the retailers too, because I think they'll take a bit of the brunt, a lot of the brunt of some of the biggest names. So Richemont and its brands, Swatch and all of its brands, Swatch's brands were all produced on the watchmaker side out of Switzerland. Richemont on watches and also its Cartier brand, a lot of that out of Switzerland, mostly out of Switzerland. So the idea there, when we did our analysis, they're not saying anything on numbers yet, but in order to try to manage EBIT margin, we would say that they would need about 9% from Richemont. They do have very high gross margins, so low cost of business. That is one thing that will help them, but even so, we are going to see mid-single-digit prices expected to be passed on to the consumer. And the big thing coming from, the numbers this morning from Pandora were very much that actually they haven't been passed on yet in key categories, with jewelry being one of them because they're gifting occasions. And so a lot of that inflation is to come into the US market.
So is Pandora's U.S. exposure lower compared to its rivals?
If we think about it from a global perspective, no. But if we're looking at the US, if we're looking at the US consumers, then yes, it's 1/3 of sales for Pandora globally, but it is its biggest market, and it has been the engine for growth through the first half of this year. It's up 8% on a constant currency, 12% including the store opening it's doing. And that's versus 8% overall for the business. So it is the key driver. But then otherwise, if you think about the business overall on the jewelry side for branded business, it's still hugely fragmented. So Pandora only has a 2% market share, and it's one of the leaders. So a lot of pricing to come through, lots from India and others also, with those tariffs coming into force from the beginning of August.
So, Deb, you cover all of global luxury here. What are your companies generally saying about the U.S. market and the tariff situation? Are they suggesting that makes the U.S. market less attractive to them? And what are their policies for actually dealing with the tariffs?
Yeah, I think twofold or threefold, should we say. One of them is cost saving. All of these companies are working avidly on cost saving. They're also adapting portfolios, which does take a little bit of time. So we'll see more of that in the autumn, winter. They're widening price points. So Prada, for example, had said, we realize we need to be more at the top of the price point, but equally we need to be further down the architecture. So they're going to be one of many companies that will do the same into the US market. But generally, I would say actually the market from the mid-luxury upwards has been particularly robust. And we've seen the consumer confidence is still very much at a low, but it is picking up in the higher end income brackets more quickly than others, and that's typical. And a trend that we've seen over the long term from the different income bands in the US.
Deborah, we got about a minute left. How is the luxury market doing in China? That's been kind of a sticking point.
It has. It's very, very slow to recover. Two of the things we discussed just this week were thinking about the fact that there's an extension between US and China on the tariff situation until the 10th of November. So another 90-day pause, so to speak. And we think that's negative because both the US and China are running on very low consumer sentiment, with China 4 years in the doldrums. And the numbers that we're seeing out today on kind of CPI, on different retail analysis, highlights that the Chinese consumer is really resolute on holding on to their money or shopping very high end or finding something that's local. So there's a lot more localized competition, and they're not traveling the way that they used to. It's all held off until they really know what's going on. So difficult outlook for the first half of 2026 for luxury.
All right, Deb, thanks so much for joining us. Deb Aiken, she is luxury goods analyst at Bloomberg Intelligence, one of the best. So we always appreciate getting some of her time. You know, when I walked at Penn Station, I walked down Fifth Avenue or Madison Avenue, and I'll tell you, the European tourists are out big time, but Chinese not so much. And I used to see them, you know, just in throngs, but not as many.
And
so
you're not dipping in the stores, no?
No. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market and industry research. Bloomberg Intelligence continues now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo, Paul Sweeney live here on our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to talk to Natalia Drozdiak, a Bloomberg national security reporter on the upcoming Trump-Putin summit in Alaska. Mary Shore, she's a senior equity analyst at Columbia Threadneedle. We always like to chat with her when retail sales come out. She covers the retail business for Columbia Threadneedle Investments. Great voice on all things retail. And it's Friday, which means we talk about municipal bonds as we do. Shruti Singh, Bloomberg News municipal finance reporter, will give us the latest on what's happening in the big, beautiful municipal bond market. Ben Elliott, Bloomberg Intelligence consumer finance analyst, talking to us about potentially PIMCO warns Fannie Freddie IPO to Royal Mortgage-Backed Securities lift mortgage rates. We'll talk about Fannie Mae, Freddie Mac, and a potential IPO there. That could be huge. But right now, let's go to Charlie Pellet and get a Bloomberg business.
I think very much we are looking at a mixed market right now with the Dow pushing higher, the S&P, NASDAQ, they are both in the red. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Just getting word from the National Hurricane Center that Aaron has become the first hurricane of the 2025 season. S&P lower by 16 right now. That is a drop of 0.3%. We've got the Dow up 28, gain there of 0.1%. NASDAQ, the composite index, down 85, lower by 0.4%, while the NASDAQ 100 index down by 0.5%. Our Mag 7 index, which had been higher for much of the morning, just turning lower as well, down now by 0.1%. The 10-year, 4.29%, with the 2-year, 3.72%. Gold up $8 the ounce. Spot gold, $33.43, up by about 0.2%. And West Texas Intermediate crude oil down 0.6%, $63.56 a barrel. Consumer sentiment fell for the first time since April. Inflation expectations rose due to lingering anxiety anxiety about the impact of tariffs. Joanne Shu is Director of Surveys at the University of Michigan. She was a guest this morning right here on Bloomberg Intelligence.
Essentially, consumers are being increasingly worried about inflation in the future and also prices right now. We had a surge in the share of consumers telling us that high prices were a concern for big ticket purchases as well as their personal finances. And so that is bleeding through to their expectations for the future. In addition to that, they're also expecting unemployment to worsen. So we're really seeing a softening of views across the board for consumers.
Joanne Shu of the University of Michigan. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Again, keeping an eye on crude oil. It is rich reading right now. West Texas Intermediate down 0.8%. Among big oil stocks today, ExxonMobil higher by 0.7%. We've got BP up 0.9. The ADRs there. And Chevron Corp, it is advancing by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. As always, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Let's take a look at some of the stocks on the move today. I am Paul Sweeney, Lisa Mateo, and we're joined by Bloomberg's Emily Grafeo. Emily, what do you got for us?
Hi, guys. So I'm looking at Applied Materials right now. The ticker is AMAT, A-M-A-T. It's actually falling the most since March 2020 right now. It's down about 13%. This is the largest American producer of chip-making gear, but they gave a disappointing sales and profit forecasts. And what it's kind of bringing into question here is, what does this mean for the rest of the semiconductor AI supply chain? So they said they're seeing less demand from customers in China. Some of those customers could be companies like TSMC that buy from them. You have to look at what the street said. Bank of America actually downgraded their rating on the stock to neutral from buy, giving it a price target of 180, which is actually still above where it's trading right now. But they said the downgrade reflects Applied Materials weakening, China and leading edge business weighing on growth in the medium term. And that stock is actually down 22% over the last year right now.
Okay, Roblox you're talking about, their shares are lower. Every Christmas I have to buy my nephew these Roblox cards for him to play the game. So what's going on now?
It's a really popular stock, and it's also a really popular game with children particularly, but it's drawn some scrutiny here from the Louisiana Attorney General. So they actually said in a lawsuit filed against the online game maker that the products are used to facilitate and distribute child sexual abuse material and the exploitation of minor children. No, it's not good at all. And it's something that, this isn't the first that we've heard about potentially there being problems with child safety on Roblox, but it actually hasn't hurt the stock that much in the long term. The stock is up 100% year to date. So this news is weighing on the stock right now. It's down about 7%, ticker RBLX. But again, we'll see long-term what the outcome is of this lawsuit. Definitely one to watch because, again, it's a popular stock, it's a popular game, but these are some really serious concerns here.
UNH, United Healthcare.
Yeah, so we'll end with a stock and a potentially more positive move here. The stock is up 12%, biggest jump since 2020, and it's all on Warren Buffett buying the stock. So we got 13 F filings from Berkshire Hathaway last night. Let's see, Buffett acquired 5 million shares of United Health, which grants Berkshire a stake worth $1.6 billion. So we see this all the time. If Buffett buys something, the stock goes up. I'm not sure if there's any much more here than that. We know it's been a struggle for United Health. They've had a number of crises, rising costs, regulatory scrutiny as well. They missed earnings for the first time in more than a decade, actually, in April. So hasn't been a good run for United Health. But we know that Buffett, he likes a bargain. So that's clearly what we're seeing here. Yeah, he's buying a stock on sale.
He also bought a billboard company, Lamar Advertising, which I know very well. So that stock's up about 2% here. So, all right, Emily Grafeo, thank you so much. We appreciate that. Emily Grafeo covers all the markets for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Of course, the news today we saw earlier this morning, President Trump aboard Air Force One, jetting off to Anchorage, Alaska for the summit with Russia's Mr. Putin. And hopefully they can make some progress on what is happening in Ukraine. So more reporting on that. Natalia Drozdiak, I got it, national security reporter for Bloomberg News. She's down in Washington, D.C. Natalia, really, what are fair and reasonable expectations for this summit? Because this is an unusual summit. It came together in like 10 days. So I'm not sure what expectations should be.
Yeah, they they rushed the organization of this big summit, which is quite a big deal because it's the first time in 10 years that Putin has actually been on American soil, and the first time that he's met an American president since he invaded Ukraine. So for him, it's a big win in that respect. But in terms of the realistic expectations for the outcomes today, we've seen Trump try to temper expectations in the last few days that we won't see a major ceasefire or a major agreement on a broad settlement. At least he is still hoping for some sort of an immediate ceasefire or at least a partial one. It remains to be seen whether Putin will actually agree to that, given that he has little incentive to actually make concessions right now. There's also a chance that, we see something kind of a bit more in between, which is, just a broad and more vague agreement to look at the next steps together in terms of how to resolve the war in Ukraine. There might also be some mention in there about exploring commercial ties and also exploring some sort of deal on arms control.
Natalia, can you get into the messaging that we've heard, from the president over the past few days? It started out strong before this meeting. Then he started to downplay, saying that there could be a second meeting. And now we're getting these latest tweets like Putin's country is not doing well economically. I mean, why this shift in the messaging?
I think there's some recognition in the White House that they really do need the Ukrainians and the Europeans at the table to reach any sort of meaningful agreement. And obviously, it's just going to be Putin and Trump at the table tonight. And so that's why we've also heard Trump kind of, just underscore that there's not going to be any sort of discussion about territorial land swaps this evening. That's something that Putin has been pushing for. He basically wants to take control of the entire Donbass region, including territory that his forces currently don't even occupy. So Ukraine would have to cede even more land just as a precondition for a ceasefire. So obviously the Ukrainians and the Europeans have ruled that out. So that has, I think, probably forced Trump's hand, at least in terms of becoming a bit more realistic about what the possibilities are for today.
Natalia, typically at these summits, afterwards there is a joint press conference. Do we expect one for today's summit?
There's been a bit of back and forth about that, but the White House has said that there's most likely a joint press conference, which would be quite interesting because we remember the last time Trump had a joint press conference with Putin, which was in 2018 in Helsinki. And that was, I think, I would say a failure for Trump because he effectively sided with Putin over the U.S. intelligence agency's assessment that Russia meddled in the 2016 elections, and as a result of that, faced major backlash from both parties. So, I think if that does happen, he's going to have to find a way to appear, strong, at least not siding with Putin necessarily, in ways that give leverage to him.
All right, Natalia, thank you so much for that. We appreciate getting a few minutes of your time. Natalia Drozdiak, national security reporter for Bloomberg News. She's down in Washington, D.C. All right, let's get back to these markets, and particularly the retail sales. We got the retail sales this morning at 8:30. Lisa Mateo broke that at 8:30, by the way. They kind of came in line, maybe a little bit soft, but it just kind of raises the question, how's the consumer doing out there? Are they buying stuff, and kind of, are these tariff issues, are they causing consumers to pull back? And if so, to what degree? Mary Shore She's got some answers to some of those questions. She's a senior equity analyst at Columbia Threadneedle Investments, and she's up in Boston. Hey, Mari, let's start with kind of the retail sales that we got this morning. What was your take?
Thank you for having me. I think looking at the July retail sales today, they look overall solid, a slight acceleration versus last month. And importantly, we did see stronger results in categories like e-commerce and department stores, continued weakness in some of the bigger ticket categories that have been weak since the pandemic, like consumer electronics and home. But overall, when I look at the consumer, I see a very stable picture by category, channel, and income demographic. There is still a lot of concern, I should say, building concern as we move into the back half of the year and start to see a greater impact from tariffs, as you just mentioned.
Hey, Mara, what's your take on the revisions? Because that's what a lot of people were talking about, how it just got revised up so much higher.
Yeah, I mean, whether it's been the jobs data, the retail sales data, it seems like there has been a lot of focus on the revisions. But again, I think overall it shows that the consumer, the spending trends have been very stable and incredibly strong, actually, as we move through the year, despite concerns about weaker sentiment and tariffs hitting. But we really have not seen that in the government data or in the numbers that the companies are reporting.
So, Mari, we're going to hear from your retailers. You cover all the retail companies out there. We're going to start hearing from a lot of the big ones coming up here. What do you expect to hear, or what have you heard, or what do you know about strategies for dealing with tariffs? How much do I take in my margin? How much do I pass along to consumers? What are the retailers saying? What do you think you might hear?
Yeah, well, to date, it's been a pretty strong second quarter for the companies that have reported. They've reported stronger sales, stronger gross margin. However, a lot of the stocks have reacted negatively given a weaker revenue outlook into the back half of the year with higher inflation and potentially weakening jobs, and also a greater gross margin hit from tariffs. And so
I think we lost Mari Shore.
We did. I was waiting to find out about Walmart or Target.
Yeah, so here I did the SPX, then hit index EVT, and that shows you when all these companies are reporting. So just starting next week, you got some of the big ones. You know, you got Target, you got Lowe's, you got TJX. Thursday, you got Walmart. So you're going to get a good sense of two things. One, I think, A, how is the consumer out there in terms of just buying demand? And two, what are some of these big retailers doing in terms of passing on tariff costs? How much are they willing to take in the margin? How much are they willing to pass along to consumers? Because that's kind of where we are now. We know what the tariffs are for the most cases. Now it's just a question of who pays. So Mari, just real quickly, how do you think these retailers are going to deal with the tariffs in terms of passing along versus taking it in their margin?
Yes, I'm sorry about that. So I think the companies largely are splitting it a third, a third, a third. So a third is being shared with their vendor partners, a third is hitting their gross margin, and a third they are pricing through or they're passing through in the form of higher prices. But as tariffs build, as we move through the year, I think we're going to see even more coming through in terms of pricing.
Hey, but before you go, I heard someone talking about this earlier. They kind of feel torn sometimes when it comes to retail sales data. Like, do you want the strong number to show the resilience, or do you want the weaker number to show that the Fed has to cut? Do you ever feel that way?
Yeah, right. I think it's a very similar question when looking at inflation and jobs and a lot of the government data we're seeing. You're right. I mean, the stronger numbers are encouraging, but obviously the stronger the numbers, the less chance of cuts, which, will overall, I guess, be good for the market. So yes, it is a little bit of a give and take there. And I think we're seeing that in a lot of the government data.
All right, Mari, thank you so much for joining us. As always, we love checking in with Mari when it's retail sales day. She gives us a good perspective. She covers all the equity stuff for Columbia Threadneedle Investments up there in Boston. That's Mari Shore. And looking at the markets here, a little bit of red and green on the screen still. The S&P's rolled over down about 11 points. The Dow's up 80. Thank you, United Healthcare. Thank you, Warren Buffett. NASDAQ's down 66 points. I'm going to call out WTI crude oil for Alex Steele. It's off a little bit, $63.50. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The Dow up 90 points right now, above 45,002 right now. That is a gain of 0.2%. The S&P, though, retreating further from a record, down 11, 64.57 right now, down 0.2%. The Nasdaq Composite Index down 0.3%. 10-year 4.30%. Gold is up $7 the ounce, up 0.2%. $33.42 the ounce, while West Texas Intermediate crude is down 0.8%, $63.45 a barrel on WTI. Retail sales up in July in a broad-based advance boosted by car sales and major online promotions. And lots of big retailers will be reporting next week, including Walmart, Home Depot, and Lowe's. Mari Shore is senior equity analyst at Columbia Management. She was a guest moments ago right here on Bloomberg Intelligence.
Well, to date, it's been a pretty strong second quarter for the companies that have reported. They've reported stronger sales, stronger gross margin. However, a lot of the stocks have reacted negatively given a weaker revenue outlook into the back half of the year with higher inflation and potentially weakening jobs, and also a greater gross margin hit from tariffs.
Mari Shore of Columbia Threadneedle interviewed moments ago. Sources tell Bloomberg the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in the beleaguered American chipmaker Intel. Intel up 3.6% after earnings today. Applied Materials down 13%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis today is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's talk municipal bonds. Why? Because it's Friday, and that's what we always do around here, Lisa. Shruti Singh joins us, municipal finance reporter for Bloomberg News, based there in our Chicago bureau. Shruti, thanks so much for joining us here. Back to school here. I know Chicago schools have been struggling here, and talk to us about how the municipal bond market may be coming to the rescue or just dealing with what's happening in the Chicago schools there.
Yeah, so more than 325,000 students are going to be heading back to school in Chicago next week. And while they're doing that, the Board of Education and the administration is trying to figure out how they're going to fund all the expenses. Their budget that was proposed earlier this week is about $10.25 billion, and they're short about $734 million. So that's the deficit they're expecting for this academic year. Their fiscal year actually started in July 1st, but they're still figuring out how to balance that budget, and there's a vote due at the end of this month. Investors are watching very closely, and the spreads on some of the bonds for Chicago Board of Education debt have been widening since the beginning of the year.
And what about local government bonds? You have something on that. How are they doing? Better?
Well, you know, it's a mixed bag in terms of state and local bonds across the muni industry. So if you look at just the broader tax-exempt index, it's just up slightly in terms of a positive return. The biggest area that we've seen gains this year is in taxable bonds for munis.
How's credit quality out there in the municipal bond market, Shruti? We really haven't seen that many distressed areas. Is that still the case?
I mean, munis in general don't have the high levels of distress and defaults, and that's why they're considered kind of a safe haven when there is market deterioration or there's challenges in the market broadly. But, you know, there are concerns about some deterioration in credit quality because a lot of state and local munis are winding down the amount of money that they got from federal pandemic aid, and that really lifted everybody in the last few years. They had gotten billions of dollars across the board that helped them with revenue replacement. It helped bolster economic growth in general. Now we're coming to the end of that aid, and there's questions about what they're going to do with their budget going forward because they just don't have that buffer anymore.
Hey, how has issuance been to date?
This year, issuance has been very strong. It's up about 22% or so in the long-term municipal market, and it's headed towards a record this year.
Why? Why are they doing it? I mean, last year was a record too. Why weren't they borrowing a few years ago when they could have borrowed with 0% interest rates?
Yeah, so it's a mixed bag. So the federal pandemic aid that I mentioned to you, for a couple of years now, it really helped them in terms of revenue. And now that aid is coming to an end, but those needs, whether it's infrastructure or other things, they don't end, right? So governments still need to provide road replacement, bridge building, school construction, things like that. So right now there's some pent-up demand for what they need to do. There's also some expectation in the market. They were kind of waiting, I think, a little bit for interest rates to come down. We've been in this higher for longer period a while now, and so that pent-up demand is coming to market.
All right, Shruti, thank you so much for joining us. Shruti Singh, municipal finance reporter for Bloomberg News, coming to us from Chicago. One of the stories in the mortgage market that really got my attention is potential IPO of Fannie Mae, Freddie Mac, because I'm just thinking about my finance group bankers on Wall Street and what a boondoggle that would be for them, but also concern here what it might mean for mortgage rates out there. So let's check in with Ben Elliott, consumer finance analyst, Bloomberg Intelligence. So Ben, talk to us about Fannie Mae, Freddie Mac. Is there going to be an IPO of these companies, and if so, when?
Well, Paul, it wouldn't really be an IPO since the companies do still trade over the counter, but Treasury's talking about different options, maybe selling some of the shares that they currently own, maybe raising some new equity at the market. But I think the core of the issue here is we don't know what Treasury's planning to do, and so they're talked about timeline, which was by the end of 2025, seems to be very optimistic because, as far as we can tell, none of the work has been done.
So what could this mean for mortgage rates? I mean, how much higher could they go, if any?
So there are different estimates out there that, they could go up 20, 30 basis points. Some people suggest maybe a percentage point. If you sort of think about agency MBS, most of the premium there over treasuries that investors get today is because people can prepay their mortgage and they have negative convexity, but not because of credit risk, right? So if you reintroduce credit risk as a result of making the companies private and cutting off the federal government guarantee, then that could add relatively substantial price there.
So just like a rewind back to the terrible time of the great financial crisis, the government basically bailed out Fannie Mae, Freddie Mac, and they now have significant equity ownership of those two entities. And the question is now the time to sell down some of that equity interest? Is that the story?
Yeah, that's part of the story. So they own warrants to purchase 80% of the common stock, but they also own a senior class of preferred shares. And that has a par value around 200-something billion, but it also has a liquidation preference, which rises each quarter along with Fannie and Freddie's earnings. That's hovering around 350 billion. So when you hear different people on the street talk about the potential to raise, $300 billion, that's actually, from writing down the senior preferreds, that's actually not enough really to pay back the stated value or the liquidation preference of the senior preferreds. So a lot of the uncertainty here is what will Treasury do with its senior ownership stake as opposed to just its commons.
Hey, Ben, can you dig into what are some of the pros and cons of making these companies private?
Yeah, sure. So, I mean, the obvious con, right, is that Fannie and Freddie work extremely well. They're providing a ton of liquidity to U.S. home buyers. We have a unique financial product in this country, which is the 30-year fixed-rate mortgage at incredibly low rates. The credit quality is fantastic. It's better than really it's ever been. And so you have to ask yourself, what is the benefit of disturbing that and going back to sort of the pre-2008 status quo that led to what occurred with the companies in the financial crisis. But if you sort of, take a sort of 30,000-foot view as a more theoretical observer, right, maybe there's some benefit in getting the government out of private capital markets. Maybe introducing competition could increase innovation, but it would have to be done in a really careful way that ensured that we never sort of return to the risks that were inherent in the business model prior to the financial crisis.
So, Ben, you cover the consumer finance industry. What are the companies that you cover? What are they telling you about the health of the consumer? There's a lot of places I like to go to get kind of firsthand information. Restaurants, for example, like talk to Mike Halen, and he gives you a view. but also for you, like the consumer finance companies, because they bank everybody and not just the big blue chips. They bank, the small and some of the more questionable credits. What are they telling you?
Yeah, so our credit card companies put out a really interesting data set every month with their delinquencies, their net charge-offs, and their loan growth. And the story is sort of two-part. Loan growth is slowing. People are spending less money on their credit cards. Maybe consumer confidence is declining a little bit at the margins, but credit is still fantastic. It's still, right at about 2019 levels. It's trending sort of down as though it might eclipse those levels. And by and large, borrowers are very resilient. But if you sort of look down into the weeds of some of the more marginal lenders who are doing things like store credit cards, those people, those companies say that they see some of their consumers struggling and managing through things like inflation. And so there's a potential at the margin if the economy worsens for that to create some trouble.
But the question is, are they paying off the credit card debt? Or are they...
They're paying it off.
Oh, they are? Okay.
Yeah, and delinquency, importantly, which is a leading indicator of charge-offs, is still improving. And that gives you about a 6-month view into charge-offs just because of how they work and how long it takes. And so right now, if the trend were to continue, credit would keep improving over the next 6 months.
All right, Ben, thanks so much. Appreciate it. Ben Elliott, consumer finance analyst for Bloomberg Intelligence, talking about it potentially equity sales by the U.S. government of some of their equity stakes in Fannie Mae and Freddie Mac, which could be seriously big transactions. But as Ben was suggesting, a lot of complexity in there. So we'll stay tuned for that here. I pay my credit cards down. I've done that since day one.
And that's what I teach my kids.
Yeah,
my
same
son,
here.
I tell
Same
him,
here.
You're going to get a credit card. Oh, you got to pay it in full. That's the rule in this house.
Exactly. I think I did that from day one. I don't ever remember just doing the minimum. I might have when I was a kid or something, but anyway, I don't know. But that's just a racket there. That is a racket, and that's how people can get
30% interest.
Yeah, that's how people can really get in trouble. They kind of overspend, and then they kind of get into that thing. I'm just going to do the minimum or something less than the full thing, and that's tough out there. Looking at the markets here again, still red and green on the screen here, folks. We got the S&P down 12 points. The Dow's up 100 points, and the Nasdaq's down 74 points. And Tom from the Upper East Side mails in. He wants his daily Bitcoin quote. We'll call it 117,000, and we were 124,000 just a day or two ago. So the volatility in the crypto space remains. All right, coming up, we're going to have some more conversation here. We'll check in with Dr. Ariel Cohen, Senior Fellow at the Atlantic Council on Trump, Putin. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Traders are sending stocks lower from records after a gauge of consumer sentiment out of the University of Michigan unexpectedly fell and inflation expectations rose. The Dow, though, holding on to a gain of 76 points now at 44,988, up by 0.2%. United Healthcare certainly driving gains in the Dow today. UNH up by 13.6%. S&P down 18, drop there of 0.3%. Nasdaq down 110. The Nasdaq Composite Index down 0.5%. The 10-year at 4.30%, with a 2-year 3.74%. Gold up 0.3%, 33.43 the ounce. And West Texas Intermediate crude down 0.7 now, 63.48 a barrel on WTI. Bitcoin down 0.6%, just above $117,200. Retail sales rose in July in a broad-based advance boosted by car sales and major online promotions. But the question remains, how much of an effect are tariffs having on the consumer? Kate Moore is Chief Investment Officer for Wealth at Citigroup Global Markets. She was the guest this morning on Bloomberg Surveillance.
We're having a pretty robust debate across Citi on what the pass-through might be. And I think, as we all know, there are the three buckets. What does the supplier do? What is the importer do? And what, kind of gets passed through to the consumer. And it feels like it's a moving target, depending not just on the industry and the commodity, but on the flexibility of that company and how sort of captive their consumer base is.
Kate Moore of Citigroup. You can hear more of that conversation on the Surveillance podcast. Recapping stocks lower right now. S&P down 19, a decline of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. Well, later this afternoon, President Donald Trump, Russia's Vladimir Putin, they're going to sit down for this historic summit in Alaska, and they're trying to make progress on ending the war in Ukraine. But what is at stake? We want to learn more about this and so much more. Let's go to Dr. Ariel Cohen, Senior Fellow at the Atlantic Council. Dr. Ariel Cohen, thank you for joining us. So both leaders seem to have this different idea of what to expect from this meeting. So can you explain what each one is looking for?
Trump wants the laurels of a peacemaker. He wants to stop the war in Europe. Putin wants to grab as much territory as he can. He lost up to 1 million people in killed and wounded. But he is committed to Russia's war effort because he's trying to change the balance of power in Europe. This story is at least 400 years old. I'm reading the biography of the Romanov dynasty right now by wonderful British historian Simon Sebag Montefiore, and you see 17th century, Russia is fighting Poland and Sweden in Ukraine and grabbing one swath of Ukrainian territory after another. Europeans are divided. Sounds familiar? Because it is. The important aspect of this is China. China now subjugated Russia. Russia is a junior partner for China. Trump thinks, I think erroneously, but he's trying to drag Russia away from China. Whether he succeeds in that or not remains to be seen. He said that this summit is 75% successful, 25% a chance of failure. I think it's reversed. 25% chance of success, 75% chance of failure.
So, Ariel, given what we know now, how do you think the situation in Ukraine will likely unfold going forward? How do you think it'll play out?
The Russian offensive in Ukraine is slow, but they are increasing month by month the size of the territory they are occupying. The Ukrainian army has a shortage of soldiers. It still has some weapons. I talked to Ukrainian generals. They're saying the solution is not more soldiers to throw into this Russian-imposed mid-grinder. The solution is more, better weapons. And the U.S. is now willing to provide these weapons if the Europeans pay, which is always a slow process. Basically, the West collectively, us and Europe, did not provide enough weapons to overwhelm Russia when Russia was on the back foot in 2022. Now we probably are better off finding a solution for a ceasefire. Whether Trump and Putin succeed in doing that, with Putin saving face but not raping Ukraine in the process, remains to be seen.
Dr. Cohn, do you think there'll be a trilateral meeting between, President Trump, Zelensky too, on top of it, and Putin?
Russia is signaling. I just saw yesterday a statement by one of the senior Russian diplomats that they will not recognize Zelensky. They will not deal with Zelensky. They hate Zelensky. They would like to have new elections and put somebody who is much more pro-Russian. And by the way, again, this is a Russian tactic in Ukraine for centuries. They want a puppet. And the other thing is Russia is signaling and trolling the United States. Russian Foreign Minister Sergei Lavrov showed up in Alaska with a sweatshirt that says USSR on it. And this is from the administration that understands what a collapse, what a disaster the USSR was. They lived through that. They know that USSR was a failed empire. So they're still trolling us. They still want more territory. Putin wants a Slavic empire with Ukraine and Belarus and maybe some pieces of Kazakhstan and Georgia. But he wants a bigger, better empire instead of a democratic Russia.
Is there a way for President Trump to really have a real win here in Anchorage today with these negotiations?
The only way forward, I think, if Putin does not agree to freeze the conflict at the current lines. This is something both the Ukrainians and the Russians could agree upon. Freezing the current fighting at the lines they are at and moving to something like the Korean ceasefire, the Korean armistice that is holding now for 80 years. If that is not agreed upon, if Russia continues, Trump needs to make very sure and say, Vladimir, I like you, blah, 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 but here's what's going to happen. We're going to impose secondary sanctions on all companies that buy Russian oil. We're going to arrest the Russian shadow fleet, the tankers that are transporting Russian oil. We're going to go and seize the remaining bank accounts of the oligarchs, those which are not seized yet, etc. So it's only the economic sanctions and the outcome in which Russia is running out of money. Historically, again, Russia would stop a war when it doesn't have money to pay the soldiers or there is a danger of an internal economic collapse, as it happened, for example, in 1916, before the two revolutions that brought down the Romanov Empire. So only economic pressure, more weapons to Ukraine, and a united front with Europe can stop Putin in Ukraine.
Ariel Cohen, thank you so much. We always appreciate getting your perspective. Ariel Cohen, Senior Fellow at the Atlantic Council, joining us here. And stay with Bloomberg for complete coverage of the Trump-Putin summit in Alaska throughout the day and at night as we take you through live through the joint news conference expected later this evening on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast channel on YouTube. So we'll have you completely covered there. Balance of Power, they're going to have a special programming from 5 to 9 p.m. Eastern Time this evening on following the summit there. So we'll have complete coverage. Looking at the markets here, again, a little bit of red and green on the screen still, not much happening. I guess a typical Friday in August. The S&P is down 20 points, the Dow's up 80 points, and the NASDAQ's down 116 points, which is about 0.5%. The VIX still below 15, just barely. Looking at the yield space, 10-year Treasury yields up a couple of basis points, 4.30%. The 2 years at 3.75%. So still about 55 basis points of steepening in the yield curve. WTI crude oil, it's lower just above $63 an ounce, and gold's a little bit higher. Let's call it $3,300 an ounce. We're going to have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Live Podcast, and that's where you'll find us. So news up in the Boston area. Boston mayor accuses ICE of keeping secret who they are arresting. We want to go to our Brooke Sutherland. She is Boston bureau chief and author of the Industrial Strength newsletter for Bloomberg News. Brooke, what's going on up there in Boston?
Boston, earlier this year was really sort of particularly in the crosshairs of the Trump administration and what ICE was trying to do as far as deportations. Tom Homan talked about Boston in particular and really focusing on this area. And what the Mayor Michelle Wu has really been trying to do is communicate with communities here and tell them, what their rights are and how to interact in these situations. But what she's also done is, file freedom of information requests, trying to get more information about who exactly ICE is arresting in Boston and on what grounds that they're stopping people, including any criminal record information, and also where these people are being located. And what she told us when she came in this week for an interview at our Boston office was that she's not getting any information from those requests and has not been able to, get any details from ICE as far as who exactly is being detained and why. Even some basic details in terms of, ICE asking Boston to follow through on detainer requests and saying that the city hadn't fulfilled all of its appeals, but the city doesn't have, the number of requests that the ICE has said that they made. And so, the mayor has expressed some frustration about wanting to get that information, wanting to get that basic detail about how ICE is operating in this city.
So has ICE responded to any of this? I mean, have you given a reason why they're not handing over the information that she's asking for?
No, not as of yet. And the acting director of ICE actually, when she initially made these requests, made some comments to the Boston Herald about welcoming this push for transparency, and to sort of show what the impact of some of these immigrants were having in Boston. But this has really been, a complaint that, we've heard not just from Boston, but from other cities about, the secrecy of ICE's operations. And they're also really pushing back against, what Trump has said, that these immigration roundups are really focused on the worst of the worst, is what Trump has called it, and really targeting people with criminal records. And to hear from Mayor Wu, she says that's not true. And that, they're ensnaring more and more people who don't have criminal records. And we also had some separate reporting from Bloomberg News that more than a third of the arrests that ICE made last month were people who did not have criminal records, which is an increasing number.
Brooke, just give us a sense of how big the migrant community is in the Boston area. We know here in New York City it's always been a big issue, plus and minus. How about Boston?
Sure. Like any major city, there is a significant population of immigrants here, and it's also home to so many major universities, which also rely on international students for, a significant portion of their student body. And so, it is really a key issue for Boston, and one that the city and the state are very focused on.
And Brooke, there's an election coming up in Boston. Michelle Wu running against Josh Kraft. So how is that race shaping up?
Sure. And so, we're heading into a preliminary vote here in September that I think will be really telling in terms of the state of the race. There was some polling earlier this summer that showed the mayor with a pretty significant lead over Josh Kraft. And so it will be interesting to see the extent to which he can close that gap and make up that ground. And then the general election for the mayor's race will take place in November. But Mayor Wu, she's really emerged as one of the chief critics of the Trump administration's policies. She went to Congress in March to testify alongside the mayors of New York and Denver and Chicago about sanctuary city policies. And that was really a big moment for her that put her more on the national stage and really sort of heightened the attention on the criticism that she's made of the Trump administration and her efforts to push back on that. And I think that's given, some pretty meaningful momentum to the campaign here in Boston, which is, not a place that Donald Trump won in the last election and does, tend to favor Democrats. And so I think seeing her communicate effectively on those points has been very helpful in her campaign.
Brooke, you're the Boston bureau chief for Bloomberg News, but I know you're not a native Bostonian. I see the picture of Boston behind you. I'm going to assume most of Boston is out at the Cape or somewhere along the coast there. Is there anybody in Boston today on a beautiful day?
It is actually a very beautiful day in Boston, and I'm here, so there are enough of us here, working away.
And I've said this my whole career. The first time I went to Boston, on a nice, beautiful, sunny summer day, no city I'd rather be in than Boston. With all the water, the Boston Harbor, the beautiful sailboats, it is, and the city's kind of built around the Boston Harbor, so it's really part of it. It's just an awesome city.
I need to take a trip. Yeah.
Not so much like in January in the middle of a storm, but anyway. Brooke, thanks so much for joining us. Appreciate getting the update there. Brooke Sutherland, Boston Bureau Chief and author of the Industrial Strength newsletter. She covers all the industrials as well. Bloomberg News, she's up there in our Boston office. So, but again, Boston's a great town, especially in the nice warm weather there. So
we're taking a college tour up there pretty soon.
Yeah, well, I know. That's. I mean, you can knock
do
it.
that. There's a lot.
You can spend a week up there looking at colleges up there in that part of the world. All right, for our listeners in the U.S., a reminder: you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up. We're looking at the markets here. Again, red and green on the screen. Not a lot of direction here. The S&P's down 17 points. The Dow's up 82 points. The Nasdaq's down 97 points. Bitcoin, a little bit lower here for Tom Keene, 117,000. WTI crude oil, it's lower. We're touching $63 per barrel. All right, stay tuned for more coverage coming up right now. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Heading to Alaska for his summit with Russia's Vladimir Putin, President Trump says it's likely land swaps with Ukraine will be up for discussion.
They'll be discussed, but I've got to let Ukraine make that decision. And I think they'll make a proper decision. But I'm not here to negotiate for Ukraine. I'm here to get them at a table.
CBS's Margaret Brennan.
The vice president has been very involved in the details here. He's been talking to European diplomats. He said the U.S. won't make territorial concessions. Anything about Ukraine's territory has to be done with Ukraine directly.
CBS News correspondent Ramy Inocencio.
2 of the 5 ministers joining Putin oversee the country's finances or its investment. So that implies that there will be some kind of economic consideration. Would Trump say that he'll lift oil sanctions, for example, or would Putin say that he'll invest in America?
The storm called Aaron is now a Category 1 hurricane, gathering strength in the Atlantic, but no direct threat to land right now. Meteorologist Craig Allen.
We are still not expecting any direct landfall. However, the ocean will be roughed up severely. The swells generated by Aaron are likely to cause life-threatening surf and rip current conditions.
Washington, D.C. has filed suit against the federal government. CBS's Scott McFarland says it all follows the Attorney General's latest action.
Pam Bondi ordered the D.C. Police Department and the D.C. mayor to honor and acknowledge that the new leader of the department is the DEA administrator, Terry Cole, now the emergency commissioner of the D.C. Police. Also, she ordered the District of Columbia and its police department to fully cooperate with federal immigration authorities. Washington, D.C.'s top government lawyer has just announced he's going to file suit to challenge this.
CBS's Michael Wallace tells us it turns out Health Secretary Kennedy may not push for tougher regulations on pesticides or ultra-processed foods after all.
Kennedy has called them major threats to children's health, but a draft of a report called Make Our Children Healthy Again, obtained by the New York Times, does not propose any direct restrictions on pesticides or ultra-processed foods. The draft does recommend a framework for childhood vaccines, educating the public on the dangers of vaping, and increasing breastfeeding rates.
The top Republican in the Texas House has just ended a special session as Democrats who fled over a redistricting plan are set to return.
Do not go very far, as I believe our governor will be calling us back for another special session very, very soon.
Checking Wall Street, the Dow is up 83 points. This is CBS News.
Bloomberg Talk.
At one spot in New York City tonight, it'll feel a little like 1965.
60 years ago today, the Beatles took U.S. fans by storm at Shea Stadium. The Mets will honor the Fab Four at tonight's game against the Mariners. There'll be a performance by a tribute band. The first 15,000 fans to enter Citi Field will get an exclusive Shea Stadium replica. The first pitch will be thrown by members of the game staff who worked the day the Beatles performed there. And there'll be a themed fireworks show after the game. Deborah Rodriguez, CBS News, New York.
66% in a new CBS News poll say compared to a few years ago, tipping is expected in more places. And among those people, 55% say being expected to tip more in places is a bad thing. Just 14% say it's a good thing. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
High stakes. Welcome to the Friday edition with President Trump soon to arrive in Alaska for an historic meeting with Vladimir Putin. After posting those two simple words, high stakes, on social media, we've got the latest on the meeting for you and the range of potential outcomes. We spent some time with Nick Wadhams, who runs our national security coverage here in Washington. Later this hour, our conversation with John Bolton, President Trump's former national security advisor, who was in the room for the last summit in Helsinki. We're watching oil today with Mike McGlone at Bloomberg Intelligence as sanctions are threatened, and we're learning more about the records that Russia stole after hacking the U.S. court system. A fascinating story coming up that we'll discuss with Bloomberg's Jamie Tarabay. Let's start, as always, on Wall Street. The update on the markets now in a Bloomberg Business Flash from Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Long day ahead for Joe. We have got the S&P 500 index lower right now. Traders sending stocks down from records with a weak reading on consumer sentiment from UMich and an increase in inflation expectations, tempering optimism about solid retail sales. Right now, we have got the S&P, as I mentioned, down 0.3%. The Dow advancing 86. United Healthcare leading the Dow higher, up 0.2% on the Dow. Shares of UNH also advancing now by 13.4%. NASDAQ down 0.5%. The Bloomberg Mag 7 index spent much of the morning higher. It is trading lower. Right now, the index down 0.3%. We've got the 10-year 4.31%, the 2-year 3.75%. Gold up $6 the ounce, $33.41, up 0.2%. And West Texas Intermediate crude 63.09, drop there of just about 1.4%. And again, in an hour, Mike McGlone's going to have a whole lot more on crude coming up here on Balance of Power. So, bottom line here, looking at a mixed market. Emily Bowersock-Hill is the CEO and founding partner of Bowersock Capital Partners. On Bloomberg Surveillance this morning, she told us she does see parallels to the geopolitics of the 70s.
You know, a trade war is a supply shock. And so, you know, this is not the trade embargo of 73 or the Iranian Revolution, but that's the backdrop. Then we have a president who's placing enormous pressure on the Fed chair. Same thing happened with Arthur Burns, and Arthur Burns, as we all know, finally caved, and it did not end well.
Emily Bowersock-Hill of Bowersock Capital Partners. Sources tell Bloomberg the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in Intel. Intel shares, they're surging 5.7%. Cannot ignore the move in Applied Materials after earnings. The stock is now plunging by 13.3%. Balance of Power continues right now. He is guzzling those energy drinks. Long day ahead for Joe Matthew. Back we go to Washington. Joe, how late are you on till tonight?
For the duration, Charlie, I guess that's the big question for a lot of us today. Charlie Pellet in New York, many thanks. We're going for the duration, straight through the bilateral news conference or whatever takes place after this meeting. And by the way, President Trump is in the air right now. He'll be touching down a couple of hours in Anchorage, and that's going to kick off a series of events here that will culminate, so we're told, in a bilateral news conference. Trump, Putin standing together, telling us what happened, for better or worse. That'll come after a meeting that's been described as one-on-one, although I'll tell you what, there's not an empty seat on Air Force One. Like, the entire cabinet, the entire administration is in the air on this journey. Well, maybe with one exception. Pete Hegseth was left behind. So we are throwing the full editorial resources of Bloomberg News at this historic day. And as Charlie mentioned, we are going to have a late night when we take air on the late edition of Balance of Power at 5 p.m. Eastern. We're going to plow right through with special coverage until it's all done. It could be 9, 10 o'clock. We'll find out together here because nothing could be more important than this conversation today. Thanks for being with us on the Friday edition of Balance of Power here on Bloomberg Radio. We're on satellite radio channel 121. And of course, you can watch the radio show on TV by going to Bloomberg Originals and always YouTube, where you can search Bloomberg Business News Live to find our stream. President took off pretty early this morning, a little bit later than scheduled, after talking to reporters yesterday about his expectations, which he's been tamping down, right? This is a feel me out, not necessarily a peace deal that's going to take place today, and it might have more to do with what they agree upon in terms of meeting again. Here's what President Trump said.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. It's I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
It is a very brief schedule today, even though it's going to be a long day. There are only 3 points of notice here on the guidance from the White House. President departs the White House en route Anchorage. We've already checked that box. The president participates in a bilateral program with the president of the Russian Federation. That's what the world is waiting for. And then a short time later, the president departs Anchorage, Alaska, en route to the White House. There will be a conversation with reporters along the way, unless this thing really goes off the rails. Maybe we'll be seeing President Trump alone. All of that is unknown. He also has a Fox News interview. And this is kind of interesting because that might be what keeps us on time. He's supposed to sit down with Sean Hannity after this. And, you know, the program's got to go on at a certain point. So the president may well be focusing his attention on the TV show before he gets off the ground here. Really interesting, just breaking here from Fox News, just seeing this on Twitter before we bring in Nick Wadhams. President Trump tells Brett Baier, if the Putin meeting doesn't go well, quote, I would walk, unquote. Nick's got a long day, too. He runs our national security team in Washington. So how'd you like to be Nick Wadhams at this point? It's great to see you. We finally made it. The day of days, I would walk, so the gaming continues, I guess, until the moment they sit down.
I mean, that comment to me is actually one of the least surprising things he said in a while, because he's shown a real history for doing this. I mean, listeners and viewers may remember Hanoi. I think it was 2019 when we had all that fanfare about Trump going to meet Kim Jong-un, the leader of North Korea, precedent shattering, first time the two leaders met. I mean, it was just as actually far more intense than what we're seeing right now. And President Trump got up and walked away, and that thing resulted in absolutely nothing. And we got, and that was flying all the way to Vietnam. So he has shown perfect willingness to do this. I mean, it's just so fascinating to me, because I think one of the big things that's driving President Trump is the show, the spectacle. He's meeting President Putin, first time on U.S. soil in how many years? In a way, it's the spectacle and the show of the actual meeting, and the results of it feel at this point almost to be secondary.
We're seeing images of him boarding Air Force One earlier this morning. It's a 7+ hour journey to Anchorage. Do we know anything today that we did not yesterday in terms of the staging, where on the base they're going to meet, what this is going to look like?
Details, they are being pretty tight-lipped about that. What we do know, though, is that, White House spokeswoman said this yesterday, but they are going to do that joint press conference, which is another pretty extraordinary one, and really tells you that President Trump is absolutely running the show on this one. He had done a press conference when the last time he met Putin in 2018 in Helsinki, and that was the one where he said he backed Russia's denial of involvement in the 2016 election hack. And, from that time, he just had advisors all around him saying, really trying to put guardrails around his interactions with Putin. All those folks are gone now. So that is the big question we have. The surprise factor, the potential for something unexpected to happen here is absolutely off the charts, because there are no guardrails. He has no Russia experts. He has no Fiona Hill or some of these other real pardon the expression, wonky folks who have just been doing the Russia file all their lives. It's him, it's Marco Rubio, it's essentially his entire cabinet aside from Pete Hegseth.
Right.
They're going up there. So there really is a feeling of, it could turn out to be nothing, but also anything goes.
Fascinating way to frame this. We're going to talk a little later this hour with John Bolton, who calls that day in Helsinki, I believe, the darkest day of President Trump's first term. But yeah, look at this guest list on Air Force One. Rubio, Bessent, Lutnick, Ratcliffe, Susie Wiles, Blair, Harrison. I could keep Dan Scavino's on the plane. Caroline Leavitt's on the plane. Ambassador Steve Witkoff, not a surprise. Ambassador Monica Crowley.
Right.
What's Pete Hegseth doing in Washington?
Well, very good question. I mean, we are really trying to read the tea leaves on this. There is some indication we've had over the last few months. I mean, you look at his travels, which are basically zilch. President Trump has not put him out in the world. I mean, I think there are a couple of things going on here. One is maybe he's busy trying to figure that out, but the other is crowded plane. You got a lot of folks who want to get their FaceTime with President Trump going, and and the big question it raises for me though is there actually another motivation for this thing? Is it to talk about economic ties, business deals, stuff like that? Maybe what we think of as the most important thing, defense, is, defense of Ukraine is not actually top of mind for President Trump. What he wants is economic enticements, carrots as well as sticks, the possibility of deeper cooperation. And for something like that, maybe you want a Bessent, maybe you want a Lutnick on the trip.
Absolutely. Zach Cohen at CNN just posted that Keith Kellogg, President Trump's special envoy for Ukraine, will also not be at this meeting, perceived by the Russian side as too sympathetic to Ukraine. What do you make of that?
Well, I mean, Keith Kellogg, when he came on, the notion was that he was going to be the guy front and center for everything Ukraine related. And that role has really been taken over by Steve Witkoff. Yeah. And Keith Kellogg really is now the guy who liaises with Ukraine. So in some ways, not hugely surprising that you would not see Keith Kellogg on this trip, in part because Trump has shown this penchant for not wanting to antagonize folks, even if it is Vladimir Putin. You would think maybe a little antagonism might be warranted. Doesn't want to do that necessarily. But also, Keith Kellogg, I mean, his role now really is to keep up that communication with Ukraine. And as we've been saying over and over, one of the real interesting elements of this meeting is Ukraine is not going to be anywhere near Alaska.
That's right, yeah, despite some flirting with that idea in an interview this week that we heard from the president. So this is going to be interesting as this unfolds. Striking to see Sergei Lavrov this morning with a CCCP T-shirt on as he arrived in Anchorage, or for the flight, I guess. We were all looking at this. Steve Witkoff is going to be there. He's pals with Vladimir Putin. Are these guys going to be smoking cigars in there, or is this going to be a standoff?
It is not going to be a standoff. Okay. I mean, I think you're going to find and that is just not Trump's style. In any case, he may walk, yes, but I mean, this is going to be very cordial, a lot of backslapping, a lot of handshakes, a lot of smiles. This is something that Trump absolutely relishes. And, Witkoff has spoken very openly about how he feels he's had very productive conversations with the Russians.
These guys hang out for like 6 hours at a pop.
So you see the two sort of competing themes here with this administration. One is that they are not into the antagonism, Obama staring down Putin. The other is they really see carrots rather than sticks as being the way to go.
Maybe there's some economy to talk about here, some business dealings. Nick, it's great to have you. Thank you so much. Good luck with the coverage today. Find him on the terminal and online. Nick Wadhams, Bloomberg's national security team leader. I'm Joe Matthew in Washington. We're just getting started on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are both trading lower right now. Traders sending stocks down from records. A weak reading on consumer sentiment and an increase in inflation expectations are tempering optimism about solid retail sales. We did have the Dow Industrials trading at a record. Could see a record close there today. The 10-year, 4.31% with a 2-year currently yielding 3.75%. Gold little changed, up under 0.1% right now. Spot gold up $3 the ounce to $33.38, and West Texas Intermediate crude down 1.3%, $63.10 for a barrel of WTI. Oil prices are drifting lower as investors await the summit between President Trump and Vladimir Putin in Alaska. Among some of the oil names right now, we've got ExxonMobil, though, trading higher. ExxonMobil up by 1%. ADRs of BP up 1.1%. Chevron up by 2%. All this as oil moves lower. West Texas Intermediate crude again down 1.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Watching Wall Street for us on this Friday edition of Balance of Power. We'll get back with Charlie in about 20 minutes to see how things are shaping up or down today with everybody watching Anchorage. That's the story. It's not often we have a single story day, but this is about as close as we get. Already being framed as an historic summit, even if it produces nothing. Just the fact that Donald Trump and Vladimir Putin are in a room together for the first time in 7 years will be news. And if you're just coming around and just joining us here on Bloomberg Radio, let you know that Donald Trump is still in the air. Presumably, Vladimir Putin is airborne right now as well. He took off from eastern Russia, presumably, if he's going to be on time, about 2,000 miles away from Anchorage. The President Trump's got a roughly 7-hour flight to get up there. He'll touch down in about 2 hours if things stay on time, and this whole thing could slide. We could be talking together at midnight tonight if you really want to follow the beat on this. They'll have their bilateral, they'll have their sit-down meeting. It's described as one-on-one, and then there'll be the news conference with the two of them facing reporters in Anchorage. Just a massive movement of humanity and equipment from the lower 48 up to Alaska to cover this thing, and you better believe that Bloomberg is all over it. In about a half hour, we'll check in with Bloomberg's Anne-Marie Hordern, who is in Anchorage traveling with the president. And you know, you cannot fully understand what is happening in Anchorage today, and in that room when the doors close, without acknowledging the tension in our relationship with Moscow, without even looking at Ukraine. These are, of course, two countries that have been in competition for many, many years at different levels, and have been spying on each other for many years at different levels. With great reporting from Bloomberg's Jamie Terabay on our national security team, Russian hackers lurked in U.S. courts for years and stole sealed files. We're learning more about this massive hacking attempt that the president himself was asked about yesterday, lurking in U.S. courts. He was asked if he had heard about it. Here's the president.
Are you surprised? You know, are you surprised? They hack in. That's what they do. They're good at it. We're good at it. We're actually better at it. But no, I have heard about it. I have heard about it.
Doesn't seem very concerned. Maybe we are better at it. Let's talk to Jamie about this. Russian hackers lurking in U.S. courts for years. Jamie Terabay, welcome back to Balance of Power. What did they steal?
Hi, Joe. We know that they had access to sealed documents that were very sensitive. Apparently, they involved cases that included fraud, money laundering, espionage, and of course, also possible information about foreign agents that the U.S. government may have identified, as well as people of interest to the U.S. and people, you know, just in terms of what the U.S. government is paying attention to that the courts have decided shouldn't be disclosed to the public in any way. But even just sort of listening to the president say that we're better than they are, I feel like he might be tipping his hat to something that he knows. And I think that we have, when we look at a summit like this, I always wonder how much they already know about each other before they meet. And I feel like this is a really good example of that. When we look at the story of this hack being reported now, these Russian state hackers were in these systems for years. They had access to so much information. They exfiltrated so much information. And you remember SolarWinds? That was in 2020. That was a software update for U.S. defense companies and government contractors. The Russians did that. They were in there for years. And even we go back before that to 2018 when they were in critical infrastructure. So I always, when I hear things like this, I'm very, I'm always curious about how much everyone already knows going into these meetings.
Absolutely. You were able to review a report here that does not identify the attackers, but you've referred to them as state hackers, Russian government hackers mentioned in our column here. Is Vladimir Putin behind this? Is this the capital at work as opposed to rogue hackers living in their homes going into U.S. systems?
The attribution is always tricky, right? Because it always gives plausible deniability. We have this situation with Chinese state hackers as well. But look, if we trace this back, and we haven't gotten confirmation about which intelligence agency is behind this, but I suspect it might be the GRU, the sort of the intelligence agency, the main one that is behind a lot of cyber activity, not just against the US, not just against NATO allies, but of course against Ukraine. So we've seen Russian cyber criminals, the ones that are responsible for millions and millions of dollars in theft of ransomware, when they lock up systems, lock up hospitals, when they locked up Colonial Pipeline, holding those systems to ransom. A lot of them were hiding in plain sight in Russia. And so whether they know about them or not, they're definitely not going to be sort of publicly attributing their behavior as being connected to the state. And it gives Putin a bit of leverage when and if the president decides to raise this topic with him.
Well, I guess that's where I wanted to go with you here in our remaining couple of moments. To what extent does this bring leverage to Vladimir Putin at the table, or Trump? We just heard him say, to your point, we're better at this. I don't know exactly what that means, but if we're in a world where Russia is embedded in our critical infrastructure, is that not a bargaining chip at the table today?
I think it is. I think we've seen Putin again and again just sort of push back or ignore pressure. But I think with the sanctions that the Senate in particular has been touting, the fact that President Trump has said that the bill that they want to push is an optional bill, the fact that now India is facing very high tariffs on Russian oil, and that there's a possibility that China might be facing a similar price for its Russian oil imports. That's an additional piece that the president can bring to his talks, because everyone has said that the sanctions haven't really been impacting Putin so much, even with all the yacht seizures, the fund freezes, and all of the rest of it that we've seen over the last couple of years. But this will really hurt their ability to pay for their military machine. And that's the part that everyone thinks will be the most convincing factor going into these talks.
Really interesting. Jamie, I know that you were writing about sanctions as well, and we've been waiting to hear about secondary sanctions. Well, I guess it's been a week now, right? They were supposed to go into effect last week, and then this meeting materialized. So this, I guess, is on ice for now. If the meeting does not go well today, do you expect an announcement on secondary sanctions?
The Congress is ready. The bill is ready. They've drafted it. They've redrafted it. They've gone back and tweaked it into a form that the House will approve of, and that when it gets to the president's desk, he will sign it. So they're ready. They just need the green light from the White House. And President Trump has shown his frustration with Vladimir Putin again and again and again. And the response that he's had up until this point has been things like resuming the flow of weapons or giving them more money. So maybe this will be something that he will use. I mean, we never really can tell, but he knows that he has that tool in his toolkit going into this meeting.
Yeah. Jamie, I'm so glad you could join us today. Jamie Terabay is on our national security team here at Bloomberg and is a world-class journalist, and I hope that we can bring more of these conversations with Jamie Terabay to you here on Bloomberg. Thank you, Jamie, so much. She mentioned, of course, energy, the component that oil is playing here when it comes to sanctions. In particular, it drives us to the story on the terminal. The oil market awaits crucial Trump-Putin meeting as prices drift lower. You wouldn't think anybody was worried today. We're down 75 cents a barrel in WTI crudes, just over $63 a barrel, and we wanted to dial up Mike McGlone just to see where his head was going into this summit today. Bloomberg Intelligence Senior Commodity Strategist. Mike, it's always our pleasure to have you. Welcome back. Are you concerned about outcomes here, and how are prices drifting lower when the president says the stakes are so high?
Well, hello, Joe. I've been coined as a notable bear in crude oil since its peak at 130 in 2022. I'm still looking for it to go to $40 a barrel, and I don't see how this event's going to change things unless there's some kind of major shock that President Putin and Mr. Trump can do to offset this, to curtail the amount of supply that's coming on the market. It's more likely if there's any type of détente, then we're going to see more oil flowing, potentially out of Russia, and most notably natural gas. A lot of energy. Remember, that was curtailed to Europe. So I don't see this the upside here for crude oil except some kind of unlikely shock I can't predict.
Would secondary sanctions equal that? I mean, what's the sort of worst case scenario for the trader who's clearly not factoring that into prices today?
Well, one thing I enjoyed writing about, Joe, when Russia first invaded Ukraine in 2022, one of the best ways to hurt Russia is for the price of crude oil to collapse. So, to me, that might be part of what happens. If there's secondary sanctions, and if we can have the OPEC continue to turn on the taps, U.S. continuing to increase production, and the rest of the world actually declining in demand, crude oil is going to that level. It's going to really hurt their revenues. So I think secondary sanctions, might hurt put some discombobulation in the meantime. But overall, that price of crude oil is on its way down. If we can accelerate that process, that'll hurt the Russian war machine.
Yeah, you know what I never ask you about, Mike, are the big oil stocks. I mean, just you look at these charts, they've just been choppy, going nowhere for, it feels like a couple of years at this point. The Exxons, the Chevrons of the world, are they just simply keying off oil prices right now?
A lot of that's true, Joe. The key thing to remember about the oil companies compared to the price is they make money. They have revenues. They actually have dividends. The actual price of crude oil will just go over time because they get more efficient every day. The key thing I like to point is when people talk about things like rig counts in this country are the same as they were in 2010, yet the price of oil, the total production in the U.S. has doubled. So that's the efficiency of crude oil producers, and they should continue to make money even though the price is going low. But the key thing to remember is the average cost of production in the U.S. is around $55 a barrel, and we're seeing the curtailing supply now because we're heading that way.
Well, I guess it makes a lot of sense. I mean, look at the XLE. The thing's at $86. We topped out $97 on the ETF back in November. It's been an interesting trend here to watch and a kind of a tedious one for shareholders. Mike McGlone, thank you as ever, keeping us honest here on the oil story. Remember this conversation when you see some of the breathless reporting that's going to come out of the oil patch in the next 24 to 48 hours. He's with Bloomberg Intelligence, and they are the best in the business. We've got a really important conversation for you coming up next here on Bloomberg. The man who was in the room with Trump and Putin in Helsinki, John Bolton, former national security advisor, with us live straight ahead, only on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, the S&P, NASDAQ. They are both lower. Could see a record close on the Dow Jones Industrial Average. Indeed, the Dow right now trading at a record 45,016. Up by 0.2%, higher now by 103 points. S&P, NASDAQ, both in the red, both retreating from records. The S&P at 64.51, drop right now of 0.3%, while NASDAQ lower by 0.5%. Our Mag 7 index trading lower, down 0.3%. Dow Transports, little change right now, up under 0.1%, while the 10-year currently yielding 4.32%. The 2-year, 3.75%. Gold up $3 the ounce, 33.39, a gain there of 0.1%. But as we just heard from our Mike McGlone, we've got West Texas Intermediate crude ahead of the summit, trading lower, down now by 1.3%, 63.15 a barrel on WTI. Brent, the global benchmark, down 1%, and Bitcoin right now down 0.5% at 117,331 on Bitcoin. Consumer sentiment unexpectedly fell for the first time since April, while inflation expectations rose on lingering anxiety about the impact of tariffs. According to data from the University of Michigan, the preliminary August sentiment index fell to 58.6 from 61.7 a month earlier. But what about inflation expectations along party lines? Joanne Shu is Director of Surveys of the University of Michigan. She was the guest this morning on Bloomberg Intelligence.
For short-run inflation expectations, we saw that increase across all political parties, including independents and Republicans. With long-run inflation expectations, it was a little bit mixed, and we'll see what happens when we get the final data at the end of the month.
Joanne Shu of the University of Michigan. For more of that conversation on the Bloomberg Intelligence podcast, which you can download wherever you get your podcasts. United Health Group shares are jumping after funds piled into the company, which has been hampered by a federal probe into its business practices and weakening results. Shares of United Health, right now they are surging. UNH up by 13.9%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. We'll be back with Charlie at the top of the hour for the latest on Wall Street as we count down to the summit. President Trump just a couple of hours away at this point from Anchorage, maybe even a bit closer, having lifted off early this morning in Washington from Joint Base Andrews on Air Force One on his way to the meeting that will take place this afternoon, Alaska time. We're 4 hours removed here. If you're playing along on your home game, that will, of course, be followed by the bilateral news conference that we've been promised. Assuming that things go well, we'll see both presidents in front of reporters by the end of this day, and that could be well into the evening as we bring you special coverage that will run into the night. We've been talking a lot about the outcome in Helsinki over the last couple of days. This has come up repeatedly. What took place in 2018 between Presidents Trump and Putin, still fresh in the minds of many, including a man who was in the room, and that would be John Bolton, who served as National Security Advisor in the president's first term, former U.S. Ambassador to the United Nations, and founder of the Foundation for American Security and Freedom. John Bolton joins us now live on Bloomberg, and it's great to have you back, sir. I know you've been in pretty high demand recently, not only because of your experience, but specifically that day in Helsinki when you were there with both presidents, couple of hours, flanked only by translators. You've called that the darkest day for you in the Trump White House. Do you have higher expectations for this meeting? How does Helsinki inform what happens in Anchorage?
Well, I think Trump obviously has it in mind. The circumstances are very different. The stakes really are a lot higher here, with a lot for the two leaders to talk about. It starts out, I think, very favorable to Putin. He's been pulled out of international PERDA and given a spotlight next to the president, hasn't paid anything for that privilege. And the real question is whether he can work his KGB training to bring Trump back into the bubble of believing he and Vladimir are good friends again. So a lot rides on it for Ukraine, a lot rides on it for U.S.-Russian relations, and really any number of related issues around the world.
It was said earlier on this program, John Bolton, that the president does not have the guardrails around him today that he had in 2018 in Helsinki. We're looking at images from that meeting, and namely, he doesn't have you. He's traveling today with the likes of Steve Witkoff, Howard Lutnick, John Ratcliffe. Marco Rubio is there. For some reason, the Secretary of Defense has stayed here in Washington, but these are widely seen as loyalists who are not going to check the president when he's talking to Vladimir Putin. Is that how you see it?
Well, I think the lesson Donald Trump drew from his first term is that he wants to be surrounded by people who just say yes, sir, or no, sir. And that ultimately will not work out well for him. It certainly won't work out well for the country. The purpose of advisors is to give advice. It's not just to do the first thing that comes out of the boss's mouth. And I think anybody would tell you it's not because they're trying to steer him in one direction or another necessarily, or they're trying to make the decision themselves. It's to make sure the president has all the information he needs to make an informed choice and to give him a range of options with their respective pros and cons. I don't think Trump is encumbered by that sort of preparation for this. He rarely reads his briefing materials. He said, and I think it's an accurate self-description, he'll know within the first few minutes in his mind whether there's going to be progress made at this meeting or not.
You say he rarely reads his briefing materials. How does President Trump prepare for an historic summit like this?
Well, he doesn't think it's necessary to know a lot about the subject matter because he's the master of the art of the deal, and he looks at his counterpart on the other side of the table, and you know, the magic occurs, and a deal comes or it doesn't come. When I accompanied to the summit in Helsinki in 2018, we were flying from his estate at Turnberry in Scotland to Helsinki, and I briefed him on strategic nuclear weapons negotiations in his office on the plane while he was watching a FIFA soccer championship.
Oh my God. I'm just going to leave that right there. What's he going to be walking into? Is it the charm offensive that we've been hearing so much about? And are we overstating the abilities, the influence of Vladimir Putin as if he has some sort of KGB Jedi mind trick that he'll employ today?
Well, there's no guarantee Putin will succeed. In fact, I think part of the reason he's in the position he is now is that he pierced whatever Trump's comfort envelope was in terms of their friendship. And Trump has said he's been disappointed with Putin. He's used stronger language. And now really the burden is on Putin to try and get that back. It's not just flattery, although that's always useful with Trump, but it really is the training, the experience of a KGB agent to size people up and manipulate him. And I would give Putin high marks and maybe even better marks than Trump in being able to size up an adversary and know how to bend them to your will. Putin started yesterday after the inoculation by the Europeans on Wednesday with Trump to try and make sure he didn't go off the rails today with Putin. Putin said yesterday he was just impressed with the energy and sincerity of the president's effort to bring peace to Ukraine, and he looked forward to discussing a whole range of issues like nuclear arms control. So that's the influence technique beginning to work. We'll see how it plays out.
When you were standing there in Helsinki, the two presidents came out to talk to reporters, and you heard Donald Trump say, President Putin says it's not Russia. I don't see any reason why it would be. What went through your mind?
Well, I was frozen to my seat, but it was pretty clear immediately this was a major disaster. And as soon as the press conference was over, I got back on the phone to Washington. And before I could even say hello to my deputy to ask what the reaction was, she said that all hell had broken loose just in the few minutes between Trump's comment and the time it took me to get outside away from everybody else to make a call on a cell phone. So that was a moment that I don't think anybody will forget. A good press conference for Trump today would be that absolutely nothing comes out of it.
Fantastic. That's really interesting because you said earlier Vladimir Putin hasn't paid for this right. Not only to have the meeting, John, but to have the news conference all over again. We're going to replay these optics today. And the narrative that we've been hearing is that Vladimir Putin has already won because of this stage that he'll share with Donald Trump. Is that how you feel?
Yeah, I mean, Trump could throw a fit. There's no doubt about it, and he has learned over time that you can walk away without good news. He walked away from Kim Jong-un, the North Korean leader, after the meeting in Hanoi in 2019. At least we didn't make a bad nuclear deal with North Korea. And Trump himself said, you know, if I leave early and have a press conference by myself, you'll know it turned out badly.
Yeah. We sure will. Really appreciate your sharing some time with us and your experience. John Bolton, thank you, as always, for joining us here on Bloomberg. We want to assemble our panel for their take on what we just heard from Mr. Bolton. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is, of course, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. They're strapping in for a long day here and will be with us for our coverage through the evening. Rick, after what you just heard from John Bolton, are you more or less nervous about what takes place today?
You know, I don't think it's a surprise. You know, what John Bolton has just told us. He's been consistent critic of Russia for a long time, just like my old boss, John McCain. I think they saw eye to eye on the threat that Vladimir Putin has to global security and economic stability. So, yeah, I think he represents sort of the traditional Republican view of engagement with Putin. I mean, the problem is that we're not in a traditional Republican engagement anymore. This is kind of America first, MAGA, globalization on steroids. And we have probably the single most disruptive and most powerful politician of our time sitting down with one of our biggest adversaries. So anything can happen today. But the one thing I know for sure, it will have a profound impact on how the world operates, you know, from this point on.
Wow. Jeannie, John Bolton just described preparing President Trump for a summit on Air Force One in his office, talking about our nuclear program while he was watching a FIFA game on TV. What does that tell you about the preparation that has gone into this summit?
Yeah, and there has been less time to prepare for this summit than most in the past. You know, it is deeply concerning. You know, some people have said that the president really sees himself, and Bolton reiterated this, as a master negotiator. He doesn't need to be informed about the ins and outs and the details. He needs to size up the person and move forward. But in my view, this has been his problem with Putin all along. He has consistently said, and that's why over 50 times on the campaign trail, he promised to end this war on day one because of his special relationship with Vladimir Putin. It's a mistake many past presidents have made. Donald Trump has made it. He assumes he can charm Putin, and the reality is he can't. If there's one thing going into today, we know Putin has been consistent from start to today about what he will and will not do. Donald Trump has been pretty much all over the map. So all eyes on Donald Trump to see what he comes out with today and how he feels after this discussion.
What do you think of the entourage today, Rick? Rubio, Bessent, Lutnick, Ratcliffe, Wiles, Witkoff, Crowley, just half the names on Air Force One, excluding a guy named Pete Hegseth. His counterpart, his Russian counterpart, will be there, but the Secretary of Defense is not on the plane. How do you put all this together?
You know, that is the one surprising thing. I mean, they are meeting. He's the host, right? Secretary Hegseth is the host of meeting at an Air Force base, joint base. And the reality, too, is I think it's worth noting there's a lot of experience in that group you just mentioned, right? I mean, like, we've been hearing a lot of comments about, you know, the guardrails are off and that kind of thing. But but these are talented people, and they will give good advice to the president. Whether he heeds any of it or not is totally open question. But folks like Marco Rubio and Bessent and some of these guys, they have a lot of world experience. I think they are trusted advisors. I think Trump will listen to them, and he'll have good advice going in. If anything bad happens, it won't be for lack of preparation.
Hey, Jeannie, we only have 30 seconds. Is Howard Lutnick on the plane because they're going to talk business today?
Yeah, we understand Putin's got his bevy of business people with him. They want to talk Putin. And Joe, I'm excited to hear what you think about Lavrov's CCCP sweatshirt and what
you saw that?
Yeah.
Yeah, he's wearing a CCCP T-shirt going into the building this morning. We're just doing it all out loud, I guess. Jeannie, we've got much more to follow in our second hour, including our great panel, Rick Davis and Jeannie Shanzano on an historic day in politics. Glad you're with us here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump on final approach to Alaska. Welcome to the Friday edition of Balance of Power, ahead of an historic meeting with Vladimir Putin just hours from now. I'm Joe Matthew in Washington with full coverage of this summit, including a live report ahead from Bloomberg's Anne-Marie Hordern in Anchorage. As well, insights from Michael Allen at Beacon Global Strategies, and we'll have analysis from our political panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis with us for the hour. As we start, as always, by setting the baseline on Wall Street, the Friday trade, and an update from Charlie Pellet, his Bloomberg Business Flash from World's headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. Good day from New York. We got the Dow trading at a record 45,013, up 101 right now on the Dow. That is a gain of 0.2%. S&P, though, retreating from a record, down 11, down by about 0.2%. Traders sending stocks down from all-time highs after a weak reading on consumer sentiment and an increase in inflation expectations, tempering optimism about solid retail sales. NASDAQ down 66 for the NASDAQ Composite Index, a drop right now of 0.3%. The 10-year yield at 4.32%, with the 2-year 3.75%. Gold little changed, up $3 the ounce to $33.38, up by about 0.1%. And West Texas Intermediate crude down 1.1%, $63.26 a barrel on WTI. Sources tell Bloomberg the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in the beleaguered U.S. chipmaker Intel. Intel shares, they're up now by 6.6%. After earnings, shares of Applied Materials are plunging 13.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington with a long, long day ahead. Once again, your host, here he is, Joe Matthew.
That's right, the best kind of day here. When it comes to history and politics, this is what we're built for, Charlie Pellet, and we thank you. We'll get back to Charlie in about 20 minutes for more on the Friday trade. As we zero in on Anchorage, we'll have coverage all day long, and as Charlie refers, likely well into the evening as we wait for not only the meeting between Presidents Trump and Putin, but also the bilateral news conference that is set to follow from Anchorage, Alaska. So thank you for being with us here on the Friday edition of Balance of Power on Bloomberg TV and radio. We've lined up some voices of experience to help walk us through this hour, including a live report from the ground. And that's where we do want to start, live in Anchorage with Bloomberg's Anne-Marie Hordern, who is traveling ahead of the president. She's already in Alaska. And Anne-Marie, the president, appears to be only a couple of hours away at this point. Can you give us a sense of the timing and what you expect to see?
Well, around 11 o'clock, 11:30 local time, Joe, and good afternoon. That's about 3 o'clock, 3:30 your time. We're going to see these two leaders begin their meetings today. What the Kremlin has talked about is that there would be a one-on-one leaders meeting followed by larger delegations joining, probably a working dinner or lunch, and then following that, there is set to be a joint news conference. And Dmitry Peskov, the Russian president's spokesperson, did say just a little while ago that the talks may go as long as 6 to 7 hours between these two individuals, so quite comprehensive. We should note, though, the president did say on Fox News yesterday that there is a 25% chance in his mind that the talks could go negatively, and then he would end up giving a solo news conference before he heads back to Washington.
Boy. 6 to 7 hours would be quite remarkable. Anne-Marie, thank you so much. You're going to be seeing and hearing a lot from Anne-Marie over the next 12 hours here, live from Anchorage, Bloomberg's chief political correspondent. As we add the voice of Eric Martin, who covers the State Department and foreign policy for us here in Washington. Eric, it's good to see you, and welcome back to Balance of Power. Your expectations, now that we're hearing 6 or 7 hours, what exactly would be hammered out in a feeling out meeting of that duration?
Thanks, Joe. That is a great question. You know, President Putin is famous for these very long meetings, almost part of his negotiating strategy in terms of keeping the other party off balance, wear them down. And so that's fascinating to hear, as Anne-Marie just mentioned, from Dmitry Peskov. It also seems to be significantly longer than the U.S. has been projecting in terms of a potential time frame. So we're going to dig in here. It could be a long day.
Yeah, you wonder the purpose as well of taking so much time, because most people in the United States would not see that news conference live when they emerge at what I'm guessing would be 2 in the morning or something. But let's talk about what we know and also address who's not going to be at the table. You've been covering the European reaction to all of this for the past couple of days. How are European leaders feeling now that this day has arrived?
That's a good question, Joe. You know, they felt good about, and I think the president felt good as well. He expressed as much coming out of the call that they had on Wednesday with European leaders and with President Zelensky briefing and touching base with President Trump and Vice President Vance. ahead of this meeting. There's a feeling that the incorporation for President Trump of security concerns and security guarantees for Ukraine as part of this discussion is something that he knows that Europe and Ukraine are seeking. The fact that that's top of mind for him, European leaders we've heard have taken that as a positive. But it's also going to be critical, and the president has said that this is the start of a process. This is a chance to look President Putin in the eye for the first time in a number of years for President Trump, and to start this process, which he hopes will lead to a second meeting. Anne-Marie mentioned 25% chance that this goes badly, but 75% chance then, on the other hand, that this goes well. And I spoke with Secretary of State Rubio yesterday at a meeting at the State Department, an event at the State Department. He said that they are hopeful and that they are looking at this as an opportunity to touch base and to lay the groundwork for a more detailed negotiation later on. President Trump mentioning perhaps as soon as next week a negotiation that would get into some of the details of things like territorial claims, boundaries, security guarantees.
I'm glad you mentioned Secretary Rubio. He's on the plane along with Secretaries Bessent, Lutnick. Steve Witkoff is on the plane as well, but we keep hearing about a one-on-one. He's got a massive entourage. Ratcliffe is with him. Half the administration is crammed onto Air Force One right now. Will it just be the two presidents and a translator in the room?
Well, it sounds like from what Anne-Marie was saying that we can expect an expanded meeting. It is one thing that European officials and European governments have been concerned about. I did speak earlier this week with one European diplomat who said that they are concerned that because there is such a broad delegation that we were seeing, certainly Commerce Secretary Lutnick, some of the things that they're seeing, the Russian finance minister being included, a concern from a European perspective is that the president and the U.S. delegation may be tempted to negotiate and to have the conversation focused on U.S. economic interests and economic interests regarding Russia rather than the priorities and the concerns of the Ukrainian people and government. So that is something that European officials have been concerned about and something that they have flagged heading into this meeting today.
With his view from the State Department, Eric Martin reporting for Bloomberg here in Washington. Eric, really appreciate the analysis the last couple of days. This is going to be a big one, and Eric will be part of our coverage, likely going late into the evening. Now, Eric mentioned the next meeting. We spent a lot of time in the last 24 hours talking about what might come next, what would be in a second meeting, possibly including President Zelensky. President Trump talked about that yesterday when he was framing expectations for what would happen today. Listen.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. It's I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
If they can, it'll be great. But the president was talking to reporters on Air Force One. He's still airborne, by the way, and maybe about 90 minutes out, if our calculations are correct, on his way to Anchorage. On Air Force One, quote, "I want to see a ceasefire," the president said at the back of the plane, rapidly. "I don't know if it's going to be today, but I'm not going to be happy if it's not today," Donald Trump said. "I'm in this to stop the killing." More back and forth on the game of expectations as we introduce Michael Allen to the conversation, Managing Director, Beacon Global Strategies and former Special Assistant to President George W. Bush in the national security sector. Michael, it's great to have you back. You're normally joining us at times like these.
Thank you.
Stakes are high, and we've got a lot on the line today.
That's right.
What are your thoughts about this setting of the bar? It was a feel me out meeting. Now it's I want a ceasefire or I'm not going to be happy. How high are your expectations?
Well, I think this is probably the most significant moment in the 3.5 years since this war began. It certainly is the most serious diplomatic moment that we've had. To me, what I'm most worried about is that I think there's been a material change on the ground to the detriment of the Ukrainians in recent weeks. Most of the experts that have made field trips there and others that are examining how things are going on the ground, I think believe that the Ukrainians are not just losing incremental amounts of land, it's becoming more and more serious. And so, to me, that makes it harder for Trump to get a ceasefire because I think Putin will be dodging and weaving throughout because I think he wants to keep the show going because he's making progress. So we're just going to have to see how this shakes out. If Trump believes that Putin is too obstinate, it may be the case that Trump comes out of this annoyed and starts to levy sanctions on the Russians.
In that world, and by the way, it doesn't sound like you have high expectations. It sounds like this is a lot of showbiz when I listen to you talk. You're not going to have a bilateral news conference if the meeting goes that way, right? How does Donald Trump stand out there with with Vladimir Putin and say nothing was accomplished?
I think Trump may want to do the bilateral news conference unless it just falls flat on its face like the North Korean meetings used to in his first term. Right. Because I think he'll try to say, we've got some momentum, we agreed on a few things. But I think you're right, though. I do think this is a lot of showmanship. I think this is Trump trying to begin a process that won't yield anything or won't bear fruit today, but he believes it might over time. But it's going to be really, really hard. I think Trump's trying to get the showmanship down, but I don't know if all the substance is aligned perfectly for a ceasefire, and certainly nothing lasting.
Yeah. You mentioned the talks with North Korea. It's come up a lot of times recently, as has Helsinki. Right. Those are kind of the two extreme versions we're going to have, right? Either seeming to placate Vladimir Putin or actually walking out on him. Yeah. Is this somewhere in the middle then?
I think so. I think Trump wants to be on the world stage with the world's greatest leaders. I don't think he wants to walk out on Putin. I think he wants to claim that we've made some progress. After all, I think Trump at its core, not just on Ukraine, I think he wants to have a better relationship with the Russians. Well, it's not just that the Russians are coming to talk Ukraine. Yes. They want to reset the relationship, Putin said yesterday. They're bringing a lot of business people. I think that's appealing to Witkoff and Trump, who appreciate and love doing this in every sector of the economy, increasingly. Increasingly, that's the case. So I think this might be a larger moment for Trump to say, you know what, we're trying to put the bilateral relationship back on a sustainable path.
And maybe that's the leverage to end a war, if this could be profitable for Vladimir Putin. But I want to hear more from you on that. You see this entourage with the president today. You've got the Commerce Secretary, the Treasury Secretary, both on board, ready presumably to talk business. The Secretary of State, who you would expect to be there, but after comments about potential arms control talks that Putin put in the water earlier this week, that takes on new significance. Are we going to be talking about an economic relationship at the same time as trying to end a war?
I'm a little worried that we are, because I think that's what the Russians want. They don't want the world to be constantly focused only on their war with Ukraine. They're ready to kind of come back into the community of nations. They do have severe economic problems. They do want to be able to, over time, continue to revive their economy, if you will, finish off the war in Ukraine. So I'm really worried that Trump will be distracted by the things he really likes, which are doing deals on business-type matters, rather than looking at what this is and staring it in the face, which is that European security, NATO security is on the line, and ultimately U.S. national security. So I think that's why the new Europeans are nervous. Certainly the Ukrainians are, and I think that's why a lot of conservatives like me here in the United States are also on pins and needles wondering what's going to happen.
It's really interesting. It's been noted that the Secretary of Defense is not on the trip today. Pete Hegseth stayed behind, even though, as Rick Davis mentions, he is technically the host. This is happening at an American military joint base. How do you read into it?
Well, it's definitely, the same thing goes for Tulsi Gabbard. It does sort of make you believe that they may not be in the highest stead with the president. I think the president looks across his cabinet and looks to try and see who he can rely upon the most. And if they're not on Air Force One, I mean, even if he's were to come later, I think it looks It doesn't look great. It doesn't make you feel like you've got the power, the reflected power of the president.
Yeah, interesting. I'd love to hear from you about the planning that went into this. You were doing advance on a lot of work for a lot of President George W. Bush's international summits. They had a week to slap this together. Yeah. There aren't enough rental cars up there. There aren't enough hotel rooms. Right. It's a day trip, apparently, for Donald Trump. How do you get something like this together so quickly?
Oh, it's breakneck. I think the Secret Service have been running around trying to arrange things. It's clear there are not enough hotel rooms. There's not enough space for what's going on here. You needed many more weeks to be able to plan this and to give the locals on the ground time to prepare. So it's a little slapdash. It's a little at the last minute. Ultimately, I don't think it'll matter for history, but it's just sort of a reminder. And you heard Trump say it yesterday. He's already ready to select the location on the next event, which that's what gets me worried about the showmanship element of all this. He's ready to just sort of project and see where episode 2 of this saga will be.
Maybe it'll be in Anchorage, since apparently everyone is already there.
He did say he wanted to stay.
That's right. They're going to make a weekend of it. We talked to the governor of Alaska yesterday, Mike Dunleavy, about the preparations and kind of what this means for his state, with the world suddenly turning its attention to Anchorage. Here's what he told us.
Most of this is being handled by the White House itself, and they're doing a great job. They've interfaced with us. They've interfaced with our troopers and city police here in Anchorage. And so the vast majority of this is being handled by the White House. It is tourist season. We're in the height of tourist season, so hotels are tight, cars are tight, as you mentioned. Right. But again, having this on the base alleviates a lot of issues.
New York Times reporting August is apparently high season for salmon fishing in Alaska. So, things are tight up there. When you consider it being on the base, though, going back to your prior days in the administration, these two guys sitting in a hangar somewhere? I mean, what are the facilities that would house such an important event?
Well, they're not always that great. So I think there's a lot of pipe and drape, and a lot of advanced people have shown up to try and make this look as distinguished and as presidential as possible. And the president, as we know from his decorations of the Oval Office, he wants it to look good. He wants it to look good.
That better be gold pipe, by the way.
So, so I'm excited to see what all of this looks like.
For sure.
I know he wants to do some interviews while he's there and then come on back. But this is, as much as it is about substance or potentially about substance.
Yes, right.
The president, all summits have some showmanship. This one does in particular. Optics are huge.
Polyoptics, when they both emerge, will it look like Helsinki, or do they need to be deliberate about not putting these two on an equal level, make the podium look different, change the way the body language, maybe the angle they're at? What would you do with it?
Well, I would try to make the president come out of this looking like he's not the one that was dying for the meeting, not the one who's dying for a second meeting. Right. I wanted him to have some sort of strategic distance from all of this and holding out the prospect of additional meetings. But Trump just operates differently. We would have dangled a meeting with President Bush over many, many months and tried to make substantial progress on a variety of issues before we would have just gone. But that's just not Trump's style. He just doesn't get it. He doesn't care about the way it's done in the past. Sure. He's ready to meet with the North Korean leader or Vladimir Putin, who's a war criminal.
Well, we all remember George W. Bush talking about looking into the eyes of Vladimir Putin and getting a sense of his soul. And it'll be very interesting to see what Donald Trump finds when he looks into Vladimir Putin's eyes today. Michael Allen, it's great to have you.
Thank you so much.
Beacon Global Strategies, another voice of experience to help us get ready for an historic event today in Alaska that you will see play out right here on Bloomberg TV and radio. A veteran of the George W. Bush administration, now at Beacon Global Strategies. We thank Michael, as always, for his insights. We'll assemble our panel next. Rick Davis and Jeannie Shanzano on the way in. Hours away from the summit. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow Jones Industrial Average trading at a record up 108 right now at 45,019. That is a gain of 0.2%. But the S&P and NASDAQ, they are both declining. Traders sent stocks down from records with a weak reading on consumer sentiment and an increase in inflation expectations, tempering optimism about solid retail sales. The S&P now at 64.54, down 14, drop there of 0.2%. NASDAQ down 93, a decline of 0.4%. But the Dow at a record up 107 right now, 45,019, up 0.2%. The 10-year at 4.32%, with the 2-year 3.75%. Gold, little changed on the day, up $1 the ounce now to 33.37. And West Texas Intermediate crude down 1.1%, 63.24 for a barrel of WTI. Bitcoin lower, down 0.7 now at 117,168. United Health Group shares are surging 14.2% after funds piled into the company, which has been hampered by a federal probe into its business practices and weakening results. Warren Buffett's Berkshire Hathaway is among the investors, buying 5 million shares, according to a filing. Again, United Health now up by 14.2%. Recapping, the S&P is down 13, down 0.2%. The Dow at a record. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, many thanks. With us on the Friday trade here on Balance of Power on Bloomberg TV and radio. We'll have more from Charlie in about 20 minutes with the latest on Wall Street as we keep our eyes on Anchorage, Alaska. Beautiful day, by the way, for this summit. Nobody's talked about that. You think about frigid Alaska, the ice fields, Donald Trump in an overcoat. Take a look there. Pretty green. Beauty shot on Bloomberg TV and on YouTube. We've got currently, by the way, 52 degrees. As the salmon fishing continues here, they're going to be a high of 62 degrees in Anchorage, Alaska. So I think President Trump will just be fine with the suit when he gets off Air Force One. And we expect that will take place in the next hour or so. If you're following along here, presumably Vladimir Putin has been in the air for some time as well. He's not flying from Moscow today. He's flying from Magadan in eastern Russia, about 2,000 miles from Anchorage. The ride for President Trump, a little more than 7 hours. He's got half the administration with him on the airplane, save the defense secretary, Pete Hegseth, back at home. So is Tulsi Gabbard. Curious deletions from the list as the secretaries of Commerce and Treasury follow the president. Steve Witkoff is on the plane. Chief of Staff Susie Wiles, all on the plane. CIA Director Ratcliffe is with him as well. We have much more to follow today. This could take hours for the process to unfold. We'll see the presidents arrive. They will go behind closed doors for what could be an hours-long meeting or not. We have no sense of the duration, although we're hearing that it could be many hours longer, as apparently this meeting is being widened to include more than the two principals. They've brought their business advisors with them, as we've already mentioned, the same for the Russian side. And they could be in for some long talks here. When they emerge, there'll be a bilateral news conference, and we'll bring that to you live here on Bloomberg TV and radio with the help of our political panel. They're both with us here for our extended coverage as well. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, your expectations now, as we understand this has been widened to include not only more people, but potentially more topics than the war in Ukraine. We're going to be talking possibly about our economic relationship, which doesn't really exist right now, potential opening of economic sharing, business dealings that he could discuss with Howard Lutnick, with Scott Bessent being there. Are you worried that this is creeping beyond the matter at hand?
It is concerning. Of course, the United States and Russia should talk about all of these things, but it is concerning for the Ukrainians, for the Europeans, and anyone who wants peace over there, because there's nothing that Vladimir Putin would like more than to expand this to include an array of things and give him and the president the opportunity to come out and say they struck some deals. But the deal they're not going to be able to strike today is to end the war in Ukraine. And so that is something that is concerning to the Ukrainians, that they are not there, and that this is going to be focused, maybe a nuclear treaty Putin has talked about, maybe talk about business dealings, maybe talk about energy, all important, but not the core issue that brings them together today, which is the war in Ukraine.
Does economic opportunity give Donald Trump more leverage in this meeting, Rick, or does it simply distract from the point of the summit?
You know, I think it'll be an element of the ultimate negotiations and agreements, if there are those that get put in place. So starting with a conversation around those, I think is important. Look, whether Putin likes to convey it to the world or not, his economy is in a shambles. He is not managing a robust market economy where the resources like oil and natural gas are being used for anything other than prosecuting the war in Ukraine. So, yeah, he is ultimately going to be enticed by things like withdrawing sanctions and opening up his country back to economic viability around the world. So, if there is one thing he wants more than anything besides land in Ukraine, it would be his ability to operate successfully as a country economically. And of course, there is that $300 billion of Russian financial assets locked up in banks all around the world, including the United States, that I'm sure will be talked about at some point in time during the course of all this.
It's really interesting. Sergei Lavrov will presumably be in this room if it is going to be an expanded session, Jeannie. And I know you saw him wearing that CCCP T-shirt when he walked into the airport this morning. How are we supposed to read that?
Yeah, and I heard, Joe, that they are incredibly popular over in Russia, that the foreign ministry in Russia has purchased many of them, and he was wearing one. You know, it's hard to tell if he's just yearning for the past or if this is a sign. And you've been talking a lot today about all the symbols of this summit and of this meeting, and this is one of them, a sign that there is still hope to reconstitute the old Soviet Union, which of course is the one thing Vladimir Putin wants more than anything else, even more than being BFFs with Donald Trump. It is to reconstitute the old Soviet Union to the best that he can in the 21st century. So that sweatshirt was another sign. There's also been talk about the fact some of the food reporters from Russia were given on the airplane as sort of a sort of making fun of Ukraine in terms of the food they were serving, that the Russians have gotten this summit and the Ukrainians have not. So I think we're going to see a lot more of this as we go forward.
Wow, I hadn't heard that one, Rick. There's a lot that we could talk about here in the early stages with so little known about what's going to happen. When Donald Trump talks about 25% chance of failure, knowing he did walk out on Kim Jong-un in his first administration, how do you put that together in your mind when it comes to the gaming of expectations today? The president's lined up a couple of interviews while he's there. Is he more consumed with the staging of this event or the outcome?
Well, first of all, I think he is much more confident as a president than he was in his first term when he met with Vladimir Putin, and may have been somewhat taken in, as been widely reported, by the KGB tactics that Putin used in the first meeting they had. So he's once burned, twice learned. And I'd say, too, he is probably certainly the highest level of global power and prestige at this point of his presidency, just a little over 6 months in, and maybe more so than at any time in his first term. So he is riding a high. And I suspect a lot of this is to sustain his view of him as second to none as a world leader. And I believe that he will use this to basically portray that. Remember, we've had lots of world leaders, including Zelensky, come into the Oval Office thinking that this was a way to start building a bridge to Donald Trump, and only to be thoroughly abused in the process. And if it were just a one-off thing, we'd say, oh, you know, it's just an exception to the rule. But it is frequently the case that these world leaders don't know what they've gotten into when they enter the Oval Office. And I suspect Vladimir Putin should have some fear that this could go wildly off the rails. I mean, who knows what video Donald Trump might have that he's going to open up, you know, Steve Miller's laptop and start showing all the abuses that Russian forces have served upon the Ukrainian people. So anything could happen today. I think anybody who thinks that this is going to be Marcus of Queensberry's rules has not been watching this president very closely.
Fascinating. Jeannie, the president said on Air Force One, forget lowering the bar. I want to see a ceasefire. This is talking to reporters in the back of the plane, and rapidly. I don't know if it's going to be today, but I am not going to be happy if it's not today. I'm in this to stop the killing. So we're raising the bar again going into this?
He is. He's been all over the map on this. Of course, that is very welcome. That's what the Europeans have been asking for. That's what the Ukrainians have been asking for, that they need a ceasefire before they commence with real peace talks. But the question is, how do they get there? And what sign has Vladimir Putin or the Russians given that they are anywhere close to talking about the ceasefire? The answer is none. The only thing we've heard from the Russians in this regard is this partial ceasefire, which was an air truce, which would benefit them because, of course, they remain very strong on the ground, and that's not going to be welcomed by the Europeans or by Ukraine. So I'm not sure what the incentive is for Russia to agree with any of this. And, you know, I do think I agree with Rick that all eyes on Donald Trump today, because we cannot underscore enough how consistent Vladimir Putin has been in what he will and will not accept to make this happen, going right back to his meetings in Istanbul. I mean, nothing has changed about what the Russians have been saying, but what he has been able to do now is get back onto the stage of the world. He has been able to get a summit face-to-face with the president without Zelensky. I mean, he has had so many wins already in this summit. I'm going to be curious what wins Donald Trump takes out of this. If the only win is another meeting, that's okay. But that is nowhere near what needs to happen to reach something of an end to this war.
What do you make of the interviews, Rick? He's got Brett Baer on Air Force One talking to him on the way. He's going to sit down with Sean Hannity, I guess, on the other side of this thing. I don't know if he's still angry at Rupert Murdoch, but it does seem like this is a media event, if we've ever seen one. Should he be spending this much time worrying about journalists while he's meeting with Vladimir Putin?
Well, he's not going to get asked any hard questions by Fox interviewers. So I don't think the risk of having a blowback in the interview is that high. And secondarily, this is the president we've known for the last 7 months. I mean, he is flooding the zone on a daily basis. And of course, there is bad news at home, right? He's got scandals and all kinds of odd things, you know, focusing his time. So this gives him a respite from that.
Rick Davis and Jeannie Shanzana will be with us likely into the evening here as we watch this unfold. Russian journalists, by the way, were served chicken Kiev aboard their chartered flight to Alaska. This is Bloomberg.
7:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow at a record right now, pushing higher by 131 points, up 0.3%. The S&P, NASDAQ, they are both lower. Traders sending stocks down from records with a weak reading on consumer sentiment and an increase in inflation expectations, tempering optimism about solid retail sales. United Healthcare lifting the Dow Jones Industrial Average. Shares of United Healthcare, they're up 14%. The Dow higher by 0.3%, but the Dow right now trading at 45,049. Could see a record close there. The 10-year 4.32%, with the 2-year 3.75%. Spot gold little changed, up $1.50, 33.36 right now on gold. West Texas Intermediate crude down 1.3%, 63.14 a barrel. And Bitcoin also little change, down 0.1%, 117,786 now on Bitcoin. Sources tell Bloomberg the Trump administration is considering using funds from the U.S. CHIPS Act to take a stake in the beleaguered American chipmaker Intel. Intel shares, they're up now by 6.3%. And briefly, after earnings, Applied Materials shares, they are plunging now by 13.8%. Recapping, Dow at a record, S&P lower, S&P down 8, now down 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, live from New York. Many thanks, Charlie, as always. He'll be back at the top of the hour with the latest on Wall Street here as we approach the bell and the big meeting. Trump and Putin in Anchorage, they're both in airplanes right now, both on their way to Alaska, where they will sit down for what we're now hearing could be a much more significant period of time. 6 to 7 hours was the most recent consideration. With the time change, that would move us pretty late into the night or even into the early morning hours when we actually see these two in a bilateral news conference. That's assuming things go as planned. The president also has a television interview that's set to take place following the news conference. So he could be up all night here and flying home. They're not staying in a hotel. They're supposed to get back on the plane and fly all the way back to Washington 7+ hours when they are done. Considering the stakes and possible outcomes, with great analysis today on the terminal and online coming from Bloomberg, these two men have very different goals here, with the president now seeking a ceasefire as he articulated on Air Force One, and Vladimir Putin seeing the meeting as a win without making concessions. Real pleasure to have Philip Breedlove with us, retired 4-star general, who's been with us before here on Balance of Power, to share some insights based on his great experience as the former Supreme Allied Commander Europe, NATO Allied Command Operations, now senior consultant at Emerald Coast Strategic Solutions. General Breedlove, welcome back to Bloomberg TV and radio. We've been hearing about Russian advances, military advances on the ground in Ukraine, leading up to this moment, to the point where intelligence officials and those at the Pentagon are worried that, in fact, this could be a turning point for Ukraine as it finds itself on its heels in a war of attrition. To what extent will that frame the conversation today in Alaska?
Well, first of all, it's good to be back on, and thanks for asking me. Yes, there are a lot of people looking at what's going on the ground there, and I think Mr. Putin desperately wants this to be seen as a big advance to set his position at this negotiation table. But let's just look at a couple of facts. In the last 14 months, Russia has lost over 400,000 men, and they haven't gained even 1% of Ukrainian territory. That doesn't sound like a big advance to me.
Okay, fascinating. You, of course, were a highly decorated general in the United States Air Force, to be clear, and there's been a lot of discussion around a so-called air truce. Vladimir Putin floated this idea while fighting apparently would continue raging on the ground. Is there any point? Would it protect civilians? And is this a non-starter for Ukraine?
I think it's a non-starter in general. It's especially a non-starter for our president. Remember what our president has said now for weeks. He wants to stop the killing. He wants to stop the loss of life. And Mr. Putin is going to try to wiggle his way into continuing this war. I think that the first and foremost signal of success for our president in these negotiations, since he's set the possibility of future meetings, is that today we need to walk away with a minimum of a complete ceasefire. And then if we get that ceasefire, we start moving towards something, a word that the president has started to use in the last 3 days, a peace. And we in the military like to call that a durable peace, meaning it will stand.
You've spent enough time in the cockpit of an F-16 to understand the way a jet like that, which Ukraine had asked for, I think maybe 2 years before they actually ever received one, to understand what that would have meant for the air war in Ukraine. Should those fighter jets have been delivered earlier, and should they have come from the United States?
So I would never sort of pretend to correct you, but Ukraine started identifying F-16s back in 2012. My predecessor, the Admiral Stavridis, my predecessor as the SACEUR of NATO, he started a study which the staff under me finished back in 2013, and we were looking at what Ukraine needed to become a more Western-style military. At that time, Ukraine was asking for F-16s, and that study, commissioned by Stavridis, finished by me, identified back in 2013 that they needed F-16. So Ukraine has been seeking, and the military has been recommending F-16s since 2013.
Well, that's fascinating. So obviously you think they should have been delivered earlier. If Ukraine had a fleet of F-16s before Russia invaded, would this war have ever happened?
Well, it would certainly have been different. Now, remember that this war is 11 years old. This, a lot of people, and may I not be sounding too critical of you, but a lot of the press like to say this is a 3.5-year war. It's an 11-year war. It started in the spring of 2014, where we had the invasion and occupation of Crimea, then a partial invasion of the Donbass around Lugansk and Donetsk. All of that happened in the spring of 2014. That hot fight lasted for almost 2 years, and then there was a warm fight on what was called the line of contact for the next 6 to 8 years before this last 3.5 years of hot war, the third phase of the 11-year-long war came along. So the bottom line is you're asking a tough question. The F-16s, if they had been introduced immediately back then, would probably not have made a big difference because the military wouldn't have been proficient in using them. But certainly if we had listened to the recommendations and started providing them with F-16s back in 2013 or 2014, by now the F-16s would be a major feature in this battle, and I believe it would be very different.
This is fascinating perspective. And as we do go back to the annexation of Crimea, we were just showing a map to our viewers here of Ukraine and that red line along the eastern border that is the Donbass going all the way down to Crimea. There are ideas about freezing lines in place. That's what certainly Vladimir Putin was asking for. It's also been suggested there could be some sort of demilitarized zone in the Donbass, General. Is that a consideration?
Well, here's what Mr. Putin wants. He has smashed his army now for years against the defensive line of Ukraine, which is holding in the western part of the Donbass. Mr. Putin is unable to take that from Ukraine. As I said, he's lost over 400,000 soldiers in the last 14 months trying to break that line. And so what he can't take, he now hopes the United States or the West will give him in these negotiations. He cannot break that line, and he wants us to do that work for him. So any freezing of lines or any sort of demilitarized zone, a la North Korea, et cetera, that needs to be built from the line of contact now to the east, we should absolutely 100% never give Russia land on the west side of the fortified part of the Donbass.
Okay. This is really interesting, General, because it doesn't sound to me like you see Ukraine on the brink of failure here. It is, in fact, Russia that has lost so many troops, to your point. To what extent is manpower a restrictive force for Ukraine?
Can I give you a couple of more data points? I mean, Ukraine actually fought into the Kursk Donbass or Kursk Oblast in Russia and owned a big chunk of land. Russia was absolutely unable to take their land back by themselves. They imported 20,000 North Koreans to help them, and those North Koreans got chewed up in a big way, and Russia still has not taken back its own sovereign land inside of Russia. And now we see Russia asking for more North Koreans because they're in such manpower difficulty. And just in the last month and a half, Russia has imported almost 20,000 North Koreans to run the factories in Russia because Russia has a demographic problem and they don't have enough people to run their own military industrial complex factories. So does this sound like a nation that's winning a war?
Fascinating. You were, of course, as we mentioned, Commander, U.S. European Command and Supreme Allied Commander Europe of NATO Allied Command Operations. What does this summit mean for Europe if there are no European leaders at the table?
Well, that's unfortunate. I mean, we in the West have had sort of two rules. Mr. Putin desperately wants to deal with America and make decisions about Europe. We've always kept Europe at the table, but this is a different case here in Alaska. Additionally, we have always in the West, you can remember this all the way back to President Obama's time, we say nothing about Ukraine without Ukraine. In other words, we're not going to deal with Russia about Ukraine. And I think you see the president now adopting a similar approach. He has said he's not going to talk land swaps and things. That is going to have to be done between the three, the U.S., Russia, and Ukraine. And I would hope they would include Europe in that as well. But the bottom line is we need to make sure that when Ukraine is deals are made on Ukrainian land, that Zelensky is at the table. We cannot, as the president has said himself in the last day and a half, we're not going to make decisions like that for Ukraine. Ukraine has to be
as we spend time. Understood, General. Sorry to interrupt you. As we spend time with General Breedlove, we're showing our viewers on Bloomberg TV and on YouTube now a live view of the runway, the arrival platform, if you will, at the joint base. As you see a uniformed gentleman walking in front of the Alaska 2025 sign. There's literally a red carpet on the runway and 4 American fighter jets lined up here at the Alaska 2025 sign. General, it almost looks like something that you would see in an Olympic village, save the fighter jets. The staging here is fascinating, and I'm wondering, as someone who held a leadership role in the Pentagon, what you make of the fact that the Defense Secretary, Pete Hegseth, is not on this trip. He stayed behind in Washington despite the fact that it's being hosted at a U.S. military base.
Listen, I don't do politics. It's never been something that I engage in. As a senior military leader, I like to keep out of politics. So I'm not going to grade the president's paper on who's at or who's not at the table. I will say Elbendorf Air Force Base there has often held these kinds of very important meetings and things, and they know how to roll out the red carpet. And quite frankly, I'm glad our U.S. military decided to give Mr. Putin a little show of real air power as he steps off of his airplane. As you know, air power has largely failed Russia in Ukraine. They have been unable to establish air superiority over even their own troops there, and that would be a major, malfunction in a Western campaign.
General Philip Breedlove, it's great to have you with us once again, General. Thank you so much for the insights. As we see some images of the room where the bilateral news conference will be held as well, a blue backdrop that says "Pursuing Peace" with U.S. and Russian flags on the stage, 2 podia at equal height. Extended coverage throughout the day here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. I'm Carol Masser. Tim Stenivek is off today, and with us is Bloomberg News cross-asset reporter Emily Graffeo. Emily, on a day where, yes, we are watching the markets, but we are watching what's going out on the west, all the way west. We're talking about Anchorage, Alaska, because we are awaiting President Putin and President Trump to hold their meeting.
Yeah, that's right. And it seems like markets are waiting as well, because if you look at how the trade is going today, the S&P 500 is basically flat. Tech stocks are falling a little bit. We're going to get into all of this, Carol, right?
We are indeed. We did have a record on the Dow Jones Industrial Average, so that index is certainly up today. Hey, we are going to head to Anchorage, Alaska. We are going to have a scene setter with our own Anne-Marie Hordern, who is on the ground. And in terms of economic news, we did get a read, Emily, on retail sales, and we've got a great voice on that.
Yeah, we're going to talk to Dana Telsey, founder, CEO, and chief research officer of Telsey Advisory Group. She is one of our go-tos here on anything retail. We're also going to talk United Health, those shares getting a shot in the arm after Warren Buffett and other big investors have bought in.
Yeah, this is certainly a standout in today's session. Opendoor also rallying. The CEO is out, so we've got Eric Jackson back with us to talk about that story. All right, folks, all of that to come in the next 60 minutes. Let's get you going on a look at that trading session on this Friday. Here is Charlie Pellet.
All right, thank you very much. Lots going on, and we got you covered here at Bloomberg. We've got the Dow, as Carol mentioned, trading at a record. We begin there up 159 right now, higher by about 0.4%. But on a day that has brought us a lot of economic data, S&P 500 index lower, little change, retreating from a record, 64.63 where we stand right now. S&P down 4, down under 0.1%. Little change, perhaps the key takeaway there. Little changed indeed near a record. We've got NASDAQ down 47 for the NASDAQ Composite Index. That's a drop of 0.2%. The Russell 2000 Index of small cap shares down 0.3%. And our Mag 7 Index, little changed on the day, down under 0.1%. The 10-year 4.32% with the 2-year that's currently yielding 3.74%. Gold flat on the day, 33.36 the ounce. West Texas Intermediate crude down 1.5%, 63.02 a barrel on WTI. So again, recapping here, we do have U.S. equities. It is a mixed day with the Dow at a record up 153. The Dow, by the way, at 45,062. If we close at that level, that would indeed be a record up 0.3%. But S&P little change, down 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much. Charlie Pellet there with an update on today's trading session. I'm Carol Master along with Emily Grafeo in for Tim today. Let's take a look at certainly our top stories today. And that is the meeting between President Putin and President Trump. We are kind of keeping an eye on the tarmac in Alaska, awaiting the arrival of both officials. So as soon as they do touch ground, we know it's quite a trip, certainly from the nation's capital for President Trump. He left early this morning. President Putin expected to land shortly. So keeping a watch on when they do indeed touch ground. And we will, of course, keep you any headlines from that meeting, bring them to you. In the meantime, in Anchorage, Alaska, she's been there. Bloomberg Surveillance co-host Anne-Marie Hordern. Anne-Marie, first of all, set the scene for us. What have you seen? What have you heard since you landed?
Well, the scene is really we're at a U.S. military base. This is where the two individuals, the two leaders, will be meeting. This is going to be the first time Putin has stepped foot in U.S. soil since 2015. He last met with President Obama at the UN General Assembly, and it's the first meeting between Trump and Putin since Trump's return to office. So there is a lot of trepidation, I would say, on both sides about the outcome of this meeting. You just had the president speaking to Fox News on Air Force One on his way to Anchorage, saying if the meeting's not going well, he says, I'm going to walk. And he did say that in an earlier interview as well, saying there's even a 25% chance that the interview is negative and he'll give a singular press conference, a solo press conference. What we've heard from Yuri Yushakov, who is a key foreign policy aide for decades to President Putin, briefing reporters earlier this week, they said that the plan is for these two leaders to meet one-on-one, and then you would have the U.S. and Russian delegations have an extended bilateral meeting together, and then the two would give a joint press conference. We also heard from Dmitry Peskov, the Kremlin spokesperson, who said the meetings could last, Carol, as long as 6 to 7 hours between these two delegations.
Anne-Marie, what about Trump kind of mentioning that now he's thinking that we'll have more than just one meeting? Talk about the timeline here. If we're going to have additional meetings, what really is the significance of what we see today?
Well, today for the president, he said this is really a feel-out meeting. The White House has described it as a listening session for the president, and the president has been downplaying and really lowering the bar of the expectation of what could come from this meeting. Really, the best case for this White House is that at this meeting, Putin agrees to actual diplomatic process to bring this war to an end. But why are people calling this a high-stakes meeting, including the president himself, is because when you have two leaders meeting for a summit, it usually should be pretty boring. They should be signing an agreement that their teams have for months or years have been working on. Shuttle diplomacy takes a very long time, but this is really the start of that longer process, and that would be the best outcome. And the president's talking about the real meeting would be a secondary meeting. What he wants to deliver today is a secondary meeting where President Zelensky can be at the table. There's been a lot of discussion about a territorial swap and what that could look like. This is really a red line, I would say the third rail for Zelensky and as well as European leaders. The president was asked about this on Air Force One, and he said territorial swaps will come up in conversation, but it's not for him to decide. It's for Zelensky to decide. It's his job to get these two to the table.
Yeah, there's the elephant in the room in Anchorage or on the tarmac. President Zelensky is not there. The significance of that, Anne-Marie.
Some folks that are testing in the mall.
Well, really, he's not here, but his views, he hopes, will be represented by President Trump. And it would be a win for Zelensky if President Trump is able to deliver a second meeting where Zelensky is at the table with Vladimir Putin. We heard from Friedrich Merz this morning as the German chancellor. He was one of those individuals on that call with President Trump earlier this week with European leaders, and they really implored on the president to not give in on territorial exchanges. That is for Ukraine to do. So that for the European capitals is also a red line. But yes, he is not here. This is one stark difference between the Biden administration and the Trump administration. Trump does want to make sure he's having these conversations with President Putin. Moscow is almost viewing what's going on in Ukraine as only one agenda item. They want to talk about bilateral relationships and restart them with the United States. In February of next year, you have New START that is going to be expiring. They want to talk about nuclear arms. They want to talk about arms proliferation. They want to talk about geopolitical and energy cooperation. We're just south of the Arctic Circle. The Arctic is incredibly important for Russia as well as for the United States when it comes to access to rare minerals. So they view what's going on in Ukraine as just one piece of the puzzle. But when the president was asked about the fact that he said business leaders will be coming along with Putin, I think there's only going to be one business leader who's Kirill Dmitriev, who's the head of the RDIF. He said there will not be any business, though, until the war is over. So the president is making sure that that is top of the agenda.
Fascinating to hear that. All right, we're going to be watching. We know you will, and we will be coming back to you throughout the day. Anne-Marie Hordurin, thank you so much. She is there in Anchorage, Alaska, as we await both of those leaders to touch down on the tarmac in Anchorage, Alaska. Again, President Putin and President Trump. All right, joining us now, the conversation continues. Elise Giuliano, she is Senior Lecturer in Political Science at Columbia University, also Director of Graduate Studies at Columbia's Harriman Institute for Russian, Eurasian, and East European Studies, and Director of the program. She joins us here in studio. This summit, it feels like even if something significant doesn't get done, it's significant in that we are seeing these two leaders meet face to face. Is it?
It's certainly a departure from the normal turn of diplomacy. Usually,
why do you say that?
Because a summit, usually the lower level diplomats hammer out what will be decided ahead of time, and they go into the summit knowing the outcome. Here, nobody knows what to expect. Least of all Trump. And that is not a very, good place to be. We want to know. We don't like the feeling of insecurity. So I think Trump is thinking about this not as a summit, but in a different way. Just like, let me talk to him, see what he's thinking, kind of get the sense of things and see if I can make some progress. So for Trump, it's very, typical for his kind of a sort of shoot from the hip personal relations approach. But it's not what, international diplomats would expect from a summit.
How would you categorize the current status of the Trump and Putin relationship, particularly because heading into this meeting, there's a lot of columnists out there who are calling this already a diplomatic win for Putin just because he's coming on U.S. soil and just because he's agreed to this meeting?
Well, I would say that it's a win. I don't love that term, but it's a win in the sense that this is a war not just on the battlefield, but it's a war of narratives. And Russia's narrative is that Ukraine is not a country, and Ukrainians are not a people. They're not a nation. And by not having Ukraine at the table at the summit, and instead having the U.S., it feeds that narrative. Like, they're not here because they're not a country. Zelensky's not here because he's not a legitimate leader of a country. And in fact, you know, for Russia and for Putin especially, Ukraine is part of Russia. So that's the narrative he's pushing, and the summit kind of feeds into that. And it's a win in the sense that Putin can take that message to his population. He can take it to other audiences around the world, like North Korea, like Iran, like China, and say, you know, look, I'm a superpower. Russia's back in the game. We were a superpower, and we're a superpower again.
Elise, how much of this is about optics? Certainly for President Trump as well as President Putin, in terms of European leaders watching, China watching, Iran watching. Like, I just think about, you know, how important it is in terms of how this comes out for each of these leaders, and how they are perceived around the world.
I think what I was talking about, you know, definitely is about optics for Russia. Even though it's an authoritarian country, they have to be somewhat concerned about what the population thinks. And lately, Ukraine has been taking the war to Russia and disrupting flights. Even some civilians have been killed. Well, not many civilians. I would say there's been some activity on the territory of Russia, and that makes the war less popular. So it's optics, but it's also, I think that Putin is really trying to get something out of the U.S., trying to convince Trump, you know, that Russia's position is the correct one. And if he can do that, he would make a lot in today.
Meaning the position of a land grab?
Yeah, yeah.
Because he already succeeded with the Crimean Peninsula back in 2014. And so here it is a second one. So is that the end game for him, to kind of get back? It's not an expansion of territory as he sees it. It's going back to land that used to belong to...
So that's his claim, that this land used to belong.
Right, yeah. That's his claim.
So part of this is about territory, and that's certainly one of the demands, of Russia's demands, that they're asking for territory, and they're even making the outrageous claim that they want some of the territory that they don't even control militarily, right? In Donetsk and in some of the other areas in the east. But there's also a political demand, also outrageous. And that political demand is that Ukraine cannot join the West, it cannot join NATO, and it cannot join Europe. So again, it's saying Ukraine is not a country. It doesn't have the right to make sovereign decisions for itself.
We are talking with Elise Giuliano. She's senior lecturer in political science at Columbia University. So having said that, will anything in your view come out of this meeting? If that is the position of President Putin, that's a tough one for the U.S. to even maybe concede to, potentially.
It's something the U.S. should not concede, and you use the right term there, because it would be a massive concession, and that's not a place we want to be, right? We want to be defending state sovereignty. We want to be defending a European ally, Ukraine. I think that the U.S., though, really has leverage, and Trump really needs to use that leverage, and he started to. He put 50% tariff on India for buying Russian oil and gas. And there's a lot of leverage. Like, let's keep in mind that Russia's economy is the size of Italy, and that was before the sanctions. So there's a lot more the U.S. can do in terms of sanctions. There's a lot more the U.S. can do in terms of armaments and military support for Ukraine.
And we, Emily, as you know, at Bloomberg, have done a lot of reporting about the Russian economy that's really stalling because of that diminishing oil revenue. So he is in economically a tight spot.
Yeah, to what extent does that help Trump and the U.S. here and actually finding some success out of this summit?
I think if the U.S. and if Trump realizes that Russia is not the Soviet Union, I mean, it does have nuclear weapons, and this is a a difficult point. It does, and I think that's why the Biden administration was so cautious in its support for Ukraine. But I think that understanding Russia's economy, and in fact that its GDP is dropping and that it's in a tough spot, would help the U.S. to understand the forms of leverage it has. So it could really turn the screws, and I think Trump is coming around to this.
The President Trump could have turned the screws last Friday, right? There was a sanctions deadline that came and went.
Exactly, with no comment by Trump.
Exactly.
Right. So it's interesting that instead of commenting on this, on the possibility of further sanctions for China or for India, of these secondary sanctions, instead they said, oh, let's have a bilateral summit, which just seems like a gift for Putin. So this is why Europe and I think Ukraine have been a bit nervous about the outcome of this summit.
Is there a possibility at all then, in your view, that Zelensky does get to join a meeting? Maybe not this one, but maybe in the future, particularly if Putin is deliberately trying to not have him included in these talks.
And President Trump seemed to indicate that European allies could come in, or President Zelensky.
Right. So Trump understands now that it's important for Europe and Ukraine to have a seat at the table in its own war. But I think the
You
problem...
smile when you say that, but it is kind of crazy when we think about it. But go ahead.
It is. It is. But I think the problem, again, is Putin. He has never recognized Zelensky as the legitimate elected leader of Ukraine. And so to sit across, for Putin to sit across the table from Zelensky gives Ukraine as a state legitimacy, it gives Zelensky legitimacy, and that undercuts the narrative of Ukraine being, again, an illegitimate state and part of Russia.
You're a study of Russia, and I feel like we can study countries, but we can study leaders, and they tell us so much. What do we need to understand about Vladimir Putin?
Well, Putin is a very transactional leader, although in this case...
So it's a good match.
It can be a good match, and that's why you see the summit happening also, right? Because we hear that Russia is coming with the idea of selling the U.S. on some economic deals, right? So they kind of see that they can do business with Trump. But at the same time, I think we really do need to understand that Putin has been intransigent from the beginning of this war in terms of Ukraine. He doesn't always know it seems that he doesn't always know what's going on the battlefield, and he is committed. And they have said there's not going to be anything signed out of this meeting. They said it. So there's not going to be a ceasefire. There's not going to be a kind of agreement. Perhaps the most we can hope for is a continuation of conversation, and perhaps Russia realizing that the Trump administration will start to exert the leverage that it does have.
It's a really good reminder. I feel like our expectations have been managed in a big way, right? Kind of going into this. So, and I feel like the president has said that over and over again, the idea of the second meeting. So, I guess to be continued. But we got to wait and see what happens here. Elise, thank you so much. Really enjoyed this. Elise Giuliano, Senior Lecturer in Political Science at Columbia University, also Director of Graduate Studies at Columbia's Harriman Institute for Russian, Eurasian, and East European Studies, Director of the Program on U.S.-Russia Relations, joining us in studios. Thank you so much. All right, folks, we continue to watch the tarmac there in Alaska, waiting for those leaders to land. As soon as they do, we will let you know. In the meantime, we've been watching that retail sales number that came out this morning, and also downbeat consumer sentiment numbers. Great voice on everything retail. Dana Telsey will be with us when Bloomberg Business Week Daily continues. I'm Carol Massar with Emily Grafea.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average at a record 45,017. Big question, will we close above or below 45,000? Stick around and find out at the close. Right now, looking at an advance of 104 in the Dow. That is a gain of 0.2%. However, stocks, for the most part, lower now, with the S&P down 11, 64.57 where we stand right now, drop there of 0.2%. Stocks pulling back from records as consumer sentiment fell for the first time since April. NASDAQ down 79, drop there of 0.4%. Our Mag 7 index in the red, down 0.3%. The Russell 2000 index of small cap shares also lower, down 0.4. The Dow, however, at a record up 0.2%. The 10-year at 4.32% with the 2-year, 3.75%. And West Texas Intermediate crude oil right now down by 1.6%, down 103 a barrel, 62.94. The price of Bitcoin right now down 0.5%. 117,413 per token. United Health Group shares jumping after funds piled into the company, which has been hampered by a federal probe into its business practices and weakening results. United Healthcare surging 13.6%, again giving a lift to the Dow at a record up 0.2%. Keeping it all in context, S&P down 0.2. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Emily Grafeo in for Tim on this Friday. We are watching Anchorage, Alaska, of course, awaiting that meeting between Presidents Putin and President Trump. We just have a live shot of the tarmac. Just moments ago, we saw Air Force One move across the tarmac. So President Trump is on the ground there in Anchorage. He has a list of officials with him from the White House. Secretary of State Marco Rubio, Secretary of Treasury Scott Bessent, Secretary of Commerce Howard Lutnick, also John Ratcliffe. So again, he and his team are there on the ground as they get ready to meet with President Putin. We will, of course, monitor and bring you all of the headlines. In the meantime, at 8:30 a.m. Eastern this morning, we got a headline on retail sales for the month of July, and they were solid, broad-based advance, and the prior month was revised higher, though economists were cautious on the trend going forward, given a softening jobs market and weaker consumer sentiment. We did see U.S. sentiment falling for the first time since April. And then we've heard from CEOs, Emily, Pandora, Tapestry, a lot of folks talking about the impact of tariffs.
Yeah, and particularly I keep hearing the word economic uncertainty, and I don't know if that's something that you hear every earnings season, but it feels like it's something that these C-suite executives have been bringing up more and more.
Let's ask Dana Telsey. She knows retail like no other. She is founder, CEO, and Chief Research Officer of Telsey Advisory Group. She's with us in New York City. Dana, thank you so much for joining us on this Friday. When CEOs are talking about the economy, do they always kind of talk about it, or do you feel like we're seeing more momentum around some of those earnings releases about concerns about the consumer and the economy?
Thank you for having me. And yes, I agree with your take. You're definitely hearing more commentary that continues to be increasing quarter to quarter about the uncertainty of the economy. What you've heard from CEOs this week and a little bit last week, and we'll have a lot more next week, is that spending and sales since the end of the June quarter has improved and it's increased. Some of this may be because the pull forward of sales, given the price increases from tariffs, are not yet fully there. And you've also heard the volatility. For example, maybe like April and May was weak, but then June and July picked up. And is the new normal going to be volatility and then improvement, volatility and then improvement? The lack of consistency makes it difficult for C-level executives to plan their businesses and give guidance.
But help us understand, I mean, it's been a couple months since Liberation Day. We've been dealing with tariffs. Is all of this uncertainty still linked to consumers just looking at tariffs, businesses looking at tariffs, and still not understanding exactly how those are going to affect their businesses?
Well, there's a couple things. First of all, what you're seeing companies do is they're diversifying their sourcing. And as they're diversifying their sourcing, many of them pulled out of China, went other places. The tariff rate went higher than China, and now some of them are bringing back their sourcing to China. Second thing is we do a tracker of 80 items each week that we price. We've been doing this since April 16th. And one of the things you're seeing is our pricing, and they're iconic goods, whether a Levi's 501 jean or a Barbie doll. You've been been seeing prices begin to go up. Certainly on footwear, we've seen that, and we expect it to continue to increase going forward. You had Amazon Prime Day this year, 4 days instead of 2 days. And the first 2 days versus last year were up double digits. So consumers are taking advantage of deals that they may think they're getting now, coupled with newness in product like closed-toed Birkenstocks, where they're buying some of the new items that they wouldn't have had before and were just introduced, that's capturing the interest of a younger consumer. So there's a mix of things that are going on to create this dynamic of what's happening to sales.
We are talking with Dana Telsey of Telsey Advisory Group, talking retail. We will continue in just a moment. In the meantime, we want to take you to Anchorage, Alaska. We have seen the door open on Air Force One. It has landed there. So the President Trump and his team are there on the ground. We should point you are waiting their departure from Air Force One. Coming up, there will be a ceremony with President Trump and President Putin. We are expected on the tarmac, and we are expecting then that to be followed by a bilateral meeting, also a lunch meeting, and then, depending on how that meeting goes, we could see a joint press conference. We did hear from President Trump yesterday and earlier about the outcome will determine whether or not we will see both leaders in a news conference later on this evening. Bloomberg will be all over this coverage, and keep yourself here for all of the headlines. Again, the door is open on Air Force One. We reminded all of you that the president's there with a whole host of his cabinet. Secretary of State Marco Rubio is there. The Treasury Secretary Scott Bessent is there. The Commerce Secretary Howard Lutnick is there. Susie Wiles, John Ratcliffe is also there. Caroline Levitt of his press secretary and of the media office is there as well. So he is there with, it looks like about a dozen officials from the White House. Ambassador Steve Witkoff is there. Ambassador Monica Crowley is also there. So again, his whole team, Emily, is certainly there in full force as they get ready to meet with President Putin.
And Carol, according to the White House press pool, the one-on-one meeting between Trump and Putin is now set to be a 1-on-3 encounter. Rubio and Steve Witkoff are scheduled to join.
All right, so interesting, because we've been certainly speculating about who would be indeed in that meeting. So again, our live blog here on the Bloomberg, as Emily mentioned, that it will be a one-on-one meeting between President Trump and Putin, and now 1-on-3 encounter is what it's turned into, according to the White House press pool. Secretary Rubio and Special Envoy Steve Witkoff are scheduled to join. And then the White House has said that the president is due to hold a joint press conference with President Putin after the meeting. If it takes place, it will certainly be something we will be watching closely, since the last time we saw a meeting between these officials. So we'll be watching it and bringing you any of the headlines. We do want to get back to talking about the U.S. consumer and retail. Dana Telsey is still with us of the Telsey Advisory Group. Dana, so the retail sales numbers, again, it's an interesting number, and it could be that people are just paying higher prices for everything. Would you say, in a nutshell, if you kind of roll in the U.S. consumer sentiment feelings, down for the first time since April, they're concerned about inflation, consumers are, that the U.S. consumer is largely cautious?
Yes, they are. They're more discerning and cautious consumer. They're more selective in their spending. And you're seeing it, whether it's in restaurants, you're seeing it in some travel, and you're seeing it in the purchase of goods. More to come this upcoming week, given that Target, Walmart, all reporting their results, and Estee Lauder. So more to come in dissecting what it looks like.
Dana, I have to get your thoughts on the Tapestry earnings that we saw just earlier this week. What did you make of kind of that divergence in their two businesses? The Coach brand has been so popular with Gen Z. It feels like everyone wants to buy a Coach bag now, but the Kate Spade brand really pulling back. Just walk us through high-level thoughts there on what you made of those earnings.
When you think of Tapestry, it's a portfolio company with two brands, like you said, Coach and also Kate Spade. The Coach brand up double digits. The Coach brand seeing average unit retail selling prices increase, capturing more new customers and going from strength to strength by adding items in their collections that allow them to have a consistent and sustainable business model. These Kate Spade brand is only 15% of sales. More of their goods are sold in the United States, making them more impactful impactful to tariffs. And that was definitely one of the headwinds. And they have to set the transformation. The surprise was they lost money in the quarter. There's a reset going on. It's taking longer than expected. You're going to have this upcoming fiscal year where you're going to need to see stabilization markers of what the brand is, while they also try to lean into the Coach playbook and utilize some of those learnings to update and improve Kate Spade. More to come, but 85% of the business is Coach, and that's growing.
All right. In terms of earnings, just one last question, 30 seconds. What's the big one next week?
It's going to be Walmart and Target. Is Target going to talk about a successor? Is Walmart still seeing growth in food? And they seem to be the market share gainer at Walmart.
All right, going to leave it there. Dana, thank you so much. Dana Telsey, CEO and Chief Research Officer of Telsey Advisory Group, joining us in New York City. All right, folks, we want to go back to certainly the tarmac in Alaska. We know President Trump's plane, Air Force One, is on the ground there. The door is open. We are waiting the president to step out there and meet. We are assuming President Putin is either there or close to being there because they are expected to meet on the tarmac. Let's head to our co-host of Balance of Power, Joe Matthew, who is, of course, watching this and doing special coverage throughout the evening here at Bloomberg. Joe, we're awaiting President Trump at the top of those stairs.
That's right. He's been in the plane for a little more than 7 hours after taking off a bit late this morning, which has pushed the schedule a touch. Vladimir Putin, by the way, not flying from Moscow. To your point, he is supposed to be there imminently, having taken off from Magadan in eastern Russia, about 2,000 miles away from Anchorage. And how about the optics here? It almost looks like the beginning of an Olympic event with the staging set, the big letters, Alaska 2025. They've got 4 American fighter jets out there, and now Air Force One rolling up to a red carpet that was literally being rolled out just a couple of moments ago. The trappings here when it comes to the optics are very important, and even more so because it's Donald Trump on that airplane. He really wants to make this a stage for him to express not only American power, but his own position as a statesman here, a statesman for the world as he sits down with another world leader. I will tell you guys that things have changed a little bit in terms of the construct of this meeting. They're still going to be one-on-one together, and we're not sure exactly what the area is or what the room is going to look like that they'll be sitting in. But there are a number of folks with the president, a big entourage, including Secretary of State Marco Rubio, Treasury Secretary Bessent, Commerce Secretary Lutnick, Steve Witkoff, his envoy, who's come to know Vladimir Putin quite well. They're going to have what they're calling a working lunch with their Russian counterparts following this meeting between Trump and Putin. It's unclear how long that's going to go. We are still waiting for a bilateral news conference with Trump and Putin together. It'll be their first since Helsinki, which John Bolton reminded us today is something he regarded as the darkest day of the first Trump administration, the first Trump term. And all of this is helping inform what's going to take place today. I'll be deeply curious to see the president's posture, to see the expression on his face, to see if there's smiling or backslapping, or if this is a bit of a cold get-together here. We know that Vladimir Putin has been showering the president with compliments and has been trying to soften up his arrival here today in Anchorage. But this is just about to start, guys, and it's a truly historic day in Alaska.
Yeah, certainly historic. And it was interesting. I think I heard on your program earlier on Balance of Power, Joe, that this idea of, to see the U.S. Fighter jets there on the tarmac at a time when we know Russian President Vladimir Putin is strained when it comes to military operations and air power in particular in that fight with Ukraine.
And so, Joe.
And has been calling for... Yeah, go ahead.
Oh, sorry. Go ahead, Joe.
He's been calling for an air truce, in fact, which is something that could be expressed at this meeting today. It's unclear. And the idea of fighting raging on the ground while there's a truce in the sky might be something that could at least protect civilians. I think that's how this was being framed, because Vladimir Putin continues to send missiles into civilian neighborhoods and apartment buildings. But it's very unclear if anything short of a ceasefire would be acceptable today to Ukraine.
So, Joe, the one-on-one meeting here, it was going to be a one-on-one meeting between Trump and Putin, now set to be a three-on-three encounter, at least according to the White House press poll. We do want to correct, we had said that it would be there would be one participant from the Russian side. Now it looks to be a three-on-three encounter. What's the significance of now more officials being added to the meeting?
Yeah, it's hard to tell, and I'm glad that you mentioned that. This is something that just developed a short time ago, that Marco Rubio And interestingly, Pete Hegseth, they mention, is there because he was not on the Air Force One list. But Rubio and Witkoff will be joining the president. Having the Secretary of State present for a meeting like this should not be considered unusual. Steve Witkoff, as the special envoy, is going to play a role in this meeting because, as I mentioned, he's become quite friendly with Vladimir Putin following some very extended sessions that they have held one-on-one in Moscow. So it does change the dynamic a bit to consider that you'll have Trump, Rubio, Witkoff with their Russian counterparts in the room. The matter of Pete Hegseth is curious. This is going to be an expanded bilateral working lunch that they're talking about that will come later. Trump, Rubio, Hegseth, Bessent, Lutnick, the Chief of Staff, Susie Wiles, and a few others. That could go on for some time. So it's unclear to us that we could be talking about this in the wee hours of the morning tomorrow by the time these guys hit the podium.
You know, it's interesting. We just had Elise Giuliani from Columbia University. She's an expert on Russian studies, European studies, and she mentioned that President Putin is a transactional president. And, you know, many have called President Trump a transactional president. So it is interesting that they both come to the table wanting different things, but you wonder how much of that is going to be at odds, Joe.
Well, and that's, you know, a big question that we have is how much business is going to be discussed. I know you guys were getting into that earlier because this could be seen as a real point of leverage for Donald Trump. The Russian economy is in a shambles right now and has been for some time. And the idea of doing business with the United States might seem very attractive to a Vladimir Putin who doesn't necessarily have a lot of interest in ending this war in Ukraine. He's been ramping up attacks on Ukraine and trying to gain as much leverage militarily as he can. But to suddenly find the Commerce Secretary in Anchorage today, the Treasury Secretary, these were not the names that we suspected that we would be talking about. And Vladimir Putin also has floated the idea of some sort of arms control agreement coming out of this. So we've got a lot of cross currents that may not necessarily involve Ukraine in the conversations that are going to be happening today. And frankly, that makes Europeans nervous, and it certainly makes President Zelensky nervous.
Right. When we think about the leverage here that the U.S. has, what exactly comes to mind? What can Trump really use in negotiations right now?
Well, look, it's a good question, and I'm not sure exactly what it is that he's going to be proposing, but the idea of secondary sanctions that the president has hanging over Moscow right now is probably the beginning of that answer. The idea of sanctioning the countries like India and China who buy Russian oil and staving off what is really the feedstock and the money lines of what even now Donald Trump refers to as the Russian war machine. If they can't sell oil, they're going to be in much more dire straits economically than they are now. The idea, though, of being brought back into the fold, so to speak, to be seen as not a pariah on the world stage and maybe do business with the Western world could seem very attractive to Vladimir Putin. But let's remember, too, President Trump has talked about that second meeting. And it's not likely that we're going to have the framework of a deal unless, look, maybe they have some kind of massive breakthrough in the room today. We'll allow for anything because we just don't know. But even Trump himself has suggested the second meeting would likely be more productive and could also include Volodymyr Zelensky.
What will you be watching out for as this evolves over the next few hours?
Well, you know, look, the body language will be everything, right? I want to see these two on the tarmac and see what this interaction is like. And then they're going to disappear for a while, and it could be hours. So we're going to be watching for how they seem when they emerge and into the briefing room that has been set up. By the way, we have had a look at it. There are a lot of chairs set up for reporters and a relatively small-looking stage, a blue backdrop behind the stage with the American and Russian flags, and it says "Pursuing Peace." That's what you'll see reading over their two heads as they're taking questions from reporters. Is this going to be a repeat of Helsinki, or would it be more like when the president went to meet with Kim Jong-un? He walked out on that meeting when he didn't find the terms that he wanted in a nuclear deal. We're allowing for both extremes today and everything in between, and we're going to find out live together here on Bloomberg.
We are talking with Joe Matthew. He is co-host of Bloomberg's Balance of Power. Joe will be doing special coverage from 5 to 9 p.m. this evening following these meetings between the two presidents. In the meantime, we've got a live shot for those who are listening on radio of Air Force One. The door is open. The president's been on the tarmac now for some time, I would say 10, 15, 20 minutes at this point, traveling with a large delegation of his cabinet, and we are waiting for his arrival. We are expecting he and President Putin
to exchange greetings on the tarmac, a welcoming ceremony, if you will, there in Anchorage, Alaska. I mean, Joe, you know, one of the things that we've been talking about constantly is that typically there are tons of meetings that have been going on for some time with senior diplomatic officials before we actually get to this point, which is a reminder that this is, again, as the president said, probably just a first meeting before things move ahead. But it's very different from what is typically done in diplomacy.
That's for sure. And, you know, especially when it comes to logistics, to have less than a week to throw this together is considered pretty remarkable for the advance staff working at the White House. I was speaking this morning with a former advance man from the George W. Bush administration, talking about what's actually inside Anchorage. It's tourist season. There are almost no hotel rooms available. Right now, there are no rental cars. So what they've actually been doing is flying vehicles, hardware, and people from the lower 48 up to Alaska just so we would have the bandwidth to carry out such a thing. I spoke with the governor of Alaska yesterday. Mike Dunleavy said it's a good thing that it's on a military base because it's self-contained. Obviously, security is not a factor there, and it's something that made, I think, the planning a little bit easier. But for reporters, my goodness, getting up there was a bit of a challenge and a pretty expensive endeavor here. There is a hope that there will be a payoff for the media who have come from not only the United States but Russia to actually get some questions. By the way, it's interesting to learn that some of the Russian journalists who were flying over on a charter to Alaska were served chicken Kiev.
I've heard this.
By the Russian delegation, kind of trolling, I guess, or I don't know, somehow poking fun at Ukraine on the way. It just reminds us how sensitive all of this is.
Absolutely. And I've been reading various reports about how many Ukrainians actually live in Alaska and have taken refuge there since the war began, and potentially laying low on concerns about they being immigrants, basically, and just concerned about not kind of stepping out of line, if you will, as these meetings go on. Having said that, Joe, just a reminder that this meeting between the two presidents expected to begin at 11 a.m. local time in Alaska, 3 p.m. Wall Street time. So we're talking in about 17 minutes from now. The president is scheduled to depart Alaska at 5:40 p.m. local time, so we're talking just before 9 o'clock Wall Street time. It seems like a condensed, is that a short period of time? We know that there's a bilateral meeting, a lunch meeting. You've covered a lot of these events.
Well, you know, that schedule was put forth before we heard about this working lunch, so I'm not really sure how he can possibly get out of Dodge that quickly. From the start, though, this was supposed to be a day trip. Donald Trump doesn't like to spend the night anywhere other than his own bed. So, I mean, he's going to be up and walking around and dealing with people sitting at the table the whole time that he's there. It's just a question of how long that will take. And I'll remind everybody, he not only did an interview on the way over with Fox News, he's supposed to do another one there before he leaves. And if anything keeps this president on time, it's probably a live interview on cable news. So maybe that will actually get him out of the meeting at some point before we see him talking with reporters. But that has all yet to be determined. Look, guys, on a normal day at the White House, as you well know, Carol, we could run 2-3 hours late. So this could be an even more extreme version.
As someone who runs late all the time, he's a man after my own heart. No, in some ways. All right, going to leave it there, Joe. We will certainly be watching all of your coverage. So appreciate you weighing in here as we await President Trump to step out from Air Force One. The plane has landed in Anchorage, Alaska. We are waiting to see him step down with his team, quite a large one, in terms of the president's key advisors and cabinet. So again, keeping an eye on that. Also looking for signs that Russian President Vladimir Putin is also on the ground. The two are expected to greet there on the tarmac. Our thanks to Joe Matthew, co-host of Bloomberg Balance of Power. He will be covering this throughout the early evening hours here at Bloomberg. In the meantime, I'm Carol Massar, along with Emily Grafeo here on Bloomberg Business Week Daily, just looking at our live blog, and they pointed out as they track the meeting between these two officials that the White House says President Trump is due to hold that joint press conference with President Putin after the meeting. Our own reporters weighing in. If it takes place, President Trump's performance will be compared against the now infamous 2018 news conference in Helsinki, which made us wanted to kind of know more, remind all of you about what happened then. And on that, we welcome Derek Walbank. He is Bloomberg News senior editor for U.S. economy and government. He joins us from San Francisco. Derek, people might be Googling, searching to remind us what happened back in 2018. Set the scene for us on that.
Well, the Helsinki summit is one that sort of is hanging over this this anticipated gathering between Trump and Putin, and part of the reason is because it did not go well for the American president. It was one where the real highlight of the situation was Trump appearing to suggest that he was going to take Russia's word for it against U.S. intelligence analysts about what happened in Russia's role in the election that had just gone. It was widely panned, including by Trump's own party. House Speaker Paul Ryan had notably negative things to say about it, and it seemed not to go well. Now, where this is going for here is that Donald Trump is very sensitive to the idea that he does not want to seem like he's going to get played by Vladimir Putin in any sort of way, right? And so you've seen Trump in recent days kind of walk up to this summit talking about a number of things. One of them is he's kind of downplayed the chances of anything massive happen here, even as there have been, I think, hopes that there would be a pretty substantial breakthrough on the White House's side. But Trump has publicly sort of downplayed what may come out of this summit. Secondarily, there have been threats that if this doesn't go well, Trump has said he could know very quickly. He told Fox News, Brett Baer, on Air Force One headed to this summit, that he would be willing to walk away if it doesn't go well. And the White House has also sort of publicly mulled the idea that just as some of the restrictions on Russia and those affiliated with it, including India over oil buys, just as those could go down or away potentially if things go well, also there could be penalties if things ratchet up. So the White House is very sort of, I think, cognizant of those Helsinki memories, trying to make sure walking into this summit that the American president does not look like he's walking in, with some strategic disadvantage. They want him to be walking in as powerful as he possibly can be. Both something for domestic consumption, but also as a negotiating position against Vladimir Putin.
What specifically would we see out of the meeting in a best case scenario situation for Trump here, at least ending today? What would make him look really good and kind of quash those concerns that you had mentioned?
Well, I mean, look, this is an American president who has started counting up the number of conflicts around the world that he sees himself as having a role in having helped either stall or stop or pause or something like that. I mean, you're talking about Armenia and Azerbaijan. You're talking about Thailand and Cambodia. There's a fair number of things where Trump has had a role and to his credit has actually played a pretty decisive role. I'm thinking, in Thailand and Cambodia is a great example of this. Border skirmishes around the site of an ancient temple that's been contested for a long time, and Trump held up trade talks as a cudgel and basically said, look, you're not getting a trade deal as long as you two keep fighting about this. And he wound up, that was a very effective threat. Those two countries came to the table, inked a deal in Malaysia with Malaysia's prime minister looking on, facilitating that exchange, and then all three of those countries wound up with preferential reciprocal tariff rates as a result of that. So this is something where this president has seen himself as the ultimate deal maker. He's always seen himself as the ultimate deal maker. He famously wrote The Art of the Deal. And so this is somebody who says, look, for me, and I think the president has been open about this. He wants to see himself with a Nobel Peace Prize. He'd love to see that as a possibility.